Prices also stabilize as investors shift the focus to the US private payrolls data. In key earnings, Bharti Airtel beats estimates in the second quarter. Titan 2 reports a strong set of numbers in Q2 FY26. But a big day of earnings today as 5 Nifty companies, including SBI, M&M, Interglobe Aviation, report their Q2 numbers. For SBI, net interest margins is expected to see a dip, and M&M is likely to report a mixed quarter. And in the primary market, grows a 6,632 crore rupees IPO opens for subscription today, while Lenskart's 7,278 crore rupees IPO is set to close with an overall subscription at around 2 times. Hello, good morning. You've tuned into Power Breakfast on CNBC-TV18. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, in terms of the market and what are the important cues that we have from the global end, US markets closed mixed. Let's look at what the Asian market is doing. That also seems like most of them have opened up in the green, but there are a few ones which are in the red. So a bit of a mixed opening. Taiwan index, 0.5% of gain there. Hang Seng is managing to hold on to gains of 0.4%. Nikkei has opened up with a mild gain of around 0.1%. Shanghai also is holding on to gains of 0.1%. What's not doing well? ASX 200, the Australian index, that is trading with cuts of almost 0.8% in today's trading session. So yes, that's where we're seeing some bit of a pressure coming in. Kospi, that's the Korean index, that's also seeing a bit of a decline in today's trading session. So a bit of a mixed opening is what has come in from the Asian markets. Nifty, GIFT Nifty, what is the indication there? Seems like a bit of a muted to red start is what we're keeping an eye out on. 24 points down is what the Nifty implied open as of now is indicating for the Indian market. So that's what we'll be keeping an eye out on. Whether we're going to be seeing a bit of a red session or will this recover will be key. But as of now, Nifty implied open is down 24 points. But let's look at the overnight cues that we have coming in, and to set you up for trade also, we have a team of research as always joining in with us. Firstly, let's go across to Urmas, who is there to tell us which are the important cues that we are keeping an eye out on today. Good morning, Urmas.
Good morning, Vinny. And it's a very important session that lies before us today, and yesterday was no different. We had a very range-bound session, but the good part is that the Nifty ended close to the highest point of the day. The dip that came in earlier was bought into, but that's where the good part ends. The not so good part is the fact that for the last 4 sessions, the Nifty has been making lower highs and lower lows. And if you could see that, they have not been able to cross the previous day's highs now for the last 4 sessions. They could not do so last week. They're not able to do so in Monday's session as well. So that could be a bit of a dampener. But for the Nifty Bank, that was an outperformer in yesterday's session. The one good thing, it could not cross the previous day's highs, but it did manage to cross the previous day's lows. So that streak of lower lows was broken, but the lower highs are still to be broken. So that is important level, that 58,254 level for the Nifty Bank, which is last week's high, is an important one to watch out for going into today's session. The outperformance continues from the PSU banks, and out of the 12 constituents that the index has, 6 of them are trading at 52-week highs. Today is a very important day for the PSU bank index simply because SBI reports results today. That will give a trajectory for the PSU banks as well. For the index itself, the Monday's high, which was 25,803, that's the first important level to watch on the upside that it needs to cross. On the downside, the 25,650, 25,700 zones, supports emerging from that level. So if there is any dip that comes in at the start, that will be an important level to watch out for on the downside. And today's session, as I mentioned, SBI, but apart from SBI, Mahindra & Mahindra, Adani Ports, Adani Enterprises, Indigo, more Nifty companies reporting results today. There are some very important broader market results as well for the likes of Paytm, Suzlon, Indian Hotels, Castrol, and a lot of other companies. Today, of course, being the weekly expiry of the Nifty contracts, we are also heading into a midweek holiday tomorrow. So we need to watch out for some profit taking potentially if it emerges in the final few minutes of the trading session. The primary market activity remains busy because Lenskart IPO, the final day, Grow IPO opens for subscription today. So it's a busy day for the markets, for the primary markets. On the earnings front as well, the GIFT Nifty for now indicating a slightly muted start, but some important levels to watch out for both on the upside and the downside.
Okay, important levels that we'll be keeping an eye out on. Thanks so much for that, Hormaz. But let's go across to Vivek, who's here to tell us which are the important stocks that we should be keeping an eye out on today. Good morning, Vivek.
Well, good morning. Largely dominated by earnings. 3 key Nifty companies delivered results post-market hours. Bharti Airtel, while the results are largely in line with estimates, the ARPU is something that has come in quite strong. The ARPU has actually come in at 256 rupees versus just around 250 rupees on a sequential basis. Profitability, revenues, EBITDA as well as margins all healthy and a slight beat above what the CNBC-TV18 poll was anticipating. Now coming to Power Grid, it's been a slightly muted quarter for the second straight quarter. Revenues, largely in line with what we were anticipating, but the EBITDA has fallen almost 6%. Margins too has seen a sharp contraction on a year-on-year basis. Higher other expenses as well as the decreasing share of profits in the JV is something that has impacted the earnings. Now Titan again largely in line with what the CNBC-TV18 poll was anticipating. Revenues in fact above what we were anticipating, but have a look at the EBITDA as well as the EBITDA margins. That's been a miss, indicating that there was a higher share of lower margin products as far as the sales mix was concerned. Profitability too, slight miss to what we were anticipating. Now coming to Bharti Hexacom, revenue higher by 2.5%, profitability higher by 7.5%. The only concern over here is that there has been a subscriber share loss as far as Q2 is concerned. Now coming to Hitachi Energy, extremely strong set of numbers. Also margin guidance is something that the street is hoping that the company will upgrade. So profitability is coming at close to 264 crore versus just around 50 crore on a year-on-year basis. Other results that will or other stocks that will react to strong results: HDFC Enterprises, TBO Tech, Gallant Ispat, Godfrey Phillips, City Union Bank, Acme Solar. On the other hand, a few laggards that you could expect in today's trading session. Have a look at Kirloskar Brothers, Arvind Smart Spaces, JK Paper. All of them are quite weak. Apart from that, keep an eye out on Hero Motor as well. The sales data indicating that there has been a dip on a year-on-year basis as far as two-wheeler sales are concerned.
Okay, Vivek, thank you so much for that. But let's move on. And to set you up for the last leg is the F&O space. That's going to be important as well. Good morning, Sudarshan. What are we keeping an eye out on here? And obviously, today is going to be the expiry as well.
That's correct. So it seems like that Nifty is in a congestion zone and the range is of 25,700 to 26,000. That's the range where we are seeing a heavy FI selling for the last few sessions. Continuously, we are seeing that FIs being on the sell side. Yesterday also in the cash market and in the derivative, FIs have sold. In the cash market, they have sold nearly 1,900 crore. And in the index futures too, they have sold almost 1,200 crore. Their longs exposure remains around 16%, but they have added more short positions. Yesterday, they have added more than 6,500 contracts, while on the long side, addition was just around 370 contracts. In the options data also, you will see that on the call side, two options strike rates were active. That was 25,750 and 25,800, where we have seen maximum addition of the open interest, but at the same time, there was a fall in the premium. But on the put side, we have seen premium increasing for both 25,650 as well as 25,700. Support for Nifty remains around 25,530. That's very important level, and resistance would be now 26,000. The hope is that Nifty gets back to the level around 26,000. For Nifty Bank, support would be 57,800. Yesterday, Nifty Bank was outperforming, and now resistance has moved higher to 58,600. That's the record high level. I'll keep an eye on two stocks. First one is Indus Towers, that has been seeing fresh longs after the SE's AGR order, and the second one is Voltas, that has been seeing fresh shorts.
Okay, Sudarshan, thank you so much for the update there. But, just moving on to the primary market, investment platform Grow is set to make a D-Suite debut, and the IPO of the company opens for subscription today. The company has set a price band of around 95 rupees to 100 rupees per share for its IPO. A day ahead of the IPO opening, the company has raised rupees 2,984 crores from anchor investors, including names like Abu Dhabi Investment Authority, Government of Singapore, and several domestic mutual funds too. Speaking to CNBC-TV18 earlier, Grow's CEO Lalit said that the rise of the affluent customers is a big trend on the platform, and as the company aims to expand in India's wealth management opportunity, listen in to what he had to say.
We are building like India's largest wealth platform, and we have multiple businesses. Broking is of course the largest and the kind of the leader there, but that's how we look at it, right? Multiple products. So we are like building direct to customer multiple product company, where customer has an option to kind of invest in any product that they want. We are kind of super excited about one big trend that we have seen is the rise of affluent customers on the platform. So we are democratizing investing in the country, but what happens is as customers spend more time on the platform, they get affluent category, so they need wealth management solutions. This growth of this affluent category is more than double the growth of the overall platform growth.
Okay, on that note, we're actually going to slip into a very short break. Don't go anywhere. After the break, we'll get you cues from Wall Street. Stay tuned in for that. Welcome back to Power Breakfast on CNBC TV18. Now let's talk about the US markets, and Wall Street ended on a mixed note. The Dow Jones lost 226 points, while the S&P 500 added 12 points. Nasdaq closed with gains of 110 points as well. We have CNBC's Kate Rogers joining in with us to give us a wrap on what happened on Wall Street.
U.S. markets were mixed across the major averages in Monday's trading as tech investors rotated back into the AI trade. The Dow lost 226 points. The S&P 500 added 12. The tech-heavy Nasdaq gained 110. Amazon shares were up 5% Monday after OpenAI announced a partnership with AWS, Amazon's cloud unit, for $38 billion of capacity, which will also utilize NVIDIA chips. Until recently, Microsoft had been OpenAI's exclusive cloud provider. According to the companies, the first phase of the deal will use existing AWS data centers, and Amazon will eventually build out additional infrastructure for OpenAI. And iconic brands, including Kleenex and Huggies, are coming together with Band-Aids and Tylenol. Shares of Tylenol maker Kenvue soaring 15% Monday after agreeing to be acquired by Kimberly-Clark for nearly $49 billion in cash and stock. Kimberly-Clark stock moving in the other direction. It was down 13% on the news. Kenvue was originally spun out from Johnson & Johnson in 2023, but shares are down almost 35% since then. That's what's happening here in the U.S. Back to you in Mumbai.
Thanks so much for that. But following the Fed Chair Jerome Powell's announcement on rate cuts, Mohammad El-Arian of Alliance Chief Economic Advisor there discusses the central bank's interest rate decision and the economic outlook. Let's listen in.
So it was very clear that there are major divisions within the FOMC, and we've heard since the extent of those divisions. They relate to whether you worry more about inflation or you worry more about unemployment. The second issue that's clear is that there's different views as to what you do under uncertainty. And the uncertainty comes from the lack of federal data. Some people feel that you slow down and therefore you should stay on hold. Other people say, no, the destination is the same. We should continue going towards lower rates. That is not going to be resolved unless the Fed takes a strategic view of the economy. We should not get in the way of this continued strong growth because it offers a solution to a lot of other things in the economy. And we just have to get used to something you've heard me say, which is that inflation is going to stick around to 2.5% to 3% for a while. And that's okay because it's stable. The most important thing is stable inflation, and we've seen inflation expectations haven't been de-anchored. The longer-term investor base, while it's growing, is not big enough to deal with the ups and downs of speculation. Very different than what we're seeing in the gold market, which is stabilizing. So, what you're seeing is the structural setup of different markets. Crypto, looking forward, will continue to increase the institutional base, the more stable base, what I call resident investors. But you have a lot of tourist investors in the market right now, and that's what you're picking up.
Okay, that's the update there from the global front, but we're going to slip into a very short break. But as we slip into the break, here's a programming note for our viewers. It is the final countdown for CNBC TV18's most anticipated event of the year, the CNBC TV18 Global Leadership Summit. The landmark event brings together business leaders, innovators and policymakers to explore transformative strategies and groundbreaking ideas starting at 8:30 a.m. on 7th of November. It will be a power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment, and a lot more. Tell us why you love CNBC TV18 by sending a tagline on the email address flashing on your screens, and you stand a chance to attend the marquee event. Welcome back to Power Breakfast on CNBC TV18. Now it's time to get you what's happening in the world of commodities. For that, we have Manisha Gupta joining in with us, as always. Good morning, Manisha. What's interesting today? Hope gold is not shining as bright.
No, it's not. Not even silver for that matter. Actually, when you look at the overnight markets, we did see silver decline by 1.5%. Gold is declined below $4,000 an ounce. Remember, we did see a record high of 4,382 in the month of October itself. Well, the reason being that you have the dollar index holding at a 3-month high, also with the US and China arriving at some kind of a truce, also had led to safe haven buying going out of the markets there. And then you have the US payrolls data coming in, and ahead of that, there is a bit of a profit taking that we are looking at in case of gold. Copper also saw a decline of 1% overnight, but that is exactly where the losses end, because the other metals have actually done quite well. Zinc, for example, is trading at an 11-month highs above $3,100 an ounce. The treatment charges for zinc have risen to $87 versus a negative in the previous year. You also are looking at aluminum futures trading at a 3-year highs because of a cap that China has put in sense of production there. The markets also have seen crude oil prices come off its highs, with OPEC pausing output hikes for the first quarter of 2026, and the fact that you're looking at members yet to restore 1.2 million barrels per day are some of the factors that seem to be putting pressure on crude prices.
Okay, Manisha, thank you so much for the update there in the world of commodities. But shifting focus to key earnings that are expected today, we have SBI that will be reporting its Q2 FY26 numbers. What are we expecting this time? Gaurav is here for that. Good morning, Gaurav.
Well, good morning. First, when we look at advances, now for SBI, people are expecting around 10% growth on a year-on-year basis in terms of advances and deposits. There also we will see growth in line with advances around 9% on a year-on-year basis. And on the back of that, when we look at net interest income, we are likely to see around 2% fall on a year-on-year basis. And the reason being that there will be some pressure on net interest margins. When we look at PPOP, which is pre-provisional operating profit, we are expecting around 6% fall on a year-on-year basis because treasury income, now that will be a missing part in this quarter specifically because of the treasury movements that we have seen so far. And when it comes to profit, now we may see around 7% decline on a year-on-year basis. Now, when we look at net interest margins, SBI is one of the banks where people are expecting around single-digit decline in net interest margins in this quarter in the range of around 4 to 6 basis points. And another key point, a key positive point here is that the credit cost. Now, specifically when it comes to asset quality, for SBI, there wasn't any problem, and people are expecting the scenario to remain the same. asset quality is likely to improve on a sequential basis. We may see around 4 to 5 basis point of improvement in credit cost. Now, what is the key thing to watch out is the net interest margin trajectory and how the commentary is going to be on net interest margins. And second is the commentary on growth. Remember, SBI is the biggest bank, and despite being the biggest bank, people are expecting around 10 to 11% growth on a year-on-year basis in line with the system. So that is something that we will be watching out from the management. But for now, from the results perspective, we are not expecting any negative surprise and a stable result for this quarter from SBI.
Stable result is what we're expecting in Q2 FY26. We'll keep an eye out on that one. But M&M, that's also set to report its Q2 FY26 numbers. Let's go back to Sudarshan, who's here to tell us what are we expecting from M&M then. Good morning.
Good morning, Vinny. So we are expecting a mixed set of earnings from Mahindra & Mahindra. Why mixed? Because revenue may see a healthy growth while margin may come under pressure and may come below 14% after several quarters. Revenue growth would be supported by healthy auto volumes that we have seen both on a sequential basis as well as year-on-year, while for the margin, EV mix, rich EV mix may drag margin, and that will offset the margin uptick that we'll see from the tractor business. So overall profit is seen rising 5%, revenue may see a growth of 25%, EBITDA too may increase by 21%, and margin can fall to 13.9% from 14.3% that company had reported in the same quarter last year. And in resultant, realization is seen falling 1% year-on-year and may increase almost 5% on a sequential basis. What exactly would be looking at the management commentary, what company says on the new launches, because we are expecting company to make some of the new launches in this month also, and also if there is an increase in the FY26 outlook. These are the two things that will be in the focus in management commentary.
Okay, Sudarshan, thank you so much for that. We'll keep an eye out on the commentary that comes in from M&M as well. But moving on, Aditya Birla Group Chairman Kumar Mangalam Birla wants his group companies to be in the top 2 across industries. His business interest spans metals, cements, paints and retail. Speaking from the sidelines of the CNBC-TV18 IBLA jury meet, he outlines his vision for the conglomerate. Listen in.
I think being in the top 1 or 2 in the industry that they are in, with return on equity, that's specifically each one's target. Largely, that's how we work.
Are you particularly chuffed about some of the forays that you've made, especially in the consumer space? With the GST cuts that have happened, that would boost consumption and the money that people have in their hands. Have you seen that on the ground?
Yeah, I think they had a very good Diwali. I think both paints and as well as retail, jewelry retail. It's our first time with such sort of hardcore consumer brands, and it's good to see them having taken off so well.
Right. You speak about your consumer brands, etc. The one thing that we have to learn from you, and what according to you would be the Birla playbook of entering and disrupting a category which has had a lot of incumbents. You've done that multiple times in the past, but now as well, with the consumer foray that you've made in the kind of categories that you've entered, including the likes of jewelry and paint, what according to you would be the Birla playbook?
I think the first is very thorough preparation and understanding clearly what it takes to win in the industry, what our levers to win would be, and then executing to precision almost. I think it's basically both of these. It's understanding what ticks for the customer. Consumer insights are very important to build a business model around that.
Okay, with that, we are absolutely out of time with this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. Up next, your Bazaar Morning Call.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we're coming to you live from the CNBC-TV18 Motilal Oswal studios. Overnight, quiet. Yesterday's session, good bounce from the day's low. Can we build on some of this into today's session? Tomorrow, remember, is a market holiday, so that's an additional factor at play if you're trading. I'm Prashant. With me, my colleagues Mangalam and Nigel. Guys, hi. Morning.
Hi. It's good, right? Tomorrow's a holiday and today is the expiry. Yesterday, the market was absolutely flat. Let's see where it goes. We have a bit of a 200 points sort of range, I guess.
Well, that's right. It appears we're in a bit of a range, but let's see whether or not we can break out for there. And we just got 10 more days of earnings in this particular season. So that's another countdown that's begun.
And looks like so far they're tracking slightly better than expectations. There's no at a headline level, no disappointment.
Not as weak as expected.
But it's important to also see, whether there are any more cues left from a global standpoint as well, apart from, the US-China or US-India trade deal or trade negotiations, as you say, because big earnings are out of the way for both India as well as the US. Today you have SBI. Barring that, I don't know if there is any big market-moving earning which is left, globally, I guess.
I don't know. I'm not sure about earnings, Mangalam, but I think I think it's the 5th. Today is the 4th.
Yes.
I think tomorrow the US Supreme Court starts to hear. That case against tariffs.
Yes.
Good that we are on a holiday tomorrow then. Yes.
No, so there's no timeline as to by when they need to rule. But for example, if they say that it's all illegal, all the collected tariff revenue has to be returned. Has to be returned. They're going to send the money back. So we'll see. But it's anyone's guess how this turns out. But I mean, the court will hear it. Okay, let's just quickly start from the top in terms of the overnight session, etc. Quiet, not very much by way of change. S&P 0.17, Nasdaq 0.46. So up, but up small. And of course, AI deals. It's like looking like one big jumbo circular one company buying from another and that company buying from somebody else, applying this. One big circular juggernaut so far. Amazon up 4%. It signed a $38 billion deal to supply OpenAI with NVIDIA chips. So, there's 3 companies there. OpenAI, NVIDIA, Amazon, right? And that's essentially what I'm talking about. It's getting complicated. I mean, who's dependent on who's buying from who, and of course, who's the intermediary between two parties, like in this case. You got ISM print out of the US, which was weak. By the way, it's the 8th straight month of contraction here. We're in a data blackout zone otherwise because of the government shutdown, which, by the way, I think if the shutdown remains for another day, actually 2 days, it's going to be the longest shutdown ever. Government shutdown in the US. Now that is really bothering markets in a big way. The 10-year yield was up about 2 basis points, 4.1. About the shutdown, Democratic senators urged President Trump to get involved directly in talks to end the shutdown. And of course, Trump basically shot back saying he won't be extorted by Democrats. I'll just leave you with levels straight away. So we've ended about 100 points off the lows yesterday. So there is interest at lower levels and buy the dip kind of sentiment, which is there. So we need to first get back to the 26,100 levels, which is not very far, about 1.5%. Support is 25,700, which is the lower end of this particular range that we've been working with. Bank Nifty needs to cross the high of 58,577. And of course, here support stands at about 57,656. So still in a bit of a range. Lots of interest, lots of money coming into the market. At the same time, it's being met by lots of supply in the primary market as well. So that's where we are at. Another big issue which opens for subscription is the largest discount broker, Grow. And we'll talk more about that as the day goes on. So that's where we are at. F&O positioning and the overall stats there. Nigel has walked across with exactly that. Nigel, over to you.
Well, yesterday was a good trading session, but follow through on our expiry day is going to be important. Today is the weekly expiry. So the last hour of trade, you'll have a bit of a move. And SBI, that's going to be the big mover for the last hour of trade itself because it comes out with a set of numbers. What's been a little bit uncomfortable in the last few days is the FIs have been selling. Yesterday, they didn't sell that much, but 1,800 crores is what they sold. I'm not saying that much because in the previous trading sessions, you saw a higher net sell number. You'll want this number to actually come down, diminish, and try to get into the positive trend. DIs continue to show us the money. What about the F&O positioning? Well, on index futures, they went ahead and they added short position, 6,500 contracts. They remain net short with close to around 84% of their positions on the short side. And if you look at the absolute positioning, FIs have added short positions, in the last few trading sessions. From the start of the series, effectively, that's 4-5 trading sessions. It's moved up by close to around 25%. So FI short positions were a little under a lakh. That's moved to around 1,25,000 contracts on the short side. Similar with clients. They were long, but their long positioning as well has got added by close to around 25%. So both of them, have added onto their respective positioning on the long as well as on the short side. On the stock futures, there were some shorts that were added, but that's normally a play between the cash as well as the stock futures positioning. But yesterday was interesting to see that the call writers, there were a lot of calls that were written, and that's why the PCR had dipped. Some of those call writers, they had packed their bags, because today you have the weekly expiry that's playing out, and there were some signs of put writing that we saw in yesterday's trading session. Now, the PCR, it had moved to around 0.62 yesterday. It ended close to around 0.8, 0.78, 0.8 or thereabouts. So it's still closer to the lower end of the range, you'll have to say. And two strikes were very active, 25,750 call, 25,700 calls. So there was some kind of resistance that's going to be seen at higher levels. Just punching in the premiums that you're seeing, on both these two strikes, you'll get a level just for the day. The 25,900 mark, that's a crucial resistance mark. Going by the options data, the 25,875 and 25,900, that's a bit of a resistance zone. While the 20 DMA is closer to yesterday's low, so this 25,570, that's a support zone that you're looking at. I pointed out yesterday morning that, in fact, the Nifty bank was making lower lows every day. Yesterday, at least, it broke the trend. It made a higher, the lows of the day were higher than the previous trading session. And if you're looking at levels on this one, well, two levels you're looking at. The all-time highs, that's around 500 points away on the upside. So you keep an eye out on that one. And there has been repeated support added around this 57,500 odd mark. So you'll count on this level, holding out as well. The index that could be in focus will be the tech index. Yes, it's been a big underperformer. The Nasdaq is holding strong. You have deals that are being announced on the on the global scale. Let's see whether or not the tech index can get its act together. Yesterday as well, under the weather, the IT index is something that I'll be tracking even for today.
All right, Nigel, thanks a lot for that. So that's the IT index that we'll be tracking today. It is weekly options expiry. The first one for the November series. Let's get you an equity call. Sanjeev Prasad of Kotak Institutional Equity says that the second quarter FY26 earnings season shows subdued trends in mass consumption items, but an uptick in select discretionary segments as well. Modest IT services demand and moderate loan growth for banks. Nonetheless, he adds that aggregate earnings are ahead of their estimates, with metals and mining along with oil marketing companies driving the beat in the Kotak Institutional Universe earnings print. He says they increase the weight on Reliance by 100 basis points to just sub 10% and on L&T by 70 basis points to 2.7% and remove Hindalco from their model portfolio. Right, good time to get in Jeff Dennis, the independent emerging markets commentator who joins us now on the show. Thanks a lot, Jeffrey, for joining in. The way the queues are stacked up globally right now, as Prashant was earlier talking about the Supreme Court, beginning to hear what happens about the tariffs, etc. Irrespective of that, what's your view currently as the world is positioned on emerging markets, the China versus India allocation? How would you distribute?
Well, first of all, emerging markets are clearly having an incredibly good year. They're up over 30% now and outperforming developed by 1,200 basis points. And why that's particularly good, I think, is that although the EM was driven considerably earlier in the year by a lot of rotation as the dollar was weakening, classic environment for EM to do well, the dollar has actually rebounded a little bit recently, especially against the euro and one or two other currencies as well, including in EM. And yet EM is still powering forward. Now, EM is being driven by a number of large markets, but China's doing well, Taiwan is doing relatively well, Korea is doing exceptionally well, Latin America, Brazil and Mexico are doing well. So I think there are some individual stories as well. but I'm a little nervous about how much more EM is going to do if the dollar is going to continue to rally. And that, of course, will bring us back at some point, I'm sure, in the conversation to the Federal Reserve. I'm sorry to say, I remain very skeptical about the China story. Yes, they've got a lot of AI-driven investment there and also therefore benefiting the markets. But for me, the outperformance between China and India this year has been so dramatic that I would be looking to rotate back into India, where the inflation's very low, of course, partly because of food inflation. I think you're going to see lower interest rates down the road. The economy's looking good. The GST reform is good. So I would be very skeptical chasing China at this point, and I think some rotation to India would make sense.
Got that. Jeffrey, morning. Good to have you with us here. And the IT stocks all, of course, I mean, the big AI deals continue one after the other. Almost, it's incredible, right? And tens of billions of dollars almost every day or every second day. What do you make of it at a broad level? I mean, I think as someone was saying, I think Michael Burry tweeted, right? Sometimes you can do something about it. Sometimes you just got to sit back and do nothing. I mean, there's not very much you can do except watch. And if you, of course, own some of these names, great. What's your sense?
I think that this is a very good environment. Excuse me. This is a very good environment generally for corporate action. If you can find cheap enough companies which are being perhaps badly managed, or just good names that really should be doing quite a bit better. And I think that's because interest rates have started to come down. Cost of capital is lower than it was a few months ago. The economy is still doing remarkably well in the US, especially on investment, to a certain extent on consumer spending. And of course, you're getting a lot of deregulation from President Trump as well. So I think as you suggested, I think you said Michael Burry, who of course made so much money shorting the housing market in 2007, 2008. I think you follow what he's suggesting, and that is you just wait and just enjoy the action. I think there's probably quite a bit more to come because corporates have got a lot of cash. As I say, the cost of capital is coming down, and bond markets are behaving well. So yeah, I think you're going to see more corporate action as we go forward.
You said that you're not very gung-ho on China, and you said emerging markets have done well. One of the emerging markets which hasn't done well through this year, and if you compare it to all the others in the world, has been India. And that's perhaps on account of valuation discomfort. Where do you stand on India now?
Well, as I said, I think that some rotation from China into India may make a fair amount of sense now, because although China has had the the benefit of the focus being on China with respect to Trump trying to get some deals on tariffs, of course, and trying to avoid, hopefully, at the end of the day, a major trade war with China. They've got the rare earths, which is very beneficial. But meanwhile, the economy is still very soft, in particular, consumer spending and housing, and the manufacturing sector is contracting still. And so I think China, although it began the year very cheap, is beginning to run ahead of itself. Whereas India obviously was the other way around. It had done very well. The market was expensive. But I think India's got some definite things going forward at this point. The oil price is in a good range. It's not strong. It's not weak. It's coming down a little bit more in the last couple of days or so. I think there's tremendous scope still for the RBI to cut interest rates. The valuation gap versus China has, of course, now narrowed by definition. And I think the economy is still doing relatively well. And you've got a few reforms coming through, GST obviously being the obvious one. So I'm a bit of a broken record on this. I've expected India to improve a bit more, but I really think it's a good story here, particularly versus China, given how much China has outperformed.
All right, Jeffrey, thank you so much for joining in and giving us your perspective on emerging markets and saying that maybe perhaps it's time now to shift some capital away from China into India. With that, let's tell you what the interactions are lined up for you on the show today. Coming up at 8:35, the management of Zensar Technologies to discuss their second quarter performance. 9 a.m., we have Gaurav Malhotra of Axis Capital as the Supreme Court clarifies that the government is free to consider relief on the overall AGR dues for telecom companies. At 9:20 a.m., Krishna Sangvi of Mahindra Manulife will be our market master of the day. 9:30, the management of Tata Chemicals joins us to discuss their quarter gone by. Following that, 9:40, the management of Titan will be chatting with us to discuss their second quarter performance. 9:50, we have the management of Titagarh Rail Systems as the company bags a near 2,500 crore rupee contract for Mumbai Metro Line 5. And at 10 a.m., Ishan Bansal of Billion Brains Garage Ventures, which is basically Grow, will join in to discuss their IPO opening. Towards the end of the show, in our special Indianomics segment, Lata joins in to speak with Pranjul Bhandari of HSBC, Sakshi Gupta of HDFC Bank and Abhishek Upadhyay of ICICI Securities to decode the GDP and interest rate forecasts post the festive season.
Time to take a quick break. Come back. We go full throttle on stocks. We'll be looking at the top 10 stocks. For the time being, I give you a sneak peek. Bharti, Airtel, Indus Stars, Titan, Acme Solar Holdings, Hitachi Energy India will be reacting to positive news flow. Add to the list, Hero MotoCorp. On the flip side, Bharti Hexacom, Power Grid, Gland Pharma and Kansai Nerulac will be reacting to negative news flow. Take that break. Come back. We get into further detail on all of these names.
Welcome back. You're watching us here on Bazaar Morning Call. The GIFT Nifty indicating an absolutely flattish start after what was a consolidatory sort of move in yesterday's trading session for the frontline index, though there were big moves that we saw on the Nifty Bank along with the mid-cap index. But let's get stock-specific. Our team standing by with CNBC-TV18's top stocks for the day. I'll do the opening. Let's talk about Titan. The company's revenue was obviously indicated to the street in their second quarter update, and to that extent, these numbers are largely in line. If you look at
The reported numbers, 16,534 crore revenue versus a CNBC-TV18 poll of 15,000 crores. EBITDA and net profit largely in line. Why is it that there was that 1,000 crore beat on the revenue? Because it was boosted by a near 2,000 crore sale of gold ingots versus about 884. So this is something which is a variable number, varies every quarter, and that explains the sort of difference that we've seen versus what the company has suggested versus what the actual reporting has been. What's good is the jewelry business margin. 10.8% versus 8.7%. That's a positive. And the reported revenues, 25% higher. There has been an improvement in gross margins. The EBITDA has jumped 43% on a favorable base. And the net profit has seen a 43% jump as well to over 1,000 crores. They continue to hold market share in the jewelry industry. It's near 8% right now. Their guidance has been 10% over the next few years. International business continues to do well for them. 92% jump is what we've seen. Carrot Lane also over 1,000 crores in this quarter, 32% jump. Studded share at 34%, absolutely in line with what it was same time last year, which is a positive. Watches, the average selling price has increased by 8%, which has improved the watches margin. And all the other growth businesses as well doing fairly well for them. Bags up 90%, fragrances up 47%, Tanera up 20%. All of this means that the stock sees mild green in today's trading session because it's already seen a bit of a run up. It's very close to its 52-week high. In fact, we have management of the company joining us on the show today at 9:40 a.m. to discuss their second quarter earnings. Thumbs up for Titan, but let's go across to Vivek for Power Grid and Acme Solar. Vivek.
Well, good morning. Power Grid, slightly muted set of numbers as far as Q2 was concerned. Revenue largely flat on a year-on-year basis, up 2%. But have a look at the EBITDA. EBITDA missed our poll. EBITDA down over 6% on a year-on-year basis. And margin contraction is quite steep, over 650 basis points of margin contraction. Profitability too down 6%. Now, what impacted or what dented the P&L? The much higher other expenses, almost 78% higher on a year-on-year basis. Transmissions revenue, the core business down 4.3%. Consultancy revenue did quite well on a lower base, went up or jumped up almost 3 times. And telecom revenues down 4.6%, a very small portion of the revenue. The call will be held later today. Key to watch will be the capex guidance, whether there is any change. Remember, at the start of the year, they had guided for a capex of close to 28,000 crore. The back of the envelope calculations indicate that they've reached close to 13,300 crore. Full year capitalization, the company said that they should add assets worth 21,300 crore. Any update on that will be key to watch out for. Acme Solar aided by a much higher capacity compared to on a year-on-year basis. Revenues jumped up 80%, EBITDA jumped up 81.3%, margins to quite steady, just 50 basis points higher. Profitability up 7.5 times, but largely aided by a one-time exceptional gain of close to 42.5 crore. And when you're talking about the guidance, the company has given an operational portfolio. They say operational portfolio will give an run rate annual project EBITDA in the range of 2,025 to 2,075 crore. They are targeting a 10 gigawatt generation capacity by 2030 and a 15 gigawatt hour BSS capacity by 2030 as well.
All right, Vivek, thanks a lot for that. Let's look at Kansai and Nerolac as well, among the first in the paint space to report their numbers, and nothing really in these numbers. Absolutely flat from a revenue standpoint, 1954 crores compares with 1951 crores. The EBITDA as well, totally flat, 11% margins. They stay unchanged. Profit after tax has been boosted by a slight reduction in their tax expense. So 120 crores has turned into 133 crores. The company said that overall demand in decorative was, as expected, affected by heavy and extended monsoon. But for them, the automotive segment did well, and they expect growth in both automotive and performance coatings to remain strong, even as they see gradual recovery in decorative. I'm going with mild red on Kansai because the stock has been doing well from the lows. In fact, yesterday as well ended at the high point of trade.
Okay, all right, Mangalam, thanks a lot for that. Let's go across to Vinny. She's here to tell us about Hitachi Energy as well as Gland Pharma. Hey, Vinny, morning.
Hi, good morning. So starting with Hitachi Energy in terms of numbers, revenue, that was a bit lower than what the analysts were expecting on the street. The revenue grew by 18%. Now in terms of EBITDA, very strong growth there. Margins much better than what the street was expecting, or even on a year-on-year basis, when you look at it, the margins have come in at 16.26% versus last year of around 7% was the EBITDA margin. Now, what is leading to this beat? One, there was a strong growth in terms of other income that came in at 82 crores versus 0.09 crores last year. Order book, that continues to be strong as well. Order inflows have seen a growth of around 14%, and they have had a couple of large orders that came in during Q2 FY26 as well. Exports, that is continuing to hold on to its contribution of around 30% in the order book. So that is why overall analysts are positive. We are expecting a bit of a green because PAT and margins was a strong beat on that front. Revenue, slight bit of a miss there. So green expected here. Now let's talk about Gland Pharma. Here overall the numbers were a miss. When you look at it, the revenue versus the CNBC-TV18 poll, almost flattish there. 1,486 crores is what the revenue came in at, which is an uptick of just 5% on a year-on-year basis. EBITDA margins, that was much below what we were expecting. We were expecting the EBITDA margin somewhere at 23%, and it came in just at 21%. Flattish on a year-on-year basis in terms of EBITDA margin performance. Now, what is positive here is that the company's outlook, they continue to maintain their guidance. They said the growth will continue to remain in mid-teens for FY26. And even the Sensex business, which is not done well this time, which led to a bit of a loss this time, that was something that led to the overall poor growth for the company. Now that they expect to break even by Q3 FY26. They expect second half of the year to see more key launches coming in, which will support the growth. But this time, Q2 FY26, not a good set of numbers. So we could expect to see some bit of a red, though commentary is slightly positive.
Thanks very much for that, Vinny. Let's talk about Hero MotoCorp now. Sud is here with details on this one. Sud, morning.
Morning, Prashant. So before I talk about the numbers in detail, so first two numbers would reflect on your screen. One is wholesale and second is retail. So what is wholesale? Bikes, basically companies sell to distributors, and retail is those units which get registered after showrooms have already sold it. Now, why there is a huge gap while wholesales are just 6.35 and retail is almost 10 lakh units, because in the month when we have festivals, production remains shut, and it also impacts the transportation. That's the reason you are seeing a big fall in the wholesale numbers. Now, the numbers that company has reported is wholesales. So total sales have come in below estimates because domestic sales were under pressure. Total sales have dropped 7% year-on-year versus expectation of 2% growth, and domestic sales were down 8%. And it's the important number because it forms almost 95% of the total sales. Talking about the segments, two major segments that company has, motorcycle and scooter. Motorcycle forms almost 90% of total sales, and there we have seen sales falling almost 10%, while scooter has seen a jump of almost 50%. So just on the basis of wholesale numbers, I'm going with red.
Okay, all right. Thanks a lot for that, sir. Well, Mangalam's dialing up. You're tracking the telecom stocks, Bharti Airtel numbers, Hexacom numbers, and Indus Stars. Probably a stake increase by Airtel. Tell us more.
Take that point and filling in for Rima, all that Rima has sent so far. So going with green on Bharti because it's a beat which has been led by a positive surprise in Africa and India. The stock ended at the high point of trade yesterday. Consolidated revenue growth is 5.5% versus street expectations of 3%. India revenue grew 2.6% here as well. The expectations were 2.2%, so there's a beat. Margins expanded by about 40 basis points to just shy of that 57% mark. And we have the ARPU, the average revenue coming in at 256, and they've added around 1.4 million subscribers quarter on quarter. The con call is at 1 p.m, so we'll get more details on that one. But for starters, going with green on Bharti Airtel. Can't say the same for Bharti Hexacom because they lost about 110,000 subscribers in the second quarter. And the revenue growth was muted at 2.4%. There was a jump in the margins by about 40 basis points, and the net profit grew by about 7.6% quarter on quarter. But the loss in subscribers is something that may keep the street on tenterhooks, going with red on Bharti Hexacom. And finally, Indus Towers. The Bharti board has gone ahead and given an enabling approval to acquire an additional 5% stake in Indus Towers. Remember, that stock too ended 5% higher. Obviously, a large part of that up move was on account of the Supreme Court relief that has come in from, for all the AGR dues for Vodafone, etc. But keep an eye out on this one because in one or more tranches, 5% going in from Airtel, which currently holds about 51% stake, would mean a payout of almost 5,040 crores. So we'll get modalities on when, how that happens. But the fact that there is a ready buyer willing to put in 5,000 crores in Indus Towers and the prospects for the space increasing would go for green with green for Indus Towers.
All right, Mangalam, well done. Thanks a lot for that. Well, here's a quick recap of all the stocks we just covered, the ones with positive news flow. Bharti Airtel, Indus Towers, Titan, Acme Solar Holdings, Hitachi Energy India, and Hero MotoCorp. All of them will be reacting to positive news flow. Flip side, Bharti Hexacom, Power Grid Corp, You had Gland Pharma as well as Kansai Nerolac will be reacting to negative news flow. So that's about all the equity market action. Let's take a break from that. Let's go across to Manisha Gupta. She's joining to tell us what's going on in the commodity markets. Morning, Manisha.
Morning, Nigel. Thank you for that. I want to start with the precious metals and base metals, really, because we've seen more declines than gains into this one. So, to begin with, we've seen silver go down by 1.5%. Copper fell by a percentage point in the overnight market. And gold is also trading below $4,000 an ounce. Remember, gold has hit an all-time high of $43.80 in the month of October, but we are down by nearly $400 since those kind of levels there. What is weighing onto the markets is the dollar index, which is holding at a 3-month highs, and this is ahead of the U.S. payrolls data. But that's exactly where the declines end, because when you look at zinc and aluminum prices, well, you have seen constant gains into this one. Zinc is now trading at an 11-month high. It has risen past $3,100 a ton as well. And the other metal to gain is aluminum, trading at a 3-year high. Well, there are production concerns in Indonesia, in China, in Australia, in Iceland, etc., and that seems to be supporting aluminum prices right now.
Manisha, thank you very much for that. That's a quick take as far as the commodities pack is concerned. We'll come back in just a bit. Zensar Technologies Management joins us on the other side. Second quarter performance in focus. Stay tuned.
Welcome back. You're watching us here on Bazaar Morning Call. Let's welcome the first management on our show today. We have Zensar Tech reported a soft set of second quarter numbers. The margins came in healthy, but the telecommunications, media and technology, the TMT business, saw a sharp decline. Why was that? Well, to discuss that and more, we have Manish Tandon, who is the CEO and MD at Zensar Technologies, joining in. Thanks a lot, Manish. Good morning. How much of the second quarter revenue softness is purely, according to you, due to TMT? And what's the underlying growth? Excluding that vertical, why is TMT being dragged lower, and by when does it recover?
Yeah, I think overall we had a pretty good quarter, except for TMT. I think we saw secular growth in all our verticals and our geographies, but the TMT decline took away the shine from our performance. I think if TMT had remained flat, then we would have seen close to 4%, 3.5% to 4% sequential growth quarter on quarter. We did very well on margins. As you know, we gave salary hikes to our people, unlike some of others in the industry, on time and on budget. And despite that, we were able to actually improve our EBITDA margins slightly by 20 basis points. So overall, it was, except for the TMT sector, it was a good quarter overall for us. Softness in TMT is, I think, what is happening is that most of the large players in this sector, which is primarily the high-tech guys, they are spending a lot of money on buying GPUs, and their capex budgets have gone up tremendously, and they need to cut some opex costs in order to be able to fund those capex expenditures. In fact, a famous CEO of one of the companies said that you can either have people or GPUs, but not both. So that is what we are seeing, and our revenues from this sector were primarily driven by more of project work, which got impacted, or discretionary spends, as the industry calls it, and that got impacted. So I think we will continue to see some stress in the TMT sector, and we need to make it up in the other sectors and other geographies.
All right. Thanks for explaining that to us, Mr. Tandem. But how long do you estimate that the stress in TMT will last? And will it be as bad as the 10% decline that we saw in Q2?
No, I don't think it'll be as bad as 10% decline in in Q2. But I would say that there will be continue to be some stress in the TMT sector, because there is a huge amount of capex that is being planned by these players. As you would have seen, there are lots of layoffs, rationalization that is happening in this sector. So I would say that the sector will be under a bit of stress. Good news for us is that we have been able to bring down our exposure to this sector from something like 27-28% same time last year to about 20% this year. So the impact on us will successively reduce, hopefully.
Mr. Tandon, given the order book decline, plus the weakness as you explained in the TMT segment, do you still expect FY26 growth to be in line with industry peers?
I don't think we will underperform the industry this year. I think if you look at our year-over-year numbers, they are about 4.6%. And that is better than what the larger peers in the sector have reported. So I don't think we will underperform the sector. Even NASSCOM's projections are 2 to 4%, and we are actually ahead of that.
All right, sir, I want to understand what's the impact of ESOP cost in Q3, if you could help us out with that, and also the view on the mid-teens guidance that you'd given.
So our margin profile remains mid-teens, and we solve for something around 15% every quarter. And till now, we have been very, very successful, come what may, including salary hikes, etc., that we have been able to maintain this range of somewhere between somewhere around 15%. And we are very confident, ESOP cost or no ESOP cost, we'll be able to maintain this range.
Right, and finally, before we let you go, Mr. Tandon, the total contract value, that's down about 8% quarter on quarter, 21% year on year. How do you think we should interpret this in the light of this strong pipeline commentary? And How does the AI-influenced order book translate into actual revenue in the, say, next 2 to 3 quarters?
Yeah, so we are one of the few companies who reports what percentage of our order bookings is AI influenced. This number has gone up from 21% to 28% quarter over quarter. And what we are measuring is in how many of these orders are we leading with AI-led solutions. And that's a very positive indication for us. Some deals got shifted here and there, so I wouldn't read too much into the order bookings in this quarter. But again, I would say that our pipeline is quite robust.
Thanks a lot for joining in, sir, and giving us that input. Wishing you all the best, and we'll chat up with you at the end of this quarter as well. Well, let's get in Parag Thakkar, Senior Fund Manager at Fort Capital, who joins us on the show. Hi, Parag. Good morning. Good to see you win. Any view on Zensar or Technologies? I mean, what's the view? You heard what the management had to say. Any view on it, and what do you like from the tech space?
We don't have Zensar in our portfolio. So I would not like to comment on it. We have Infosys, Tech Mahindra, Coforge, and of course, we liked Emphasis result also, although market was not happy with the result, but we were happy with the Emphasis deal wins and the commentary and the presence in BFSI. So I would say that, and we are still underweight in IT, by the way, because we also fear that this deflationary trend because of AI, that is a one risk which has come for the first time. Of course, the discretionary spending in US will come back from next year. That is our view. And the valuations of Infosys, Techem, HCL Tech, for that matter, Emphasis are very, very compelling. Especially the large cap for the Infosys, TCS, and HCL Tech and Techem are offering 4.5% dividend yield, 5.5% free cash flow yield. So we definitely want to buy, but we want to buy gradually because we know that we are swimming against the tide in IT.
What do you make of the telecom space right now? Because if you look at the three players there, Bharti on the one hand, good numbers coming in better than expected. Vodafone perhaps an extended lease of life because of what came by from the Supreme Court yesterday, and Indus Towers benefits if its clients benefit, but additionally you have Bharti's board saying that they will buy an additional 5% as well. So which according to you is the best placed, and what's your view on the sector or at large?
So as of now, we have Indus Tower in our portfolio, significantly large weight, and we remain very, very optimistic. Market cap is just 1,03,000 crore, and they generate 15,000 crore cash profit every year. So I would say that it's an annuity-based, cash flow-based business because it is tower and it is a long-term agreement. And plus this added, I would say, comfort that Bharti, in spite of having 50% stake, wants to buy another 5% stake. They have taken an enabling resolution yesterday. So that only provides more, I would say, conviction to our idea. So we remain very, very positive on Indus Tower. And of course, whatever is happening in Vodafone Idea, my take is that this personal view, and I don't own Vodafone Idea in my portfolios, I own Indus Tower. My personal take is that the broader intent is to resolve the issue.
Yeah.
And that is also good for Indus Tower. Of course, Vodafone has been paying Indus Tower on time in last 2 to 3 months also. So there is no cash flow issue as such for Indus Tower. But of course, strengthening of Vodafone balance sheet will be positive for Indus Tower also.
Yeah. No, absolutely. When you said that it only increases our conviction on idea, on our idea, I thought you talked about idea, but the idea is Indus Tower for you. Parag, good morning. Good to have you with us here. Resource companies have been doing very well. I think you like metals as a space. You've spoken about Tata Steel, Hindalco, etc. The other part is oil and gas companies, especially the oil marketing companies. It's been about a month and maybe 5-6 days since the oil minister was here in Mumbai, met investors and argued for higher valuations for PSU oil and gas companies. Stocks are up 15 to 20%. The downstream refining and marketing companies. Do you own anything, and how do you think about it?
So BPCL and IOC are the companies which we own in the portfolio. You are absolutely right, Prashant, that on the day when Mr. Hardeep Puri made that statement, that made us look at this particular segment very closely. And oil was already below $70, which is a good tailwind for these companies. So we bought into them, and although small weights, but BPCL and IOC are the stocks which we own. And of course, the results were absolutely heartening to see. Fantastic Singapore, fantastic GRMs. In HPCL's case, which we don't own, but HPCL, the marketing margin was also very good. I would say that, see, in this companies, why we have taken smaller weights is that we are not sure where the incremental capex which they are doing, what is the kind of return or ROE we can expect out of that. Otherwise, these companies are clean value buys in our view. On metal side, Prashant, you asked us. So we had Tata Steel, Hindalco, and JSW Steel in our portfolios, and we trimmed a bit in the last rally because whatever I'm gathering is that because last Fed cut, the 25 bips rate cut which Powell did was a hawkish rate cut. And so after that, we have seen that dollar index is moving higher. US 10-year has moved from 4 to 4.1. Dollar index has moved from, say, 97.5 to 99 and above. So I would say that this is a slight negative news for metals as well as all emerging equity markets also. So I would say that right now we have booked profit at least half of our positions, but we would like to buy on dips, at least the Hindalco kind of name.
Okay, all right. Parag, I wanted your view on the consumption space. Titan came out with its set of numbers. Kansai Nerolac as well came out with its set of numbers. We know the big entrant out there, the Birla Group, making their presence felt, and there's not much growth on Kansai. Your view on both these two names and overall the consumption space, how do you approach it?
So in consumption space, so we have always liked TVS Motors and Mahindra in that space. And we have always remained bullish on them. Of course, the recent rally was just too high, so we booked some profits. But Mahindra on dips looks okay. Even Maruti, for example, yesterday there was a profit booking in Maruti, and we had booked much earlier. But I would like to say that below 15,000 or so, I think Maruti is good. We also hold LG Electronics, recently listed one company in the consumption space. So yeah, I would be optimistic. If you've seen, 3M Corporation reported yesterday numbers, the numbers are absolutely phenomenal in my view. For a multinational company to report a 43% EBITDA growth. So I would say that consumption is, you can play it through various things, and I would say that definitely it's a good space to be in, because after government and RBI has done so many things, right? Interest rate cuts, GST cuts, and prior to that, income tax slab increase. So the government focus is there, and consumption will drive a virtuous cycle, right? If your more tractors are sold, then Mahindra will put more capacity that creates job, then those people will consume. So it's a virtuous cycle which government has triggered.
Take that point. Thanks a lot, Parag. Just hang in there. We'll take a short break. Come back on the other side. We have some technical trades coming in. Siddharth Rai Mangla and Mitesh Thakkar joins in. And alongside that, we will continue our conversation with Parag as well.
Welcome back. You're tuned in to Bazaar Morning Call, and I hope you're having a good morning. Well, it's that part of the show when Hormuz joins in. He tells us about all those big movers yesterday and the ones that saw some delivery as well. Hormuz, take it away.
Morning, Nigel. And PSU banks have been on a roll in the last few weeks, and Indian Bank is one such stock. And even yesterday, the stock was up for the 6th day running and on very significant volumes as well. Now, it's gained the 10 months this year so far. It's gained in 8 of those. It's had a very good year as well. Now, the last 2 sessions, there has been a significant increase in trading activity. The fact that it has seen almost 1 crore shares that have been traded now in over the last 2 sessions. Even yesterday, there were 46 lakh shares traded. The 20-day average is just around 20 lakh shares, and 25 lakh of those were marked for delivery, and the 20-day average here is only 9x now at the of around 9 lakh shares. Now, over the start of 2021, the stock was around 85 rupees. It closed close to 900 rupees yesterday, so 10x in the last 5 years. Thangamile Jewelry, an earnings reaction yesterday, the biggest single-day gain since February. It was the 3rd straight day of gains for the stock as well, and almost 11 lakh shares were traded in that 20% upper circuit. The 20-day average is only 32,000 shares, and even then, out of those 11 lakh shares, close to 2 lakh were marked for delivery. The 20-day average here too is only 15,000 shares for Thangamile Jewelry. The stock has delivered decent returns as 5 positive years out of the last 6. And Finiotex Chemicals, and that stock recently started trading X bonus and X of its stock split. And since then, the stock has seen some very heightened trading activity. Almost over 1 crore shares were traded last Friday, which was the X date of its bonus and stock split. Yesterday, we saw almost 5 crore shares traded, even as the stock came off the highs of the day. And even before Friday, the average daily traded volume was only 12 lakh shares, close to 13 lakh. And since the last 2 sessions, we've had almost 5 crore shares traded yesterday. The 20-day average is only 10 lakh shares. And out of those 5 crore shares, only 63 lakh shares were marked for delivery. The 20-day average here too is just close to 3 lakh shares.
All right. Interesting set of data points there. Thanks very much, Hormuz, for it. Well, Mitesh and Siddharth Rai are with us with what they'd want you to do in terms of today's trading action. Gentlemen, morning. Great to have both of you here. Mitesh, you go first. View on the indices off the lows by 100 points by close yesterday, 50 points on the day.
Morning, Prashant. So I think the Nifty, we've been talking about that 25,600 should be a good support area. We did get close to about 25,640 or thereabouts, and then had some kind of recovery. I think the broader trend to me still looks good on the upside, unless until we start seeing a close below 25,600. But with this rally, which has happened from 24,600 to about 26,100, I think you might see some more consolidation before there is strength to continue this move on the upside. So the immediate view or the short-term view is possibility of a range between 25,600, give and take 30, 40, 50 points at 26,100, 150 on the upside. Move on either direction, and my preferred bias today is on the upside, but a move on either direction will give you further, some kind of bias on the upside or downside.
Okay, all right. Got that. Thanks, Mitesh, for that. So that let's get you in as well. Yesterday was encouraging to see we defended the lower end. However, we still remain in a bit of a range. How would you trade the index today?
Hi, Nigel. Good morning. Thanks for having me. See, Nigel, if we talk about Nifty, we discussed this just yesterday that as long as Nifty is below 25,800, that big mark, it won't be a very good idea to take the contrarian view. In fact, we'll be much better off staying with the trend. And the trend, Nigel, right now is negative. In fact, today, my view will be quite the same as yesterday's recovery was not very good. Whatever attempt to recovery was made yesterday, 25,800 acted as a very strong resistance. In fact, yesterday's high was at 25,800. So even now, as long as we are below 25,800, we have to look for opportunities to sell, Nigel. And in fact, once Nifty manages to go around those 25,700 levels again, we'll have a very good opportunity to sell for the 25,550, 25,525, those levels. So we can see a quick sell-off once Nifty goes again towards that 25,700 mark.
Okay. All right. You can go ahead then, Sid, and tell us some stock trading picks as well.
Yeah, sure, Nigel. See, the broader market is looking much better. So there I have some good ideas from the broader markets, and two stocks, both are on the long side. The first one is Alchem Labs. See, the stock was probably broadly in a 200 points range for the last 1.5 months. But yesterday there was a very big up move, and in fact the stock came out of that range. 5,600 was a very big level. Stock managed to come above that. So there's a fresh momentum building up. Alchem Labs can be bought right now. The spot is trading around 5,628-ish. It can be bought here. The stop loss will be at 5,605, and our targets being the first target 5,675, second target 5,690. The second stock is Solar Industries. See, we saw very good bounce back from the lows in yesterday's session. Even, in fact, the stock managed to come back above the big 14,000 mark. So even here, a fresh momentum is building up. A good move can be seen in the upcoming days. So Solar Industries can be bought. Right now, the spot is trading around 14,160. We can buy it here. The stop loss will be 14,080, and our targets being the first target 14,300, second target being 14,350.
All right, Mitesh, your stock picks?
I have a buy on Alchem as well. I think good breakout from sideways activity here. Keep a stop at 55.80. Look for targets of 57.30. The other stock is Biocon, which is showing continuation signals on the upside. So keep a stop at 372. Look for targets of 388. Indus Tower, after a 3 days pullback, gave a very strong reversal. So buy here with a stop at 376 for a target of 395, and one sell call, that's KEI Industries. Keep a stop at about 40.50. Look for a target of 38.50.
All right. Thanks a lot, gentlemen. With that, we'll take a short break, come back. We have the pre-opening. Also with us will be Gaurav Malhotra, who's the Executive Director at Axis Capital, for a discussion on the telecom space. Vodafone Idea getting some relief in the AGR dues case. Also the numbers coming in from Bharti Airtel.
Welcome back. We've got markets which are going to open in the pre-open at least in about 3 minutes or so, and we'll have rates starting to come up any time now. Just a couple of maybe single stocks that we can look at. Parag, let's take it one by one and maybe like a rapid fire. Walkhard, I don't know if you have any views, was up 9% yesterday. There is that the new chemical entity, which is supposed to be a blockbuster one for them. The timeline for when the approval is supposed to land is now. Could be any time. We've not heard anything new, but any thoughts here?
No, so I don't track WOCAD, and so I would refrain from commenting anything on it, and we don't have it in our portfolios. One thing, Prashant, is that one thing I would like to highlight is that banking results have been absolutely phenomenal. Yesterday, we saw City Union Bank reporting margin expansion QOQ and 18% loan book growth with absolutely pristine asset quality. So we have been very big believers of these regional banks. We hold City Union, DCB, and Federal. And we were absolutely delighted with the numbers of all three banks. Federal Bank QOQ NIM expansion was 15 bips. And I think from Q3, Federal Bank will start showing growth and improving ROA trajectory also. Of course, the rate cut of December has to be seen. If that is not happening, then all these banks will continue to deliver absolutely fantastic numbers.
Yeah.
Even SBI, on PSU side, we hold SBI and Canara. And SBI is going to report results today. My expectation is that the NIMs should not contract by more than 5 bips QOQ, as we have seen in other PSU banks like BOB and Canara and all. In Canara, for example, the loan book growth guidance was 11%. They delivered 13%.
Right.
I think PSU bank trade is still on. There's no looking back.
Yeah, was up yesterday, was up 5% last week, the PSU bank index as well. Parag, I just want to ask you if you have a view on Ixigo, which is the travel, the OTA. It's fallen $100 from the highs, by the way, Ixigo. I don't know if you have looked at this one. And the other one is Dredging Corp, which was Circuit Up. It's kind of like a play on this shipbuilding push by the government. Small company, 2,000 plus crore market cap. So Ixigo in this one.
So Ixigo, I would refrain from commenting. We don't have it in our portfolios. But dredging, of course, that also we don't own as of now. But it's a stock worth looking at because the size of opportunity can be humongous. And the company has all the capabilities. And as you rightly said, market cap is too small. So it can be definitely it can be worth looking at.
Right. Just before we let you go, Parag, I wanted your thoughts on something like an IEX because they gave us their October update. There has been an increase in volumes, but the sort of that, market decoupling still stays on them. How do you, look at a stock like that, which has already seen a bit of a correction, but things are looking good, at least on the operational front. Do you dabble with it or maybe stay away given the sort of uncertainty around regulations?
Yeah, so decoupling is a very big event, but I would say that, you are completely right that the operational numbers are good. Stock has corrected a bit. So I would like to definitely study more and build a view and form a high conviction contra buy over here.
Okay. All right, Parag, we'll let you go with that. Thanks a lot for joining in. Have a good day. Catch up soon. That said, let's focus on the telecom space. We have a lot of them that are going to be in focus today. Bharti Airtel, Bharti Hexacom and Indus Towers. Rima joins us to help us with a quick run through on the news piece on all these three. Rima?
Hi, good morning. So Bharti Airtel has delivered a good set of numbers. Consolidated revenues have come in ahead of expectations, but the big beat actually came in for Africa, Airtel Africa, which reported numbers last week. India too is slightly ahead of expectations. So the India mobile revenue went up by, say, 2.6%, which is higher than consensus expectations. So the India business continues to do well, and this entire premiumization, the benefit of moving 2G to 4G, 4G to 5G is helping their ARPUs despite no tariff hike, headline tariff increase. So even the average revenue per user ARPU went up to 256 versus about 250. Subscriber growth, though, was quite modest at 1.4 million on a quarter-on-quarter basis, lower than what Reliance Jio had clocked in. But that doesn't come in. I mean, that is not a negative surprise because we already had the TRAI data. Bharti Hexacom, the only disappointment in the numbers is the company lost subscribers in Q2 vis-a-vis Q1. So the overall subscriber base declined by 110,000. For Indus Towers, you should keep that on your radar, and actually Bharti Airtel also, because yesterday Bharti Airtel said that the board has given an in-principle approval to acquire an additional 5% stake in Indus Towers in one or more tranches. It's not a confirmed thing, but they have an in-principle enabling resolution to go ahead and acquire. Now, Bharti right now holds a 51% stake. If they buy an additional 5% in Indus Stars, it will entail an outgo of nearly 5,000 crores at the current market price. The question is this the best use of Bharti's capital at this juncture? The company's capex this year is lower than last year, so they're generating more free cash flow. So, when we speak to the analysts, it'll be interesting to know how, what they make of, Bharti spending incremental money on Indus Stars now, and what does that bring to the table? And instead, would they have rather preferred if Bharti Airtel was making, was perhaps increasing the dividend payout? There's a conference call also at 1 o'clock today. Back to you.
Rima, thank you very much. It's pretty comprehensive. And, the pre-open is kicked off, and we should just go back to the telecom plate, the stock board, and see where things are opening this morning at, even in the pre-open, which is sometimes a little all over the place. It's Indus is up 1.6, Bharti is 0.5%, Hexacom. Look at, maybe just pull up Idea as well. That's Vodafone Idea after yesterday's sharp move. Almost all of it after that clarification from the Supreme Court. Vodafone Idea is 1.7% higher. Look at the rupee as well. There was, and we'll put this out. So rupee had fallen back as of yesterday to all-time low of 88.80, and it looks like from what we are picking up, and we'll put this up in a bit, that the RBI has come in heavy with dollar sales. So supporting the rupee rate, it's a 30 paise move right at the word go as soon as the onshore trading is begun. So more details on this one. But that's a fairly large move, no data or anything of that sort, but just maybe a pushback from the Reserve Bank in that sense. Let's talk about the telecom story in some more detail with Gaurav Malhotra, Executive Director at Axis Capital. Gaurav, good morning. Good to have you with us here. Thanks very much for joining us. Just the latest first, which is in the order of when the news hit the tape, which is Indus and Bharti. So, what does this additional 5% do from an Indus perspective and from a Bharti perspective? Because, they already own, 51%, right? So additional 5%, what does it get Bharti and what does it do for Indus?
Yeah, hi, good morning, everyone. See, nothing much, right? Because to be honest, post 50%, you are anyway consolidating Indus, right? And maybe the earlier view, see, Indus is important to Bharti from a strategic perspective. That's where most of their towers are residing, on which they have put their network. So, at a time when there was a lot of question marks on Vodafone Idea, then it was probably prudent to sort of, beef up your stake in Indus. Just as a de-risking strategy. Why they have increased that 5% now, I think so that's going to be the key question for the management, in today's call. Like you rightly said, nothing really changes between what was happening at 51% and what will happen at 56%.
All right. And you continue to remain positive on Bharti Airtel, right?
Yeah, like from a stock price, from a stock perspective, from a company perspective, there's nothing to complain, right? Okay, this we'll have to see what the reasoning is, because essentially this is sort of taking out 5,000 crores of cash, which could be given as dividends. But otherwise, the company still generated almost 15,000 crores of OCF, right? The business is doing very well. Mobile is doing well. Broadband is doing well. Enterprise is now sort of, after the calibration, has started to move back up. So on the whole, the results they were in line, but they were pretty good, solid set of results.
Okay.
The street has started betting on Voda's survival right now. Would you hold your horses before there is more clarity, or would you go down that path and perhaps take a punt as well?
I would wait to see what is the structure of what is the thought process, in terms of how much is being, if at all, is being waived off, how much of it is being pushed back. So you'll have to see what are the contours of a potential sort of structure, before sort of taking a call. See, there'll be some things which will actually benefit Vodafone from a business perspective. There may be some things which actually don't benefit him as much, but maybe benefit Indus more. So we'll have to see how the whole structuring of it sort of works out.
Okay, what about Hexacom? It's much higher in comparison to the issue price. What was your reading of the numbers? Was it a little bit disappointing, actually?
To be honest, plus minus 0.5% and all, 1%, I'm not going to call it a disappointment or one way or the other. These businesses have become very predictable now, ex of the tariff hikes, when there'll be a step up in their ARPU and all. Plus minus things are okay. See, on the subscriber addition loss, if you see even Bharti's overall subscriber base additions have been pretty muted, right? The critical thing to note is whether the 4G subscribers are growing for both Hexacom and Bharti Airtel, which is true. At an industry level, you are not really increasing your subscriber base at an aggregate. So if someone is losing, someone is gaining. But what is more important is whether the better quality subscribers are coming to you and staying with you, and you are sort of increasing that salience. Otherwise, the results of Hexacom were pretty much in line.
All right, on the Vodafone Idea, relief, assuming that the best case scenario is playing out as per what we have, and then there is a potential fund infusion that various unconfirmed reports are talking about as well. The question is, the fund that is being quoted manages $10 billion globally, I think so. And the report is suggesting $4-5 billion in this company itself. Even if that happens, still dilution will be massive, right? Do you see a risk reward at any point of time turning favorable for Vodafone Idea? Even if we get the money, there will be a big conversion. So your take?
See, I'm not going to comment on the fund or whether they have the ability to invest or not. See, otherwise, if you see, from a business perspective, this is a business which has not really been invested now for many years, right? There was some additional investment which happened in the end of the last year, but not much. So this will require time to fix. And while you're fixing, Bharti and Jio continue to move ahead, right, in terms of their own network, in terms of their own revenue market share. So we'll have to see, one is that you are waving off. Second is how much cash is coming in. And the third is what is the pace of deployment to strengthen your network and start competing in the market more effectively. I think so it will be a mix of three. Just one or two elements of it are not going to be sufficient from a long-term competitiveness of Vodafone Idea.
Right. And do you have in your model, a base bull bear case scenario for Vodafone? Now, has that changed after some amount of relief has come by?
See, I have not made any changes, to be honest, because we don't know what the structure is going to look like, right? Whether it's a wave off, partial, full, whether it's a pushback, say you pay me over or pay the government over 10 years, 20 years. We don't know what the structure is. So you can have n number of scenarios, to be honest.
Right. And what's the value that you ascribe to Jio, if at all they were looking at a demerger here?
So Jio, the equity value is around $135 billion in our target price of Reliance Industries.
All right.
The gross value.
Okay, Gaurav, we'll leave it there. Thank you very much for joining us and appreciate your time here on CNBC-TV18. I think the pre-open session has come to an end. And maybe we can just quickly look at where it's settled. Neither here nor there, but 18.5 odd points lower is where we stand. Now let's get the 9-10 calls out of the way. Mitesh is with us to help us. Mitesh, what do you have?
I'll go with a buy on Biocon for targets of around 388 to about 390.
Mitesh, just coming back to you with a couple of more questions. Just want to round up at least some of the stuff which is opened, specific stocks and news flow which we put out from 8 o'clock in the morning. So the stocks will come up and just gives you a sense of how we are likely to start. So Bharti, Indus, both higher. Index was up 5. It's up another 2.5 today. Titan is down about 0.25%. And we'll have the management, by the way, of Titan join us in a bit. Acme Solar, 4% higher. There is Hitachi Energy, which is opening up 8% in the greens. That's a big one for a big name. There is Hero Motor Corp, sales numbers monthly, 1% lower. Bharti Hexacom is there. Power Grid is down about 1.25%. There is Gland Pharma, which is starting, and something like a Kansai Nerolac, which is opening up in terms of the session as well. So flattish kind of starts is what do we have?
Looking at a couple of these stocks which are moving pre-open, Hitachi is one of them. A strong performance is what we saw on their EBITDA front, and the stock is up nearly 8% in pre-open. The other one, obviously dredging, you spoke about yesterday, an upper circuit of 20% right now as well. The circuit filter has been revised to about 5%, and it's hitting that as well. So up around 4.9% for that counter. TBO Tech is the other one of those companies that reported numbers post-market yesterday. They had the additional benefit of the acquisition of Classic Vacations as well. So their revenues grew by 26%, net profit grew by about 12.5%. So it's a positive out there. Would be very interested to see how Godfrey Phillips is performing. Godfrey Phillips, it's actually down about 1.5% in pre-open. Even though the EBITDA increased by about 13.5%, the revenue declined. If you take into account the excise duty impact as well, so the revenues on a reported basis were down 5%, and that is a bit of an underperformance as compared to, say, something like an ITC, which showed a 6% volume growth, or even a VST Industries, which had double-digit volume growth. So to that extent, if Godfrey Phillips reports a lower volumes than the industry, it will be the first quarter in many where they've perhaps underperformed the industry on the volume front. So Godfrey Phillips opening with a slight red tick, or settling in the pre-open with a slight red tick. But let's revisit those Titan numbers once again. We already had the second quarter update that the company had given us. Jewelry revenue up around 18.5-19%. And if you look at the reported revenues for Titan, 16,534 crores compared with street expectations of 15,000 crores. That outperformance is explained by the sale of gold ingots worth nearly 2,000 crores versus about 884 crores. So a large part of that is on account of the price rise that we've seen in gold as well. No problems when it comes to the EBITDA or even the net profit. Net profit of 1,006 crores. The street was working the number of around 1,050 crores. The EBITDA at around 1,620 crores. The street was working with a number similar to that itself. What was good was the jewelry margins. They picked up on a very favorable base. Remember, last time, same quarter, we had that inventory hit on account of the customs duty cut, so which is why their margins dropped to 8.7%. They're now back at 10.8%, and the management guided band was close to around 10.5 to 11.5%, so that's a positive. They continue to hold market share 8%, a slight increase versus the last time, and at the same time, their international business continues to do well. All the other growth drivers, be it Carrot Lane or bags, fragrances, Tanera, all of them, smaller parts of their business, but growing very fast. Studded share, that was the most heartening part, at 34%, absolutely flat as compared to what we saw earlier, so that is good. All said and done, Titan, mild green is what we see. The stock has seen a bit of recovery from the lows. Let's see whether that continues or not. With that, we have the opening bell.
Yeah, no, 25,760 is where we are at on the Nifties. It's absolutely unchanged right now. Nifty Bank is flattish, 58,030. And you've got the mid-cap index, which is starting about, actually 25-point change. Nothing at all. It's absolutely flat. And the small-cap index will come up on your screen as well. And, again, almost unchanged at this point in time. 0.03%, so, blinking red and green for now. The Nifty heat map gives you a quick sense of how the 50 stocks are opening. And is it as undecided as the index itself? I guess it is. So on one end, you've got Bharti, on the other end, you've got Tata Consumer, Coal, Power Grid, etc., which are seeing a little bit of pullback. But I guess very, very small changes across the board.
Well, that's right. A few stocks actually, but though are moving around. SJS out there, you had the EBITDA that came up by close to around 37%. The margins as well have improved to high 20s now. 28% is what it came at. So we have SJS. That's up and about in today's trading session. Big move is what we're seeing on that name. Thangamel Jewelry, we'll have the management later on the show, during the course of the day. That stock as well has bounced up a good 6%. Remember, yesterday it was up 20%, as Mangalam had explained to us. LG Balkrishna as well. The street is a little bit optimistic on the auto space now, and some of these ancillaries have started doing well. So good move is what we're seeing. Follow through buying on this name as well. Hitachi is still up close to around 6%. It's come off a little bit from the top, but good bounce is what we're seeing for a counter of this size. What else? TBO Tech up 6.5% as we speak. A few stocks, though, are seeing some selling. Phenotex Chemicals, big up move is what we saw yesterday. That's coming for some profit-taking today. Telecom stocks, well, they're in fine form today. Bharti Airtel is up, Industars is up, as well as we have Vodafone Idea, all of them holding in the green. City Union, positive news flow coming in there. Numbers look quite good. That stock, in fact, has popped up. And Acme Solar as well, another one that's gaining up and about. And these larger counters actually are seeing outsized moves. 3i India as well, it's a 30,000 rupees stock. But that stock, in fact, is up close to around 10%. Volume's not very, very high, though. So Hitachi as well as 3M, both them, volumes not that large, but both of them seeing good up move.
Numbers coming in for both Hitachi and 3M. So dredging continues its up move as well. It's up 6% right now. Decent volumes backing that stock. TBA Tech up 6%. We're seeing some traction in names like, SML Isuzu as well. But on the way down, JK Paper reported a weak set of numbers, and that's been the case for the paper sector by and large. That stock's down about 4%. We're also seeing a big gash on Godfrey Phillips. Like I said, revenue decline as compared to all the other peers would make it one of the weaker performers in the sector so far. And the stock has seen a big rally. In fact, from the start of this year itself, Godfrey Phillips is up nearly 75%. So, on the back of lower than expected numbers, the stock is seeing a big gash on the way down. Intellect Design Arena was up in yesterday's trading session, up around 6 to 7%, now coming in for some profit taking. Cummins is down about 2%, Hero MotoCorp 2 down about 1.5%. But the top gainer in the F&O space remains Indus Towers. We have GMR Airports, Ambuja Cement, IGL doing well too. Titan has opened higher with a gain of almost 1.5%, and Kalyan Jewellers follows suit with a gain of 1% as well. Maybe the prospects of the jewellery industry looking slightly better after the decline that we've seen from the top in gold prices and the seasonal, nature of the third quarter for the jewellery business, which is fundamentally fairly strong. And that's reflecting the kind of moves that we're seeing in names like Thangamayil, which continue to rally from yesterday. The good part today, however, is that there is some support coming in from Reliance as well. It's up around 1/3%, but at a time when the Nifty is absolutely flat, 1/3% on the Reliance could, offer some sort of support. So maybe, perhaps the first hour of trade or first 3-4 minutes of trade, there is indecision, but not particularly bad.
No, it's not bad, Mangalam. And 1,400 stocks are higher and about 900 stocks are lower. So market breadth is positive as well. I guess you guys mentioned City Union. Parag was just talking about that is something he owns in the portfolio. So 4% on that one. Dredging is up 6.5%. That's moving up as we speak. It's a sharp gainer right now once again. TBO Tech, I think we mentioned, LG Balakrishnan is up another 6%. So it closed last Friday at 1,400, 1,700 this morning on LG Balakrishnan. GM Breweries is coming up with some gains. MedPlus was a big winner yesterday. It's up a slow start, nothing very large right now. I mean, but it's the two telecom names, Bharti and Indus. There is, and of course Shriram Finance, which was up about 5-6%. Top Nifty, biggest volume-led gainer on the NSE, up another 1.5% as we begin this session today. Hero MotoCorp is down 2 now. Coal India is down about 2%, just highlighting some of the prominent losers as well. CDSL is down about 1.75%. Reliance Power is down about 1.5%. Some news flow there, of course, for the group last evening. 5-Star Finance is down 2%. 5-Star had a pretty large move last week. It went from 500 levels to about 650. It's a beaten down name, but volumes yet to pick up in any large degree as far as the losers list is concerned. Nifty is back down about 14-15 odd points. So. Flat. Krishna Sangvi is with us, CIO Equities at Mahindra Manulife Investment Management. Krishna, great to have you with us here. Thanks very much for joining us. Broadly speaking, Krishna, we find ourselves at a bit of a crossroads, right? Or is it a crossroads? How much weight should we put on the fact that out of the 50% of the companies which have reported earnings, maybe 50-60%, it's tracking pretty well. It's not disappointing, maybe even slightly higher. There are some upgrades here and there as well. How would you rate it?
Yeah, clearly, we have this situation almost every time, right? You're always going to have some set of companies doing exceptionally well, some below par, and that's a little bit, the nature of maybe economy, nature of markets at times, and partly the case of expectations. So if you look at this particular season, clearly the expectations were running a bit low, and so some of the numbers clearly are surprising from that perspective. At the same time, and if you look at a broad mix, I think BFSI, which did quite a bit leading the profitability curve for nearly last 7-8 quarters, possibly is something we right for a change. Let's say trailing the broad market earnings, but maybe commodity is doing the pretty heavy bit of earning growth in this quarter. But it's partly a question of, how YOY was, a year back. Possibly some of these companies didn't have great numbers. And it's always going to be this, this some sort of a change in earnings, partly driven by YOY and partly by the environment, yes.
All right. Hi, Krishna. Good morning and good to see you. Krishna, I wanted to ask you about an IPO. I think you know which one I'm going to talk about. Much hyped in the market, Lenskart. Plenty of debate out there with regard, but actually the subscription has been very, very high. I think you all as well were participated. could you tell us, because everyone's questioning the valuations, but it seems the management has a vision and various high pedigree funds as well, they share that vision. So if you could comment on the rationale behind this investment.
Sure. I think, honestly, we don't generally speak on any individual company. So let's look at a broad picture, right? Broad picture is the way Indian economy is growing. There are quite a few new business models coming up. The broad, trend of last possibly 8-10 years, especially post the GST reforms, has been that organized industry is gaining at the share of unorganized space. So in such atmosphere, when you have a new player, which is trying to be a big aggregator, which is trying to capture an existing market through a market share gain, the one way to look at is a player creating a new market, or is a player trying to get a share of existing market by creating its own, growth plans, aggregating. I think that's one way. Is the business model in terms of past execution reasonably good enough? So that does the basic tick mark of how we look at companies from a growth and a management perspective. The third piece possibly for any investment decision is really valuation, and that's a tricky part. In terms of at what valuation one decides to completely avoid investing or go in with the investment through a portfolio weight, which is having some sort of early entry, and then look to monitor the company as well as the portfolio weight at various time frame, and possibly portfolio weights can change. So I look at it this way rather than outright rejecting, rather than saying that valuation is expensive. So we look at broadly in that context.
So you're sharing the vision then of the management. As you said, they're trying to create a new market. If I had got a chance to speak to them, ask them what is the cost of setting off, creating that market, because obviously they were saying that the high number of people that test, then the market is growing itself. But that debate for another day. I think on the whole, you believe that some of these companies, maybe they're coming at the upper end of valuations, but otherwise there's a longer term story at play. Would that be fair?
Yeah, essentially it's time frame, and as I said, they're trying to actually get a share of the existing market by replacing some existing players, and to that extent, their growth path can be reasonably, let's say, disproportionate to the overall growth in the economy.
Very interesting to see how that goes as well, because as per their RHP, the underlying total addressable market in India is close to 70,000 crores, which is exactly the sort of valuation that they're seeking as well. But we take your point that if it is a part of the portfolio and the weight on that is managed, then maybe you can possibly be a party on the way up and also limit your exposure were things to go southward out there as well. But speaking about all these new age businesses itself, we have the IPO of Grow, which is opening today as well. And then we had the results that came in from Urban Company, where they actually want to increase their investments to Insta Help, which is basically the quick commerce version of what Urban Company is doing already. And then you have Swiggy, which is looking to raise funds. We have Zomato Eternal, which already is sitting on nearly 18,000 crores of cash. What's your approach in all these new age players, and what kind of exposure do you have beyond the Lenskart investment?
We will have some exposure to some of these companies as part of our portfolios, but I think the bigger issue perhaps is the way Indian equity markets have played out in last 2-3 years. The way investor appetite has grown, I think there are too many companies which are looking to raise equity capital. That's perhaps the primary role of equity markets, saying that any entrepreneur who wants to grow possibly gets money from markets, and so that's a much bigger trend. I would like to focus on saying that there are quite a few IPOs coming up, quite a few players looking to raise capital for their own growth plans, and luckily, market environment is quite conducive. Yeah, clearly that has changed the dynamics of market, because if you look at a year back, perhaps, the environment was, quite a bit of demand and not too much of supply of shares from a primary market perspective. Maybe last 6 months have been reasonably different, and we're now seeing a situation where the supply has caught up. Either you look at from a primary market through IPOs or QIPs, or even existing investors selling through OFS. I think that's a bigger issue, which says that yes, finally, supply is possibly seen as catching up on markets, and to that extent, we've gone through this last 8-12 months of consolidation in markets, and hopefully, we now possibly take a new course, and this earning growth in this quarter might just be a good indicator going ahead.
Yeah, no, absolutely. And I think we'll have to sort of wait for some of this stuff to play out as we go along. By the way, Dredging Corp is now given up pretty much most of its gains, opened up with about a 7% pop. It's up about 2% now. Again, it's a small company, so don't want to overemphasize the point, but has had a large move recently coming through. So, there is some other stuff as well, which I just want to quickly highlight. 3M India, I think we highlighted in the right at the word go, it's up 11.5%. And, very, it's for a 34,000 rupee stock, it's got very large volumes on it. Actually, I'm not sure if this is a block deal or something, but it's the highest volumes in some time on 3M India. So we'll check up on that. TBO Tech, I think Mangalam mentioned, is up about 6%. And I can go down the list. Tatva Chintan, that's up about 4% or so. And so on and so forth. So lots of specific names which are buzzing around in trade. And as Mangalam was explaining to us, Thangamayil results and the reaction, Thangamayil is up another 11% today, Mangalam.
Yep.
So it's, and of course, Titan Management coming up.
Titan Management coming up, Thangamayil. And all these guys, benefit also from Thangamayil in particular, as compared to all the other listed companies. They have a higher exposure to unhedged gold. And if your unhedged portion of gold, which has seen a rally of almost 52% in the last 1 year, that adds to your overall, EBITDA margin already, because you've bought gold at a lower price and you're selling it at a 52% higher price. So that's a good margin accretion for them.
Well, in the next 60 minutes, we'll have, I think, 3 Tata Group companies that will be joining in. Tata Chemicals, Titan, and I think Tata Consumer as well later on. Well, we'll thank Krishna for joining in. Krishna, thanks for joining in, giving us insights into the markets, and wishing you a good day ahead. We catch up soon, Krishna. Thanks for joining in. Well, time to move to the first Tata company that we were talking about, Tata Chemicals. Well, they reported a weak set of Q2 numbers. Operating profit came under some pressure. The company says the global demand as well is estimated to be flattish. Well, to help us out to understand how are the trends moving ahead, we have Mr. Mukundan, the Managing Director and CEO of Tata Chemicals. Hi, sir. Good morning. Thanks a lot for joining in. Well, let's focus on demand first. You're saying demand continues to remain a little bit tepid. So could you tell us, is it across geographies that you're seeing demand remain a little bit tepid? And when do you expect recovery in demand? Is there an oversupply at play? If that's the case, should we be expecting price cuts from Tata Chemicals in the near future for soda ash? Demand trends and a possible price correction. Please go ahead.
Yeah, so broadly, I think, let me just say there are 3 broad geographies and 3 broad product groups which we have. And I think, let me just add a bit of color. I think demand in India continues to be strong, and that's reflected broadly across all categories. We've seen, for example, on the main two main products, the salt, for example, we've seen about 10% growth. In soda ash, almost close to about 20% growth. And in sodium bicarbonate, again, I think our growth has been close to about 20% in terms of volumes. In terms of overall number too, I think the domestic revenue is up by 15%. And the profit after tax broadly, domestic revenue was actually in the H1 was up 15%. In the quarter, actually is 19%. But that 19%, you need to factor in that last year, the same quarter, we had heavy rains and there was an impact in dispatches. So if you equalize it, it probably is about 15%. And the profit after tax overall, I think in broad range would be about 30% up. But this quarter, it's 80%, mainly because adjusting for a weak quarter last year. So I think that really tells you that India is doing well. And our strategy for India remains pretty much in place, that there's headroom to grow salt further. We'll be adding another 200,000 tons of salt capacity. We'll announce that very shortly where it is getting added. We are also adding 500,000 tons of soda ash capacity at the same site in Mithapur. And bicarb capacity will also be added by about 60 to 80,000 tons from our current figure of 240,000 tons. So I think all indicators, all triggers are moving fine. If you look at the new products like FOS, I think our sales were up from something like 750 tons to about 830 tons this quarter. Again, a good growth. And silica is actually, which is a new product in Tamil Nadu, actually is constrained by the production capacity, and that can only change when our new capacities come on stream in 24 months.
Right.
That won't change much.
Okay.
The UK operations actually had a one-off of 65 crore. that was provisioning for entire reconfiguring the entire operation. We finally have technically reconfigured it, so we don't, and we were provisioning for the cost which will come in future, so that we take all the negatives out of the way, so that we can then look at the operation in real. And UK is already EBITDA positive. It will go to EBIT positive and PAT positive by the time we hit Q4. All indicators are fine. There's headroom to grow. So I think to come to Kenya, I think there's a...
Mr. Mukundan, sorry, apologies to interrupt, sir. Sorry, there's a lot of information there. And we'll ask you those questions about Kenya as well in a bit. Good to see you, sir. It's been a while since you've been on the program on results. So, Prashant here. I just wanted to ask you specifically about soda ash. There was a bit of a...
So I'll come to that, Prashant. Let me take it in a step-by-step manner so that you know what the results mean, and I'll go forward.
Okay, sure.
What to look ahead. So effectively, I think we are talking about Kenya is a sequential correction which will happen because some shipments and port delays delayed about 30,000 ton shipment that should catch up in H2. So we are not really. The real issue for us has been US. Where in US, I think the domestic pricing is pretty stable. Domestic demand is stable. I mean, it's probably 1 or 2% up or down. I mean, it's a flattish kind of market, but there is not a big issue in that market. The real impact for us has come this quarter, mainly from the US exports to Southeast Asia. And the Southeast Asia market prices have absolutely collapsed. That's the right thing which one would say. And I think that's because the Chinese market demand has gone down. And the production of solar PV panels in Malaysia and in Vietnam, both have gone down. These are the places where Chinese had set up facilities for export to US market in anticipation of the tariff issues which China was going to face. But actually, the tariff regime, the way it works now is that there is also tariff if you push through some of these markets. So effectively, it has meant that the demand in these markets has come down, but the supply from China has increased. So the real pressure in the market is fundamentally in the Southeast Asian market, where almost $50 per ton reduction in pricing has happened. In India, there's a price has dropped, but it's 2 or 3%. It's not a big number to say that that's moved the needle. In India, the needle is actually moving by the volume growth, more or less covering up for the pricing. UK doesn't have any commodity products, so there is no issue in terms of just volume growth, which will lead them to move forward. And Kenya, more or less, is the lowest cost producer in the world. It doesn't matter for that what the market number is, even though they export 1/3 of the product to Southeast Asia, they're able to compete well. So the real issue has been for the US, and that's where the pressure has come. US also has had an issue of drawing down of work in progress inventory, which has reduced the fixed cost absorption by about $5 million. So all in all, I would say there are 3 moving parts in this quarter. 65 one-off. There's a $5 million one-off in US and a 16 crore tax. Basically, we settled the tax issues in the Kenyan KRA authority, it's again a one-off. It's not going to repeat. So broadly speaking, you're talking about 135 crore hit right across 3 different dimensions, UK, USA, and in Kenya for different reasons. Hopefully, they don't follow through. In terms of pricing going forward, I think we probably are at the bottom of the cycle. I'm getting tired of saying it's the bottom of the cycle every quarter.
Let me. Can I slip on?
Yeah.
So yeah, okay. That's a very comprehensive and that's really useful to get a lay of land. Now, for soda ash, we've been at least hearing about this anti-involution in China having a lot of capacities being shut down. You addressed it briefly by saying that what's happening in Southeast Asia. Could you give us a sense of whether, at a unit level, pricing will get stronger going forward? You're saying it's bottomed out, but can you provide some guidance on the back of what's happening in China or expected to happen in China at least?
So clearly there are 2 issues, what the policy of the government, what they're trying to do, and the policy they're facing on the external front vis-a-vis exports out, because a lot of the products like solar PV panels are exported. So I think both are working counter to each other and they've not been moving at sync. And that has meant that inventory levels in China for both panels, glass panels, which is a finished product, and soda ash, which is the input product, is actually the highest ever seen. 1.6 million tons of stock, which is almost like 50% of India's annual demand, is lying as finished good stock. and it needs to find a home. So I think that's the big issue there, which we are facing, is a short-term blip, even if they course correct in terms of anti-involution. The second piece in China, which they are undertaking, is this is a medium-term issue, which I think we need to calibrate everything else which we do, is with respect to the fact that they've said 50% of their production capacity in China is to shift to natural and 50 will be synthetic, which means the natural capacity production actually is going to double from approximately 5 to 6 million ton to about 12 million ton. So they're going to add that much more. They also have to take out the synthetic capacity. Now, there are no announcements on taking out that capacity. That's again something we need to watch. So two weak spots in the world. One is China, because of what is happening on tariff demand and the direction by government to switch to low carbon production. And Europe continues to remain a weak place where shutdowns are happening, but are not at the pace which we think it should happen.
All right, Mr. Mukundan, thank you so much for joining in and explaining the business to us. We will obviously chat with you during the quarter for all the other things that the company has been doing, especially on the EV and solar front as well. We'll get a comprehensive analysis on that one from you as well. But for now, we'll leave it be. Let's talk about Titan. That reported an inline set of numbers when it comes to the second quarter, and the street was anticipating that as well because the company had given their second quarter update. Jewelry margins, that came in at closer to 11% versus 8.7%, as the studded ratio was virtually unchanged as well at 34%. So to discuss this and more importantly, what the outlook for the second half of this year is, which for jewelry players is typically the business end. We have with us Ashok Sonthalia, who's the Chief Financial Officer at the company, joining in. Thanks a lot, Mr. Sonthalia, for joining in. A quick two-part question. One, from the highs, gold price has seen a bit of a reduction. Has that translated into better demand for you in the third quarter so far? First half, jewelry revenue has grown by about 18%, margins at around 11.5%. What's your prognosis for the second half, and as a result of which the full part of the year?
Thank you, Mangalam. I think we saw good traction during festive period, and which is continuing after Diwali also. So for last 10 days, looks like wedding season is kicking in, and maybe a minor correction, I would say, is about 5-6% in gold prices have also helped the sentiment. So looks like quarter three is certainly going to be better than what we have done in H1, and so overall year visibility on the growth closer, is kind of improving for sure.
So closer to 20% growth in the jewelry business for the full year. First half you've done 18%, and margins between 11 to 12% or between 10 to 11%?
We have been talking about 11 to 11.5 and trying to deliver that, but with the rising gold prices, it is becoming kind of increasingly difficult, while we are doing a lot of things to offset and some of the things which can compensate that pressure, but very difficult to kind of predict at this point of time. I would still say ballpark 11% plus minus something would be more a realistic number to look at.
All right. And how have volumes panned out? Because typically when gold prices are up 50-52%, a large part of the growth is value driven. We've seen a decline in the number of buyers as well. So if you could give us a sense on how volumes have panned out, was there a negative impact out there, or was it as flat as last year?
The numbers are yet to come for the industry, but I would imagine volumes are down. For us, certainly it is down. We treat volume as number of customer as a much better volume proxy than the kgs and tons of gold. And that we have been talking about, that in the gold jewelry segment, it has been negative. While in the festive, that thing has undergone a change, and a lot of fence sitter, a lot of customers who were waiting, they have kind of jumped in during festive season, and that volume has improved. But on the diamond jewelry side, we are seeing better number as far as the buyer growth.
Just a follow-up on the third quarter. You said you are setting up yourself fairly well for the festive season. Demand increased post-Diwali as well. So far in the third quarter, could you give us a sense how much have revenues grown by as compared to same time last period?
No, we will not able to exactly give a call out on that, but we are...
You can give us a broad range, right? 18% is the first half. Have you seen 20-25% sort of growth?
It's slightly better than that, but we are delighted with the performance.
Okay, over 25%, and you're delighted with it.
Mr. Sonthalia, just to finish that point, good morning, Prashant here. Both in kgs and number of customers, can you give us both numbers? What was the figure? year on year?
On gold jewelry customer, I think we were down if you take out coins, because if you include coins, then I think it was -1%, -2%. But if you take out coin, then it was close to 10% minus. And in the diamond jewelry, it was +3 to 4%.
Okay, and the number? This is the volume, kg volume.
No, this is the buyer growth.
Buyer.
We don't report volume growth, Prashant, but it would be easily -8, 9% or 10%.
So both minus 8, 10% essentially.
Yeah.
Something similar year-on-year numbers, right?
Yeah.
Okay.
All right. Hi, Mr. Soundarya. Good to have you on the show, sir. I want to talk about a very, very small part of your business, actually, the eyewear part of your business. What is your expectation on the eye care part of the business? And I asked you this in light of the Lenskart IPO. Do you see a big scaling up of the opportunity out there on eye care? Because that could add a substantial amount to your SOTP as well. So plans to scale up, and maybe longer term, 3-5 years down the line, where do you see the revenue headed? Because that could be another big unlocking opportunity for your shareholders. Please go ahead.
So irrespective of, while Lenskart IPO has brought attention to this segment, but irrespective of that, we have always been maintaining that it's a good opportunity, large opportunity in India from the market size point of view, as well as lot of customers who are either unaware that they need the sight correction, vision correction. And this is a category where vision and fashion come very well. And I think Titan is well placed to address that. We have been kind of working towards that. Some of the strategy shift which happened, I would say 6-7 quarters back, we are getting good results, mid double digit kind of growth number, except in Q2, where this was the only category in our portfolio which got slightly impacted with the GST announcement. But on 5th September, GST got announced from 12 to 5%, and yeah.
So it's still very small, sir. It's doing 200 crores per quarter. Obviously, as you're saying, there's a big potential out there. Lenskart valuations aside, but there could be a big opportunity. So say in the next 2 years, how do you see the annual revenue shape up from ballpark around 800 crores right now? Where do you see it headed?
So, one thing which also you should, the 800 crore is NSV. The customer price, if you think it is about 1300 crore, because we realize there is some confusion on the comparison of our number with the rest of the industry and rest of the market. So 1300 crore, we definitely believe that mid-teen to high-teen growth rate are possible. But, opportunities are even slightly bigger than that.
But what stopped you from being that scale? Because, I was looking at the Lenskart red herring prospectus, and they're 2.5 times you. You coming from a much cash-rich, better distribution footprint, a fairly strong recognized brand as well, which enjoys a fair amount of customer trust, which in an industry like eyewear in particular, you should have had the right to win and perhaps be the market leader here, right? Do you believe that you were slower in expanding this business than some of your peers, and now you will focus a little more here as well?
I think while on hindsight, some of the things can be, of course, we were slower in the sense that we were focusing more on care and perhaps ignored the fashion aspect a little bit, where the youth segment got drawn towards the other players, and we were serving mostly the serious consumers who were focusing more on the care part of the vision, and the progressive, the 40 plus people, 35 plus people. Titan Eye Plus has been kind of a preferred choice when they think about the quality of eye care. We are now changing and shifting that, because there is a large segment sitting below that, from the age point of view and volume of customer point of view. So I think we are bringing fashion and vision now together, multi-brand destination, making Titan Eye Plus and upgrading it from the premium aspect of it. So I think we will have our share of growth and our share of profitability. We have been running also a little bit more disciplined manner. One can comment on that our business has been substantially and sustainably profitable. That's the philosophy normally we have in Titan, but I'm not saying growth can ever be ignored. So growth is a primary anchor.
Now, just a bunch of quick questions, if you could give us quick answers for that one as well. Watch margins between 18 to 20% sustainable?
For eye care or?
For watches.
Watches, I would say 16% plus minus is much better number to look at it. And it will gradually gravitate towards that.
And target growth for Taneira, fashion accessories as well as fragrances?
They are very small businesses. The fragrances and women's bag are already delivering in excess of 40, 50, 60% kind of on a small base. Taneira has been, we are still, I would say, while the value proposition, the product we have found, the supply chain and Weaver Sala we have done, but the clear click on the where the customer gets drawn and footfall goes up. We have stopped expansion of our network, if you would have realized from our number for last 3-4 quarters, because we want to get our proposition and customer value proposition right before expanding it further. So like to like, it had grown 17-20%, but because 1 or 2 stores got closed down, etc. So whatever headline number you see. I think we have a good story in Taneira. We need to tell it better and get customer hooked onto it.
And market share 10% by when?
Very difficult to say at this point of time. We will first make our proposition successful and then talk about mid to long-term targets.
Okay, all right, Mr. Sonali, I have more questions, but out of time today, and hope you can join us mid-quarter, and we'll stock more. Thank you very much, and good luck. We'll take a quick break here. We have an interesting conversation up next. Umesh Chaudhary of Titagarh Rail Systems joins us to discuss the company's near 2,500 crore rupee order win. Stay tuned, coming up.
The Nifty just under that 25,700 mark. It's been dragged lower by the Nifty Bank, which is down almost 200 points. But let's get chatting about Titagarh Rail Systems, because the company has bagged a near 2,500 crore rupee order coming in from MMRDA, a contract for 132 metro coaches for the Mumbai Metro Line 5. Umesh Chaudhary, who's the Vice Chairman and Managing Director at Titagarh Rail Systems, now joins in. Mr. Chaudhary, you had told us about this earlier as well. So let's talk about the three important points that we'll be talking about. One, the order win synergies, execution timeline growth prospects for Firema, and also at the same time, growth in the second half of this year. So this 2,500 crore order, what does this take your overall order book to? And what does this take your contribution from the metros to your order book? And in light of that, what's the execution pipeline for metros looking like? How much does it contribute to your revenue right now? And over the next 3 to 5 years, what's that mix likely to be? I think we've got him on a freeze frame. He'll probably have to refresh his connection out here and come back. But earlier, Titagar and the management had said to us, currently their order book is 50% freight and 50% passenger, whereas their execution book is 90% freight and 10% passenger. Over the next few years, what will happen is that this order book will now translate into revenue. So maybe 3 to 5 years from now, their revenue itself will look more passenger than freight, which is a better margin prospect for them as well. So in light of that, how much comes in from metro and what is their metro order book pipeline? Something that we'll get to know from the management once they try and perhaps, repatch that connection. But for now, the stock holding mildly flat because this is something that the management had here on Bazaar itself told us that they are expecting this Metro Line 5 order to come by for them. And now it's come by around 2,500 crores. But if you look at it over a longer period of time, we've seen the stock see a decent move, but also a decent correction from the top as well. But okay, we have him back with us. Mr. Chaudhary, can you tell us about the execution for this? What does your updated order book stand at? And how much from your execution will come in from Metro over the next 3 to 5 years?
So this order brings, which is about 2,500 crores, brings us close to the 30,000 crore mark, including our share in the joint ventures that we have, which is the Wheel and the Vande Bharat servicing joint venture. And as far as the execution of this one is concerned, this will start in about 14 months. The prototype is about 14-15 months. And thereafter, over a period of maybe about another 1.5 years, it will get executed. And then there is a 5-year AMC to this, which is also a part of our service business. This actually is very significant because this kind of fills up our capacity till 2028. So FY28 up to the complete growth that we have planned for the metro coaches, which is between 100-120 this year and then going up to 220 next year, further enhanced to between 250 to 300 the year after. This completely takes care of the order book and it will become a very significant part of our overall business.
So 250 to 300 by FY28 is what you're saying will be your metro building capacity?
That's right.
Got it. And how much does that amount to in terms of revenue? How much does one coach give you upfront and AMC?
So the selling price of a coach is around 11 crores. So in terms of revenue, it is a potential revenue of almost more than what we are doing today. In terms of much more than what we are doing today. And then in terms of the services, what we get is about 3% of the OEM cost per year for services.
All right. Hi, sir. Good morning. Good to see you. When you were indicating the last time around that the wagon wheel sets issue that's gradually getting resolved. Has that happened?
Yeah, that has happened now. We are now getting regular supplies of wheel sets from Rail Wheel Factory. And we are also expecting in the Q4 of this year or Q1 of beginning of Q1 of next year, our own joint venture to start production of wheel sets. So while this problem, as I had indicated before, also is something which keeps on coming back, the wheel set problem from a Rail Wheel Factory. So the permanent solution to this wheel set problem will happen very soon, within the next 1 or 2 quarters.
Got it. Mr. Chaudhary, good morning. Just a bunch of quick questions, Prashant here. How the wagon orders that you have, right? I guess what is the visibility, sir, beyond the next 3, 4, 5 months? Is there a revenue pipeline problem that you foresee from the segment, wagons?
So we have an order book for almost about a year now. About 4 quarters, we are well placed as far as the current order book is concerned, at least till between 3 to 4 quarters. And we are expecting the new tenders to come out in the beginning of calendar year 26, which is first quarter, latest by the first quarter of FY27. So we really don't think that we should have a problem because the targets of the government are remaining intact. The government is targeting to get to 3 billion tons by 2030. And in order to do that, they will require more wagons.
Mr. Chaudhary, isn't there already, do you expect the next tender for wagons to come up in Q1 of 27? Is that what you're saying?
That's right. Either the last quarter of FY26 or Q1 of FY27. That is between January and April.
Okay, there was some talk that there perhaps is already a overcapacity with wagons, so it may be pushed out.
So there is temporary type of wagons which are there, which are available more in the fleet, which is like, for example, the BCNA wagons. But we do expect that the traffic growth will happen based on our discussions with the railways. They have confirmed that the government has been planning on newer schemes and additional sidings, etc., which will then take care of the traffic growth. We have not seen much of traffic growth in the last few quarters, but it has started off in the last 3 or 4 months.
For the Italian subsidiaries, post the auditor qualification, will there be any write-off?
So we do not know that as of now. The company is under what is called a CNC, which is a restructuring, and that is what we had declared it in our results also. We are in discussion with the government of Italy. As you know, that the government of Italy is an equity stake partner in the company. They were holding about 30%. So we are in discussion with them wherein they can increase their stake significantly. As we had explained in the past, one of the main purposes of the Italian investment was to enable Indian company to be able to do the metro coaches, Vande Bharat, or the passenger trains in general. We have been able to achieve that. So significant synergy or relevance of that unit or keeping that unit has been kind of is not there so much. So we are looking at diluting ourselves significantly there, and perhaps the other partner may increase their stake.
But you're not ruling out a write-off that you may need to take?
There is a possibility of the investment value which has been disclosed in the results, that it may be resulting in a write-off, but that's something which is not something which is very clear as of this point.
One last question, and this comes from someone who tracks the company closely. There is some talk that promoters have purchased a private jet, can you confirm if that is true?
I wish that was true, but no, it's not true. Neither it is true, nor it will be true.
Okay, it's completely.
We have enough private jets available in Calcutta Airport by way of Indigos and Air India flights, so we are happy with that.
Okay, so no private jets, right, Mr. Chaudhary? You're confirming nothing.
Absolutely not.
I think he'd much rather travel by private train than private jet.
What?
Yeah, I would rather.
Has the train business, right? The wagons, take one of the wagons.
Get you fast.
I would encourage people to own private trains.
No, absolutely. Mr. Chaudhary, thank you for answering all those questions. And I had to ask you, since this did come up from someone who tracks it closely. So thank you for clearing the air and touching upon many of these points. Appreciate it. We'll talk again. Thank you. Well, that's Titagarh Wagons in focus there. So 896 or so is where the stock set, about 1.25% lower. Now, the IPO of Grow, which is, the parent company's Billion Brains Garage Ventures, is opening today. So close to about 6,600 odd crore IPO. The anchor book, of course, saw demand of about 15 times. It was about 3,000 crores, and close to 50,000 crores is what the demand was from anchor investors. Ishan Bansal is with us. He's whole-time director and chief financial officer at the company. Ishan, good morning. Good to have you with us here. Thanks very much for joining us. I think our viewers many of them would be very familiar with your business. Many of them perhaps would be using your platform. And it's been a remarkable journey from 2016 when you started to where you are now, and the valuation, etc. So big wealth creation for early investors. I just want to start by asking you, Ishan, if you can give us a sense of, FY25 at a net level compared to FY24, there has been a big turn. So from 800 odd crore loss, we are about 1,800 crores in profit. I think this one-time expense in terms of compensation to promoters was expensed last year. Will the company now stay profitable in the coming years? If you can provide us with some guidance at a net level, at a PAT level, going forward. Let's just start there.
Yeah. So I want to first explain what happened in FY24. There were one major event, which was our coming back to India from US, where there was a merger between our US entity and the Indian entity. And because of that, there were a lot of restructuring that happened. And one of them led to the loss of roughly 400 crores in that, 800 crores in that year. It has a mix of two things. One, we paid a tax of 1,340 crores for this merger. Second piece was there was a one-time payout to founders from a ESOP settlement perspective, because we as founders had ESOPs in US. And when we came to India, because of our regulations on the promoter side, we were not able to kind of hold ESOPs. And hence there was a one-time settlement for those ESOPs. And just want to add further to this is basically that in FY25, company actually, we as founders invested in the company again. And some of the proceeds that we got from that time was actually helpful to kind of increase our stake in the company as well. For the forward, from a profitability perspective, we are highly profitable. We are roughly at a 45% profit margin. And we think if we can keep on growing our revenue, we can even increase this percentage further.
What I mean, would you be able to provide us with some kind of growth guidance, revenues and net earnings? At what rate broadly? And we won't hold you to any numbers. We'll talk more when you make it to the market actually, and maybe you can be more specific. But generally, what should we expect?
So typically the way we look at our business is our business grows or the revenue is dependent on how many customers that we have. And we keep on acquiring the largest chunk of the customers in the market. And the second piece is the ARPU, the revenue that we generate per customer. I think we've been seeing growth on both sides. It's just that sometimes the users grows faster and sometimes the ARPU grows faster. Between both of them, we are able to deliver 25 to 30% kind of a growth rate on the base effect basis. But obviously the new products that come in also helps in increasing the ARPU. Our cost typically grows between 15 to 20%. Hence, there is generally a margin expansion, with the exception on times when there are some impacts coming from one-time issues like what we discussed just in the previous question.
Okay, all right. Hi, Ishan. Good morning. Nigel on this side, and welcome to the markets. We look forward to interacting with you as well as your team in the time to come. A couple of details is what I want out of the way. One is on brokerage revenues. At the half-year mark, what is it in comparison to last year? If you could just help us out with that. Point number one. Point number two is on your MTF book. It's grown, a large extent, and you'll get interest on that as well. So how do you see the trajectory with regard to the MTF book on both these two, MTF as well as brokering revenues? Please go ahead.
Brokerage as a revenue, as a percentage, is relatively lesser from a H1 perspective because of the MTF piece that you just said. Q1 revenue is already out of which the brokerage revenue contributes more closer to 83%. MTF as a business has started contributing 3% in Q1, and I think on a full year basis is significantly higher than that. And hence the broking revenue will, as a percentage of total revenue, will reduce a little bit. But what we are seeing is every product that we launch new, especially MTF, and now we recently launched commodities as well, is able to actually scale much faster. And hence our revenue growth has a extra lever with every new product that we launch.
Right. Ishan, Mangalam here. I just wanted to commend you on the valuation of this IPO, because you last valued at close to 58,500 crores, and now at the upper end you would be about 61,000 crores. So between the 6 months, the jump hasn't been as much. And even if we compare it to some of the listed peers vis-a-vis your growth, it is, the price earnings to growth ratio, the PEG ratio, is fairly similar. I wanted to understand beyond brokerage, the diversification that you're doing, of the 1,000 crores that you're raising as fresh issue, a large part will be going into growing your NBFC book as well. You had earlier indicated that wealth management, NBFC and commodities could be big growth drivers for you. Over the next 3 to 5 years, how big do you expect these businesses on an individual basis to be? If you could give us some absolute data on that one. I mean, how big do you expect your NBFC loan book to be? How big could the wealth management book be for you, and commodities?
So the way I think there are actually 4 components. One which is going to be the fastest growing piece in the near future is the MTF piece, which we already talked about. So it will probably start contributing in double digits soon. And the reason is MTF, if you look at today, our book is around 1,000 crore, which is roughly % of the market share. But if you look at our ADTO market share, we are closer to like 30%. And hence our fair share there is like 13,000 crores. I think we will take few years to reach there, but I think that is where we want to reach in a medium to longer term from a market share perspective. Similarly, on the wealth side, we have just did an acquisition of Fisdom, and Fisdom acquisition itself got roughly 3 to 4% of our revenue. And going forward, our expectation on that business is to grow much faster, because again, it's at a lower base, and we have already roughly 3 lakh odd customers who are in the affluent category already on the Grow platform, and we can help them with more products from the wealth side, and there will be revenue that we will generate from the wealth business. And our expectation is, again, that business also will start generating double digit in few years. On the third piece, which is the lending piece, it already is reasonable size business. We are roughly around 1,200 crores of balance book on that side. But what we have launched recently is a loan against securities as a business, which is a separate product for our customers, especially for the affluent category, where customers already have AUM and they can use their AUM to actually reduce their credit cost as well. And hence, that business will grow faster. And our expectation is that in next few years, that business will be bigger than our personal loan business as well.
Ishan, a bunch of more questions, but we're out of time for now. Good luck with the issue to you and, of course, the other founders as well. And the mind boggles sometimes, right? I mean, you guys started out with the business in 2016. Yes. And it's not even 10 years. And, I think grow is what you've done in a phenomenal way. And I'm sure there'll be many more businesses. I mean, I think when you guys started, there were some 50 lakh investors. There are now 12 crore unique investors. And I guess financialization of savings is this big theme, which the wave on which you've ridden. And I think there's more to come. Thank you very much for joining us. Good speaking with you. Appreciate it. Okay, we'll take a break. We're back. Manisha Gupta will be focusing on the commodity space on the other side. Stay tuned. Welcome back. What's happening with commodities? Let's go across to Manisha, who's standing by with what's top of mind. Manisha, morning.
Morning, and I'm looking at the energy market as an overhaul, but I also want to focus on natural gas prices because that is where we've seen the best of the gains come in. So when you look at the international markets, we're trading at a March highs therein, and the US prices actually have gained up from $2.9 at an MMBTU to almost 4.3 is where we are trading right now. So that's almost a 45 to 50% of a jump up that we have seen in case of natural gas prices in the matter of last 1 month itself. And the Indian markets absolutely mirroring that, because when you look at the last 1 month itself, we have seen 45% of gains here as well. In the last month, we were trading at 255 rupees. We are trading at 375 right now. And you have various brokerage reports telling you that it's 400, 420 is where you could see the prices heading for. The reason being that we are looking at a lot of strong heating demand because of the cold weather forecast and an early winter in the Western world. That seems to be supporting the markets therein. It also has to do with the kind of inventories and supplies that we are dealing with. When you look at the LNG exports to Europe and Asia from US, that has continued to be very, very strong. Robust numbers is what we've seen in the previous quarter and for the month of October as well. And especially this is a strong demand period as well as we are getting into the winter season there. So when you look at the US LNG exports for the month of October, we've seen a record 16.6 billion cubic feet per day kind of an export happen there. That's an average number, and the markets are really looking at positive cues continuing for the month of November, December and Jan as well. And then there are, of course, concerns from the Russian supplies and inventories in the key hubs. That has continued to decline. Remember, nearly 17 to 23% of Russian refining is actually shut down because of those Ukraine drone attacks that we've seen in the energy facilities there. US also seems to be pushing for new energy commitments from its Asian partners. So the expectation is that the demand going forward perhaps is only going to be increasing. US output in the meanwhile has been trading higher, 107 billion cubic feet per day. Those are very strong numbers coming in. But as I said, demand and export numbers also seems to be matching this kind of an output and production therein. The US storage levels have seen an increase by 74 billion cubic feet. This was just previous week. This is higher than a 71 billion cubic feet of an average that we've seen happen for most part of the second half this year. When you look at the overall prices, when we have seen natural gas actually continue to outperform within the sector, this is what we've done on a month-on-month basis, up by nearly 26%, and year-on-year has been on the higher side as well. But everything else, as you can see, has seen a decline to very meager gains coming in for this year. Heating oil is just about 7% up. Coal actually is up 4.5%, but the crude oil price is down 1.5%, and year-on-year has seen a decline come in for the crude oil prices for WTI and Brent as well. Within this space, natural gas seems to be doing very, very well.
All right. No, absolutely. Thanks very much, Manisha, for that. Very interesting. We'll take a quick commercial break here. We're going to come back, and it's a special segment, Indianomics Lata in conversation with Pranjul Bhandari of HSBC, Sakshi Gupta of HDFC Bank, and Abhishek Upadhyay of ICICI Securities. PD to decode GDP and interest rate forecasts post the festive season. Stay tuned.
Welcome to Genomics. Has the festival season, along with the GST cut, boosted India's GDP growth? We only have the auto sales numbers and a little bit of others. CNBC-TV18's proprietary data shows car sales from Navratri to Diwali grew 23%. But if you count from Ganesh Chaturthi, that is, when GST sales cuts were expected, sales were up only 11%. Likewise, two-wheeler sales from Navratri to Diwali is impressive at 22%. But again, if you count from Ganesh Chaturthi to October 31st, the sales are up only 12%. Overall, full-year sales for cars maybe 5%, and for two-wheelers maybe 8 to 9%, according to industry insiders who are extrapolating the festive, demand. GST collections in October, they are actually for sales in September. These rose by only 4.6%, while domestic GST collection was up only 2%. But of course, this may be because people, postponed their purchases until September 22nd, when the GST cuts would come into effect. All told, how are economists looking at the economy at the end of the festival season, especially on growth and hence on RBI rate action? That's the question we are asking today. And joining us are an elite panel of economists: Pranjul Bhandari, Chief India Economist at HSBC; Sakshi Gupta, Vice President and Senior Economist at HDFC Bank; and Abhishek Upadhyay, the Senior Economist from ICICI Securities PD. Ladies and Abhishek, thank you very much indeed for your time. Pranjul, you go first, since you're removed from India to some extent by a stretch of water. How does it look that has the festive season made you push up, given upside bias to your growth forecasts?
So I think the GST cuts have worked. And I think now we have enough evidence to show that firms have cut prices. We can actually see some of it in the CPI data, and we'll see more in subsequent prints. We've seen, all these auto sales numbers that you spoke about. Even if you include the August period, it still shows a double-digit growth, and I think that is meaningful. We've seen bank credit growth inch up a little bit across industry and services. Interestingly, in the PMI that came out yesterday, we've seen that the increase in domestic new orders is faster than the fall in export orders. So on net, I think we've given a positive boost to the economy. So there's a lot of data, that is showing that things have worked well. Another data print has been the stock of purchases within PMI, which shows that over October, a lot of inputs were bought by corporates, which means that they will continue to produce in November. So some of this manufacturing could continue into November and hopefully into December as well. All of this makes us believe that the September GDP growth number could be between 7.2 and 7.4%, which I think is a good number. For the full year, our forecast was anyway on the higher side. It was 7%. So we don't think we'll be making any changes to our annual growth number. We will stick to 7. Also because in the fourth quarter, March, a lot of these things could change. My sense is we are good right now, but from the first quarter of 2026, we might start seeing a fiscal drag coming in because the government will have to cut back on its expenses if it wants to meet the fiscal deficit target. And it has said in many forums that it wants to meet the fiscal deficit target. So between the first 3 quarters and the fourth quarter of FY26, we could see growth fall. But for now, GST has met its purpose.
Okay. Well, that's a fairly comprehensive reply. And at 7%, that's clearly a very positive number. The only other person I know, I think, is Samiran Chakravarti of Citi, who has 7 or 7.1 for the full year. The government and the RBI, of course, are sitting more at 6.8. Sakshi, can you also give a similar analysis of all the numbers that Pranjul spoke about? Tax collections are particularly disappointing, but they have been from the start of the year, whether you look at corporate tax or income tax. And GST, September at least, the collections are not looking that bright. So your assessment of growth?
Right. Good morning, Lata. I think the initial indicators that we are tracking from the festive season do indicate that there's been a jump up in activity, both in terms of the rural as well as urban demand indicators. A host of indicators that Pranjul mentioned or you mentioned do kind of signal that. My only concern at this stage is that, this was expected. It was expected that in September there'll be some amount of delay in consumption by household, and there will be some amount of pent-up effect that will play out in this festive season, right? So from the perspective of whether I'm looking at, revising up my GDP growth forecast for this year, I think it's a bit too early. I think from my perspective, I would like to see how much of this demand that we have seen during the festive season actually, kind of sustains as we move on into the months of November, December, and then Q1 of 2026. Because, before this festive season, we've been tracking urban demand indicators, and they continue to show the demand was actually not picking up at a very, very strong pace, and things were still very moderate. Secondly, I think we are still yet to see the impact of tariffs, and that's really the big uncertainty or question at this stage. As we move into, the fag end of the third quarter and going into Q4, a lot of the front loading or the festive season demand from the US is going to start fading off, right? So I think we are yet to see that headwind play out in the economy. So net, currently we are at a GDP growth forecast of 6.8%. I do see some amount of upside to this number, as I said, if demand kind of sustains beyond October, especially in the urban segment of the economy.
Okay, so it's still wait and watch, and two headwinds you point out, trade deal as well as fiscal drag, which Pranjul pointed out. Abhishek, we met after the festive seasons and tried to do an initial number crunching. You said there is an upward bias to your number, but you're not changing it. Do you think there is a further confirmation of the upward bias, or the other way around?
I think so, Lata. So clearly auto sales data is quite noisy, but the scale and the breadth of rise that we have seen there is difficult to brush away, particularly the signal to noise ratio for the entry-level car segment, where we have seen strong pickup in demand. This segment demand had been lackluster for quite some time. The signal could be higher. There could be higher signal value there. Also, other data, as we know, are still mixed. I mean, GST collections, you have indicated GST collections on domestic transactions, particularly 2% versus April-September period growth of close to 9%. Also, the import GST collections on import side has been quite strong over the last 2 months, close to 14%. Even in fact, FITD basis collections on imports has been in the same ballpark and close to double the growth that we saw in the same period last year. So it is possible that some of the stimulus that we have seen in the form of income tax cut, in the form of GST cuts, could be leaking away in terms of higher imports. So that is one reason for caution. In the other big data, I think exports for September held up quite well, despite contraction in exports to US. But what we have seen more recently, in recent weeks, is that rupee has been under quite a bit of pressure, despite strong RBI intervention, which could well be a sign that the BOP flow dynamics remain on the weaker side, and it could partly be on account of some weakening that we could be seeing now on the export side. So the big elephant in the room really is whether we are able to quickly sign a favorable trade deal with US. That could be a key driver of demand as we move outside the festive season now and towards the back end of the fiscal year.
Okay, point taken. But can you all quickly give me your numbers for the second quarter, and which is due on November 29th, and for the full year? Pranjul, you stand at 7.2 for the current quarter? I mean, for the second quarter?
Yeah, 7.3, yes.
7.3 second quarter and full year 7. Sakshi, your number?
For Q2, we are at 7.1 and full year currently at 6.8.
Okay, and Abhishek?
We're tracking quite close to 7%, but some upside is there. Government spending has been on the weaker side, particularly on the revenue.
But the 7 is for the full year.
Could have been for the second quarter. For the full year, we are at 6.7% for now.
Okay. All right, fair enough. So the consensus is that the second quarter at least is going to be between 7 and 7.3, and adding the first quarter 7.8, we are practically at a 7.5 for the first half of the year, which is a fairly strong number. But Pranjul, with this kind of a number, how do you approach the December policy? Will the Reserve Bank say, which appears to be Poonam Gupta's last public address that there is space, but will we need to do it now? That seemed to be, I'm paraphrasing it badly, but what's your sense?
Yeah, it's not going to be an easy one. I think it's going to be a close call in December. If the trade deal between US and India is not signed by then, I would say that there's a good chance that a rate cut does happen in December, simply because I think the pain of the export slowdown will be felt in the next couple of months. And this boost from GST, especially after Diwali is over, will also start coming off. So my sense is if there's no trade deal, there are strong chances that December could be a rate cut. If we have a trade deal by then I think this big growth drag, which could actually cost us about 0.7 percentage points of growth over a year, could go away. And my sense is that then, we can sort of wait and not cut and think about it later in 2026. So I think a lot depends on whether the trade deal happens or not.
Okay, we've always prided that we take our decisions on domestic matters, but in this specific case, it's going to be a bilateral issue of a trade deal that may move the RBI's hand. You agree, Sakshi?
Yeah.
Cut or no cut?
Agree. No, I mean, it's a close call, and I agree with what you're saying. I think it's a binary decision, and to borrow words from the US Fed, I mean, the December policy right now is not a foregone conclusion.
Okay.
It really depends on what happens to the trade deal. I think that if we don't get the trade deal in the next few weeks, I see a very, very high possibility of a rate cut by the RBI in the December policy, because we have to remember that, over the next, apart from the Q2 number, once we start looking at GDP numbers from Q3 onwards, the next 3 or 4 quarters is also going to have a very adverse base effect, right? So that is going to pull down your overall GDP growth numbers and the other risks that I spoke about.
Okay, fair point. Abhishek, where would you stand?
For me, Lata, the bar for rate cut in December is quite low. RBI has indicated there's space for policy action, and that in central bank speak should mean very high probability of a rate action in the December meeting. Yes, it is possible Q2 growth data surprises higher than what RBI has penciled in. Also, there could be a scenario where it could sign a trade deal with US based on the rhetoric that we've been getting from various officials in the run-up to the MPC meeting. That said, there are still, on the inflation side, as we know, we are still tracking quite a bit lower than the inflation forecast for the current quarter, which RBI has put out at 1.8%. So inflation story continues to be positive, although led by food and some one-off factors. But overall, the sense is that underlying inflation is tracking close to 4%. Some people think it is lower, but we think quite close to 4%. On that basis, and with still some uncertainty about the growth outlook, there is definite scope for one more round of rate cut before RBI considers a long pause.
Okay. So, well, the verdict seems to be a 7% plus growth for the quarter that just ended. For the full year also, we are very close to 7%. But on a rate cut, one person more finding it more likely, the other two want to hold on to see how events pan out. Ladies and Abhishek, we have to take a quick break, but I want to prod you all for whether there is a likelihood of an OMO RBI purchase anytime in the second half, as well the huge drama on the currency. Those questions after the break.
Bharti Airtel's second quarter revenue growth beats estimates while margin also expands. The stock is the top Nifty gainer, up around 2.5% as brokerages Jefferies, CLSA, Citi issue bullish calls on the stock.
Bharti Airtel's board approves the purchase of an additional 5% equity in Indus Stars. The stock surges close to 2.5%.
Hitachi Energy locked in upper circuit after strong second quarter performance where the profits and EBITDA beat estimates. Order inflow too rises 13% year on year.
.3M India reports double-digit growth across segments in an operationally strong quarter. The margin also expands significantly. The stock flies away. It's up close to around 18% as we speak.
And a bunch of other stocks reacting to earnings. TBO Tech surging after its 25% growth in the second quarter. Godfrey Phillips, on the other hand, under pressure as revenue declines in the second quarter, much below what the peers have reported.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And as we speak, at the top of the screen, you can see that the markets are a little under pressure. Remember, today, in fact, is the weekly expiry. So we're down just around 50 points thereabouts. But you'll have to say, after the kind of recovery that we saw yesterday, the bulls will be hoping that yesterday's low actually is defended and the 20-day MA as well does get defended. Just a quick check on the broader markets, though. A few stocks are going out of whack. You pull up TBO Tech. That one has moved to the high point of the day. Big move out there. LG Balkrishna as well is spiking up as we speak. So big follow-through is what we're seeing on that one. And Indian Metals comes out with a set of numbers later today. That one as well is spiking up as we speak. Recall explaining the company at half the current market capitalization. Big move on that name as well.
Big move on that name, Nigel. Two stocks which I'm looking at from the new age consumer stocks. We have Swiggy, which continues to do well, which is at the high point of trade right now. Remember, the company has announced its plans to raise about 10,000 crore via a QIP that would take their cash balances similar to that of Eternal. And the other one is Delivery. They had a good third quarter. We had the updates coming in for the festive season when it comes to volumes, and now they report their numbers in the next couple of days. So watch out for Delivery, seeing some pre-buying ahead of those numbers. But the good part for bulls from a market standpoint would be today's low is closer to 25,670 thereabouts, which is about 15-20 points higher than yesterday's low. So even if we did see a bit of a selling from the top, the lows were maintained, and from there we've seen a bit of recovery. But let's talk about one of the stocks on our radar. A good performance coming in from Tata Consumer, much ahead of street expectations on revenue and profit. And there was some margin contraction, but there have been sequential improvements out there as well. Sunil D'Souza, who's the MD and CEO of the company, joins us now. Thanks a lot, Mr. D'Souza, for joining in. A couple of things that stood out. One was, Narishko regaining its growth path despite heavier and extended monsoons. But at the same time, tea prices. You had told us a couple of quarters ago that you get a better sense of where tea prices are headed once the season starts. And out here, all things are pointing towards tea prices declining from the peak. So the question then is, can we see further margin expansion? What are you penciling in the second half for the tea and coffee business? And what kind of margin expansion can we expect?
So Mangalam, thanks for having me. Yes, we've had a good quarter, 18% top line, volume growth across all the different segments, and margins coming back, right? Specifically coming to tea, last year tea prices because of the supply-demand mismatch, had gone up by about 30%. And it was our estimation that about 20% will come off and 10% will continue to remain there. And broadly, that is what we're seeing out in the market. Now, I wouldn't read too much into a month-on-month movement on tea prices. Overall, we expect tea prices to be broadly benign from here on. In the tea business, we operate in gross margins of between a 34 to a 36 sort of number. And the reason for that is over time, we figured out as long as we're operating that number, we continue to gain market share, especially from the loose local regional players which are around in a commodity business, right? Right now, we're operating in that space. We've delivered 5% volume growth and 12% top line. So we're comfortable with pricing where it is. Right now, budgeting for roughly benign tea prices.
So what does that mean in terms of margins? Because your internal target is 50 to 80 basis points in terms of annual margin expansion. Obviously, that went out of whack because of the high prices in tea. Now that they're likely to remain benign, where do you end this year with when it comes to EBITDA margins?
So roughly, we have said that we'll grow EBITDA margins and we should be coming back to the 15 range by the end of Q4. And there's no reason for us to change that. We came in at a 13.6 this quarter. This quarter was impacted by primarily the US coffee prices, so to speak, primarily because of two things. Coffee prices have gone up, and on top of that, the 50% tariffs from Brazil, and Brazil accounts for roughly 30% of the mix for us as well as for the industry in the US. If I add that back, we're in the 14.6, 14.7 range. So we're touching 15. We have degrammed in the US in November. We've announced a price increase earlier in July. We've announced one more in January. So we hope to get the US margins back on track, basis which we will be broadly on a 15 or thereabouts EBITDA margin by Q4.
All right. Hi, Mr. D'Souza. Good morning and good to see you. Could you tell us what's the target market share in both tea as well as the salts market?
So salt market right now we're touching about 40. The good part is we've got to balance both the market share and volume growth, right? Salt, we had good volume growth this quarter. We had good margin growth, and we aim to be 40 or for thereabouts. A longer term period, we have higher ambitions in salt. Because we've got a full play right from solar up to rock salt, all the different price value equation straddled. In tea, we are at 2022 share player. We continue to grow volume and value consistently. Now, there's one thing you've got to remember in tea is a significant portion of the business is now shifted to quick commerce, e-commerce, and which channels are not consolidated by Nielsen today, as well as in modern trade, which is now roughly 15-16% of my business. One of the big players doesn't share numbers with Nielsen, and it's an estimate. So Nielsen numbers for market share, we would look at broadly from a directional perspective, not an absolute number.
Okay, all right. Let's talk about some of the inorganic growth that you've done in the past. You know, the Capital Foods and Organic India business. Is it on track to move towards that ballpark 500 crores per quarter number?
Broadly, it is on track. Nigel, last quarter in the GST recalibration, where most of my the good part for us was salt was there was no GST earlier itself. It was exempt. Tea was in the 5% category, so there was no disruption there. My growth portfolio, which is Soulful, Capital Foods, Organic India, and coffee and ready to drink, all of them moved from the 18-12 bracket to the 5. So there was a bit of hiccup at the end of the quarter. Otherwise, we were in comfortable territory. Overall, for the quarter, Organic India still we've delivered a 30% growth. Capital Foods 9, coffee was 56. So we are in the ballpark of that. Overall, for the growth businesses, we've maintained that they will account for 30% of our volume and will grow at 30%. They grew at 27, accounted for 32%. So we were in the ballpark of our guidance.
All right, you were in the ballpark of the guidance. You know, the thing that stood out was the ready-to-drink beverages, which was basically includes Narishko as well. And the street was expecting a bit of a decline largely or a slower growth because of the extended monsoons. The season wasn't very favorable. Despite that, you grew about 31%. So what's the quarterly run rate that we should look at for Narishko, and by when does it cross that 1,200 crore mark?
So Mangalam, this year we are on track to cross the 1,000 crores overall. So we remain quite confident of continuing to deliver strong 30% plus growth in Narishko as we go forward. We did deliver 30% volume growth, 25% value, because we did a lot of re-indexing of pricing of retail margins last year about the same time. So we're cycling that. Going forward, we're cycling benign numbers, and therefore we remain confident of the 30% plus in Narishko.
All right. And final question, a smaller part of your business, which is Tata Starbucks, opened a fewer stores in this quarter as compared to the run rate that we've seen earlier. Are you calibrating your expenditure out there? What's the outlook here? Because globally as well, it is a category which is facing a fair amount of headwinds.
So Mangalam, in India, coffee has a huge runway both out of home and in home. And Starbucks is a play in the out of home space. We remain very, very bullish about that space. Bar the past probably 15 months or so, we've seen an overall slowdown in the QSR space, and we had stress on same-store sales growth. And therefore, we slowed down our outlet expansion. The longer term number doesn't change as much. The good part was last quarter, we saw positive same-store sales growth and a 8% top line growth. EBITDA grew far faster than top line, and overall we were EBITDA and EBITDA positive. So the business is on a strong footing.
Okay, all right, Mr. D'Souza. Always a pleasure talking to you, sir. Wishing you well for the second half of the year. We're tracking some of these targets. Have a good day ahead as well.
Thank you.
Time to slip into a short break. You come back, we'll focus on the technicals of the market. Somal Mehta will join in to help us out with exactly that as the markets trend towards the low point of the day.
Welcome back. The market holds around that 25,700 mark. A bunch of stocks which are spiking right now. Chennai Petro is up around 4%. It's been a big mover, so we'll watch out for that one. Alongside that, we do have some traction that is building up on something like Tejas Networks and Metropolis Health as well. And since morning, we've been talking about, a lot of these jewelry stocks. We also have, PN Gargil, which is a regional player in Maharashtra that has seen a bit of a spike as well. So all these regional jewelry players are seeing a spike. Remember, PN Gargil also has a higher amount of unhedged gold as against its other listed peers.
The point on CPCL, Mangalam, Chennai Petro, I recall at the end of the first quarter, we had explained this, that, the global refining capacity is down, GRMs are up, and their product mix is such. That's why, in fact, they could stand to gain. And in addition to that, I recall their debt 2 or 3 years ago was 10,000 crores. The last reported number was less than 2,000 crores. So that's why the stock is up. Unsure if it's running ahead of itself, but, the stock is already up close to around 20-25%, from those levels of around 750 or thereabouts. So big up move is what we're seeing out there.
One of the casualties of today has to be Hero MotoCorp. So Darshan had told us that the wholesale units versus the retail units were a bit of a gap. And currently, look at that. The stock is down 4%. Has seen a decent move. So maybe a large part of that extended could be on account of some profit booking and long unwinding as well. Saumil Mehta from Mirae Asset Sharekhan joins in for a quick technical check on the market. Saumil, today's low is slightly higher than yesterday's low. We're still consolidating. Where do we go from here? And your stock picks.
Hey, hi, good morning. Good morning to everyone. Absolutely positive in the medium-term outlook till the time it stays about 20 and 40 daily moving average, which is around 25,600 and 25,400. I'm not expecting a very sharp correction in the very short term. Short term, we've seen a little bit of corrections, selling pressure, but I think this is an opportunity to buy the index, buy very specific sectors. From here, the support would be 25,600 and 25,400. On the upside, the targets, the first target would be 26,100, which was the previous swing high, and then on after that 26,250, 26,300, which is the all-time highs. So these are the targets. I'm absolutely positive, and the strategy should be to buy on declines.
Okay, what about individual stocks? What's on your radar?
First stock is Titan. Titan has just broken out of a flag pattern on the daily charts, taking support at short-term averages. Great setup overall in the medium-term outlook as well. And in the short term, stop loss would be 3,710. Target would be 4,000. The second stock is Godrej Properties. The real estate stocks are looking really good. Godrej Property would be my pick. Small flag pattern has broken on the upside, trading above the averages. Stop loss would be 2,275 and target would be 2,425.
All right. Thanks a lot for that, Saumil. Those stock picks and the view on the index. What we'll do is take a short break, come back, get you more on the markets and a lot of stock-specific action. Stay with us.
Welcome back. Keep an eye out on Vodafone Idea. There's further relief that's come in there. The Supreme Court has now allowed the withdrawal of the IT department case against Vodafone Idea that was claiming close to 8,500 crore rupee dues. This is an old case, which now, in fact, there is some relief that's coming in there, and that explains why, in fact, the stock is, it saw some kind of profit taken in the morning. Now it's perked up a little bit as we speak. The lines are flashing for you on the screen, self-explanatory, that there is some relief that's coming in there for the company. So good news for them. I'll tell you what, we'll wrap up on this edition of Chartbusters. You stay with us. The team of Trading Hour comes up next.
Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Hormis Fatakia. Mildly lower for the benchmark indices at 11 o'clock. The Nifty is at 25,700. A modest cut of 50 points. Sensex lower by 110 points. Banks too have fallen about 0.1% in step with the frontline indices. Look at that net profit from Suzlon, but it's been boosted by a large tax write-back of 700 crore. So that explains the 1,100 crore profit. But looks like even if you strip that out, you would see a jump in the company's profitability and the revenue growth. Prima facie looks fairly impressive at more than 80%. And the EBITDA jump too is quite stark. It's gone up close to about 2.5 times, and margins have come in at 18.6%. In fact, the focus of the day is on individual stocks, where there are earnings reactions, earnings expectations. It's a big day in terms of earnings. But let's put the spotlight now on the big movers in the market at 11 o'clock. Harmis.
Well, it's earnings heavy day, as you were mentioning. Earnings today, earnings reactions from yesterday, all of them dominating the spotlight. We'll start off with Thangamayil Jewelry. We spoke about this before market open about yesterday's move, that the stock was up 20%. It's added another 12% today, although it's off significantly from the highs of the day. The highs of the day are almost near 3,100. They're back at 2,900 currently. It's still the fourth straight day of gains, and at the highest point of the day, the stock was up 50% in the last 4 sessions. And even in today's session, we have already had close to 20 lakh shares that have been traded. The 20-day average is only close to 7,000 shares, and the stock has had good returns over the last 6 years. It gained in 5 of those, and even in just the first 2 days of the month of November, it has already become the best month that the stock has had since June of 2024. Quadrant Future Tech is the first IPO of the year, incidentally. Today it has snapped a 4-day losing streak. The stock is also up 13%, and before today's session, the stock had gained only 4 in 4 sessions in the last 3 weeks combined. And in today's session, we have had close to 35 lakh shares that have been traded. The 20-day average is less than a lakh, it's only 93,000. And despite this move, today the stock remains below all key moving averages, and it tested its IPO price around 290 rupees, and it's rebounded from those levels in the last 2 sessions. And lastly, 3M India, another earnings reaction, is the biggest single day gain of the year that the stock has seen, 18% higher on the stock. Incidentally, the stock price is almost on par with the market cap. Market cap is almost 38,000 crores. The stock is at 36,000 rupees. Of course, there's a stark difference there, but the stock has gained in 4 out of the last 5 trading sessions. More than a lakh shares have traded today already in the first couple of hours. The 20-day average is only 650. Yeah, you read that right. That's not a typo. That's only 650 shares. And courtesy of this move, the stock has turned positive on a year-to-date basis. It was an underperformer for all this while, Reema.
Thank you very much for that. That's individual stocks. In the frontline space, the big gainers include Titan. That's, of course, reacting to numbers. You've got life insurance companies higher. And then the big move that we are seeing in Bharti Airtel. In fact, that is our big story. What's happening in the telecom stocks? Bharti Airtel has gained 2% post numbers, and the stock is now at a record high. And it's been such a big mover. It's up more than 30% in the last 1 year. In the last 3 years, it's up close to about 150%, and brokerages are bullish. While today the stock price has crossed the 2100 mark, if you pull up the target price, Citi has a target price of 2,225. CLSA is similar. Jefferies' target price is all the way at 2,635. So brokerages are bullish. Q2 was a strong set of numbers ahead of expectations, but the beat came in from Airtel Africa. In India, what we are basically seeing is this premiumization. Though the last tariff hike took place 15 months back, ARPUs, that's average revenue per user, continues to inch up for Bharti Airtel because of 2G to 4G, 4G moving to 5G. So that premiumization trend Bharti has been, enjoying. And the ARPUs, again, despite no headline tariff increase, is up 10% on a year-on-year basis and now at 256. But the other interesting bit is that the company yesterday took an enabling resolution to invest up to 5% stake in Indus Tower, which is the tower company. Now, Bharti Airtel already has a 51% stake in Indus Tower, so it's already getting consolidated. So the question is that what are you going to get by increasing your stake from 51 to 56%? Because to do that, you have to, at current market price, give a payout of nearly 5,000 crore rupees. And plus, analysts are pointing out that it's just now that your capex is actually coming down. Because the company was investing so heavily, first 4G, then 5G, the capex used to be very high, so the free cash flow was low. It's only now that all the capex investments are done, the company's operating cash flow started improving. So therefore, the street was hoping for dividends. I mean, they're paying dividends, but maybe they can pay more. Right? So it was a choice. Now, there is a conference call scheduled at 1 o'clock, and I think we will get clarity, and I'm sure the analysts will also quiz them, that why make that incremental investment in Indus Stars? What is 56% going to achieve that 51 doesn't? Versus saying, paying out or making other investments or paying out additional dividends. So that's the, interesting bit. And you are seeing that up move even coming through on Indus Stars. Yesterday, of course, it also did well because of the rub-off impact on this full relief that's likely to come for Vodafone Idea. But today, Bharti Airtel looking to buy, stake in Industar. So that's the additional kicker.
There's a record high as well, right, for Bharti. And Sunil Bharti Mittal has been saying this for a while now, that he wants ARPUs at 300 rupees 300. For the long term.
He had said 200. He achieved it. And now he had said in the near to medium term we want 200.
For
but
the longer term,
for the longer term, for this sector to make sense from a return point of view, it has to hit 300. And he's almost there.
Almost
now.
there, 255. That's the increase in the ARPU for Bharti Airtel. Most of the analysts as well having coverage on the stock, having a buy recommendation on it. So good going for Bharti Airtel. Take a short break. And that's a big story, of course, of the day. On the other side, we put the spotlight on the crypto market with Edul Patel from Madrex joining in on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
On Crypto Corner, we are joined by Mr. Edul Patel. He's CEO at Madrex. Edul, hi, thank you so much for joining in. And when we talk about India, well, it is about spot buying that we have seen do quite well in sense of adoption there. But what is it that you're also looking at in sense of leveraged or derivatives buying, tokenization? ETFs is still absent from the markets here. How would you look at India then leading into this in sense of a mature way by 2026?
Hi, Manisha. Thank you for having me here again. So I think the way we are looking at the market right now, spot buying, of course, continues to be a part of most traders' daily ammo. But what we are seeing is derivatives volume are picking up. Derivatives volumes are picking up across the board, across all crypto platforms as we speak. Mostly it's futures trading right now, as the available platforms to do options trading are very few, and the options trading books in crypto are still very illiquid even globally. But futures trading, especially perpetual contracts trading, seems to be picking up. I am absolutely not surprised, considering India as a market that has such a large love for F&O trading in the equities part as well, is seeing a good kind of sort of product fit to the market with futures in crypto. So we're seeing derivatives fly off. From an India perspective in tokenization, I think there is still going to take a lot of time. Globally, we are seeing a bunch of things happen. First, what we are seeing is that the stabler assets are getting tokenized. We've got tokenized currencies in the format of stable coins. We've got tokenized gold in the format of XAUT and PAXG and these kind of tokens that are now live and actively being traded. We are seeing more and more and more assets that are on the lower risk, or rather fixed quality, being tokenized first. As we go from there towards the next spectrum, I think we're just going to cover a spectrum of risk, starting off with bonds. US bond tokenization is gaining a lot of momentum. and then that'll likely be followed by equities and hopefully real estate at some point. The intent is definitely there. We are seeing the Chief Minister of Maharashtra talk openly about tokenization, wanting to tokenize 50 trillion rupee worth of land inside of Maharashtra. So the intent is there, but it'll still take a lot of effort to get there.
While tokenization could be the next buzzword, but Edul, would you say there's some maturity, and a lot of it, by the way, when it comes to this year, because we've seen people not talk about or trade in meme coins as much as they did in ETFs and better, more credible cryptos?
No, absolutely, Manisha. And that's a consequence of the market maturing, right? Like, and two large kind of sort of tailwinds on that front. One end, we've got the ETFs that have now seen just massive institutional participation and institutional adoption. That just means that the kind of people that are talking about crypto are very different now. And then, of course, there is the broader US-wide regulatory clarity around crypto, starting with a bunch of smaller things, then leading to the Genius Act, and now hopefully by the end of the year we see the Clarity Bill, which is supposed to give more clarity around the market structure of crypto, also come out. So it's a consequence of the sector maturing. As the sector matures, conversations are moving towards more longer-term investing, more serious utilization and utility of crypto as a financial services product rather than just meme coin trading.
Oh, yes. Going forward then in 2026, what is it that you're going to be looking at? Because as you mentioned, we're looking at more maturity into the market. It still is far away from being a mainstream asset class, but would you say it's getting there? And 2026, what would you say would define that year?
So I think 2026 is all about actually implementing the technology in financial services all in as regulatory clarity grows. And stablecoins, now that stablecoins are out there in the world, they make money movement globally extremely cheap, very stable, very consistent across the world. That opens up the spectrum of financial services that can be offered using crypto. Stablecoins are effectively custody, so you can think of a complete new age of neobanks built with stablecoins at the core, offering a lot of financial services around it being launched. Then, of course, we've got this tokenization wave that will continue. I completely see that by end of 26, we will have tokenized stocks, at least out there in the US. I don't see any reason why Europe won't follow that lead. And then we've got this general sense and general direction of investing in crypto also maturing from investing in single stock ETFs to now index ETFs of baskets of crypto tokens coming out. So these are the three trends that I think will definitely follow. It's just financial services adoption of crypto, broader investing in these in the index-based products, as well as the general tokenization and RWA, real-world asset tokenization path being accepted more broadly.
And especially when we talk about India, how would you look at the developers as a community also maturing? And the other part clearly is about the kind of funding that we've seen or investment within this ecosystem.
Correct. So there is no doubt that India is the largest crypto developer community out there by far. Close to 15 to 18% of all devs across all different projects world over are based in India. If you just remove, if you on top of that add folks that do marketing, folks that do support, folks that do community management for crypto projects, then that number goes to as high as 25%. Later on next year, later on next month, we're going to have something called as IBW, India Blockchain Week, which is the largest gathering of crypto developers anywhere. We hold the largest hackathon in crypto. So there is clearly at the core a lot of adoption for crypto that's happening. Now it's just more regulatory acceptance and regulatory clarity that's stopping this asset class from exploding in the country as well.
Okay. Point taken. Edul, thank you so much for joining in as always and making sense of what's really happening in crypto markets and what, of course, has to be seen in light in 2026 as well. Well, with that, we'll go for a short break. More market talk on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. SmartWorks is surging in trade. This is after the company leases 8.1 lakh square feet office space from Niranjan Hiranandani in Vikhroli. The stock is up 2.2% at 607, but the stock has done very well since its listing towards the end of July, and from that price, it's gone up nearly 50%. Nitish Sarda, MD and founder of SmartWorks, is now joining us on the show. Nitish, morning. Thanks for joining in. This is Rima here. Congratulations, big transaction. So tell us the rationale behind this. When does it come on stream? What are the lease rates that you expect? What will be the incremental annual revenue, recurring revenue that you expect from this? How does this fit into your overall plan?
Thank you, Rima. Thank you for having us on your show. I think Eastbridge is not just another center for SmartWorks. It's a statement. It's the world's largest managed campus platform that is opening up in India. We're not just following global trends. We're actually setting global trends in India now by opening up such large campuses, which have not been replicated anywhere in the West as well. Eastbridge strategically is a bet that SmartWorks has taken in the Vikhroli area. It's a 800,000+ square foot building, which is going to have more than 10,000 people working on it when it is completely occupied. The building is coming up next year, towards the end or mid of next year, where it will be handed over to us by the builder. And the building will, our typical journey takes about 10 to 12 months for the building to get to a steady state, which is what it will take for it to get to that steady state. But I cannot comment on the revenue numbers, but what I can say is that, this has increased our footprint in Mumbai to almost double. We were at the start of the year at only 500,000 square foot of space in Mumbai. With Navi Mumbai leased, a couple of months back, we increased our footprint to over 1 million square foot. Now with this asset, our total footprint in Mumbai has increased to more than 2 million square foot. This shows how SmartWorks has created its model in which we are able to scale up so quickly, because what sets us apart and what makes us unique is our ability to take up such large individual buildings, turn it into world-class campuses, give all the amenities to the large enterprise clients who are coming in, sitting with us across these different locations, and create an ecosystem in which they are able to grow, not just in one city, but across the country with SmartWorks.
So, Nitish, firstly, thank you for joining in. What kind of occupancy are you expecting in the next 12 to 15 months for this project? And on an average, how much level of an occupancy is required for break-even? Is 65 to 70% an appropriate number?
So closer to about 60 to 65% is when we get towards a break-even number. Because we take up these large campuses and fill it up with mid to large enterprise clients. On an average, a customer coming to SmartWorks commits to more than 300 plus seats. Because of this, for us to get to that 60-65% mark takes us usually about 8 to 9 months or 10 months. And then you get to a steady state occupancy of post maturity, which is about 12 to 14 months. All our mature centers currently across India are trading at north of about 89 to 90%. And some of the mature centers, these are the centers which we've taken last year also. And we should see the same trend with this center also, because of the kind of demand that we are seeing, particularly arising now with the GCCs inflow, with large enterprises increasing, and with the kind of vacancies, low vacancies that are there across different micro markets in India. We are seeing a lot of demand for this particular region as well.
What is the, is this premium price? Is this going to be premium pricing, Nitish? This would be a grade A office space. And what would it do to your overall EBITDA? Even if you can't share numbers directionally, will this be incrementally positive for your overall revenue that you get per seat count and your margins?
So it is definitely going to be a premium center just because of the location. Mumbai generally has more front offices. People who are, setting up their corporate headquarters are usually based out of Mumbai. So the spending power for setting up these offices are a little bit more. So you will see more premium numbers compared to some of the other growing markets across India. What we can share about this property is that it's increasing our footprint by almost 800,000 square foot, which is almost 8 to 9% of our current footprint, which means that it is going to see a significant increase in terms of the revenues, in terms of the opportunity that is coming from this particular building. If you look at our costs just because of the scale at which we work with, Rima, we've been able to reduce our overall cost to serve the customers significantly. The larger the building, the lower the cost for us to serve the customer as well. So keeping both of that in mind, it is going to help us increase both our top line as well as our bottom line. And within the next 12 to 13 months, you'll see this significantly getting loaded onto our revenues.
So as things currently stand, what is the total area managed by you, and what is the pipeline looking like?
So we manage a little over 12 million square foot now across the country. If you look at our growth trajectory, when we went public a few months back, we were closer to about 10 million square foot of space. We've already added a significant amount of space, into our portfolio. Our occupancies are very, very healthy, and we're seeing that occupancy remain healthy. I think what sets us apart, Rima, is our ability to take up such large buildings and convert them. This is something which makes SmartWorks unique. With over 12 million square foot of space, we have 68 centers within which these 12 million square foot of spaces we're catering to. And we are catering to over 730 customers. So in terms of size of an average center, it's much larger than the industry average. And in terms of the size of the customer, that's also much, much larger than the industry average. So our ability to take up these large campuses, fill it up with large enterprise, large GCCs, and the front offices of these enterprises makes us unique and gives us the ability of growing faster than anyone else.
Nitish, pleasure having you today. Thank you so much for sparing time and joining us. Wish you good luck for the second half of the year as well. SmartWorks co-working there, almost 3% higher on this news. Take a short break, continue our conversation on the markets. Christy Mathai of Quantum AMC joins in on the other side. Stay tuned. Welcome back. 80 points lower on the index. Currently now heading towards yesterday's low, which was 25,645. Still around 30 points away from those levels. Good time to get in Mangalam, who's joining in from the F&O desk with the latest trends from the futures and options space. Mangalam.
Well, we're currently at the lower end of today's trading range so far. So ahead of expiry, the Nifty has been trading lower, and it's been led lower by two of its important components. The Nifty Bank is lower by about 1/3%, a little more than that. And the Nifty IT index as well, which was underperforming yesterday, continues to underperform and drag the frontline index today as well. Though yesterday there was some consolidation, today it is a bit of a decline. However, the important part ahead of expiry, two things. One, the India VIX is fairly benign. And secondly, we have seen the low of the Nifty be maintained. In fact, it is slightly higher than yesterday's low as well. Yesterday's low on the Nifty was 25,645 thereabouts. Today's low on the Nifty was 25,670 thereabouts. So it has actually been higher than yesterday's low. So till such time that maintains, there's not real worry for the bulls from here on. Yes, there is consolidation. Yes, there is a bit of a downward pressure, but the lows are maintained. If we were to break yesterday's low, then all eyes will then be on the 20-day moving average of the Nifty, which is closer to 25,570, just below 25,600. So there is some support at lower levels from here on, even if we were to break yesterday's low. And that's why, the India VIX is fairly benign. But ahead of expiry, there are a couple of active stock options or other Nifty options which we're looking at right now. 25,750 call or 25,700 call, that is fairly active. So at 25,700 call has a premium for almost 30 rupees. So that tells you that close to 25,730 thereabouts there is supply, which is likely. It's about 50 points from where we are right now. And at lower levels, 25,650 put is equally active for a premium of almost 35-40 rupees, telling you as we move towards 25,600, there is support. So the band is narrower than what it was yesterday. Today's range on the Nifty is between 25,620 to 25,730 thereabouts. So about 110 to 120 points is what the street is playing for ahead of the trading holiday and ahead of expiry today. Important to watch out for a bunch of stocks which are seeing a lot of long positions being added. Hitachi is one of them. Delivery is the other one. And Suzlon just reported numbers 20 minutes ago. That too has seen a lot of long positions spike up on that one.
Interesting, Mangalam. Thank you for that. And of course, it's interesting to see if the Nifty manages to break that streak of lower highs and lower lows. It's not managed to break the lower high, at least. It's made a lower high today. It's 25,787 being the high of the day. But good time to get in a quick chart check as well. Sneha Seth from Angel One joins in. Sneha, good morning. Thank you for joining in. Before we get to your views on the index and on specific stocks, I wanted your view on this new NSE circular that was released this morning with regards to the special pre-open session in the F&O segment from the 8th of December. How does that prove to be beneficial, or what are the kind of advantages do you see from this kind of circular?
So I believe for now, one should be waiting for the participation coming in. But I think it would be a positive development. Overall, if you talk about retail clients specifically, the initial hours people usually avoid trading. So I don't think there would be a much change as far as the retail clients are concerned. But yes, for someone who's taking a huge position or someone who prefers trading at those times, for them it would be. But as far as what clients we cater, I think that won't be impacting so much.
Right. And your views on the index, Sneha, and specific stocks as well?
So as far as index is concerned, I believe we have seen decent profit taking recently, but I believe 25,600 is a very important support zone. The 20 DEMA also is around those zones. Followed by 25,550. So these are the support zones for Nifty. I believe looking at the options activity today, wherein we have seen decent writing happening in 25,600, one should be using this kind of a dip to go long. And I expect a target around 25,800, 850 is the target what I'm looking forward for. So I believe this kind of a dip should be used to go long, looking at the put call ratio even. Now, as far as individual counters are concerned, I have a buy call on DMart. Now this counter has given a strong selling, like it has corrected decently, and now it is placed around the 200 is simple moving average. And I believe from here on, looking at today's activity, there is a strong short covering move which is possible in this counter. So I would recommend buying this counter at current levels for the target of 4,350, and the stop loss can be maintained around 4,100. Apart from this, the next counter which I'm liking is DLF. Now here again, if you see, this counter has has been consolidating. Yesterday we saw a very strong move coming in, and I believe we may see a strong breakout above once this counter hits above 785, 786 zone. So it looks poised for a breakout. I believe one can go ahead and long this counter at current levels. Keep a stop around 740, 764, and upside potential target would be around 810.
Thank you very much for that. Moving on now from market technicals to market fundamentals, Christy Mathai from Quantum AMC is now joining in with his views in the markets and ideas for investing. Christy, thank you very much for joining in. First, a big picture call on the earnings that we've seen. Where have the positive, negative surprises, where have you seen? And what are the big ideas now?
Thanks, Rima, for having me. So clearly, if you were to just look at the past several quarters of earnings, this is possibly the first quarter where the earnings downgrades has not been as significant as we have seen in the past quarters. And so, broadly, the general expectation is that the earnings should improve from here on, aided by the festive spends, the GST cuts, and so on and so forth. In our view, if we were to just look at our portfolio companies as a whole, what we find is the upsides are looking attractive now versus, let's say, what we had 6 to 8 months back. And, if you were to just look at the broader macro, that is, the monetary easing cycle that we are in, as well as, the GST cuts or some sort of consumption boost, it should slowly trickle down to earnings as we look, going ahead. So in terms of sectors, if we look at the broader spectrum, the large components of the index, like banking, things have behaved well in the sense like, there is no major asset quality issue. The credit growth as we speak is slowly inching up. So broadly, if you move to the next fiscal year or perhaps later, you should see broadly good earnings growth because bulk of the margin pressures are slowly on the base. Similarly, if you were to look at the other sectors like IT, and again, there's been a pretty stable quarter. If you were to just again think about a big picture, perhaps all the built up in terms of what we had in the past, in terms of the TCVs, which sort of did not come through, bulk of it is behind us. So incrementally, the TCV growth in our view should lead to some of the top line growth as we speak in that sector. And autos, everything hinges on what you want to look at possibly from the second half, because we had a very short participation in the the month of the last quarter. So broadly, from a larger sector, things are looking constructive in our view.
Christy, a lot of chatter has been around the large deals that you're seeing within the financials, be it the mid-sized financial space, big money coming in there. We saw that in Federal Bank, we saw that in RBL Bank, and a lot of other lenders as well. There is also talks going around with another potential deal taking place. What about the financials? Do you still bet on the smaller private financials, or stick to the larger ones, or go for the state-run PSU lenders?
Right. So from our perspective, we are largely sticking to the large banks. We do have a private public name as well. But see, broadly, if you were to just look at, the whole banking spectrum, especially some of the SFBs, some of the regional banks, so they have their own place in their specific sectors. So beyond which to scale up what we have seen in the past is a bit difficult. And somehow it becomes easier for the larger banks to take share. And that is what has happened in the, past several years. So, there were a lot of challenges, for the past 2 years. And given the change that we have had from a regulatory perspective in terms of easing, we think all of these put together would be conducive for growth. The credit growth as we speak is slowly improving. So we remain quite positive on the larger banks, and, valuations from our perspective are also looking pretty attractive in that zone.
Also, Christy, there is a lot of the earnings that have come in with regards to the IT sector, and they've been okay, if not better or good for that matter. But for a sector that is export oriented, that is facing or grappling with a lot of uncertainties currently with regards to the H1B, the uncertainties over the trade deal as well between the two countries, Would this still be an investable sector considering the underperformance that it has had and that the valuations are now trading below historical averages?
Yeah, to our minds, it does. We were present in that sector. See, from our perspective, H1B could have been a big issue, but things are things have really settled down on that front. And we have seen the localization efforts by a lot of these companies. It's upwards of 60-70%. We're just looking at the top 5 companies and seeing the total headcount that is exposed to H1B. It is sub 0.6, 0.7%. So in that sense, it doesn't look material from a risk perspective. It's only the discretionary spend as we speak has not come back. And, we are seeing some signs of that picking up from some of the results that we have seen from some of the foreign companies, in the IT services. So we are sort of hopeful. It is very difficult to predict when that will turn. In a way, this is also very globally cyclical in that sense. But we have had a period of sort of these deals not coming through for the last, 2.5 years. So somewhere we have to see the services component also participate in the broader tech spend that we see.
Thank you, Christy, for joining in. Get into a break. On the other side, we'll get back to corporates talking about numbers. The management of Stuffcraft will join in. Stay tuned.
Shifting focus back to corporate conversations, then it was a good quarter for Stoffkraft. The numbers, revenues were up 13% from last year. Consumer demand improved and the festive season also aided to that momentum. To discuss the road ahead, Rajendra Gandhi, the MD of the company, is joining in to talk more about this. Mr. Gandhi, good morning. Thank you for joining in. You had a double-digit growth both on the top line and the bottom line front this time around. And for the first half, your top line growth is at 11%. Do you believe you would stick to that number by the end of the year as well? So for the full year, is double digits doable now?
Yeah. We are very confident about the double-digit growth for the year. The post-Diwali, relative post-Diwali demand continues to be very strong. So we are very confident of a double-digit growth.
And what will contribute to that growth, sir?
Both, I mean, all our categories are doing well, and particularly we believe that our cookware and pressure cooker segment will further, it will fuel the demand because we are, as it is, a very aggressive, very affordable brand. And then this affordable brand becomes more affordable with reduction in GST. But overall, I think there is good demand for the overall categories that we operate in and in all the channels. That includes our e-commerce, the modern trade. Even the GT is getting back to normalcy. While we were degrowing the first quarter, GT is getting to normalcy. Of course, we have a little challenge on our export, but we believe once this tariff thing stabilizes, again, export continues to grow at a higher rate. So with all these channels and the products, we are very confident of a double-digit growth this year.
What is exports as a percentage of your revenues? What has been the growth in the first half of the year? You said it's a bit challenging.
No, the first half was not as challenging, but we are going forward. We are anticipating or expecting correction on the tariff, normalization of the tariff, because our existing business continues to remain or grow at the level that it is. There are several categories and products, new additions to our export.
Sure. So can you, Mr. Gandhi, can you help with numbers on exports? Exports
are
is
about 12% of our revenues exports. But as we grow, we believe that contribution from exports will be larger than the current level.
And in the first half of the year, what was the growth of exports?
It's about 20%, 15-16%.
Got it.
And what about volume growth, Mr. Gandhi? Firstly, your overall volume growth during the quarter, and your gas cooktops did better than your core cookware segment is what I can see. But your non-stick cookware had some bit of challenge in the volume growth front. Why is that so? And does that improve in the second half?
No. So it's we are growing in the non-stick, or we call this cookware segment. There's a churn in the kind of cookware that are being used, actually a little more premium to what we were earlier making. So by value, they are growing. By volume, maybe because of the premiumization in the cookware category, the volume looks lower. But otherwise, we are growing back on our non-stick. I mean, though we call it non-stick cookware, I think it is cookware as a whole. So the cookware as a whole is seeing good demand, and we are also entering into a complete range of cookware. We have added our cast iron cookware already, and there are a few other categories that we are adding. So with the overall cookware, we believe the value growth is very strong. Sometimes the volume growth may be deceptive because it's a change in the type of product that we are making at lower price points. Maybe some products are lower, and we are moving to higher price point items. So actually, if you will study our growth, about 3.5% comes from actually either cost increase in cost or increase in our margins. But the rest of it is contributed by volume. So if for the quarter, if it is a 13.5% growth, almost close to 10% is coming by volume growth.
So 13.5% was the volume growth during the quarter, right?
About 10% volume.
10% volume. And does that sustain in the second half as well?
Yeah, we are very confident. Actually, though Diwali was a little early, post-Diwali relative momentum is much better. So we believe that this will continue.
So what we're trying to understand is that after the GST rates got cut on so many of your products from 12 to 5%, what is the incremental demand? Now, for example, in the first half of the year, your revenue growth was 11%. Now, because of the GST rate cut and the tailwinds on account of that, What will the second half of the revenue growth? I mean, if GST is to benefit, then the revenue growth in H2 has to be better than H1. What is the number that you're projecting?
So our growth is relative to the period because there are seasons that contribute to our revenues. The second and third quarter are larger quarters. The first and the fourth is relatively smaller quarters. Both the small quarters are smaller. But when you compare it with the quarters of last year, the third and the fourth quarter, we are very confident of growing better than double digit. I mean, better than the 10-12% that currently we are. We'll definitely be a higher double-digit growth even in the second half. So, but it is all relative. It is not linked to the first quarter to the first half to the second half.
Thank you so much for sparing time and joining us, Mr. Gandhi, to take us through the road ahead for your company. Wish you good luck for the second half of the year. Take a short break, but just before we do that, here's a programming note. It's the final countdown for CNBC-TV18's most anticipated event of the year, the CNBC-TV18 Global Leadership Summit. This landmark event brings together business leaders, innovators and policymakers to explore transformative strategies and groundbreaking ideas. Starting 8:30 a.m. on the 7th of November, it will be a power-packed day with several panels focusing on India's economy, digital landscape, markets, entertainment, and a lot more. Tell us, why do you love CNBC TV18 by sending a tagline on the email address flashing on your screen, and you stand a chance to attend this marquee event. Take a short break, back on the other side.
Welcome back. The Nifty's breached 25,700 and inching towards 25,650, extending the loss to about 100 points. But three big Nifty companies report their numbers: State Bank of India, M&M and Adani Enterprises. So let's quickly run through the expectations, at least on SBI and M&M. And you can see our boys joining in with the preview. So Gaurav, start with State Bank of India.
Well, as when we look at State Bank of India, first let's talk about the loan book growth. Now, Street is expecting around 10% loan book growth on a year-on-year basis. And when it comes to deposit, we are likely to see in-line number around 9% growth is what the Street is expecting in this quarter. And as a result, when we look at net interest income, we are expecting around 2% decline because some pressure on the cost of funds will remain. And as a result, when we look at net interest margins, there also we may see some decline. When it comes to PPOP, we are expecting around 6% decline on a year-on-year basis, and profit is likely to decline almost by 7%. Now, specifically, one thing to watch out is that how they're going to book the gains from Yes Bank stake sale. If they are considered in the other income, we may see some inched up in the profitability because of that. But when it comes to ratios, now net interest margins, they're likely to decline almost by 6 basis points. Remember, this is one of the few banks where Street is expecting single-digit decline in the net interest margins despite being the largest bank. When we talk about the credit cost, now we may see some positive surprise here. Street is expecting around 4 to 5 basis points of decline in credit cost, but remember, SBI is known for its pristine asset quality, and that is the reason why we are expecting some kind of positive surprise. Apart from that, when we talk about the commentary going ahead, commentary on net interest margins and commentary of growth are the key thing to watch out for. But all in all, in terms of number, steady state of number is what we are expecting from SBI in this quarter.
Expecting a steady number from SBI, but the stock is now down to the lowest point of the day. Of course, mind you that the stock is at its 52-week high. 953 is that level. So some bit of profit booking from higher levels. And the management of the bank will also be addressing the media after their results at 2:15 p.m. This afternoon. But since we are on the subject of boys playing well, Sudarshan is now joining in for expectations from Mahindra & Mahindra.
So we are expecting a mixed set of earnings from Mahindra & Mahindra. Why mixed? Because revenue may see a healthy growth supported by an increase in auto volumes, while margin may see a minor dip. And the reason is because there has been an increased electric vehicle mix that might have a drag on the margin. So talking about the numbers, profit may see an increase of 6%, revenue may see an increase of almost 25%, EBITDA too can increase by almost 21%, while margin may come below 14%, around 13.9% versus 14.3%. Realization on YY basis may see an increase of may see a fall of almost 1% year-on-year, but on a sequential basis there might be an increase of almost 5%. Because company had seen an increase in the volumes, total volumes had seen an increase of 1% year-on-year and was up almost 19% on a sequential basis. Now in the commentary, what exactly would be watching out for? First, if company gives any FY26 outlook for the passenger vehicle as well as the tractor industry, because tractor industry has been seeing a very healthy growth led by the rural pickup, and as of now, PV industry FY26 outlook is low single digit. If there is an increase on that front. Second, what's the strategy on CAFE norms? And third, what exactly company talks about the launches, because we are expecting few launches in the coming months. But as far as the earnings are concerned, we are expecting a mixed set.
Well, the management will be joining in after their results as well at 2 o'clock today. So we'll keep an eye out on that as well. Sudarshan, thank you for that update. The Nifty, well, still 90 points lower, but a slight recovery from the lows of the day. 25,648 is the intraday low. 25,645 is yesterday's low. So we are almost there in terms of the lows of the day. We'll continue the action on the other side with halftime report, but Rima and I take your leave on this edition of Trading Hour, counting down to some major earnings from SBI and Mahindra & Mahindra. Thank you so much for watching.
Stocks drift lower as we have global uncertainties that linger. Telecom and consumer durables are bright spots, while utilities, FMCG, auto and IT sulk.
Bharti Airtel beats estimates, riding on a good show in India and Africa, with average revenue per user seeing a growth of 10% uptake. Its board also clears additional 5% stake purchase in Industar's. Both stocks perk up.
Titan reports an inline quarter, riding on gold ingot sales even as jewelry buyers thin, but a dip in gold prices in the third quarter has seen buyers return, driving sales by more than 25% in the third quarter so far. The stock is the top Nifty gainer.
After a rush of marquee investors for its anchor book, Billionaire Rains Garage Ventures, that's Grow, parent company which owns India's #1 broking Grow, launches its 6,600 crore IPO. Grow tells CNBC-TV18 that the margin trade funding will be the big growth driver.
Good afternoon. You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu, with me Vinny Motiwala. It's looking decent for the market in the sense that, yes, there has been a drift lower, but it's contained. But at the same time, we have, a bunch of these stocks surging on the back of good numbers. So we have something like a Hitachi Energy, which is among the top gainers. We have TBO Tech, which continues to do well, so good numbers coming in from there as well. And we have seen some traction build up over the last few minutes on names like Keynote, on Shelly Engineering, SJS Enterprises and Indostar. Not to mention, Thangamayil Jewelry, which for the second day running has continued to see a big up move. Shelly Engineering, of course, up around 7%. Remember, it had seen a big gash as the prospects of them manufacturing semaglutide pens for Dr. Reddy's had come off, but now it's seeing some purchase. And Thangamayil Jewelry, it's up 12% today. If you look at the last 2 days, it was up 20% yesterday. So in the last 2 days, it's actually seen a rally of over 30%.
Hi Mangalam, good afternoon. So that's the one we'll be keeping an eye out on. But apart from that, today most of the sectors are trading in the red. Actually, all of them are trading in the red, right? Metals, that's leading that decline that we're seeing coming in today. And apart from that, IT and auto too are among the top sectoral losers. So keep an eye out on that. And in terms of overall top losers in the broader end of the market, we're seeing Apple, Hero Motor, Godfrey Phillips among some of the names that are falling in trade. But a whole host of these other stocks that are moving around and trade. Why are they moving around? Let's go across to Vivek to give us that list of the buzzing stocks.
Well, thank you so much for that. Very, very stock-specific market. Overall market seeing selling pressure, but individual stocks, especially reacting to news and earnings, are the ones that are moving around in the session. First up, from the BFSI space, in fact, one of the strongest results in that particular space is City Union Bank. Very, very good Q2. A whole lot of EPS upgrades coming in for this particular name. From the broad end of the markets, the top NSE 500 gainer is a name we don't discuss much, but 3M India, the stock high by 15% on good volumes today, especially for a stock of this size. SJS Enterprises, the South Ancillary company, good set of numbers, strong volumes today, higher by over 7%. Hitachi Energy, very, very strong set of Q2 results. Order book too, trending near all-time high levels, and that stock too amongst the top gainers in the session. Almost 6.5, almost 14% higher now as far as Hitachi Energy is concerned. And Suzlon, numbers came just around a half an hour ago. Good set of numbers. Along with that, if you look at what the management had guided to at the start of FY26, they had guided for a 60% growth across all key parameters. They are tracking well ahead of that at the end of H1. On the other hand, Hero Motor Corp, the top drag today, one of the few auto companies that's actually seen a degrowth, in the month gone by. Look at Power Grid, again, weak EBITDA margins this time around. Capitalization as well as commissioning is something that the street will need more clarification on at this point of time. Quite muted. JK Paper, sharp margin contraction over here. And Gland Pharma, especially compared to estimates, it's a significant miss. The street clearly not liking the results of Gland Pharma in Q2. However, the management has said H2 will be better.
All right, we take that point. Thanks a lot for that, Vivek. But what the street definitely likes are the numbers of Thangamayil Jewelry. If you look at the last 2 trading sessions, like we said, 30% since its second quarter results. Revenues have risen 44%. High gold prices were favorable. The base also boosted the company's overall performance. Same time last year, they had an EBITDA loss because of inventory loss on account of the cuts that came in on customs duty. Second half of this year, is more important? Where do they go versus what they've guided for? SM Lakshmanan, who's the VP Finance and Accounts of the company, joins in. Congratulations on a strong set of numbers, Mr. Lakshmanan. Two-part question. One, how much of your expansion, margin expansion, is on account of the operating business? How much of that is on account of inventory gains? If you could break that down for us. And the first half of this year, you're way above your target of 6,000 crore revenue and 6% margins for the full year. So do you want to up your guidance for this year?
Good afternoon, Mangalam. Thank you for the opportunity. Tangamail Jewellery Limited has achieved a turnover of 3,260 crore rupees for the first half of the financial year 25-26, registering a retail revenue year-on-year growth of 36%. In terms of volume, for the first half, gold is at -1%, silver increases by 16%, and diamond increases by 20%. As far as the Q3 current quarter is concerned, yes, it has started on a very strong note. For the first time in the company's history, a month's revenue crosses 1,000 crore rupees, and October's revenue is 1,033 crore rupees.
Right, sir. Sir, so then would you want to up your guidance, like Mangalam mentioned as well? Do you think the second half you will be able to do better, and for the full year also, maybe you will be, delivering better than 6% margins?
No, talking about the retail revenue growth rate, yes, absolutely. The Q3 as well as the financial year 25-26, we will be able to better the first half's retail revenue growth year-on-year rate of 36%.
So for the full year, do you intend to cross 6,500 to 7,000 crores in terms of revenue?
Yes, Mangalam, probably the company is looking at a revenue target of 7,000 crore rupees for the financial year 25-26.
That's upping your guidance. What proportion of your margin expansion has come in on account of inventory gains, and how much of that is on account of increased sales?
To answer your question, Mangalam, the company is almost fully hedged. So whatever that profitability that has come in is only the operational profitabilities, and the focus is on the operational profitabilities. And as far as the expansion is concerned, the revenue is concerned, yes, the Chennai showrooms are performing very well.
Right, but I'm sure it is almost fully hedged and not entirely hedged, which is why I thought even if it's 5% unhedged, you would, on a 50% gain in gold prices, get about 125 to 200 basis points in terms of additional margin.
Mangalam, as compared to the earlier years hedging level of 65 to 75%, as I had mentioned in my earlier CNBC discussions, that now the hedging policy is around 85 to 95%. The reason is that the company is fully focusing on the operating profitabilities.
Also, sir, what about your same-store sales growth? First half of the year, 10.3%. Previously, it was 15.9%. So for the full year, what is the SSSG target?
Vinny, as I mentioned in the earlier CNBC discussion, probably for the Q1, etc., it had been in single digit, and I said that the company will be getting into 2 digits of SSS, and yes, we are at 10.31%. And yes, the company would like to retain or maintain the 2-digit SSS percentage target.
All right, you will maintain SSSG in double digit. First half, your margins have been around 6.1%. For the entire year, do you see this going higher? Do you see it being around 6%?
Yes, EBITDA margin is at 6.14%, and yes, the company would like to maintain or retain the EBITDA margin around the 6% target level.
And how do the performance parameters of your Chennai stores report as against all your other stores? Because you entered Chennai just last year. On a per store basis, how do the metrics stand out versus all the other non-Chennai stores that you have?
Yes, Mangalam, Chennai showrooms have been performing well. We have, as on date, 7 showrooms in Chennai, including the flagship showroom, which was opened in the last quarter of the financial year. And on an annual revenue basis, the company is looking at Chennai 20% revenue composition.
And this was absolutely nothing in FY24 and FY23, I suppose.
Yes, the Chennai, the flagship showroom had been opened. The first one had been opened in the fourth quarter of the financial year 24-25, and this is going to be the full financial year of Chennai showrooms. And as I said, on a full year revenue basis, Chennai showrooms are looking at a 20% revenue composition.
So what about, the demand trends that you're seeing, given that gold has come off a bit in the recent times? So have you seen increase in terms of gold buying or maybe more jewelry shopping? And wedding season also is here. So what is it that overall trend you're seeing right now in Q3?
Yes, Vinny, Tamil Nadu is a land of wedding activities and festivals throughout the year. And that is the reason we are very confident that we will be able to better the first half's retail revenue growth rate of 36% in the Q3 as well as ending the financial year 25-26.
All right.
Sentiments are bullish, things are encouraging.
All right. Will you have any earlier inkling on what FY27 is likely to be for you? What's your target at the start of FY27 in terms of revenue and margins?
Not talking about the numbers, Mangalam, definitely, as I said, the things are encouraging, and the encouraging trend will be able to be maintained in terms of revenue as well as in terms of margin.
Got it. On Chennai itself, because you are a recent entrant there, that becomes 20% of your sales, and it's by all metrics, it's actually been a blockbuster entry for you in Chennai, which is a much bigger market than all the other markets that you're currently present in. Do you intend to open more stores in Chennai from here on, or will you go further indoors into Tamil Nadu where you're currently operating?
Okay, talking about the expansion, Magaram, to answer your question, 9 showrooms have been opened during the first half of this financial year, 6 in Chennai and 3 in non-Chennai, in other cities and towns in the state of Tamil Nadu. So the store count net as on September 30th is 66. 3 more showrooms will be opened during the second half of this financial year, all the 3 in Chennai. And talking about a horizon of December 2026, meaning during the 9 months of the next financial year 26-27, the company will be coming out with 7 more new showrooms. All the 7 are going to be in and around Chennai. So for the next couple of years, the focus is going to be in and around Chennai.
And will you at some point look to get beyond Tamil Nadu?
Not for the next couple of years. A lot more space is there in the Tamil Nadu state itself to grow, and the company is focusing in the state of Tamil Nadu for the next couple of years.
Just a final question before I let you go, from my end, because you are expanding so well in Tamil Nadu, you're an extremely strong regional player. If a national player intends to write a check to you to acquire Thangamayil jewelry, will the promoters be amenable to that? Is there a possibility that Thangamayil jewelry gets bought by some of the larger players?
Probably let's reserve the question and answer.
Sorry?
Let's reserve the question and answer. Let's try to avoid the question and answer for the time being, please.
For the time being. So basically there could be a possibility.
No, certainly not.
Okay, we take that point. I mean, you're tight-lipped about it. So we'll obviously watch out for how this pans out in the very near future. But there is no inclination from the promoters to, indication from them to actually sell.
Mangalam, let's not, let's try to avoid this topic, please.
All right. And would you buy another company, a smaller company in another geography? Sorry? You've raised 510 crores right now, so you have the money. Would you, if not sell, would you acquire some smaller players?
No, as at the moment, the company is focusing on stores expansion in the state of Tamil Nadu. Today it's around 66. As I said, we have a lot more to grow in the state of Tamil Nadu in the next few years, and things are encouraging, and we are on track as far as the business is concerned.
Okay, Mr. Lakshmanan, thank you so much for joining us this afternoon, talking to us about the outlook of the company going forward as well. It's a pleasure talking to and speaking with you on this show. Thank you so much for that. But on that note, we're going to slip into a short break. But here is a programming note for our viewers. It's the final countdown for CNBC-TV18's most anticipated event of the year, the CNBC-TV18 Global Leadership Summit. This year, the summit spotlight is the India advantage, the country's unmatched potential in a shifting global order. Catch business leaders, policy makers, explore transformative strategies and groundbreaking ideas starting at 8:30 a.m. on 7th of November. It will be a power-packed day with several panels focusing on India's economy, digital landscape, market entertainment, and a lot more. Tell us why you love CNBC TV18 by sending a tagline on the email address flashing on your screens, and you stand a chance to attend the marquee event. Welcome back to Halftime Report on CNBC TV18. Let's focus and put the spotlight on One MobiKwik. They reported their numbers. Revenues are seeing a decline of around 7% on a year-on-year basis and almost muted on a sequential basis, slight bit of a decline there as well. We're seeing that the losses of the company have widened versus, whether YOY or QOQ that you compare. Now, obviously, why have the losses widened? Because there's an exceptional provisioning that has happened this time as well. There was a bit 11.8 crores of exceptional provisioning. There's a fraud that took place in Q2 FY26. So that was something that did impact the profitability of the company. But what is the outlook from here on? What are we watching out for? We have Bipin Preet Singh, who is the MD and CEO at the company, to talk to us about that. Bipin, good afternoon. Thank you so much for joining us on the show. Let me start by talking about just the overall business. Revenues this time have seen a decline of 7%. Lending business, how is that doing? You mentioned that it would get back to around 40% the last time we spoke. So where does it stand right now? And what is it that is expected by FY26?
Hi, thank you. So thank you for having me here on this show. Firstly, I would like to correct you. I think in terms of the numbers that you mentioned, our losses haven't actually widened, not on a Q-on-Q basis, because if you look at the EBITDA that we have reported, it is minus 6.4 crores versus almost minus 31 crores it was for last quarter. So there is actually an 80% improvement in the EBITDA margin, and we are pretty close to break even, as close to break even as we have been over the last few quarters. While revenues have actually been steady, even quarter on quarter, it's almost like 280 crores, 279 crores compared to last quarters. JAS is usually a slower quarter from a business point of view. But still, when we look at the overall headline metrics of the company in terms of the payments GMV, we actually grew 13%. So we almost did 48,000 crores of payments GMV this quarter, which was 13% higher than 38,000 crores that we did last quarter sequentially. And year-on-year basis, it grew almost 50% because it was around 28,000 crores last year, same time. In fact, when we look at payments, we are doing very well in UPI, in wallet, as well as in bill payments, which continue to be our mainstay. Thanks to these initiatives, we are one of the fastest growing UPI apps. If you look at the last 6 months data from NPCI data, we are currently one of the top 3 fastest growing apps. So payments is doing extremely well. There is strong growth. It is not yet completely translated into revenue growth yet for this quarter, but we are very, very positive on the outlook for the payments going forward. In fact, even when we look at the bottom line for the payments, our contribution on the payments has increased from 27% to 29%. And so this is I would say we have one of the highest payment margins in terms of 14 basis points on every rupee of payment spent or payment GMV. So it's a pretty good performance, I would say, from a payments point of view. In terms of digital lending, like you asked, we have also actually been on the recovery mode, as you know, from the last quarter. Our last quarter margin was around 13%. So while revenue has grown from 58 crores to around 61 crores in lending, but the margins is where the real story is. It's grown from 13% to 41%. So net, when I combine the margins from the payment business as well as from the lending business, we had an outstanding quarter in terms of growth of margins from somewhere like 77 crores last quarter to 96 crores this quarter. So this is a very directional trend because, as you know, contribution margin is what ultimately determines our EBITDA. And thanks to the fact that fixed costs are also under control, so our EBITDA is actually ended up at 6 crores.
So, just to get that number cleared out before we move further with this conversation, Bipin, third quarter, seasonally fairly strong. A lot of payments happen, a lot of online business happens, transactions happen. You will be EBITDA positive for sure, right? Because in a weak quarter, the JAS quarter, you've almost broken even. So it's obviously a foregone conclusion that you break even and have a positive EBITDA in the third quarter. And what's your path to sustained EBITDA profitability and net profitability beyond this?
So we have focused a lot on reining in our direct costs as well as fixed costs, both fixed costs as well as direct costs in the business. That is why you see this improvement in contribution margin, both in the lending business and the payments business, but especially in the lending business. And we do believe that the distribution of loans business is something that, is just 60 crores of revenue right now. Historically, we have done as high as 150 crores a quarter of lending revenue. So there is obviously a lot of upside. In terms of disbursal of loans, we did some 690 crores of disbursal last quarter, whereas this Q2, we have done some 800 crores. So there's clearly almost a 30% kind of a growth in that. And that we expect to continue. And as that grows, as you know, digital lending always has better margins, right? Distribution of loans. For us, that margin is almost 40%. So in 7.5% of what we disburse comes to us as revenue, and almost half of it, like 40% of it, comes as gross profit. And below that, there is not much cost because it's a lean setup that we have. So I'm very, very hopeful that if these trends continue, we will be profitable in the second half, which is what we have promised and committed to the market as well.
And by profitable, you mean EBITDA profit or net profit as well?
Currently, I'm talking about EBITDA profitability. However, let's see how we perform. I think, like you said, these quarters, OND quarter and then JFM quarters are usually the strongest quarters for us, if you see historical last few years financials as well. So we are hopeful that we will do better and break even.
Okay. Bipin, just one question. So the fraud that took place, right? You all have made some recoveries already on that front. I think almost around 11 crores is left now, approximately, right? So when will that recovery come by? Like, when are we expecting that?
See, look, the fraud incident that happened, and it was geographically concentrated in Nuh and Mewat areas of Haryana. We initially had an exposure of almost 40 crores. And, thanks to the team and the hard work that we have put in and, the entire recovery effort that we have put in, we have been able to recover almost 70% of it, which is either in our bank account is already secured and just on its way. So the outstanding provision is 11.8 crores, which is not yet secured. By abundant precaution, we have taken the entire amount as a provision below EBITDA and as one of the exceptional items. We do believe that we will be able to recover a good part of this as well. But, this is something that I will leave for the next few quarters. But, I would say that, given that we had a 40 crores kind of exposure, we have done an outstanding job just by recovering 70% of it within such a short span of time. It's not even 2 months that have passed.
Typically, if one was to make a business model for you on a spreadsheet, how much should annually one account for shrinkage in the form of frauds, etc.? Largely because this is a business which is prone to such, nasties.
Look, I mean, this is a real one-off. Like we spoke with our teams, our auditors, everyone. Something like this has never happened in the history of MobiKwik in the entire 15, 16 years that I started the company. While we do have fraud exposures every year, but they are limited to usually, like maybe 1 crore, 2 crores max, right? Across the board. And if you see, that is how it's been over the last many, many years, at least the last 7, 8 years. This is really a one-off. What we are doing in order to ensure something like this doesn't happen is we have appointed somebody who's as an independent auditor. We've gotten audits done, incident reports done. We have been in touch with the regulator as well, and we are re-looking at all the processes and policies and the entire risk management, which will ensure that even if there is a technical glitch, this was like a bug or a tech issue that was introduced in the system. Even if something like that were to happen and should not happen, we have enough guardrails built to react very, very quickly and make sure that we always have limited exposure or no exposure.
All right, take that point, Vipin. Thank you so much for that. Wish you good luck for the second half of this year and looking forward to EBITDA profitability and at some point maybe you surprising on the positive side with a bottom line in the black as well. And hopefully that sustains beyond H2 and into the next couple of quarters, which are seasonally weak as well. If your business is so strong, that continues to be strong. With that, take a short break, come back on the other side. Some trading strategies coming in from Sachidanand Dutekar. Welcome back. Well, not much happening in the index apart from the fact that it's down about 90 points, still in a consolidatory zone. We do have Sachidanand Uttekar joining in. Sachi, could you give us some stock picks because the index is consolidating?
Good afternoon, Mangalam. Clearly, I think the market has been oscillating within a particular range, and there's a good chance that we may see further slippages. But it's better to keep a long-short equation when it comes to stocks. On the long side, what we have observed is that some of the insurance stocks are doing pretty well. And here, ICICI Prudential's is about to set a breakout. Now, if you look at the weekly construct, for the last 10 weeks, it was oscillating near that 600 mark. We have already seen a good positive crossover on its weekly RSI. And if you look at the overall structure, it looks like a classic triangular formation on the daily scale. So we're expecting a breakout move to unfold soon. And that's why we are recommending fresh long positions with a stop loss at 602 on closing basis. We may see a quick move towards 628, 640 levels. And on the short side, Indigo has been, scaling lower. We've already seen a breakdown from its 50-day exponential moving average. If you look at the 30-minute charts, there's a head and shoulder pattern which is very evident, and it is indicating a price target somewhere close to around 5,500. So we are recommending fresh short positions here. One can keep a stop loss at 56.90 on closing basis. And on a pullback, some fresh shorts can be initiated for a positional target around 5,530.
Okay, Sachi, thank you so much, for joining us today and giving us those stakes in terms of what we should watch out for in today's trading session as well. But thanks so much for that. But on that note, we're going to step into a very short break. On the other side, Manisha Gupta will be joined and in conversation she'll have Claude Kovrig of Kovrig Analytics talking about the commodity side. Stay tuned in.
Welcome back. Joining us on the show now is Claudio Kovrig. He's founder and lead analyst at Kovrig Analytics. Claudio, hi. Thank you so much for your time. And first thing really is about the global sugar markets, which have continued to decline, trading at a 5-year lows right now, with an expectation that we perhaps could be looking at a 4 million tons of an excess supply globally this time.
Yes, it's been, thank you for inviting me here. It's always a pleasure to be here with you. But these are hard times for global producers. Nobody is producing sugar now at profit. Everybody has to discount the sugar. And it's we don't know for how long this situation will last, but for sure, producer will not continue to sell below production costs. 4 million tons of surplus next season is not a big deal. From these 4 million tons, about 3 million tons remain locked in India. India might allow some exports, but now it's completely out of the market. And I don't see India exporting sugar, raw sugar below $400, $410. This means more for low quality whites. So let's see for how long this situation will last. The problem was now that, okay, Brazil continued to produce a lot of sugar recently, and the stocks have increased there. But now in Brazil, production is going lower, and then stocks will go lower by the end of the year. Probably will be only at 7 million tons from 12 million tons now. So probably we will have a bit of support by the end of the year. Let's not forget about the funds that they are on a very short, net short position. They are about 200,000 lots net short. If they decide to liquidate these net shorts ahead of Christmas time, then to sit on some nice bonuses, then we can have a bit of more support. But just to remember something, not even Brazil, which is the cheapest producer of sugar in this world, can produce at actual prices. Even Brazil needs ex-factory at least, let's say, 13.5, 14 cents per pound. Then you have to take this sugar to the port. You have to add another 1 to 1.5 cents or even more for other meals. So you see, it's an unbearable situation. Moreover, in Brazil, now sugar is discounted at the port for November and December by about 30 to 50 points to New York 11. So you see, they want to get rid of stocks. Everybody wants to get rid of stocks. Everybody discounts a lot, but it's unnecessary. It's not really, I would say, a situation to continue. And then once these stocks are out of the market, probably prices will be a bit more supportive.
Claudio, until that happens, what is your sense on the prices from here? Because we already are trading at 14.5 right now. And just coming back to the point that you mentioned, that if India exports, we could perhaps be looking at further decline in prices. Is that what we are calculating?
Yes, I mean, okay, India will start producing now, and then a lot of sugar will come into the domestic market. The allocation towards ethanol was disappointing this year. I don't think we can have more this year. So this means that all the pressure of the new volumes produced will hit the domestic market. Now, the government has to do something to release this situation. We don't know how low prices will move south from these levels. Let's say now we are close to 38,000 rupees ex-mil in Maharashtra. Should we go to 34,000? Should we go to 33,000 rupees? This will be a disaster, right? But even at 33,000 or at 34,000, India will still need at least 18 cents on FOB, or even more, 18.5 cents. So this means that there will be no Indian sugar unless this sugar will be discounted to the world market, right? And then who wants to discount? Who wants to sell in negative, below production costs, you see? So something has to happen. If indeed the world will need the Indian sugar, the world has to come up, the prices have to pick up to attract this the missing Indian sugar. And we've seen on the low quality white trade flows that there is need for Indian sugar in Q1 and in Q2.
Claudio, thank you so much for joining in. Well, absolutely. That really seems to be the case right now with the way the sugar prices seem to be trading. It is below cost of production, not just for India, but for most part of the world as well.
Absolutely, so that'll be something that we'll have to keep an eye out on going forward as well. Thanks so much, Manisha, for taking us through that conversation as well. But on that note, we are actually going to slip into a very short break. And, after the break, we'll have the management of Orient Pro Solutions talking to us about their Q2 numbers and outlook of the company. Stay tuned in. Welcome back to Halftime Report on CNBC-TV18. Nifty as of now 25,680 levels, down almost 85 points in the trading session as of now. So it continues to be where we started the show with, not much of a change there. But Orient Pro Solutions, that's the next management on the show. Margins of the company stable at 20% when you look at it, not much of a change there. Revenue of the company on a year-on-year basis has seen a growth this time of around 28%. Half year also growth has been at 28.6%. What is the outlook of the company? What segments have done well? And what is the outlook, especially in terms of geography-wise performance? That is what we'll be understanding. And to understand that, we have Ashish Rai, Group CEO at the company, to speak with us about that. Ashish, good afternoon. Thank you so much for joining us as always. First I want to start by talking about the revenue. The last time we spoke, you had mentioned that, you're expecting a steady CAGR growth of 30% is what you are watching out for. Now, in the first half of the year, we have managed 28.6% growth. For the second half and the rest of the year for FY26, do you think this 30% is something that you will achieve? And are there any sort of delays that were seen in the first half of the year from clients in terms of conversions?
Great question. First of all, good afternoon. Thank you for having me again. So look, first half of the year, both the quarters, we've grown about 29% in sort of all ways. There is an excellent quarter for both the major segments for us. Banking grew strongly. We had a couple of deal delays, and I don't think that's a material impact overall. We'll We closed those deals out in Q3 and we started work. TIG obviously grew strongly. Both sides of the businesses had significant wins. On the banking side, we announced UCO Bank, for example, in Q2, sort of establishes us as the sort of partner to go to when someone wants a large transaction banking transformation, any of the large banks who need a transaction banking transformation. The MMRDA on the transit payment side, the two lines that we have, that's the largest order we've won in our history. That sort of firmly establishes us as the player, the partner of choice for transit organizations, across the country. So I think significant wins, significant traction. I would not read too much between 29 and 30%. I think so. At the pace at which we are investing in our products, the pace at which we're expanding globally, it's very hard to calibrate the growth down to a single percentage point. I think, so we'll always be a couple of points up or down. I think that we don't plan to that level of precision. I think when you're growing at 5-6%, you can do that. And growing at 30, 35 like we have. And now for 4 years, 5 years in a row, I don't think there is any listed technology organization that's grown at 30% plus the last 4 years, right? So I think 1 or 2 points here and there will always happen from one quarter to the next, but it was an excellent quarter. And I think the business has continued to grow.
Right. The business will continue to grow. There's no problems when it comes to your P&L, but I'm looking at your balance sheet. And here I see operating cash flows having turned negative as compared to what it was in March. And a large part of that reason is because trade receivables, they've increased from 305 crores to close to 387 crores. So while your revenues have grown by 30% as well, as have your receivables. So just wanted to understand if there is any specific problem that you're facing out there, and by when do you expect to get this?
Yeah, so it's the same question I think we discussed probably middle of every year. And that's the nature of the business that we have. Typically, product businesses will not be linear. For us, a lot of our payments are skewed towards go live of the products. Typically, most products takes 12 to 14 months. So, on September 30th, we always, last year, the year before, we had the exact same sort of situation. We do a lot of business. We pick up a lot of new projects towards end of the year. And it typically takes 12, 14 months to take the client live, so which means the end of the following year. By the time we get into Q4, we do most of the collection. So if you go back the last few years, we probably have been able to convert at least 80% plus of EBITDA to cash by the time we finish the year, maybe even slightly more than that, net of tax, of course, right? So I think typically our cash conversion is very solid by the time we get to the year, but middle of the year, we'll have the same situation.
I remember sometime last year when we had spoken, you had given the pace of growth, not ruled out a possibility of getting to 3,000 crores by FY30 or 5,000 crores by FY30? Can't quite remember that number.
I will be very disappointed with 3,000 crores is what I can say.
5,000 is what it is, right?
We don't give guidance that far out, Maglam. But basically, we expect to. So the goal is to build out global products and platforms. We have a Vision 2030. We said top 3 global player in each of the spaces that Orient Pro is. That player is a very large player. I would hesitate to put a number to it. I know, a lot of people like saying $1 billion and all that stuff because it's a round number. We have a very precise number which we work towards. Since we published it in 21, we've beaten it every year. And I think we are probably the only technology player who's growing that strongly, and we intend to continue to do that.
I've pulled out that quote. It says that you don't rule out 5,000 crore revenue by FY30. So that's your quote. I see you laughing at that.
Right. If you see from 21, when we started our pivot to becoming this global products player, we've grown at roughly 32-33% CAGR, which means we were 375 crores in FY21. We are something between 1,550, 1,600 crores this year, right? You just fast forward that to 2030, the same pace, you go up another 4 or 5 times, right? I think, beyond the point, put our heads down and execute, build great technology, clients want to buy, and we'll grow what we grow.
Ashish, just what about your US and Europe business also? You said that you expect Europe to scale towards double digit in terms of sales mix. When would we expect Europe to be in that double digit side?
I would say so. I think if I remember precisely, the last time I'd said 24 months. Look, I think Europe is new to us. And typically getting into any new market needs some discipline and some patience. We know that. I think we built up a fantastic team. We also did the acquisition with Sensex, Eric Toso and team, like really, really strong, extremely strong talent. We have made significant investments, and of course you're seeing the effect of that on the P&L. Otherwise, EBITDA would have been like way north. But we feel good about Europe. I think over the next 4-6 quarters, it would grow very strongly.
Right. You know, what is the give out here, Ashish? Because you're growing extremely fast. There is no concern with your balance sheet as well. That was an investor concern earlier as well. You explained that once again. But the stock is significantly off the peak. If I remember correctly, it used to be around 1,900 rupees at peak. And now it's around 1,100 rupees. So just trying to figure out what is it that the street is, you know, 2 and 2 don't act together. Because if you're growing at a certain pace and everything is good, you intend to grow 4 to 5 times in the next 5 years, you know, the street would typically reward that with a good price up move in what one would see in the valuation as well.
Yeah, so look, obviously, it's hard for the firm to decide what the right price is. I can tell you what the value is. The value, I think there are 3 levers of value that we have, right? I mean, one is the revenue growth and the profit growth. I think we've been one of the fastest players for the last 4 or 5 years. We intend to be there. You know, the profit margins wise, 20% plus, again, consistently, we expect to be there. Of course, in the product business, you need to keep investing significantly in R&D. Otherwise, you know, we can actually drive the EBITDAs north at some point in time. And the third thing is the IP. I think that's the most important value that no accounting statement actually captures, but we are building out absolutely world-class technology that's going and winning out there. We are the #1 loan origination software out in Asia. We are the strongest transaction banking platform out there. We are the most integrated offering in transit payments. So the goal is to create that IP, which is of value significantly. Look, like Buffett says, right? I mean, over the short term, it's a voting machine. Long term, it's a weighing machine. We pay for the long run. I think market can decide what the right price is.
All right, we'll take that point. You know, you quoted Warren Buffett. We'll obviously also like to see some promoter stake going up from 31%. It had fallen to about 26%. So we'll get an eye out on that one as well. Ashish, wish you good luck for the remainder of this year. And obviously, we'll continue our conversations here on CNBC TV18. Take a short break, come back, getting more on the markets and stock-specific action. Stay with us.
Welcome back to Halftime Report on CNBC TV18. As of now, Nifty is just holding on to 25,650 levels, down an odd 100 points in the trading session. When you're looking at it in terms of the bank or the mid-cap, that too is not managing to hold on to gains today. So some bit of that consolidation that we're seeing there. But that's where the market stands at right now. But we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, Business Edge.
Stocks drift lower as global uncertainties linger. Telecom and consumer durables are the bright spots, while utilities, auto and FMCG stocks are sulking. Bharti Airtel beats estimates, riding on a good show in India and Africa, with average revenue per user seeing a strong 10% uptick. The board also clears an additional 5% stake purchase in Indus Towers. Both stocks perk up. Titan reports an inline quarter, riding on gold ingot sales even as jewelry buyers thin. But a dip in gold prices in the third quarter has seen buyers return, driving up sales by more than 25%. The company tells CNBC TV18 the stock gains. After a rush of marquee investors for its anchor book, Billion Brains Garage Ventures, which owns India's #1 broking firm, Grow, has launched its 6,600 crore rupee IPO. Grow tells CNBC TV18 that margin trade funding will be the big growth driver. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormuz Fatakia. We are counting down to 5 major Nifty results in just a few minutes from now. And of course, the markets, well, still struggling around about 100 points lower on the index. It managed to defend yesterday's low just by about 3 points, 25,648 being the intraday low for the Nifty, still 20 points away from that level. It's still not managed to break past yesterday's high, so the lower high streak continues. Be interesting to see if the lower low streak continues as well for the 5th straight session for the Nifty. Counting down to 5 major results. SBI numbers should be out in just a few minutes from now. The stock was at the lowest point of the day on last check, 0.6% lower. Of course, the stock is near its 52-week high. Keep that in mind as well. Mahindra & Mahindra, the other major Nifty company, reporting results today. That is, of course, at the highest point of the day, 0.5% higher on that stock. The new Nifty entrant, Interglobe Aviation or Indigo, also reporting results today. And keep an eye out on that stock as well. Remember, Indigo has also seen a significant up move and has just corrected slightly from the peak that it has seen. So 1.5% lower on Indigo at the lowest point of the day. And the two Adani Group companies, part of the Nifty 50, Adani Enterprises and Adani Ports, both of them reporting results as well in just a few minutes from now. Adani Enterprises down 1% near the day's low, and Adani Ports at the day's high, 0.4% higher. Just a couple of results that came in before we got on to the earnings. Bansal Wire was one such name that reported results. The stock is down around 4%, and as did Snowman Logistics, reported a loss compared to net profit in the previous quarter. That stock too trading with losses of around 4.5%. But telecom as a space continues to remain in focus. Bharti Airtel, Bharti Hexacom, all of them reported results. But Bharti Airtel and Indus Towers are the two focal points. And Rima is here to tell us more on that. Rima.
Thanks so much for that. So, Bharti has been such a big mover. It's up 30% in the last 1 year, nearly 150% in the last 3 years, and brokerages are very bullish. So, Jefferies' target price stands as high as 2,635, but Citi CLSE also very bullish. Now, overall Q2 numbers were a beat. The big beat came in from Africa. For India, that premiumization story continues. So despite no headline tariff increase, the average revenue per user, ARPUs for the company, keep going up. So even this quarter, Q2, we saw a 10% jump in the ARPU, and that's the big, play when it comes to Bharti's India mobile business. That because 2G subscribers are converting to 4G, 4G moving to 5G, the premiumization, Bharti has been a big beneficiary. But what's also interesting is the company announcing that they have an enabling resolution from the board to invest of up to 5% stake in Indus Stars. Now, already Indus Stars is consolidated with Bharti because Bharti has a 51% holding in Indus Stars. So why this incremental 5%, why does the company want to purchase this incremental 5%? That's something which investors are also still coming around to.
Rima, thank you for that update. And just as we were mentioning, the first of the 5 Nifty results on your screens, Adani Ports, 30% revenue uptick from last year, 9,167 crore. And the profitability as well has seen a similar uptick, if not more. It's almost a 30% uptick in its profit as well. We'll be watching out for the margin figures. They had just come out with their cargo volumes for the month of October just a couple of days ago. And profits also up around 27% on a year-on-year basis at 3,109 crore for Adani Ports. The stock not doing much as of now. We'll get you more as the margin figures and the operating performance comes in as well. But focusing on some of the other stocks that are moving around on the back of their results, Vinny is joining in with more on that. Vinny.
Hi, afternoon, Horma. So let me start with SJS Enterprises. The stock is buzzing in trade. Healthy Q2 numbers, highest ever quarterly revenue and profits. Look at the revenue growth, 25% revenue growth, 41% improvement in terms of EBITDA, as well as margins seeing a 300 basis point expansion coming in at 29.6%. Apart from that, 3M India, that's also among the top gainers in the Nifty 500 as well today. Strong performance on the operational front. All the 4 segments have reported a double-digit growth. The revenue is also seeing an overall growth of 14%. And margin seeing an expansion as well. 21.2% is the EBITDA margin versus 18% last year. Hitachi Energy, while revenue was slight bit of a miss, but the profits and the EBITDA and margin front, that's something that beat the street estimate. The strong operational performance, when you look at it in terms of EBITDA margin, 16.26% versus just 6.98% last year. So good performance there. And other than that, other income, that is something that has seen a sharp increase. That is leading to a better performance in terms of the profitability and lower OPEX. That's operating expenses. That is something helping and aiding the profits of the company. That's why the profits also have seen a sharp jump up to 64 crores versus just 52 crores last year. City Union Bank, that's another one we're keeping an eye out on. They also reported good numbers in terms of NII growth coming in at around 14%, net profit of 15% growth there, and improvement in terms of the asset quality. So that's why the stock is up in trade. TBO Tech, that's the next one. Good performance this time in Q2 as well. Overall, revenue saw growth of around 13%. I beg your pardon, profit saw growth of around 13%, while revenue saw growth of 26% as well. Lastly, Gland Pharma, that's under pressure today. They missed the street estimates. Poor growth in the legacy business as well as higher than expected expenses from the Sensex subsidiary. That is something that has impacted the overall performance. Regulated markets also saw a flat growth on a year-on-year basis. So a bit of a subdued trend that is coming from Gland Pharma, and the stock is down in trade.
Vinny, thank you for that update. Lots of result reactions, and one more addition that I would want to make to that list. Blue Jet Healthcare numbers came in just a few minutes earlier. The revenues are down, profitability is down as well. The stock is also down 10%. So keep that on your radar as well. Is a Blue Jet Healthcare, the 9.5% lower there at the lowest point of the day. Shifting focus to the other major result in a few minutes from now, SBI. Gaurav is joining in with the key expectations. Gaurav.
Well, yes, we are expecting result anytime soon, but when we look at the expectation, when we look at the advances, we are expecting to see around 10% growth on a year-on-year basis. Deposits, we are expecting to see the same kind of growth, around 9% on a year-on-year basis. And as a result, when we look at net interest income, we may see 2% decline on a year-on-year basis. And the reason being that the pressure on cost of funds that will still remain, that is what the expectations are. PPOP, which is pre-provision operating profit, we are expecting to see around 6% decline, and for profit we may see 7% decline on a year-on-year basis. But what is positive is that SBI is one of the banks where Street is expecting just single-digit decline in net interest margins, and they are expecting around 6 basis point of decline. It will remain somewhere in the region of 2.84%, while credit cost, now we may see some positive surprise here. Now Street is penciling around 4 to 5 basis point of decline in credit cost sequentially, but let's not forget that SBI is known for its pristine asset quality, and that is the reason why we are likely to see some kind of positive improvement here. When we look at the comments, we may see the comments on net interest margins, which will be a key thing to watch out for. And the second is that on the growth, how management sees growth going ahead, because it is the largest bank of India. And remember, they are also focusing on the corporate growth, and the corporate growth is also at a juncture from where we may see some uptick from here. So definitely that is something that we will be watching out in terms of commentary. But in terms of number, we're expecting stable set of numbers from SBI in this quarter.
Stable earnings anticipated. Gaurav, thank you for that. The other major result is Mahindra & Mahindra. Sudarshan is joining in with what to expect from that. Sudarshan.
For Mahindra & Mahindra, we are expecting a mixed set of earnings. Because the reason we are saying mixed, because there can be a sharp increase in revenue supported by an increase in the auto volumes, while there can be a minor dip in the margin because of increasing EV mix, that is electric vehicle mix. So profit may increase by 6%. Revenue can see an expansion of almost 25%. EBITDA too can increase by 19%, while margin can come below 14%, may come around 13.8 to 13.9%. If you talk about the realization, on a YY basis, there can be a minor fall of 1%, but on a sequential basis, here also we can see an increase because of an increase in the auto volumes, because total volumes also on both sequential as well as on year-on-year had seen an expansion. Now, what exactly we would be looking in the management commentary? What does company say on the outlook for FY26? Because as of now, for PV industry, that is passenger vehicle industry, the outlook is of low single-digit growth. Also on CAFE emission norms, what's the strategy of the company? And lastly, on the launches front, what's the outlook? But as far as the earnings are concerned, we are expecting a mixed set from Mahindra & Mahindra.
A mixed quarter expected from Mahindra & Mahindra. Sudarshan, thank you for that. And putting the spotlight now on the primary markets, it's the last day to subscribe to the Lenskart IPO. As of noon, the issue has been subscribed almost 4 times. The institutional portion was subscribed almost quarter to 2 times. The non-institutional portion has been subscribed 5 times. And the retail portion too has seen a subscription of around 4.5 times. Remember, the retail portion is only 10% of the total IPO. Lenskart employees have also subscribed to the issue by 3.5 times the total number of shares on offer for them. Now, Grow's IPO, that also opened for subscription today, and the retail portion is already fully subscribed. And this too has retail portion only 10% of the total IPO size, and they were subscribed, of course, within 3 hours of the issue opening. The non-institutional investors have bid for a quarter of their quota, while the total subscription overall stands at around 26%.
We are highly profitable. We are roughly at a 45% profit margin, and we think if we can keep on growing our revenue, we can even increase this percentage further. So typically the way we look at our business is our business grows or the revenue is dependent on how many customers that we have, and we keep on acquiring the largest chunk of the customers in the market. And the second piece is the ARPU, the revenue that we generate per customer. I think we've been seeing growth on both sides. It's just that sometimes the users grows faster and sometimes the ARPU grows faster. Between both of them, we are able to deliver 25 to 30% kind of a growth rate on the base effect basis. MTF as a business has started contributing 3% in Q1, and I think on a full year basis is significantly higher than that. And hence the broking revenue will, as a percentage of total revenue, will reduce a little bit. But what we are seeing is every product that we launch new, especially MTF, and now we recently launched commodities as well, is able to actually scale much faster. And hence our revenue growth has a extra lever with every new product that we launch.
I'll take a short break. More news and updates on the other side. Stay tuned. Welcome back. Now, OpenAI has signed a deal to buy $38 billion worth of capacity from Amazon Web Services, its first contract with the leader in cloud infrastructure. CNBC's Mackenzie Sigalos gets all the details.
OpenAI is teaming up with Amazon for the first time ever on compute in a $38 billion deal that makes AWS the newest hyperscaler to power ChatGPT. Now, the partnership gives OpenAI immediate access to hundreds of thousands of NVIDIA GPUs across U.S. data centers, with AWS set to build dedicated infrastructure for OpenAI's future models. Amazon's VP of Compute and Machine Learning Services told me that the capacity is already live, ramping quickly through next year, and powered entirely by NVIDIA, not Amazon's in-house Trainium chips. Now, this contract was months in the making and marks OpenAI's first major infrastructure deal since Microsoft's right of first refusal expired last week, really clearing the way for CEO Sam Altman to sign with Azure's biggest rival in the cloud wars as Microsoft and Amazon go head-to-head for AI dominance. Now, for Amazon, which just hit a record high and is guiding to roughly $210 billion in Q4 revenue, it is a marquee win, proof that AWS can power competing AI labs like OpenAI and Anthropic simultaneously. And for OpenAI, which just met all the prerequisites to close a $40 billion funding round, it underscores how capital-intensive this AI boom has become, with nearly that same amount now going toward its AWS compute alone, plus a $250 billion commitment to Microsoft Azure. In total, OpenAI has lined up more than $1.4 trillion in infrastructure deals as the race for AI capacity goes into overdrive.
Mackenzie Sigalos, thank you for that update. Now, David Solomon, the CEO of Goldman Sachs, says that the buzz for AI must be getting ahead of what the technology can actually deliver right now. Listen into what he had to say.
There's a lot of focus right now on data centers and chips and compute. And some very smart people I talk to are focused on a lot of value being created in applications and the application layer. But whenever there's excitement about a new technology, and this is real, people believe the opportunity. And generally speaking, things run ahead of the speed at which it ramps up. My guess is we'll see some of that here. But in the long run, these are really interesting opportunities. And a lot of capital will be winners and losers, just as there always has been.
Let's also listen into some views coming in from Howard Marks, who's the co-chairman and co-founder of Oaktree Capital Management, who shares his take on the U.S. economy, the recent meetings between the U.S. and China, and the Fed's future.
The takeaway is one of pragmatism, that these are two great powers, both of which possess great strengths, both of which need the other. And the other thing is that it's really important to realize that in its 80 or 100 years of primacy in the world, the U.S. has really never had a real rival in economic terms. We thought Russia, USSR, was a rival, but it was a facade. China is a real rival. It has great strengths, it has dynamism, it has rapid growth, it has enormous human resources and focus and purposefulness. So the U.S. has to learn to live with the strong, legitimate rival, but rivals don't have to be enemies. I think that Jay Powell will lose his job in May and be replaced by definition by somebody that the administration likes, and the administration wants lower interest rates. So what will be the effect of the interest of the administration's desire for low interest rates on what the Fed does? That's the big question. The competent management by the Fed is a very important component in our financial system, and nobody wants to see that tampered with.
We'll take a short break. More news and updates on the other side. Stay tuned. Numbers of Mahindra & Mahindra on your screens, 4,521 crore, the net profit higher than what analysts were expecting, a 25% growth each in the revenues of its automotive business and the farm equipment business as well, both of them showing growth of around 25%, revenues at around 33,000 crore. That will be on a standalone basis. Of course, we'll get back to that revenue figure. The stock has now surged to the highest point of the day, the EBITDA at 4,862 crore. The CNBC-TV18 poll was 4,759, so it's higher than what the CNBC-TV18 poll had anticipated, and the margins too at 14.5% compared to 13.9%. So higher than polls. Prima facie first cut numbers looking a beat on what the CNBC-TV18 poll had anticipated. Net revenues at 33,422 crore. That's a marginal miss in comparison to what the poll was anticipating at 34,294 crore. It'll be interesting to see what kind of volumes the SUV segment and the tractor segment has reported during the quarter. We'll wait for more management commentary to come in as well. But as of now, barring the revenue figures, the other metrics look a beat in comparison to expectations. We'll get you some reactions as well to these numbers. And based on what our colleague Sudarshan had highlighted, the total volumes were up 1% from last year. They were up 19% on a sequential basis. The auto volumes were up 7% from last year and 14% sequentially as well. And the tractor volumes were down 8% from last year, but they had risen 30% on a sequential basis. And as a result of which, even despite the fall in volumes, the tractor segment revenues have seen healthy growth on a year-on-year basis. So on first sight, the numbers look good in terms of most of the parameters, at least on the margin front and on the profitability front. The stock in itself has done fairly well for itself. It's up almost 25% in the last 1 year, 16% on a year-to-date basis. It has come off slightly from its 52-week high levels. The 52-week high is around 37.23. The stock currently at 35.60. EBITDA is up 23% on a year-on-year basis, and the margins too, 20 basis points expansion compared to last year, and of course a 60 basis points beat compared to the CNBC-TV18 poll. The stock saw a brief spike but has come down from those levels, so we'll keep an eye out. The management is set to address the media in just a few minutes from now, and they are wait for more and how the commodity headwinds have impacted or have kept the margins in check. What could have been a more higher margin expansion, but it's only 20 basis points from last year. Of course, we are awaiting more commentary on the demand outlook, the new product timelines, and of course the strategy to meet the CAFE-free norms. That's Mahindra & Mahindra for you. We'll continue the action on the other side of this break. For now, the numbers, barring the revenues, look a beat in comparison to expectations. We call time on this edition of Business Lunch. More action on the other side with Midcap Radar. Numbers of State Bank of India on your screens as well. The asset quality has seen a marginal improvement on a quarter-on-quarter basis. The stock has also recovered from the lows of the day. The net profit also at 20,000 crores, higher than the poll, what was anticipated, or as per the CNBC-TV18 poll. The net NPA too, marginal improvement from the previous quarter, 20160. The net profit figure, the CNBC-TV18 poll had anticipated that figure to be 17048. The net interest income also higher than expectations at almost 43,000 crore, and that is higher than what the poll was estimating at around 40,800 crores. Asset quality has improved as well on a sequential basis. You need to keep in mind that there will be a higher other income component this time around, and that is of course because of the stake sale that the bank had from Yes Bank. So that needs to be accounted for as well. But the profitability higher on a year-on-year basis. The net interest income also higher. The stock is now back into the green now, 0.5% higher for SBI. At one point the stock was down almost 1% before the results were announced, and we'll get you more reactions as well coming in. Provisions at 5,400 crore compared to 4,757, so a marginal increase from the June quarter. And we'll also get you, of course, the slippages figure and the loan growth and the deposit growth figures also. Of course, the poll is anticipating a 10% growth in advances and a 9% growth in terms of deposits on a year-on-year basis. The profitability is higher by 10% from last year. It's a beat on expectations as well. And Ashutosh Mishra, the head of research at institutional equities at Ashika Stockbroking, is joining in for a quick reaction on this. Ashutosh, thank you for joining in. The net interest income, contrary to expectations of a decline, has come in higher than last year, as well as the profitability. What do you make of these numbers on first cut?
So surely it is a positive surprise, and primarily if you try to understand, then this reflects the cost. They have cut the saving bank deposit rate, so that is, I think, is fully reflected in this number, which has most probably helped them to bring down their cost of fund. Once the PPT will be out, we will be getting these numbers in detail.
What kind of growth in terms of advances and deposits are you working with your internal estimates, Ashutosh?
We were working on a roughly 3.5% quarter-on-quarter, slight moderation in loan growth on quarter-on-quarter basis. So approx 11% on YOY basis.
And what are the what kind of commentary or what clarity are you expecting from the management when they address in just a few minutes from now?
So the most important will be how the NIM's trajectory will be going forward from here, and loan book growth. These two are very important from the future earning perspective, because we are not expecting any major negative surprise or asset quality, at least for next year or so in the banking sector. So our focus will be on how the NIMs and loan growth will be there. So that will be the key driver for the future profit, and that's what I want to know from the management.
Awaiting commentary from the slippages number as well. Ashutosh, asset quality has seen an improvement from the previous quarter, but provisions have seen a marginal increase. Would you want to know as to why provisions have slightly increased from the previous quarter?
Maximum of the banks, including private and public sector banks, are now gearing up for the moving to new ECL framework, which will be kicking in from the next year onward. So provision side of the they will be slightly making higher provisioning, I think, for whole of this year, so that they are better prepared to take move into the new ECL framework.
Ashutosh, thank you for sparing time and joining us with your quick take on these results from State Bank of India. Of course, we are awaiting more clarity on how the margin trajectory has panned out and how the slippages have fared in this quarter for State Bank of India. The stock had seen a bit of a spike after the numbers had been announced, but they have come off instantly. That recovery has been sold into, and the stock has moved back into the red now, has SBI. But as of now, the profitability is a beat on expectations, as is the core income. The net interest income, as per the poll estimates, was supposed to decline on a year-on-year basis, but that has increased by almost 3.3% from last year. So that's a positive as well for State Bank of India. Asset quality has seen an improvement on a sequential basis. Gross and net NPA both have improved. Gross NPA, of course, by 10 bips and net NPA by 5 bips is the improvement that you have seen from the June quarter. Only the provisions have seen a marginal increase on a quarter-on-quarter basis. Of course, we'll be awaiting more clarity from the management once more numbers come in. But the CET1 ratio has improved as well, 11.47 compared to 9.95 last year and 11.1 in the June quarter. So it's an improvement both on a sequential as well as on a year-on-year basis. The profitability on the net NPAs in absolute terms has also declined, almost 18,500 crores now compared to almost 20,000 crores in June. So that's an improvement seen for SBI. And even in gross NPA terms, in absolute terms, 76,000 crore compared to 78,000 crore in June, and well over 83,000 crore in the same quarter last year. So management commentary awaited from SBI, and as of now, prima facie, the numbers look better than what the street was anticipating. But back to Mahindra & Mahindra, the numbers that came in just a few minutes ago. Sudarshan is here to break those down for us. Sudarshan, how do the numbers look like?
It's a very good set of numbers, and the biggest positive surprise is on the margin front. It has come in at 14.5% versus our expectation of 13.9%, and this is largely led by the tractor segment, which has seen a margin of almost 20%, almost a gain of 400 basis points if you compare year on year. Auto margin remains healthy around 9%. Revenue growth has come in line, almost seen a growth of 21%. Profit too has seen a growth of almost 18%, and EBITDA, as expectation, has seen a jump of almost 23%. In SUV, company remains number one player as far as the volumes are concerned, has gained market share there also. In LCV, which has in less than 3.5 tons, there also company has gained the market share. There also it remains number one player. Now the important part is realization. I assume that company might have taken the price hike, and that's the reason there is a sharp increase in realization also, because we were expecting that there might be a fall in the realization at least by 1% year on year, but company has reported an increase of 1%, 3% year on year. So there also company has seen a good improvement. Now in the commentary, that would be very important, because see, M&M has underperformed its peers as far as the performance in 2025 is concerned. I'm talking about the stock. It's up around 80 to 20% versus uptick that we have seen for Maruti or other stocks. Maruti is up almost 40%. So now, post the recent GST rate cut and the festive boost, and already everyone knows that how the demand has been for SUV. On the weekend only, company has announced October auto sales. There also we have seen a growth of almost 27% for SUV. Even tractor has reported a growth of 13% versus expectation of almost flat. So it's across the board, company is doing very well, and also it's been launching electric vehicles, and some of the new launches that we are expecting from Mahindra & Mahindra this month. New version of Thar company is going to launch, new version of Bolero company is going to launch. So in the commentary, the all expectation would be, if company says, what does company talk about the outlook for tractor segment, because there is a huge uptick in the tractor segment, mainly because of the rural uptick that we have been seeing, and also in SUV demand. And on the back of strong SUV demand, if we can see an increase in the outlook for FY26, and what's the strategy behind the meeting CAFE 3 emission norms, and also regarding the new launches. But as far as the numbers are concerned, it's a very strong set of numbers from Mahindra & Mahindra.
That point, Sudarshan, it's a good set of numbers coming in from Mahindra & Mahindra, and also take your point on the stock being a bit of an underperformer as versus peers in this calendar year. But remember, from the start of 2024, in fact, all of 2024, we had seen the stock nearly double. But be that as it may, the stock has moved to the high point of trade. Obviously, management commentary on the way forward would be crucial to track. Margins are a beat on M&M. The stock continues to rally ahead with a fair amount of triggers straight ahead of M&M as well. Meanwhile, we're not losing sight of SBI as well. The stock's been flitting between red and green ever since the numbers have come by. Obviously, the bottom line saw a big one-time gain on account of the stake sale that the company had made in Yes Bank, close to 4,600 crore rupees. We did have some of their provisional updates as well. But for further internals, we do have Gaurav joining in. Gaurav, we're awaiting the presentation, which will then have the slippage numbers, etc. But from the numbers that have come by so far, what has your reading been?
Well, as when we look at the numbers, there is a one-off impact, and that is the reason why we are seeing a huge jump in profit. But behind that, when we look at net interest income and PPOP, that is fairly in line with the street's expectation. So net interest income that came in at around 42,984 crores, which is around 3% up on a year-on-year basis, in line with the system expectation. In fact, a little over the street's expectation. When we look at other income, there we saw around a flattish number on a year-on-year basis. And again, when we look at PPOP, which is pre-provisional operating profit, we saw the number which declined almost by 7% in line with the street's expectation. Now, when we go ahead, there is an exceptional item of around 4,593 crores. And remember, yes, the bank has also sold some stake in Jio Payment Bank as well. And that is the reason why we are seeing these exceptional gains. And as a result, when we look at profit, that increased almost by 10% on a year-on-year basis. Apart from that, advances growth, that is actually better. Advances growth came in at around 11% on a year-on-year basis. At the same time, deposit growth, that came in line with the system at around 9%. So definitely, on the numbers front, we are seeing some kind of beat in net interest income, but overall PPOP seems to be in line with the street's expectation, and advances growth, that was also above the street's expectation in this quarter so far.
All right, thanks a lot for joining in. We'll obviously let you do a little more of the reading out there and come back with some more updates as and when they are given to the exchanges. Slippage is something that we'll be tracking fairly closely. Alongside that, remember, SBI, the profit boost has come in on account of that one-time gain of nearly 4,600 crore rupees, which the company made on selling the stake that it had in Yes Bank. But the stock of the moment definitely has to be M&M. Strong margin performance. The stock continues to surge higher, now 2% higher as well on that counter. So let's get in Deven Choksi. Deven, we do have two big Nifty companies reporting their numbers. On the one hand, there is M&M, an operational beat out there. On the other, there is State Bank of India, where the operating numbers and the loan growth numbers are largely in line with estimates. But the bottom line, which again expected, was boosted by the stake sale that the company made in Yes Bank. On both those counters, what's your view? How are you reading these numbers, and what should the investment rationale be?
Yes, Mangalam, good afternoon. Well, I believe that SBI numbers in particular, is suggesting few things. One, all the operating parameters, the metrics as we look at it, including your NIM, including the non-performing assets related data, everything has come in line with the growth that the company has been targeting. So clearly, we are seeing the influence of a larger part of the retail part of the business lending that we are clearly seeing into these numbers, as I can read from these numbers. Maybe a few details, and thereafter we'll be further confirming that aspect as well. So SBI is pretty much happily, on expected lines. The M&M, certainly expectation has been on a higher side. Also because of the fact that the kind of new model launches that they have done and the benefit that they have received, in form of the premiumization of this particular strategy of the model, rather, in each of the basic category of models as well, has actually started reflecting into the numbers. And these numbers are pretty smart. Maybe this particular season has also gone well for tractors. And as we see the numbers from tractors uptick, I guess the season is basically showing that the company has performed well. Maybe October onwards, you will be seeing slightly better numbers because of the festive numbers will get reflected in October. But otherwise, also September numbers are looking quite smart for the company on the margin front. So both these companies, good numbers. Hope this continues for a few more quarters for M&M on a higher base with the new launch of vehicles that they are planning.
All right, we have some more details coming in from SBI as well. The PPT has been uploaded to the exchanges. We'll just try and download that and get some more details from here as well. Ritu, meanwhile, has been sending some more details. Credit cost for the second quarter has been 0.39%. Slippage ratio for the first half of this year has actually improved by 8 basis points. And what we get from slippages itself, it's coming at around 4871 crore rupees. So the slippages are 4871 crores, a lot better than what the street is expecting. And that caused a bigger flutter on the stock price on the way up than what was expected. What we'll do is actually read through all these numbers, give you an entire gist after this very, very short break. The slippage number, a lot better than what the street was anticipating.
Welcome back to Mid Cap Radar. Well, a quick take as far as SBI is concerned, especially as far as the domestic net interest margin is concerned. Amidst expectations of a decline, especially when you're looking at the domestic net interest margin, it's expanded on a sequential basis, coming in at 3.27% versus 3.02% on, when you're actually looking at it, this particular number. The other number that we're looking at is actually the slippage number. The slippage number is actually at 4,754 crores for Q2 FY26. Again, an improvement versus what the street was anticipating. No wonder then you're actually seeing the stock move higher, given the fact that it's marginally better than what the street was anticipating. But moving on, Hyundai today launched the new model of its existing Venue with sharper design, new age features and improved efficiency. My colleague Parishad spoke to Hyundai's MD and CEO designate Tarun Garg and began by asking about the new launch of the Venue and how it will help growth of the company further.
The next generation of the Venue, it is of course taller, it is longer wheelbase, it is wider, which means that more cabin space, it has a much bolder look. Also, it is the first software-defined vehicle by Hyundai in India. So I think that's very important. And up to 20 OTA controller ECUs, of course 12.3-inch CNC infotainment, plus 12.3-inch fully digital cluster, of course very, very strong body structure, stamping, hot stamping, and 71% high-strength steel, a whole lot of features which are now, of course, Hyundai's forte. So I think this car is actually going to redefine how compact SUVs are seen in India, and we are very, very confident about the success of this car.
Right. You've mentioned a slew of features, several features that have been added to the car. Give us a sense of the improvements that you've tried to add after customer feedback, and how will this poise the Venue for competition in the market?
Yes, so we always keep our ears to the ground, and the old Venue versus a new Venue, Parishad, let me tell you, more than 60 changes have been done. That is one. Also, we received a feedback that many of the customers want a diesel AT option. So we are very happy to introduce the 1.5 litre diesel 680 option, which I'm sure is going to be a smash hit. Also, like I said, the first software-defined vehicle, which means customers are going to be connected on the go. So the car looks really, really very good from the exteriors. There will be much more space, like I mentioned earlier. In terms of super strong safety structure means that we can look at a very high level of crashworthiness. So there are a lot of features which we believe could really help us to increase the volumes in this segment. The other very special thing about the new Venue is that this is going to be produced exclusively in India. So I think it will give us a lot of export opportunities as well. So to start with, we are going to export to 30 countries, and I'm sure it's going to only go up as we go along.
Right. Could you give us a sense as to how much the Venue alone contributes to your total sales on a monthly basis, and how do you expect this new Venue to add to your numbers?
So if you see the current Venue, we are doing about 9,000 per month in the domestic market and about 600 for the exports. So a total of about 9,600 the old Venues are being sold. I believe there is definitely an upside, immediate upside of about 20% to it. The Venue is going to be produced in the Pune plant. So from a capacity perspective, of course, as you know, in the phase 1, Pune plant has a capacity of 170,000. So I think there is a lot of upside to it, and we will see that how the Venue can actually add overall to the Hyundai numbers. Currently, it is the second biggest volume grosser for Hyundai in India, and it's contributing about 20 to 22%. And I think the potential is to really take it up to maybe 25% going forward.
Right. I would also like to ask you about the overall trends in the market that you've seen in the September-October period. This festive season was a record one because, of course, the festive sentiment, the GST reduction and pent-up demand. Could you see some great trends or special trends which stood out in October for you?
Yeah. Yes. So I think this was a smash hit festival, the best ever for the industry and, of course, the best ever for Hyundai as well. And I think one trend which was very clearly evident because of the GST 2.0 reforms was that one, the customers who had postponed the purchase, they came out in big numbers to buy. The second thing was that customers were upgrading from lower trims to higher trims and from say hatches to SUVs. In fact, an independent research also ratified the same thing, that customers were, because the GST actually increased the affordability. So a customer had the same amount of money pre-GST and post-GST, but of course now he could buy a better car, a top trim. So I think this was very clearly evident. We saw a huge surge in the Venue and Exter demand. Of course, there were some constraints because Venue was having a transition. Creta, of course, continues to be very strong, and also we saw quite a strong demand for Aura, i20 and Neos as well. But if you ask me, a standout was very clearly the demand in the subcompact and the compact SUV space.
All right. I would also like to ask you now, in terms of the GST reduction, improving consumer demand. Now, October was a blockbuster month, but there were 2-3 factors at play. This is going to see some amount of correction. Where do you think consumer demand, the sales growth, is likely to fall? What is the trajectory where it will end up in the coming months?
So yes, Parikshit, of course, October was a month where not only the GST 2.0 played its part, but also because it was a big festival month. So obviously, to some extent, some moderation in demand will happen. But if you see the broad numbers, when we see, say, a 5-year CAGR for India, it hovers around in the range of about 4.5% to 5%. Even an 8-year CAGR, is around the same numbers. This fiscal first 6 months were kind of muted 0% types. I believe now we can come back to the 5% level which we are used to. So I think in the short to mid term, a 5% growth is what we are really anticipating to happen.
Right. Now, you said 5% for the industry in terms of growth. How many more products can we expect from Hyundai in this fiscal in terms of product upgrades and possibly new launches?
So as you know, we had the Hyundai Investor Day on 15th of October, where we laid out a very strong investment plan of 45,000 crore and the breakup of the 26 models. So you would have noticed that it includes new nameplates, it includes full model changes, derivatives, facelifts. It also includes powertrains, whether it is electrics or hybrids or CNG. So I think we have a very comprehensive plan. As we clearly mentioned that within this fiscal, we will have 4 launches, including 1 full model change, 1 derivative and 2 facelifts.
All right, we take that point. Thanks a lot for that, Parikshit, for taking us through with that conversation. But the next management on our show is Arvind Smart Spaces. Under pressure after reporting its second quarter numbers. Pre-sales declined by 7%. Collections were also down 5% versus same time last year. Kamal Singhal, who is the managing director at Arvind Smart Spaces, now joins us. Kamal, first up, apologies for keeping you waiting, largely because there were a bunch of numbers that came by, 2 Nifty numbers, SBI and M&M as well. So let's start with the performance for the second quarter. Pre-sales down 7%, collections down 5%. First half bookings are at 607 crore rupees. If you could give us a sense on what the outlook for the rest of this year is, because you had spoken about this 30% growth. I wonder whether you stick to that or not. And also in terms of the gross development value in terms of addition, what's your plan here?
Sure. Very good afternoon. And you very rightly said we guided approximately 30% odd growth for this year. Last year, in fact, we clocked fresh sales of around 1,300 crores, a little less than that. And an addition of 30-35% will mean that we should be in the range of 1,700 to 1,800 crores this year. As we planned this year, H1 was supposed to be a little lighter as compared to what H2 is expected to be. And hence, we broadly are on track on achieving a overall growth of around 35% for the year. So there we are pretty confident. And I think our expectation is that we'll be able to achieve this number in terms of growth. On the GDV front, there's a good news. Again, we had a total pipeline of 12,000 crores when we started this year. We are still hoping that we shall be able to add 4,000 crore rupee worth of top line projects this year. And minus the sales that we do this year, I think we should be ending somewhere close to 14,000 crores in terms of total GDV from the project as we close this year.
Mr. Singhal, a quick word on the upcoming launches. Not only that, you had also given us a guidance that you've earmarked close to 800 crore to 1,000 crore capex for land acquisition. So where are we on that currently?
So capex plan is pretty much on track. On the funding side, it's all tied up. In fact, the company is debt free at this point in time. We have clearly scope of raising something like 300 to 400 crores as debt as we go forward. We have totally paid up on account of HDFC platform, which is an entity which is providing funding to our new project expansions. But we have huge scope to raise funds from there as well. OCF has been very, very healthy. In fact, this quarter was one of the finest. We created 125 crores of OCF this quarter alone. And hence, all these three sources of funds are pretty healthy. And the investment plan overall is pretty much on track. And we should be able to achieve our GDV numbers that we just talked about.
All right. And what about the Baroda project? When does that get completed? What's the ticket size here? And if I'm looking at your geography, bookings from Bangalore were almost 40%. How does this geographical shift happen over the next, say, few years?
Sure. Baroda is a market where we are just about to enter. We just announced our first project in that city. It's a very exciting project, a little less than 100 acres. Once again, a horizontal development there. Ticket size will be more in the range of 70 lakhs to 1 crore rupees for a plot, which is around 500, 600 square yards of size. Very exciting for us. It's Ahmedabad plus one for us, and this is our entry into this new market. And hence, it should be pretty exciting for all of us. And I'm just missing your second part of the question. You can repeat that, please.
It was a geographical mix. Currently, 40% comes in from Bangalore. I'm sure you would want to diversify that beyond Bangalore, right?
Yeah. So, I mean, we have three major markets, Gujarat, Bangalore, and MMR now. In the medium term, we still expect to have 40% each coming from these two markets, Gujarat as our home market and Bangalore as our second home. And of course, 20% is the starting point for MMR when we start launching these projects, which possibly can start from this year itself. Going forward, these cities should contribute equally.
Okay, just a quick word as far as demand is concerned, especially Bangalore. We understand quite a few delays, especially when it comes to project approvals coming in. So would you moderate your expectations as far as Bangalore, Karnataka market is concerned, and demand as far as, the core Gujarat market itself?
So Bangalore is now pretty much on track. Was a time when delays were there in approvals, but I think things have settled down and they've started moving really fast now, and we are on track. I mean, whatever you wanted to achieve from this city this year and beyond, I think we are on track, and that is what will be important for us to achieve both GDVs and fresh sales from that city. So pretty much on track on that, so to say.
Just a final word on the collections this year. How much will that be?
So collection will see a healthy growth once again. We are hoping that anywhere between 10 to 15% growth is something that we should be able to see. OCFs have been healthy. We have been clocking 300 to 400 crores of OCF for last few years. And that's what we are expecting from collection this year as well.
Well, thank you so much, sir, for joining us. Wish you all the best for a strong H2. And we'll connect once again at the end of Q3. But with that, it's all the time we have on this edition of Midcap Radar. MF Corner when we return.
Hello, good afternoon. Welcome to MF Corner on CNBC-TV18. I'm Vinny Motiwala. Thank you so much for tuning in as always. Now, in the first part of the segment today, what we're going to be focusing on is multi-factor funds. We know about that. But do they offer you better returns than just your daily index funds? What should you be doing? What are the pros and cons over there? And how do they deliver in terms of return in the long term as well? We're going to be understanding all of that with Shravan Goyal, fund manager and head of passive arbitrage and quant strategies at UTI AMC. Shravan, good afternoon and thank you so much for joining us on the show. Let's start with the first part. How do multi-factor funds, or do they actually deliver better returns than simple index funds?
Yeah, thank you, Vinny, for inviting me. Plain vanilla index fund aims to generate market returns at low cost by constructing a portfolio which is very similar to underlying index. So, for example, all the Nifty-based index funds generally generate returns which are very close to the underlying benchmark, which is Nifty here. On the contrary, active funds strive to outperform the benchmark through active management. Factor funds, which are also called smart beta strategies, are kind of a hybrid investment approach wherein they combine the benefit of both active and passive management. They use predefined rule-based approach of portfolio construction in order to outperform the benchmark from medium to long-term perspective. Here, they use an alternative way of weighing the company and selecting the company as compared to plain vanilla indices. When we look at long-term performance track record of single-factor strategies, then we will find that single-factor strategies like momentum, quality, value, and low vol, they have significantly outperformed broader market indices from long-term perspective. Their performance is somewhere between 17 to 20% CAGR in last 20 years as compared to around 15% for broad market indices. The challenge with single-factor strategies is they may exhibit volatility from short-term perspective based on different market environment. Multi-factor strategy, the genesis of multi-factor strategies is that single-factor strategies may exhibit volatility. And because multi-factor strategies are combining various factors in a single fund, so that's why they are able to offer much better diversification across style factors. And that's why they tend to generate much better risk-adjusted returns from long-term perspective.
So multi-factor funds, what's the return over there? Is it better than single-factor funds then?
It may or may not be the case in all the market cycles, but the objective of multi-factor strategies is to remove the cyclicality associated with any single factor. And since they remove that cyclicality, but at the same time retain the benefits of diversification, so that's why they are able to deliver much better returns from long-term perspective, especially based on risk-adjusted returns.
Could you elaborate a bit more in terms of building these portfolios using these factors? And also, like you were saying, right, diversification, that becomes a big positive for multi-factor funds in times of volatility versus maybe a plain index, right? So if you could elaborate on that front.
Absolutely. So there could be multiple ways of creating multi-factor strategies, but there are two broad ways using which one can do it. First and foremost, static multi-factor strategy, wherein weights across different style factors is constant and balanced, so that they are able to deliver much better risk-adjusted returns from medium to long-term perspective. Generally, the static multi-factor strategies are mainly used for passive strategies to balance risk and reward. Another type of strategy could be dynamic multi-factor strategy, wherein, as the name suggests, weights across different style factors are dynamically adjusted based on equity market cycles. It involves a sophisticated way of understanding equity market cycles and accordingly build the portfolio wherein you combine different factors in different proportion in different market environment. Generally, dynamic factor allocation strategies tend to have higher portfolio turnover ratio as compared to static multi-factor strategy. Mainly because here, apart from underlying portfolio rebalancing, the weights across different factors are also changed in different market environment. So that's why it tend to have slightly more portfolio turnover ratio. We at UTI practice the dynamic factor allocation strategy through our UTI Quant Fund, which is a dynamically managed factor allocation strategy wherein weights across different style factors are managed based on our in-house proprietary financial model. So here we use combination of top-down factor selection coupled with bottom-up stock selection using different style factors.
Okay. What about risk, right? Do multi-factor funds actually become risky or they are less risky, especially during market downturns? How does it work that time?
Vinny, answer is yes and no. In general, multi-factor strategy tend to have lesser risk as during broader market environment, mainly because they are diversifying allocation across different styles. But there could be wide range of ways using which you can construct multi-factor strategy. So let's say if a fund objective is to provide upside potential during market rallies, in that case, one can construct a multi-factor strategy which is having higher tilt towards pro-cyclical factors like value, momentum, which tend to perform well during market rallies. On the contrary, if a particular fund is designed to provide protection during tough times, in that case, it could use counter-cyclical factors or defensive factors like quality and low volatility, which generally tend to provide protection during tough times. So there could be wide range of multi-factor strategies based on investment objective of the fund. But typically, because they are diversifying allocation across different styles, so in general, they tend to be much less risky as compared to broader market.
Revenue up 25%, as we've spoken earlier. There is an element of an EV and an ICE mix there. For EVs, it contributes significantly to revenue, not as much to profit today. It will in future. And therefore, you see the gap between 25% revenue and 14% profit growth for auto. ESCV penetration is up to 8.7%, up 90 basis points quarter on quarter. And again, on track for the kind of penetration levels that we've outlined. And export momentum is very strong. Volume up 40%. This is a growth vector for us that we've talked about before. And we're starting to see that growth vector play out. The remarkable number on this page is SUV revenue share up 390 basis points, or almost 4 percentage points from a year-over-year basis. And LCV market share, even though it's above 50%, we still see a 1 percentage point gain in LCV market share to 53.2%. Farm, we're seeing a premium segment growth, yes, from a small base, but up 38%. But very strong operational excellence. And this is one where I would compliment the team on to really drive that operational excellence and deliver the results that they have. And we've also seen the sale of Sampo in Finland. So one of the issues that we had as we continue to prune our portfolio and continue to maintain that discipline, this is an exit that was important and that has been completed. And there you see a market share of 43%, up 50 basis points year over year. And farm machinery revenue on a very good clip now, up 30% at 330 crores for the quarter. So on track again for strong growth and starting to deliver what we've expected that business to deliver. Overall PAT growth, as I mentioned earlier, 54% year over year for the same quarter. Mahindra Finance, tractor disbursements are up 41% and has gained share in that space. NIM improvement, 47 basis points. And we've talked about digital transformation in the past with a project called Udaan, which was literally a 3-year project that has been completed. Adoption is very strong in the 90 percentage plus points right now. And we're starting to see the benefits of that from a customer experience standpoint, as well as from a cost standpoint. And you will see more benefits as we go forward. What we also see is GS 3% less than 4, or less than 4.5 that we promised, but it is at this point less than 4. Assets under management up 13%. And we will now start pivoting this business to growth. We have focused a lot on asset quality, on controls, and we're starting to see results from that. And we will now start pivoting the business to much faster growth as we see the profit up 45% for Mahindra Finance. Tech Mahindra, good wins in BFSI, manufacturing, retail in a tough environment. AI efforts have been accelerated. We've launched Orion, and margin progression is on the track that has been outlined. And we will see that delivery going forward into the next year as well. TCV is up 35%, EBIT margins up 250 basis points, and excluding the one-off I mentioned, profits are up 35%. For growth gems, with Hemant coming into logistics, we've just seen remarkable execution there. And this is a business that is now being set up on a very strong track. Express business, this is the first quarter with a positive gross margin, and we will continue to see more gains as we go forward. White space reduction, there was a fair amount of white space at or warehouses that had been leased, and we've now reduced that by getting in more customers by taking out some of that space. E-commerce segment is growing well, and therefore what you see is revenues up 11%, EBITDA is up 70 basis points. In hospitality, we had some adverse weather in the past quarter, September in particular, and therefore occupancy is a bit lower at 73%. But the average unit realization is up very significantly to 85%. And in our holiday club, Europe, we do see some headwinds there. It's a smaller business compared to the main one, so it's something that we'll have to deal with. Nothing that's concerning at this point. It's still a business that is overall a good business doing well, but we continue to work around the geopolitical headwinds that we see there. Room inventory is up 5%, membership is up 1%, but we're not focusing as much on member count as business has talked about. It's more about the value we deliver as well as the value realization that we get from there. Real estate on a very, very strong growth trajectory. Continued GDV acquisitions, and that has been a very strong story through last year as well as through the first half of the year. We are among the top 4 now in terms of GDV acquisition last year, and have really put this business on the map in terms of a very, very strong and profitable real estate business. Higher realization in the IC business, a very healthy launch pipeline. We see the pre-sales number up 89% here, and the GDV acquired is up 3x, despite the fact that we had a good year last year for GDV as well. This is why you can see I use the word delighted by results this quarter. You just see that across all the businesses, just very, very strong execution that our teams have driven. And with that, our standard page on consistent delivery of the commitments we've made. ROE is up 19.4%. I will always give my caveat that we plan it at 18, so it may fluctuate a bit up and higher and below than 18. So do not expect 19.4 as something that would continue, because we will make investments and drive further growth. EPS growth, while we promised 15 to 20%, we are at 35% from the time that we promised this, and that rounds up the overall numbers for the group. And with that, let me invite Rajesh for the auto and farm businesses.
Thanks, Anish. So quick run through the auto and farm numbers. We'll start with farm. And as you see, the farm volumes are up 32% in the quarter, and we've gained 50 basis point share on what is already a strong market share performance, taking us to 43%. The trajectory of the market share gain, as you see in this chart, gets stronger, and in the first half we've been at 44% market share. We hit the 70 lakh tractors rolled out milestone. Of course, this happened over many decades of both the brands being in existence. So the Mahindra brand has rolled out 45 lakh tractors, which they achieved in September, and the Swaraj brand in August achieved 25 lakh tractors rolled out. So, totally 70 lakh tractors rolled out is a great milestone to have across our two brands. The farm machinery business Anish spoke about was a very strong quarter, 300 crores every month, being able to clock 100 crores consistently was a very, very good performance, and we're seeing very good momentum come back in that business. The farm margins have been a very good story. So while we've been gaining market share over time and at a very healthy market share, so have margins been very strong. Quarter 2 margin of 20.6 is a very good growth over the previous year on year over the last quarter 2, and a very strong absolute margin performance as well. As you can see, the core tractor margin is at 20.6%. We often show this as a standard chart, and you can see the industry growth in quarter 2 and a strong margin performance through the last 3 quarters as well. The profit PBIT for the quarter is at 44% growth, 1,600 odd crores at a consolidated level. With that, I'll move into auto. The SUV volume growth was 7%, as Anish mentioned. There were issues related to transition, logistics, trailer availability, and of course, large portion of our portfolio holding back dispatches till 22nd of September as we were waiting for the GST transition to kick in. So that's affected the overall growth for the quarter, but we've recouped that quite strongly in the month of October. LCV, it's good news to see the category come back into growth and market share growing. We've been gaining market share, but really this is a category which has shown very slow growth over the last many quarters, and it's good to see that come back. And we're seeing that more strongly as the GST rate cut comes into effect, which really improves the overall cost of ownership to customers. This captures the growth in volumes over the different quarters and our revenue market share as well, which remains very healthy and strong. We continue to remain number one revenue market share in UVs, which really is the goalpost for us, and we're focused on staying ahead of the curve on that parameter. We launched an upgraded version of the Bolero Classic and the Bolero Neo. Both have got a very good feedback as they're just getting into the market. We launched it in the festival season. Even the higher end versions are priced below 10 lakhs. The GST reduction has helped enable that, and that has got a very good response. As many of you know, it reduces the on-road price to the customer if when products are priced below 10 lakhs. We also improved and enhanced the three-door Thar with interiors from Thar Rocks, and again we've seen a very good feedback. Again, this has happened in the middle of the festival season, and the effect of this will spill over and roll over into the following quarters. We've retailed 30,000 electric SUVs, which is really a strong milestone. Very good feedback from customers, and we're getting very good word of mouth. But most importantly, usage analytics shows us that it is being used as a mainstream vehicle with very high percentage of customers using it at least 20 days a month, and many customers clocking more than 1,000 kilometers a month. The Batman edition, which we did extremely well, and we had a limited quantity of 999, which got sold out in 135 seconds. Anish covered the electric SUV penetration, which is at 8.7, ahead of the category, and of course the volume market share at 25%. We, for the first half, remain number one on the electric SUV market share. In the quarter, it was close number 2, and we have some exciting stuff, as you all know, coming up, and hopefully we will see a lot more excitement as we get into quarter.
Welcome back to the show. Just keep an eye on the markets. It's at the low point of today's trading session. In fact, not only below yesterday's low, but closing in on that 25,600 mark as well. And a large part of the decline is led by the Nifty Bank along with the IT index. So just keep an eye out on those heavyweights right now. The intraday chart of the Nifty Bank comes up for you. That's at the low point of trade. And alongside that, we have the IT index as well, which hasn't been supporting the cause of the frontline index right through today's trading session and currently is at the low point. The third cog in the wheel would be Reliance. So let's see what Reliance is doing, because two heavyweights, Nifty IT and Nifty Bank, are both at the low point of trade. Reliance too is at the low point of trade. That explains why the overall market is currently at the lower end of the range so far. Remember, we're about an hour and a half away from expiry, weekly options expiry, and a holiday tomorrow. So a lot of money being taken off the table ahead of that as well. Just keep an eye out also on State Bank of India. That one reported its numbers. The slippages actually fell much below street expectations. So that's holding up in the green right now with a gain of almost 0.33%, though marginally off highs. And alongside that, we also have M&M. The management was addressing the press moments ago on what a great set of numbers it has been when it comes to their margins and the outlook going forward as well. That stock too holding marginally in the green. But moments ago, we also got the numbers coming in from IMFA. But more than the numbers, it was an acquisition that the company made. How big is that acquisition in their overall scheme of things? Nigel joins in to detail that.
Well, this is a big moment actually coming in for IMFA. And I say this because the long-awaited inorganic growth has finally been announced. They've gone ahead and they've acquired part of Tata Steel's ferrochrome unit. Now, this is big news. The total acquisition value that they've mentioned is around 610 crores. They're saying in addition to the 610 crores, they'll have to pay GST as well as there'll be some working capital as well. So we'll have to find out what that number is. Now, the positive is that IMFA is set to double capacity. If you're looking at today's capacity and you're talking about the next 2 years, they're going to be doubling capacity. How is that possible? 2.84 lakh tons is what they have in terms of current capacity. They've already announced that organically they'll go up by close to around 1 lakh tons. Now, I think this Tata Steel unit that they've acquired, it has a capacity of around 1.5 lakh tons. So you put it all together, from around 2.84 lakh tons, they're going to be going to around 5.34 lakh tons. So effectively almost doubling their capacity from current levels. Now, the important point to know is we'll have to understand how much they'll have to spend to get this 1.5 lakh ton capacity up and running. The feedback that I've got is around 1 lakh tons is up and running. That's more or less functional. While the 50,000 tons, that could be some kind of capex that they'll have to incur out there. Why is this positive? Remember, IMFA, the last year they did a EBITDA of close to around 500 crores odd. Now, this 500 crores could effectively double once the capacity doubles. Important to note, though, that they are backward integrated with chrome ore. And chrome ore, not just in India, but globally, chrome ore is in short supply. So with this backward integration, doubling of capacity, EBITDA moving close to around double, this could be a bit of a re-rating event for the company if it goes according to what they have said as of now. We'll have to find out, though, what is the total acquisition cost, because 610 will have a capex, will have a net working capital and also a GST component. So a re-rating event, the stock at a 52-week high, it's seeing some profit taking, but let's see how it pans out in the coming months, because this is a big event for IMFA, as chrome ore itself globally is in short supply.
Take that point, Nigel. Thank you for explaining that to us. That's about Indian metals. Currently slightly lower, but if you pull up a longer chart, you would see that the stock has seen a big up move. Perhaps the street sussing out some of this and long pending acquisition that is finally completed. In the last 6 months, the stock has nearly doubled. Take a short break, come back, get you more of the markets. The team of Closing Bell takes all the market action forward for you.
to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Bit of a mixed opening. Taiwan index, 0.5% of gain there.
So there is interest at lower levels and buy the dip kind of sentiment, which is there.
For me, the outperformance between China and India this year has been so dramatic that I would be looking to rotate back into India.
25,760 is where we are at on the Nifty. So it's absolutely unchanged right now.
There are quite a few IPOs coming up, quite a few players looking to raise capital for their own growth plans, and luckily, market environment is quite conducive.
Looks like Q3 is certainly going to be better than what we have done in H1.
We are able to deliver 25 to 30% kind of a growth rate on the base effect basis.
In tea, we are at 2022 share player.
Mildly lower for the benchmark indices at 11 o'clock. The Nifty is at 25,700. In India, what we are basically seeing is this premiumization.
4,521 crore, the net profit higher than what analysts were expecting. Marginal improvement from the previous quarter, 20,160, the net profit figure.
Okay, it's not a great looking screen up there. 25,600 is where we are at the day's lowest point, last hour. Coming up here on Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. Numbers are coming in. Torrential flow, really. Alembic, SBI earlier, Mahindra and Mahindra, and a bunch in between as well. I'm Prashant. With me, my colleague Nigel. Hi.
Well, hi, Prashant. Numbers are coming in thick and fast, and actually the numbers are looking quite good. Whether you look at the headline index as well, you had Mahindra and Mahindra, SBI, Thangamayil Jewelry, they came out with a set of numbers. Smaller cap name. Numbers are good. Street is reporting it. Yesterday up, today up. LG Balkrishna. Smaller name again. Auto ancillary name. Street likes it. The stock as well is rallying for the second day running. So that's a good sign, I think so. Yeah. The market's a little under pressure today because we'll have the weekly expiry as well that will play out in the next 60 minutes or so. And also we had, to add to the excitement, you had a big deal that's announced in the metal space. We'll explain it to you in just a bit. Infra is the stock that's reacting to that. Initially saw some profit taking. Now the street is coming to terms with it. So we're getting a day off tomorrow, but full of action. Results, deals. Weekly expiry, a lot going on there. Yeah, Street is digesting that deal right now. Stock moving to the day's high.
Absolutely. And I think as we kick this off, right, SBI, which reported numbers, the management is sitting down for a press conference. So why not hear from Mr. Sethi?
At the outset, I would like to thank all of our customers, employees, shareholders, and regulators for their continued trust and support. We remain committed to supporting India's growth story while maintaining sustainable value for the bank. The results for Q2 FY26 demonstrate our healthy growth across business segments, robustness of financial numbers and asset quality, reflecting the strength of our franchise and the trust of our customers. I will first start with a brief description of the present global and domestic economic scenario and will then discuss bank's performance. The global economic outlook for 2025 presents a picture of modest but uneven recovery. The IMF's World Economic Outlook, October 2025, projects world GDP growth at 3.2% and 3.1% in 2026, reflecting steady but subdued momentum amid persistent structural challenges. Regarding inflation, though it has broadly moderated across most economies, the pace of disinflation remains slow. Against this global backdrop, India's macroeconomic outlook remains one of cautious optimism, underpinned by robust domestic demand and easing inflationary pressures. The RBI projects real GDP growth at around 6.8% for FY26 and 6.6% for FY27. Growth is being supported by strong investment activity, recovery in rural consumption, and buoyancy in services and manufacturing. The GST 2.0 reforms are expected to boost private consumption and domestic demand. On banking front, scheduled commercial banks' credit growth is slowly picking up and grew by 11.5% year-on-year Last year, it was again at the same level for the fortnight ended 17th October 2025. While deposit growth remains sluggish at 9.5%, which was 11.7% last year. Going forward, we expect demand for credit to continue in the second half of the financial year. By looking at the trend, deposits and credit growth of scheduled commercial banks may remain in the range of 11 to 12% during FY26. However, risks persist from volatile global commodity markets and potential spillovers from trade disruptions. Overall, India's near-term outlook is strong, with macroeconomic stability providing space for sustained medium-term growth. Coming to SBI, the results for Q2 FY26 reflect the bank's consistent financial performance for the quarter, driven by healthy growth in SME, agriculture, and retail advances, improvement in asset quality, and strong operating profit. These advantages stem from our institutionalized framework, maintaining prudent risk management practices, digital initiatives which continue to gain traction. I'm happy to share that our total business has crossed 100 trillion rupees for the first time, and this shows the customers' trust in us. In fact, I would like to say that 100 trillion does not sound great. It should be 100 lakh crore rupees. Then only it sounds heavy, right? And the deposit growth, in terms of the performance, the total deposits have grown by 9.27% year on year and crossed 55 trillion, is currently for 55.92 trillion. Term deposits have grown by 9.91%. Our current account deposits have witnessed a robust growth by 17.9% year on year, and CASA deposits have grown by 8.06% year on year, with CASA ratio at 39.63%, an improvement of 27 basis points over the previous quarter. Bank's current account deposits growth has continued to remain strong during the year, despite competitive market environment. We have taken several steps to strengthen our liability franchise. Our foreign offices deposits have grown well at 11.76% on year-on-year basis. Domestic advances have grown by 12.32% year-on-year. Our RAM portfolio, again, is a milestone, has crossed 25 lakh crore mark, and the credit growth continues to be robust across all segments. SME, agriculture, and retail personal have grown by 18.78%, 14.23%, and 14.09% year-on-year respectively, all registering growth in double digits. The corporate sector has grown by 7.1%. Our foreign offices advances have also grown well by 15.04% year-on-year in rupee terms. The domestic credit deposit ratio was at 69.82% at the end of Q2 FY26, indicating sufficient headroom to address future growth requirements of the bank as well as for the economy. I'm glad to announce that we have posted quarterly net profit of 20,160 crores, which has increased by 9.97% year-on-year. Operating profit for the quarter is at 31,904 crores, which increased by 8.91% year-on-year. ROA for Q2 is at 1.17%, which has improved by 3 basis points on quarter-to-quarter basis. Our asset quality continues to be industry leading. Our gross NPA ratio has improved by 40 basis points year-on-year and stands at 1.73% as at September 25 and continues to be at its lowest level in over 2 decades, which demonstrates the quality of our loan portfolio, the robustness of our underwriting processes, and collection efficiency. Our net NPA ratio is also improved by 11 basis points and stands at 0.42%. The slippage ratio for Q2 was 0.45%, while the credit cost for Q2 stood at 0.39%. The NPA book has been well provided with PCR at 75.79%. The bank remains well capitalized and we have sufficient headroom to take care of normal business growth requirements. Our capital adequacy ratio has improved by 86 basis points year on year and stands at 14.62% against 13.76% a year ago. Common equity tier 1 ratio has also improved by 152 basis points to 11.47%, and both the ratios are well above regulatory requirements. As you are aware, bank has raised 25,000 crores capital during the quarter by way of QIP. We are making continuous progress in digital banking, which is an important customer acquisition engine for the bank across asset as well as liability products. More than 9.35 crore customers are registered on YONO, driving digital agenda of the bank. 64% of regular saving bank accounts were opened through YONO in Q2. The share of alternate channels in total transaction increased from 98.2% in first half of the previous year to 98.6% in the current half year. The bank's in-house analytics team has also won an award for Best AI Solution in the CII National AI Awards 2025. Our subsidiaries continue to demonstrate consistent performance and continue to strengthen value for all our stakeholders with their expansion of digital channels, innovative products, and enhanced customer experience. Many of our subsidiaries are leaders in their respective segments, and we are committed to nurture these subsidiaries and maintain leadership position in the respective businesses. We are glad to report that bank continues to report ROA greater than 1%, and our ROE was at 20.21% at the end of Q2 FY26. The bank's return on equity profile is currently higher than its credit growth, implying CET1 accrual in the future. SBI continues to be the market leader in deposits and advances, with total business crossing 100 trillion rupees as end of quarter September 25. Our asset quality reflects the risk-adjusted profitable lending. By leveraging technology and analytics, we continue to be connected to people and a future-ready organization. To conclude, I want to thank you all once again for your support of the bank. We consider it as a privilege to be able to contribute to the progress and growth of the economy. The bank remains committed to rewarding your trust in us with the superior sustainable returns and value creation over the long-term horizon. I wish everyone here the best of health and happiness. My team and I are now open to taking your questions. Thank you.
Thank you, Chairman, sir. We will now move on to the media question and answer. To ensure a smooth and orderly session, individuals will be called by name to ask their questions. We kindly request everyone to please follow the format and limit themselves to maximum 2 questions, focused on the results. If time permits, you may raise your hand to give your interest, indicate your interest, and we will accommodate additional questions. Thank you for your cooperation. And now we will begin with Mr. Piyush Shukla from Hindu Business Line.
Good afternoon, Chairman, MDs. Sir, just one clarity, you have gotten one-time gain of 4593 CR from your sale in Yes Bank, 13%. The overall estimate was that you will get 8819 CR. So the remaining portion of it, will it be realized in the next quarter first? And will you further offload your stake in Yes Bank? Second is on your, do you feel that deposit rates have now...
Okay, well, that is the SBI management, and we'll try and get you sort of more from it in that Q&A, which of course is underway. News at the bottom of the screen, big fundraising. This was anticipated. Adani Enterprises, numbers have come through. Profits are up some 84%, 3,200 crores compared to, it's up 80% basically. And there's a board approval to raise up to 25,000 crores via a rights issuance. Stock, I think, has moved a little bit up and then back down once again. Let's just quickly get the trading strategies out of the way as well. How should you position yourself in the remaining 45 minutes of trade, not an hour now? Mitesh, apologies, coming to you a little late, but how would you play it? And just a comment on the sell-off that we have on our hands as well, 160 now on the Nifty.
Good afternoon, Prashant. So I think we are there at 25,600. That is the level which I was watching, and I am just hoping that we don't get a closing below that, because then I think it will kind of negate the up move which was there for starting from October first week to about October third week, and this is the level which I would want to see some reversal come in. As of now, I think that bounce back or a reversal sign is still missing. But let's see. We'll wait for the closing because today is an expiry day. Last half an hour, 45 minutes could really change the picture. Having said that, a couple of power names have broken down, and that's the negative side of it. I have a sell on Power Grid with a stop at about 282.2 for targets of 270, and NTPC is a sell with a stop at 333.6 for targets of 323.
Okay, got that. Thanks a lot for that, Mitesh. We'll come back to you. Well, we have Deven Choksi of DR Choksi Finserv, who joins us on the show. Hi, Deven. Good afternoon. Good to see you in. The two big numbers, SBI as well as Mahindra & Mahindra. The markets are at the day's low, but to be fair, both these two numbers are better than what the street was working with. Your reading of it?
Yes, Nigel, good afternoon. Well, SBI definitely has shown distinctly high amount of loan growth, around 44.5 lakh crore kind of a AUM book size on the banking front. And the retail loan growth has been growing at a rate of around 15% plus for the size of the portfolio that they are having, along with the corporate loan book of around 12%. So certainly, I think the numbers are looking very, very smart as far as I think the growth in the loan book is concerned. But more smarter numbers are largely in the area of the slippages. Probably, I think that is maybe last year and the last quarter also, I think we had a situation, I think, wherein they probably had to report higher amount of slippages, but that's not the case now. So hopefully, if these particular numbers remain under control, then in my viewpoint, I think the subsequent quarter's result could be possibly much better on the slippages front as well as I think the growth front. And with the better amount of, I think, the cost of fund on the liability side, they've actually been able to deploy little better margins also. So I guess I think on all front, the bank possibly has shown relatively better performance, and which promises to remain largely, I think, growth oriented in the coming quarters. M&M, certainly, I think the major benefit is expected to be in the month of October and December quarter. Also because of the fact that I think the entire GST-related sales in the passenger vehicle segment, particularly, I think is getting pushed into this particular quarter, and there the numbers are likely to be very smart. Along with that, I think the farm equipment business has basically shown better numbers in September quarter as well, which is also likely to continue in this quarter. So overall, I think the auto segment of the business, along with the other businesses, I think which the company has in portfolio, they have shown reasonably good size of numbers. So I think the journey should continue, though the valuation is something which is already fairly valued as far as the company is concerned. But I believe that I think the growth should continue given the kind of projection that they have put across.
Okay, all right. Got that. Thanks a lot for that, Deven. Just stay with us. We have a couple of other numbers. Hitachi and 3M, both of them reported their quarter two numbers. Sudarshan is with us to tell us why those stocks have taken off. Street really like those numbers.
So both these companies have reported numbers yesterday, and operationally strong numbers from both these companies. Hitachi revenue was slightly below Bloomberg estimate, but if you look at all the other numbers, profit, EBITDA and margin, they have come sharply higher. On revenue front also, while it was below estimate, but despite that, growth was almost 18%. On the EBITDA front also, there is a huge expansion. It has come at almost 300 crore versus 108 crore in the same quarter last year. And in resultant, margin has moved above 16% against just 7% that company had seen in Q2 of FY25. And all these numbers were supported with the order inflow, which had seen a growth of more than 13% YOY. Coming to 3M India, it was an operationally strong set of earnings with all the four segments seeing a double-digit growth. But first, talk about the headline numbers. Revenue has increased by 14%. EBITDA has seen an expansion of 13%, and margin too has risen to 21.2%, an expansion of almost 300 basis points against Q2 of FY25. In the segment, healthcare up 15%, consumer almost 15%, transportation also almost 13%, and safety and industrial more than 12%. So on the back of strong set of earnings, you are seeing a big move in both the stocks.
So thanks very much. Very tight, good explanation to what's happening with both these names. Big moves. Devin, good afternoon. Any thoughts here? Hitachi and 3M, I mean stocks. Hitachi, of course, we've discussed extensively because the theme has been in so much vogue and such strong tailwinds it's got. 3M lesser discussed.
Hey, Prashant, good afternoon. I think in Hitachi particularly, you are having the visibility of a larger order book size. That is very important to understand. And I think the other part is that I think integration of other sources of energy, which are now getting produced from different ultimate other sources into the grid, and I think probably using the IT front as well. So this company has shown a distinctly different kind of a character from a good old hardware-driven business to I think engineering R&D-driven business. I think is something which one is experiencing in this company, which is also partly reflected into the margin front, as I could see at this point of time. So yes, I think though the valuation-wise everything is in price today, but at the same time, I think the growth in the business and the visibility for growth is quite significant in this particular business. We see this continuity for at least the next few years because of the larger order book visibility that we have in this business.
Okay, all right. Let's focus on the new IPO then. Grow's IPO has hit the street today. Retail portion is already fully subscribed within 3 hours of the issue opening. Vinny joins us to fill us in with more details. Vinny?
Hi, good afternoon. So in terms of, like you mentioned, the subscription, retail portion fully subscribed 1.53 times as of 2:30 p.m. NII portion, the non-institutional investor, that's also subscribed around 0.4 times. So interesting subscription already coming on the first day. It's open today, closing on the 7th of November. Fresh issue, 1,060 crores is the fresh issue. OFS is around 55 crores. Anchor investors yesterday already had an investment of around 2,984 crores. And in that, HDFC Mutual Fund, Government of Singapore, Kotak Mutual Fund, Nippon are among some of these marquee investors who already come in there. Do not forget, it's one of the India's biggest stockbrokers. They have 26.3% market share of active NSE clients. This is as of June 2025. Now, in terms of numbers, revenue, Q1 FY26 and Q1 FY25, if you compare that, we're seeing a 9% decline there. Margins have remained at around 56%, while in terms of profits, they are up by 12%. But interesting IPO, everyone's keeping an eye out of this.
I think, and it's coming. So they basically, we spoke with the management. Vinny, thanks very much for that. About 1,800 crores in profits. And to a question this morning when the management came on, they said, well, expect between 25 and 30% kind of growth. So you use that on top of FY25 net earnings. You're looking at some close to about 2,400 crores in earnings in FY26. So on a 60,000 crore market cap, which is what the IPO is coming to you at, it's essentially at about 24, 25 odd times. It's, I guess, in line, be slightly more expensive than, pure brokers like Angel, which I guess comes to mind. Devin, I don't know if you have any thoughts here. It's the capital market play, very, very fast rates of growth, and of course, the dominant player in the segment.
Yeah, Prashant, I think till last year, probably, I think they have had the situation of losing money. FY25 has been, I think, a rewarding year for them. Maybe see some kind of a corrective strategies as well. Going forward, I think the two areas where probably I think the challenges will continue. One is going to be the discount brokerage business, I think, and also the other one is I think the commission business, which is being driven from mutual fund distribution. That's where probably I think if any rules are tweaked as far as the commission payable to the distribution is concerned, it could have an impact going forward. But as of now, I think these two areas, particularly the brokerage segment, which contributes almost about 80% of the revenue pie of the business. But post-IPO, as we understand, I think the larger amount of emphasis is likely to be on the MTF side, the margin funding side. And that's where probably I think the company might end up giving some balance as far as the revenue and the profit outlook is concerned. Well, the valuations, I think most of the consumer tech companies, fintech companies today, I think are fully pricing their IPOs and I think come with a higher premium into the market. So valuation is not something which I would remain very comfortable with. But yes, I think the growth opportunity remains convincingly high in this segment of the business. So you would keep an eye on it.
Okay. All right, Deven, always good having you on the show. Thanks a lot. Have a good evening. Good holiday tomorrow. We catch up post that.
Thank you, Nigel. So
Time to slip into a short break. On the other side, we have Shibani Sirkar Kurian, who's waiting for us. She'll give us her view on the markets. Don't go anywhere.
Welcome back. We've got Shibani Sirkar Kurian joining us from Kotak Mahindra Asset Management Company. Shibani, good to have you with us here. Thanks for joining us. Any idea? I mean, it's a day-to-day question, but it doesn't, market's finding it extremely hard. It's still that 500-600 point range, isn't it? 25,700 or so on the downside and 26,100, 200 on the upside. Just your thoughts on what we're seeing out there today, and what do you think the dominant drivers are, Shivani? Earnings, I thought, what's come out so far, and I've seen some summaries. There are no big upgrades, but there are no disappointments either.
Yeah, hi, good afternoon, Prashant. So if you look at just the month of October, and of course it's very short term for the market, October saw some degree of stability for the market. This was primarily on account of, one, the policy support that the market received because of the GST cuts, as well as when you look at the earnings season, as you rightly mentioned, earnings trends in terms of growth seems to be bottoming out, and downgrade cycle possibly seems to be coming to an end. All in all, when you look at our markets, if you look at on the policy front, there has been a policy support which has been to the tune of almost 1.6% of GDP. But of course, global headwinds remain and uncertainties remain, which means that in the near term, we will still have to possibly navigate through volatility. Now, coming specifically to earnings and valuations, one is that if you look at the Q2 earnings trends, as I mentioned, the downgrades in earnings, which was possibly impacting markets over the last few quarters, seems to be bottoming out. Numbers so far have been largely in line with estimates, and some pockets of improvement visible in sectors, for example, like banking, which is large for the market. So our expectation on earnings is that second half of FY26 should be better than H1. And in that context, FY27 should see improvement to mid-teens earnings as compared to high single digits for FY26. Now, valuations, especially for large caps, remains reasonable and supportive. For mid caps, valuations are somewhat elevated. slightly higher than long-term averages. But here, if you look at the broader market, mid-caps have been one segment where earnings growth remains fairly strong, and therefore there are bottom-up opportunities. The segment that we are cautious on is the small-cap piece, where both valuations are elevated and earnings has been disappointing and muted. So near term, I think volatility possibly remains, and any resolution on the US-India tariff front could be a trigger. But overall driver for the market going forward will be the earnings trajectory.
Got it. Hi, Shubhani. Good afternoon and good to see you. And as always, earnings. Money flow, will follow where the earnings are. And if that is the case, then we could be welcoming back, all the foreigners that did leave our shores. So let's see whether or not that happens. The other point, Shubhani, is the supply of paper. Every time we talk about this domestic liquidity, which is very heartening to see as the equity cult develops in India. The problem is a lot of these IPOs, they are coming in there, hitting the market and draining all of the liquidity. And once earnings season gets over, again, we'll see the fresh supply of, paper that's likely to come in there. Block deals, promoter stake sales. You could argue that it comes back in the market, but still, that's, I think, weighing on sentiment as well. Your take?
No, so I would agree with you. So on one hand, as you rightly mentioned, the domestic flow, especially from the DII side, has been strong, and that has been supporting the markets. FIIs have been net sellers calendar year to date, though some amount of that FII selling has abated in the month of October. The fresh supply of paper, which is hitting the markets, is possibly something that is also weighing in terms of the overall market up move. And we'll have to see how that really pans out. But if you look at India today, especially in context of the regional countries, especially on the EM pack, again, as we know that calendar year to date, India has been an underperformer. Today, if you look at just valuations, India's premium to the EM pack is now down to its long-term average levels. So there has been considerable contraction there because of the underperformance. So if you look at the market setup today, it is possible that markets see volatility and consolidate in the near term. But the earnings trajectory does seem to be on the up move. Some moderate improvement in earnings going into the second half of the year. Policy remains supportive. One will have to possibly see where risk reward is favorable. And in that sort of a market, our belief continues that large caps do offer better risk reward. There are opportunities in the mid cap space, but small caps remain a segment where we are cautious on. So there are a lot of positives, but as you mentioned, there are segments which we need to watch out for and be cautious. And therefore, in the near term, some amount of volatility is something that we will have to navigate.
Do you participate, Shibani, in the Grow anchor book?
Prashant, unfortunately, we can't speak about specific names. Whatever is there in the public domain is there for everyone.
But you've got adequate representation in your as weightage in that category, capital markets, right? I mean,
Yeah. If you look at capital markets as a segment, this is a segment which we have been fairly positive on, and specifically within that segment, the asset management piece, as well as the distribution or the wealth management segment. These are segments that we have been positive on, and we believe that there is a long runway for growth. Now, of course, in this pack, one must also be cognizant of valuations. There has been significant outperformance where some of these segments are concerned, and therefore one has to be selective as far as picking stocks where you still do see risk reward in your favor. But in terms of runway for growth, we believe that the asset management piece as well as the wealth management piece, the growth runway remains fairly strong. One will, of course, have to watch out for any regulatory changes if they do come about, and we'll have to see how that impacts earnings going forward.
Okay, all right, Shibani. Thanks a lot for joining in, giving us your view. We'll keep in touch. Have a pleasant evening. Holiday tomorrow, so rest it up. We'll catch you soon.
Thank you so much, Nigel.
Well, time to slip into a short break. Come back. We'll get you some technical trading calls. I'll give you a quick update into the F&O market as well.
Okay, well, 310, which means that we get the buy today, sell tomorrow kind of ideas. Tomorrow, of course, is a market holiday. But what is on the table? Mitesh is with us to help us with that. Mitesh, good afternoon again. What do you have?
So, Prashant, just hanging around 25,600, still not sure which direction we are heading towards. But BTST on SBI can be considered with a stop at about 950 to half for targets of around 967 to 970 on the upside. And STBT on solar industry, slightly illiquid stock, but the stock is near the day's low. The charts are slightly negative. So take a stop at 13,661, look for targets of 13,570, 560.
Okay, all right. Specific short-term trading ideas from Mitesh, helpful. Thanks very much for that. What's the F&O, what are the F&O data points telling us on this expiry day? Nigel is now standing by with that. Nigel, over to you.
Well, last 30 minutes and then we get into a midweek holiday. So great news out there. However, today's weekly expiry, and I think that's what's weighing on the markets today. And that's why we're seeing this sort of a downtick, particularly in the last 60 minutes or so. But it's not too worrying, I would say, because the India VIX is still cooled down. It's closer to the lower end of the range. It had gone down to a sub that 11 odd. And now even on a market that's down 160 points, the VIX is still cool. You're on the VIX to spike up. Now, that's an indicator with regard the fear index, actually. Going by the options data, most of the premiums are almost down to zilch. That's the broad range that you're seeing on the screen. I think we should expire in this range. If we can break those levels on either which side, maybe we can get another 50 points. If you break the 25,650 level, you could have a quick 50 points on the upside. And you wouldn't want to break the 25,550 level because that's where the 20 DMA comes in at. So that's the broad range with regard to expiry. A few stocks are moving down, but it appears more lightening up positions. MCX has had a good run. There is some money being taken off the table out there, and there appears there is some unwinding of long positions out there. SAIL as well has had a good run. The numbers are pretty okay as well, but post that you've seen that there has been some unwinding of positions, and that continues even today. But there has been good amount of addition on a couple of stocks. Hitachi, that one, it's normally not very, very active in the F&O market today. The volumes are the highest I think we have seen in very, very long. So that one, in fact, big open interest build up out there. And Delivery, one of those relative underperformers, massive open interest build up in a market that's a little bit wobbly. That's an outperformer. Stock up. And big open interest build up as well. So keep an eye out on that one as well. Back to you.
All right, Nigel, thanks very much for that. That's the F&O stats. Well, earnings for Sun Pharma will be released. I think numbers are tomorrow. Vinny's here with details. Vinny, what is the street expecting?
Hi, so this time from Sun Pharma, we are expecting an overall revenue growth of just 7%, EBITDA growth of 3%, while in terms of margins, we are expecting a contraction of around 100 basis points. Profits expected to see a decline of 2% as well. Now, US sales that are expected to grow at around 2 to 3%. Sequentially, US sales expected somewhere around $486 million, and this is a Kotak estimate that we have. Global specialty sales, that's expected to grow at around 5 to 6% sequentially. Now, growth in the specialty sales, mainly we are expecting it to be led by Lexelvi drug as well as Ilumya, which is an important drug for the company as well. Winlevi, these are some of these important drugs which will lead the growth in the specialty sales. India growth, what is that expected? 8 to 9% growth over there. Margin pressure mainly because Revlimid sales are coming off, so there could be some pressure because of that as well. So overall for Sun Pharma, we are expecting just a 7% growth. Commentary in terms of Trump tariff or branded portfolio, where do they stand in terms of that? What is the impact of that? Overall guidance for the company, GLP-1 opportunity in India and Canada, halal facility for the company that had received an import alert since 2022, and in June 2025, it was then classified as an official action indicator. So any update on that front would also be important for the company, and any price erosion trends in the US is something that we'll be watching out for.
Vinny, thank you very much for that. It's a keenly watched number in that sense. Now, Bharti Airtel's management, speaking at the earnings conference call, answered questions related to the possible impact of the AGR dues case. Directionally it's positive because we're talking about relief. Size of it, of course, which is what is unknown at this point in time. There was also a question and, of course, a response with regards to their creeping acquisition in Indus Towers. Listen in.
We've always said that the AGR judgment, which we sought reviews on around calculation errors, was something that having lost was a disappointment for us. So in that sense, we are pleased that this has been allowed for a reconciliation by the court. We are now going to be taking it one step at a time. So first, we're going to reach out to the government, and that is something that the company will do over the course of the coming days. Then we'll take it from there. I think, for us, we see Indus as a very clearly undervalued asset. It's a strong dividend-paying company. It's a vital infrastructure for us. And therefore, given all of these reasons, we've taken up the stake there. Or we are proposing, we've taken an enabling provision to take up the stake there. And at some point, based on, how things play out, we will look to activate that provision.
Okay, all right. Jay Bala is now joining us at Cash the Chaos. Jay, good to have you with us here. Thank you very much for joining us. What's the picture? What are the Nifty price action telling you in terms of where we are headed? Where is the next impulse, up or down?
I'm still anticipating the market to test the all-time highs, Prashant, and I don't want the Nifty to print 25,330. As long as the markets can hold about 25,330, I think the possibility of markets testing fresh record highs is still there. And if today's low might be the completion of a correction from 26,104, and crossing 25,802 would be a confirmation that the markets are finishing a correction.
Okay, all right. So you continue to maintain that positive bias that you've been having, right, Jay?
That's right, Nigel.
Okay, and what about the Nifty Bank? It's gone to that 57,500 odd mark, and then it's been bouncing from there. But on the upper end, it made that high at around 58,600, and from there it pulled back a little bit. How is that looking? Is that going to be the leader?
Yeah, that's a good point, Nigel. I think pattern is going to get passed from the public sector banks to the private sector banks. I think the Nifty private banking index is signaling an important message that it's due for a bounce. And so far, public sector banks like SBI, Bank of Baroda have been leading the market. And I'm quite positive pretty soon the battle will get passed to ICICI, and Axis Bank, and HDFC Bank. They are coming to an important support. So I think the banking sector is likely to take lead from here on.
Okay, all right. Just coming back to you, Jay, try to fix that connection. But let's focus on another big deal from the metals pack. And it was long awaited. Many times we have had the management of IMFA here on our channel itself. And we have been, quizzing Mr. Panda. Is there some inorganic growth? And repeatedly he said he cannot comment. But finally, that long awaited deal that the street as well was sniffing has happened. IMFA has gone ahead and bought Tata Steel, part of Tata Steel's ferrochrome business. They bought a unit out there. That's the unit that's located at Kalinganagar. Now, the acquisition cost, the street was fretting whether or not it will be 1,000 crores plus or something on those lines. It's at around 610 crores, which is a very, very digestible number. But there will be some value of net working capital as well that which is in addition to this. The timeline is next 3 to 6 months, they're expecting it to close out. So by the end of this fiscal, this transaction should get closed out. The current capacity that IMFA has is around 2.84 lakh tons. Now, they're already adding close to 1 lakh tons organically. So that was already the street was working with, and that is expected to come in the middle of 2026 itself. Plus, you'll have 1.5 lakh tons that will be coming in from Tata Steel, which I understand 50,000 is not yet operational. It's not fully operational, while 1 lakh is operational. But put everything together, organic and inorganic growth, they'll effectively going from 2.84 lakh tons to around 5.34 lakh tons or thereabouts. What we need to know is, to get this entire unit up and running, what is the cost? That will have to be added to that 610 crores. But this could be a big event. Currently, they're doing an EBITDA of roughly around 550 crores or thereabouts. But they're doubling their capacity. So effectively, the EBITDA number can move up. And remember, there's a tailwind because globally, chrome ore is not available, and chrome ore is the raw material that you require to make ferrochrome. So that is, not in short supply. While for IMFA, they are backward integrated. Their mines run all the way till, for the next 20-25 years uninterrupted. So backward integration is something that holds them in good stead. They can source some part of the ore from there and feed it to this ferrochrome plant as well. So big scale, big uptake in terms of EBITDA, and that's why the street will like what they see. However, the stock is at a 52-week high. So the question is, has it run its course, or is that the big re-rating event? Because the market capitalization is around 6,000 crores, current EBITDA of around 600 crores. So it's trading at around 10 times EV upon EBITDA. However, if that EBITDA number can scale up, then that will make things a little bit more interesting. We'll try to get the management in the next couple of days on the channel and quiz them on these aspects. Slip into a short break, come back. Hopefully, we'll have Jay back with us. Stay tuned. Okay, all right. Welcome back. Markets, we're going to be going home towards the lower end of the range. But as we said earlier as well, this is more weekly expiry related and maybe taking off some money off the table as well. Let's get in Mitesh back. Mitesh, you have any fresh calls for us? There are a lot of stocks actually that are moving lower, but quite a few stocks, in fact, are moving up. Thangamile Jewelry, that stock has done very, very well. Stovecraft on the flip side has seen a lot of selling from the recent peak. Infra is another stock that's run up considerably. We have a deal that's announced, but that it's selling on this news. Any view on any of these names?
To be very honest, I think, not tracking most of these cash stocks, but what is on my radar, I think is Titan has given a good break today with price and volume action. That could, even in a weak market is holding out well. That could actually, on a positional basis, head towards 39,84,000 zones to begin.
Okay, Titan, that's the one that you're tracking. If you could give us your view on Eternal. I wanted to ask you about this stock. I recall on the day they came out with a set of numbers, initial numbers that did come out created a lot of excitement. The stock went dancing away to 360 odd. Then there are concerns that they're going for volume, profitability could be back-ended, which was a bit of an issue. The stock actually has corrected from 360 on the day of results to around 310 rupees. What's your view?
So, Nigel, on Eternal, we just kind of taken some profits off in short positions. So I just had a position, so I would not be able to comment on that. But obviously, since it was a put option position, the view was negative, but I'll avoid the levels and the other things.
Okay, all right, got it. Let's go back to Jay Bala. Thanks, Mitesh, for that. Jay, you want to fill us in with a couple of your trading calls?
Yeah, I have two for today, Nigel. The one is, both of them are similar. The one is Graphite India is breaking out of a head and shoulders continuation pattern. A stop loss of about 505 for a push towards 4 digits, roughly about 1,100 mark. Force Motors is breaking out of a short-term trend line, and that can also be interpreted as a inverse head and shoulders pattern. A stop loss of about 16,100 for a push towards record highs at 21,990. Both these calls are for the short term, and you might want to reduce positions because position sizing, because we are at the late stages of this rally, so lower position sizing than usual.
Yeah. Got that. By the way, just your thoughts, Jay, on Indus Tower. How is the structure looking?
I haven't looked at it recently, but most of the stocks within the telecom-related space are looking quite reasonably good. In fact, I had last week Bharti Hexacom, and if you look at Indus Towers, it's putting in a double bottom around the 305 mark. And if I had to take out 430, it will be a breakout for the medium term. But the short term is looking slightly, positive. But 405, that will be 430 will be the important level for the stock to cross. If it does that, it will be a big breakout for the stock.
When you look at the markets and try and look for pockets of strength and pockets of weakness, Jay, apart from what we've discussed, you want to just tell us pockets where you'd look for ideas, both to go long and go short?
Yeah, I would be looking at Nifty private bank sector for a one-day reversal to happen. If that happens, I think the pattern is getting passed from the Nifty private sector bank to Nifty public sector banks to Nifty private sector banks. And I'm also looking at Nifty real estate sector. Watch out for it's coiling up very nicely, and it's a bullish consolidation. Probably it may take a few weeks time, may not be a few days, but it's setting up in a bullish fashion. And we remain bullish in the OMC space. Negativity is probably coming in.
I think Jay, we'll try to fix that. Thanks for joining in. Well, we'll have to wind down, but let's pull up a few stocks that have moved quite well in the last few minutes. Banco Products, that's coming one of the top volume buzzers. in the last hour. Banco products, that's up close to 13%. SAIL as well has seen a bit of recovery from the low point of the day, so I think we should get that one up. Genus Power, another stock that saw a sharp correction. Intraday chart should come up for you. Genus Power moved to the high point of the day.
I just picked up on some of the stuff where Nigel left off. Actually, lots of interesting moves today. So continuing on the broader market aspect, right? There is Tattva Chintan, which was a big mover today, volume-led gainer. LG Bala, which was up, actually it's up almost 30% in 2 days flat. The other 40% mover in 2 days is, of course, Tangamail. Goes home with about a 17% gain. These standalone refiners, MRPL 4% off the highs, but Chennai and MRPL both looking very good. Jyoti CNC was another one which did very well. There was, of course, I think as we've been talking about, the MNCs, Hitachi and 3M both doing very well. TBO Tech, another one which soared, and City Union Bank, which goes home with some very strong gains. Hero is the actually is the number one volume-led loser today. 5% cut on a stock the size of Hero. NetWeb has lost 10% flat in the last 2 trading sessions. And of course, there was negative news flow on ADAG names, and all of them, I think, pulled back. R Power down prominently on volumes. Bluejet, MobiKwik, Home First, Premier Explosives are some of the other big volume-led losses that we had in terms of today's session. So, holiday tomorrow, but we basically end at almost the day's lowest point, 25,587 on the index on the Nifty. Well, don't go anywhere. Jay, of course, is going to run you through more of his opinion. Markets Forward will pick up on the action and prepare you for the day after tomorrow, which is the next session. Stay with us.
Dalal Street ends in the red. The Nifty fails to hold 25,600 with nearly 40 stocks ending lower. Banks and mid-caps fall in line with the blue chips.
And SBI beats Street in estimates in second quarter FY26. A 4,593 crore gain from Yes Bank stake sale boosts its bottom line. It was a smooth drive for M&M in the second quarter as well. The company reports an operationally strong quarter with headline numbers seeing double-digit growth.
Bharti Airtel also beat expectations in the second quarter. The board approved an additional 5% stake in Indus Towers. The management clarifies that it will take up the AGR relief matter with the government.
Hello and welcome to Markets Forward, your quarter show where we aim to get you all the key data points to gear up for the next trading day. Here it's going to be the next trading day, the day after that. So yes, keep an eye out on that. Tomorrow is a holiday, but nonetheless, we will set you up for trade. I'm Veni Motiwala. With me is my colleague Hormaz Fatake as well. And Hormaz, it's been a day of a consolidation that we saw coming and a bit more of a sharper fall that came in the second half of the trading session. Today, Nifty again that below 25,600 levels. So that's what we'll be keeping an eye out on Thursday as well.
Something that the bulls will not like, a couple of things. The index ending at the lowest point of the day, that was one. And the fact that it could not sustain at that support cluster of 25,650 to 25,700. It did manage to do so for a better part of the trading session. But come the last hour of the day, and it just gave up all of that resilience and eventually ending just a shade below that 25,600 mark. Of course, the fact that tomorrow being a holiday, so of course there would be some bit of profit taking for that as well. And of course, today being the expiry session, that also weighing on the reactions that happened on the markets. The Nifty Bank also, despite the strong results from SBI, the guidance that was raised, the outperformer of yesterday, the underperformer of today, the Nifty Bank was up in yesterday's session, but it gave up most of those gains in today's session, so declining and ending almost 300 points lower for the index. So not a very good session if you are a bull, Vinny, but nothing too alarming as of now at least.
Absolutely nothing too alarming as of now. But well, we have a very exciting lineup for you all on the show today. We'll start the show with the top movers and shakers alongside with Gaurav, who will cover the earnings for SBI as well. M&M and other earnings were also reported. We'll take a look at all of that. We'll also look at Bharti Airtel as its management clarifies it will take the AGR matter to the Supreme Court. Last but not the least, we'll delve into the key market events to watch out for in the next trading session. But let's get started. And for the first segment, let's go across to Gaurav, who is joining us from the big wall for the top movers and shakers of the day. Gaurav, over to you.
Well, yes, as you suggested, it was not the day for the bulls, but at the same time, we also have some stocks who actually gained in trade. And first, let's talk about 3M in India. We saw operationally strong performance, and at the same time, all the four segments, they actually outperformed. As a reason, around 17% growth is what we saw. Hitachi Energy, here also we saw profit actually coming up higher than the expectation, and as a result, market actually treated it well with 14% gains. We also saw City Union Bank actually reporting very good set of numbers. In fact, net interest margins, they improved almost by 9 basis points. And at the same time, if you look at the stock performance, although it's up almost by 10%, it is also at its all-time high level. Let's also not forget about Thangamil Jewelry. Yesterday also we marked this stock. Today also this was up almost more than 16%. And if we look at the last 5 days performance, it is up more than 40%. So definitely a treat for investors. At the same time, we had other stocks like TBO Tech, Jyoti CNP, MRPL, all the players who were actually up in trade more than 5% today. Other than that, on the losing side, when we look at Blue Star, profit declined almost by 10%, and as a result, we saw stock decline almost by 10%. Apart from that, Home First Finance, when we look at the stock performance, it was down almost by 5%. Yesterday, remember, the stock was up almost by 5%. So, and today is the result. So let's watch out on this stock as well. Godfrey Philip. Now, here we saw the numbers were not that great, and as a result, we saw the stock tanking almost by 3%. CDSL, we saw JM Financial actually downgrading the stock to reduce, and as a result, the stock declined as well. Hero Motors, the October sales data, if you look at the numbers, those were a bit below estimate, and that is the reason why Street did not take it in a positive way. We saw some fall here as well. And other than that, we saw Reliance Power, Reliance Infra, Transformers and Rectifiers, NCC, Vocart, all the stocks who were down in trade today.
Gaurav, thank you for that highlight. Take that conversation forward. Jay Bala of cashthechaos.com and Dipan Mehta of Elixir Equities are also joining in. Gentlemen, thank you for joining in. Jay, first to you, the ending at the lows of the day for the index. Now, what do you make of today's move and what to look forward to in terms of levels going into Thursday's session?
Yeah, I'm looking at Nifty to bottom very soon, and the 10-day correction that we have been having from 26,104, it's coming to very close to a very important support at 25,550, and I don't think as long as the Nifty can stay above 25,330, I would still expect the Nifty to challenge the all-time high. But if 25,330 were to get taken out, then I need to revise my opinion. But I don't think that's going to get tested. Probably we're going to have a bullish start on Thursday.
So in that case, of course, we'll expecting a bullish start on Thursday. The big result of the day, of course, was SBI, a beat on expectations in the second quarter. 4,593 crore gain from the Yes Bank stake sale also boosted its bottom line, and credit growth also better than the industry average. Gaurav is here with a lowdown of how the numbers were. Gaurav.
Well, yes, when we look at SBI, actually very great set of number from the bank, biggest bank of India. So when we look at the numbers, advances that increase almost by 13% on a year-on-year basis, while deposits increase just by 9%. But remember, advances growth was higher than the street's expectation, while deposit growth in line with the street's expectation. When we look at the numbers, net interest income, now here we saw the actually bank reporting numbers which were better than estimated. Net interest income increased almost by 3% on a year-on-year basis, and this is something that we saw in net interest margins as well. PPOP, which is pre-provisional operating profit, we saw a growth of a degrowth of around 7% on a year-on-year basis. It was in line with the street's expectation, but ahead of that, when we look at provisions, we saw actually provisions for the asset loan losses, they actually declined sequentially, and at the same time profit that increased almost by 10% on a year-on-year basis, and this was because of the one-off impact of 4,593 crores because of the Yes Bank stake sale. Other than that, if you look at the ratios now, net interest margins that increased by 7 basis points, it is actually positive for the bank. Credit costs that declined almost by 8 basis points, and at the same time, if you look at slippages, in absolute term also slippages have declined, and slippage ratio that has declined almost by 30 basis points on a sequential basis. Other than that, if we look at some of the other metrics in terms of asset quality, the SMA 1 and 2 book that has also declined. So definitely it was a very great show in terms of asset quality. It was a great show in terms of growth as well. In fact, during the media conversation, management also said that in FY26 they can actually achieve 12 to 14% credit growth. So that is something that can be taken in a positive way. So all in all, in terms of number, good set of number reported by SBI in this quarter.
Okay, good set of numbers reported by SBI in this quarter. But, Deepan, I just want to talk to you about PSU banks, the numbers that have come in so far as well. SBI, good numbers, but overall, how are you seeing PSU banks doing now?
Good afternoon. Thank you for having me on your show. I think the PSU banks are clearly the outperformers in the banking industry, although I'm not completely satisfied with SBI's numbers. Kind of a low single-digit operating profit growth rate, net interest income, I think below expectations, according to us at least. One would have expected them to do much better. But I think the real growth is in the smaller, mid-sized PSU banks, and now their balance sheets, their qualitative and quantitative data is somewhat what we were used to seeing in the private sector banks. That's missing in the private sector banks, at least the large ones. So I think within the banking space, one needs to be with the PSU banks. The smaller ones like Bank of Maharashtra is there, or even Indian Bank is there, or there's some of the mid-sized Bank of Baroda, Bank of India, Canara Bank. I think these companies should be clear outperformers within the banking industry, although our view for the industry is to be neutral and not overweight.
Neutral and not overweight. Of course, the PSU banks have run up quite significantly as of yesterday's close. At least 6 of them were at a 52-week high. Some of them came off in today's session. But staying with earnings, Mahindra & Mahindra also ended 2% higher after an operationally strong quarter. It was the auto volumes boosted growth, while the rich tractor revenue also was impacted margins positively. Sudarshan is here with more details on this. Sudarshan.
So it was an operationally strong set of earnings from Mahindra & Mahindra for Q2 FY26. 2 outliers. First one is the surprise on the margin front. It has reported margin of more than 14%. And second, continued gain in the market share for majority of the segments. Now, revenue is higher by almost 21%. And that was boosted by the volumes increase that company has seen for both auto segment as well as the tractor segment. In the tractor segment, volumes have increased by almost 31% if you compare YOY. So headline numbers, profit has increased by 18%, revenue, as I told you, 21%, EBITDA has seen an increase by 23%, and margin surprisingly has come in at 14.5%. We were expecting margin to come in the range of 13.8 to 13.9%. That might have seen a fall, but it has come in at 14.5%. That's an expansion of almost 20 basis points. Talking about the segment-wise, in the auto business, revenue has increased by 18%, EBITDA has seen a jump of 14%, and margin has slipped. That's a minor dip to 9.1%, mainly because of GST transition. But if you take a look at the tractor segment, their revenue has increased by 23%. EBIT was up as much as 48%, and margin has increased 20% versus 16% in the same quarter last year. Realization for auto segment was up 4%. For tractor segment, there was a minor dip of almost 7%. In the commentary, what exactly would we be looking for? What does company talk about the PV industry outlook for FY26? If there is any uptick from the previous estimate of low single-digit growth. For tractor, we are expecting a high single-digit growth, but in the press conference, company had said that they are expecting now low double-digit growth. Also, what's the strategy to meet CAFE 3 emission norms, and what exactly company talks about the new launches? But as far as earnings are concerned, it's an operationally beat.
Operational beat. Sudarshan, thank you for that update. And Indian Metals and Ferroalloys will now acquire Tata Steel's Ferroalloys plant in Kalinganagar. The transaction is expected to be completed in 3 months. Nigel is here with more on this. Nigel.
Well, that's right. A big deal was announced. Infra went ahead and they have gone ahead and they have bought Tata Steel's ferrochrome unit. That's at their Kalinganagar unit. The total acquisition cost is around 610 crores, but they mentioned also that net working capital will be in addition to this. The transaction is expected to close within 6 months on. This is positive because Infra effectively will be doubling their capacity from the current capacity that they have. Remember, currently they have around 2.84 lakh tons of capacity. Organically, they are adding close to around 1 lakh tons odd. And in addition to that, I understand that Tata Steel unit will have a capacity of around 1.5 lakh tons or thereabouts. So in all, they'll be going from around 2.8 lakh tons to around 5.3 lakh tons or thereabouts. We'll need to understand though how much of capex they'll have to spend to get this new capacity, 1.5 lakh tons that they're acquiring, up and running. So we'll have to find out that aspect. Why is it positive? Because the company is going to be scaling up, both in terms of size, capacity, and the EBITDA from around 500 crores could very well look like 1,000 crores of EBITDA in the coming years as well. They're backward integrated. Chrome ore is in short supply globally. So net, it's a win for Infra. The stock, though, is at a 52-week high. That's why some kind of profit taking from the top. But in the longer term, this could be a bit of a re-rating event for Infra.
Okay, thanks so much for that, Nigel. But let's also look at Bharti Airtel because that gained nearly 2% after it beat estimates in the second quarter. A good show in India and Africa saw 10% uptick in its ARPUs as well. Airtel's board also cleared an additional 5% stake purchase in Indus Towers. Now, speaking about the investment, Bharti Airtel's management also said that it is saw Indus as an undervalued and strategic asset, and on the AGR relief matter also they clarified that it would be taking up the matter with the government as well. Listen in.
We've always said that the AGR judgment, which we sought reviews on around calculation errors, was something that having lost was a disappointment for us. So in that sense, we are pleased that this has been allowed for a reconciliation by the court. We are now going to be taking it one step at a time. So first, we're going to reach out to the government, and that is something that the company will do over the course of the coming days. Then we'll take it from there.
Interesting remarks there from the management of Bharti Airtel. Deepan, do you agree with what Bharti Airtel said with regards to Indus Towers, an undervalued and strategic asset, and therefore the intention to increase their stake? What do you make of Bharti's numbers first and their remarks on Indus Towers?
Yeah, very, very impressive set of numbers. Best in class, I would say, and 10% type of increase in ARPU and still surging. Still expectations of that going higher, very impressive. I think they fired on all cylinders. Africa also did well. India also did well. Some of the new initiatives are gradually creating value. And I think Indus Towers has definitely been a strategic asset for them. But they sense that with Vodafone now going to get certainty in terms of its survival, I think Indus Towers will be a key asset for them as well. As it will have a new kind of a new lease of life when Vodafone starts to expand as well. So very positive on Bharti Airtel. Disclosure we and our clients are invested in it.
Very positive on Bharti Airtel, as is most of the street as well. Jay, on the charts, Bharti, or even a view on Mahindra and Mahindra, if you could give us that, because even that stock has seen a significant run up towards its 52-week high levels.
Yeah, hi, Harman. So, I've been bullish on Bharti since November 2023. So, it's been run up. It's doubled from much beyond double from there. And the price structure is such that it's coming to very late stages of its rally. It's time to take profits, and at least partially, if not completely. When it comes to Mahindra, I've been bullish on it since July, even before the Prime Minister announced the GST cuts in August. So the stock is still bullish. Auto sector as such is still bullish, but we might want to shift focus from auto names to something like tire names, which are looking like they have much more steam left. And within the auto space, we might want to look at something like Force Motors, which might still have higher highs to come through. But when it comes to auto stocks as such, it might be just for the short term. They still have fresh record highs to come through, but short-term pullback may be due.
Okay, Jay, that's the view coming in there. Thanks so much for that. And thank you so much, Jay, as well as Deepan, for joining us and speaking with us as always. But on that note, we're going to slip into a very short break. We'll get to the top corporate voices along with the key market events to watch out for on the other side.
Welcome back. Going across to some key corporate voices now. First up is Tata Consumer, and it delivered a strong second quarter. It was an 18% top-line growth and solid volume performance as well. The management has guided for margins to be around 15% by the fourth quarter, and it also aims to maintain its market share in the salt segment. The management also added that there is a slowdown in Starbucks expansion, but the opportunity remains. However, the stock slipped in trade today despite the strong numbers.
And from one Tata company to another, Titan's management is optimistic about the growth outlook. By FY26, the company expects around 20% revenue growth in its jewelry business, with margins seen at nearly 11.5%. That's not all. The management is also guiding for a mid to high teen growth in the eyewear segment, which it believes is well within the reach.
And Thangamile Jewelry was the other stock, was up 20% yesterday, another 16% today after its second quarter numbers. The higher gold prices and a favorable base boosted the company's performance. The management told CNBC-TV18 that it expects to cross over 7,000 crore rupees in revenue by FY26 compared to its earlier guidance of 6,000 crore rupees. And it also expects to maintain margins at that 6% mark. Now, the management has added that the focus will remain on growth in and around Chennai over the next 2 years, which is expected to account for 20% of its sales in FY26. Interestingly, Vinny, I was just looking at the shareholding pattern for Thangamayil, and one of the names that comes in is R.G. Chandramogan, who is the promoter of Hatson Agro. And at the highest point of the day, the stake that he has is now valued at over 100 crore rupees. Now, the stock is only a 1% stake, it's a 1.1% stake odd. But Thangamayil Jewellers, almost 35 to 40% higher in just the last 2 trading sessions. And before we wrap, we'll bring you some key events to watch out for going into tomorrow and for Thursday. Tomorrow being a holiday, of course. Gaurav is standing by with the key events to watch. Gaurav.
Well, yes, tomorrow is a market holiday, but it doesn't look like it is going to be market holiday for all of us because we have got earnings. In terms of the pharma pack, we have got earnings from Aurobindo Pharma, Sun Pharma, Zydus. Other than that, Procter & Gamble Health and Piramal Pharma. And apart from that, we also have earnings from Honeywell Automation, Ramco Cement, Blue Star, NIIT Learning, Team Lease. All of these companies, along with others, will come up with the earnings. So definitely, it is going to be a busy day. At the same time, from the global markets, we are not picking up any other cues. But at the same time, let's also not forget that US Supreme Court will be hearing oral argument on the legality of Trump's global tariffs. So that is something, a key thing to watch out, not just for Indian market, but for the global market front. So definitely, in terms of earnings, we've got a couple of stocks to track. And at the same time, from the global front, let's see if anything material comes up from the US Supreme Court.
Okay, Gaurav, thank you so much for that. We'll keep an eye out on those whole host of earnings. But with that, we're absolutely out of time on this edition of Markets Forward. Thank you so much for tuning in. Don't go anywhere. We'll be back with more news and updates on the other side.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Indian equities spent most of the session in the red on the back of weak global cues and the absence of any definitive domestic triggers. The Nifty and the Sensex end over 0.5% lower near the low point of the day. The rupee ends stronger despite importer-driven dollar demand, presumably on RBI support. SBI beats the street in Q2. A 4,600 crore rupee gain from Yes Bank stake sale boosts the bottom line. Asset quality and net interest margins also improve. SBI's credit growth is better than the industry average. Auto major M&M cruises into the second quarter. Reports an operationally strong quarter with headline numbers growing in double digits. Market share in SUVs, light commercial vehicles and tractors also improves. More relief for Vodafone Idea, this time from the taxman. The Supreme Court allows the IT department to withdraw an 8,500 crore rupee transfer pricing case that dates back to FY08. The relief comes a day after the Apex Court said the government was free to consider offering the company relief on its overall AGR dues. Tech giants race to expand AI and data infrastructure as demand outstrips capacity. ChatGPT maker OpenAI signs a $38 billion cloud compute deal with Amazon Web Services, pivots away from Microsoft, which was the company's exclusive provider till earlier this year. The deal will give OpenAI access to NVIDIA's graphic processing units. Amazon closes the day at a record high. Chipmaker NVIDIA hogs the spotlight as the AI race gets hotter. Microsoft signs a $9.7 billion deal with data center operator Iron to gain access to NVIDIA chips. Cloud computing startup Lambda announces a multi-billion-dollar deal to build AI infrastructure powered by NVIDIA chips. The National Companies Law Appellate Tribunal allows WhatsApp to share user data with parent Meta and its subsidiaries for advertising purposes, sets aside a Competition Commission order that had barred the flow of data, also sets aside a CCI order that held WhatsApp's 2021 privacy policy as unfair. Marquee investors flood Grove's anchor book as the stockbroking firm kickstarts its 6,600 crore rupee IPO. The retail category fully subscribed on day one. Meanwhile, Lenskart's IPO subscribed over 28 times and there's still an hour to go. Western nations' economic actions against Russia boost energy giants' quarterly earnings. The world's largest oil company, Saudi Aramco's profit beats estimates as production increase offsets the impacts of lower prices. British oil giant BP also sees stronger than expected quarter, announces a $750 million share buyback. Political parties make a final pitch as campaigning for phase one of the Bihar elections comes to an end. Polling will take place across 121 constituencies on Thursday. The remaining 122 seats will go to the polls on the 11th of November. Voters in New York set to pick their new mayor later today. U.S. President Trump endorses outgoing Governor Andrew Cuomo, who is running as an independent, threatens to cut funding if Zohran Mamdani wins the election. Mamdani is running on a Democratic Party ticket, is currently leading in the opinion polls. Well, let's start with the day's market action. The Wall Street ended in the red with the Nifty closing below the 25,600 mark. All sectoral indices closed in the red, barring the Consumer Durable Index. That's the story for you, down 0.5% for both the Sensex and the Nifty. The mid-cap index also down 250 points and 270 points lower. That's the Nifty mid-cap for you. Meanwhile, the rupee strengthened today after 3 straight days of losses. This on likely intervention by the Reserve Bank amidst an uptick in the dollar. However, the currency slipped slightly before closing on importer-driven demand for the dollar. But let's talk about the big earnings today. State Bank of India reporting a strong set of numbers for the second quarter, beating estimates on all parameters. Asset quality is also improved on a sequential basis. Ritu standing by now to take us through SBI's second quarter performance. Ritu.
Well, a good set of numbers from SBI. It was a beat across the board, like you said, better than expected improvement in asset quality. Margins improvement, that was a pleasant surprise. Profits saw a near 10% rise, but this was aided by an exceptional gain, about 4,593 crores from Yes Bank stake sale in the quarter and another 25 crores from Jio Payments Bank stake sale. But the operating profit, that saw a decline of about 6.8% on the back of higher provisions. Now, provisions for the quarter rose about 20% over the previous year to about 5,400 crores, but overall loan loss provisions had come down sequentially. On the core performance, the net interest income saw about a 3.3% growth led by advances. Advances, they were above the industry average, coming in at about 13.1% year-on-year and growing by about 4% sequentially, within which retail loans saw a strong growth, about 15.1%. But corporate advances for SBI remains low. It is in single digits, even for this quarter at 7.1% over the previous year. But that said, the bank has raised the full-year credit growth guidance to 12 to 14%, and it does expect the corporate book to pick up and get to double-digit growth in the second half of the year. Deposits was also healthy growth, about 9.3% year-on-year. On margins, there was a sequential improvement against expectations of a slight decline, and the management expects to hold it at the current levels with a bit of an improvement in the second half. On the asset quality front, though, there was a significant improvement. The gross NPA ratio improved to about 1.73%. Net NPA ratio also to about 0.42%. Fresh slippages dropped by 40% sequentially to about 4,754 crore rupees. And overall, it was a strong quarter. Profits boost from the one-off gains, of course, but the underlying performance was positive. Better asset quality, increased credit growth guidance. No surprise then that the SBI stock ended the day higher.
We are putting the credit growth estimate at 12 to 14% now. We believe that there will be sustained consumption demand, which gives an opportunity for us, particularly in the RAM segment. There could be continuous robust growth, what we have witnessed, double-digit growth. So we are revising our credit guidance to 12 to 14%.
Well, that is State Bank of India. Strong numbers, revising their credit growth guidance to 12 to 14%. And speaking of strong numbers, shares of automaker M&M also surged after the company's strong second quarter performance, ahead of estimates on most fronts. Net profit rose nearly 18%, while margins, which stood at 14.5%, expanded ahead of streets estimates. Sudarshan is standing by. Strong quarter there for M&M, Sud.
It's an operationally strong set of earnings from Mahindra & Mahindra for Q2 FY26, and the biggest positive surprise was the improvement that company has seen in the margin, and also on the market share front, it continues to gain. And in LCV, it has gained market share of almost 100 basis points. In SUVs, the gain is of almost 400 basis points, and in tractor also, it has gained almost 50 basis points. Talking about the headline numbers, profit has increased by 18%, and revenue, as per the expectations also, we were expecting an increase of in the range of 20 to 23%. Company has reported an increase of 21%. EBITDA has seen a jump of 23%, and margin surprisingly has come in above 14%. It has come in at 14.5%, an expansion of 20 basis points. And we were expecting a fall and come in the range of 13.8 to 13.9%. And this was led by healthy improvement that company has seen in the tractor segment. On the volume front also, YOY tractor segment volumes were up almost 32%. Even the auto segment volumes were sharply higher YOY. Now talking segment-wise, in the auto, revenue was up 18%, EBIT has increased by 14%, and due to GST transition, there was a slight dip in the margin. It has come at 9.1% versus 9.5%. But here also positive part was that realization has improved by 4% versus expectation of a fall in the range of 1 to 2%. Talking about the tractor segment, revenue has increased by 23%, EBIT has jumped by 48%, and margin has come in sharply higher. It has come at 20% versus 16%, while realization here was down 7%. In the commentary, the focus will be what exactly company talks about FY26 outlook and the new launches, and also what's the strategy to meet CAFE 3 emission norms. But as far as the earnings are concerned, it's a very strong set by Mahindra & Mahindra for Q2 of FY26.
All right, many thanks, Sud, for joining us. That's M&M for you. Strong performance coming in. And staying with earnings, global earnings, British oil giant BP reporting a strong set of numbers in Q3. The company attributed progress on disinvestment and cost-cutting as the reasons. It's also announced a share buyback of another $750 million over the next 3 months. And Saudi Aramco posting a strong performance in Q3. The world's largest oil company has been increasing production as part of the oil lobby OPEC Plus's policy. This has helped mitigate the impact of the lower crude prices. The production capacity growth target has also been revised upwards from 60% to about 80% over the 2021 production levels. While relief coming in for Vodafone Idea in one of its longest-running tax battles, the Supreme Court has allowed the Income Tax Department to withdraw its long-pending 8,500 crore rupee transfer pricing case against Vodafone Idea. Timsy joins us now with more details. Timsy, finally heading to closure as far as this transfer pricing matter is concerned?
Well, yes, the Income Tax Department on 3rd of November moved the Apex Court to withdraw its long-pending 8,500 crore rupees transfer pricing case against Vodafone India Services. The Commissioner of Income Tax filed the withdrawal plea before a Supreme Court bench led by Chief Justice B.R. Gavai. The court allowed the withdrawal. Formal order is expected soon, but meanwhile, just a backdrop to what was this matter. Well, the case pertains to a transfer pricing order in connection with sale of Vodafone India's Ahmedabad-based call center business to Hutchinson Wapmau Properties India as part of internal restructuring in FY8 and assignment of call options to Vodafone International Holdings BV. Income Tax Department had in April 2016 challenged the Bombay High Court's order, which was then the October 2015 judgment that favored Vodafone India Services, the Indian arm of Vodafone Group PLC, in a 8,500 crore transfer pricing tax dispute. The case remained pending since 2017 without any hearing in the Apex Court. The High Court on October 8, 2015 had overruled the order by the Income Tax Appellate Tribunal, that is IT80, issued in 2014, that the Income Tax Department has the jurisdiction in the transfer pricing tax case involving the sale of Vodafone's call center business to Hutchinson Wapmau Properties and assignment of call options to Vodafone International Holdings BV in 2007 and 2008. Vodafone India Services had challenged the jurisdiction of the tax department, had sought to add 8,500 crore rupees to its taxable income in financial year 2007-2008. In 2013, the tax department claimed a tax of 3,700 crore rupees from Vodafone India in this case. So now, formally, the order is expected, but yes, the court has allowed withdrawal of this application.
Well, relief coming in there for Vodafone. Many thanks, Timsy, for joining us. Shares of Indus Towers gained after its promoter Bharti Airtel received the approval to increase stake in the company. Bharti Airtel said that a special committee of directors approved the acquisition of up to 5% additional stake in the tower infrastructure provider. The telecom major could increase its stake in Indus Towers in one or more tranches. In IPO corner, the retail portion of Grow's 6,600 crore rupee IPO has been fully subscribed on the first day itself. As of 4 p.m., total subscriptions stood at around 50%. Ahead of the IPO, the stockbroking firm raised nearly 3,000 crore rupees from anchor investors. It's the final day of bidding for Lenskart's 7,300 crore rupee IPO. As of 4 p.m., the company witnessed overall subscription booked over 28 times. This was led by non-institutional investors, and this was followed by the retail portion. The IPO comprises a fresh issue worth 2,150 crores and an offer for sale of 12.75 crore equity shares. Coffee giant Starbucks has announced a joint venture with Chinese PE firm Boyu Capital to run its operations in China. Now, according to the deal terms, the firm will hold 60% stake and Starbucks will hold the remaining 40% stake in the JV. The deal is valued at $4 billion, with Starbucks owning the intellectual property and licensing. This comes after Starbucks China sales increased just 2% in the fourth quarter, continuing the trend of a weak performance in the regions, with Starbucks inking a JV in China. It's a big win for Meta in India. The National Law Company Appellate Tribunal has set aside the Competition Commission's order barring WhatsApp from sharing user data with Meta for advertising purposes. Ashmit joins us now to explain the details. Ashmit, what does this mean for WhatsApp in India, and what have been the grounds for this order?
Well, big win coming in for WhatsApp as well as its parent company Meta. The NCLAT, the National Company Law Appellate Tribunal, granting them the relief by staying the portion of the CCI order which had gone against and which had barred WhatsApp from sharing user data with its parent company Meta or Meta's subsidiaries. Now, it all goes back to the 2021 privacy policy. This privacy policy, at the time of introduction, WhatsApp had said that either you come on board with this policy or discontinue using WhatsApp as a service, as a messaging service. Now, this is what invited the attention of the competition watchdog, CCI, taking suo motu cognizance, and subsequently in November of 2024, they passed a pointed order saying that this take it or leave it approach by WhatsApp is something that is violative of the competition law. This is impermissible. This is abuse of dominant position in the market, and therefore they had gone ahead, and there were two important components to that order: a penalty of 213 crore rupees, the other was a bar on WhatsApp from sharing user data for advertisement purposes. Now that is the part of the direction that has now been stayed by the NCLAT. The NCLAT very clearly saying that this part of the CCI order is not tenable, will not be permitted going forward, and therefore now there is no bar. WhatsApp is at liberty to share user data with its parent Meta as well as its subsidiaries for advertisement purposes. As far as the penalty is concerned, the penalty is likely to continue. 213 crore rupees due to be paid by Meta as well as by WhatsApp. What we now need to watch for is whether the competition watchdog will appeal this direction, this order by the NCLAT before the Apex Court.
All right, Ashmit, many thanks for joining us. Now, Hyundai Motor India has launched its second-generation SUV. It's called Venue. The new avatar of the car comes with design, technology and safety upgrades. The introductory price starts at 7.8 lakh rupees. Speaking with CNBC-TV18, Tarun Garg, the MD and CEO designate of Hyundai Motor India, said the Venue remains the second biggest volume driver for the company. He also said that rural demand for SUVs has touched an all-time high for Hyundai.
This fiscal first 6 months were kind of muted 0% types. I believe now we can come back to the 5% level which we are used to. So I think in the short to mid term, a 5% growth is what we are really anticipating. Rural is at an all-time high. Rural is now contributing about 24% to overall sales. It used to be about 19% 5 years back. Very clearly, rural customers have come out in big numbers during this festival as well. The other trend, which is again on the uprise, is that rural customers are asking for more and more SUVs. In fact, for the first time, I saw that rural SUV contribution actually surpassed the urban SUV contribution.
Well, that's Hyundai. Time for a short break, but up next, tech giants race to expand AI and data infrastructure as demand outstrips capacity. A special coming up. There is some relief in store for air travellers. India's aviation regulators proposed a sweeping overhaul of airline ticket refund rules. The new draft seeks to make refunds easier, faster and more transparent, while giving passengers more flexibility to cancel or amend their bookings. Let's go across to Madiha for the details. Madiha, what do these draft rules say?
Well, the DGCA has come out with draft rules, as you mentioned. They are the civil aviation requirement that proposes several passenger-friendly changes to how refunds and cancellations are handled going ahead. Let's break down what is being proposed by the DGCA. Passengers may soon get a 48-hour lock-in period after booking a ticket. That means within those 48 hours, you can cancel or amend your booking without paying any additional charge. Apart from any fare difference for a new flight, however, this facility won't apply if the flight is departing within 5 days for domestic flights or 15 days for international journeys. In another major move, the DGCA has said that in cases where tickets are booked through travel agents or online portals, the onus of refund will lie with the airline. Airlines will have to complete the refund process within 21 working days. Then the regulator has also proposed that airlines cannot charge extra for correcting a passenger's name as long as the mistake is reported within 24 hours of booking the ticket when the booking is made directly through the airline website. And in case a passenger cancels a flight due to medical emergency, airlines may either refund the fare or offer a full credit shell for future travel. Now, these proposals come amid increasing complaints over refund delays and complicated cancellation policies across airlines. The DGCA says it is aiming to bring transparency and uniformity across airlines in how refunds are handled. The regulator has invited public and stakeholder comments till 30th November, after which the final norms will be notified.
All right, Madhiha, many thanks for joining us. Many consumers will be interested in what finally transpires. Well, speaking of aviation, Indigo's numbers flashing on your screens, revenue up 9% year-on-year. There is a significantly higher forex loss this quarter for Indigo, as well as a higher tax expense as well. But more aviation news. SpiceJet has appointed former Indigo executive Sanjay Kumar as the executive director. The airline said that Kumar, who took over yesterday, will report directly to SpiceJet's chairman and managing director Ajay Singh. He has held senior leadership roles at Indigo and AirAsia India for over 10 years. Tech giants are racing to expand AI and data infrastructure as demand outstrips capacity. OpenAI has signed a $38 billion deal to buy cloud services from Amazon Web Services over the next 7 years. As part of the deal, OpenAI will be able to use Amazon's data centers, which are powered by NVIDIA's chips. Rachna standing by to take us through the details. Rachna, OpenAI not reliant only on Microsoft anymore.
That's right. From custom chips with AMD and Broadcom to GPU alliances with NVIDIA, cloud scaling through Amazon, Microsoft and Google, and data center expansion with Oracle, OpenAI is constructing an entire ecosystem it once relied on others for. OpenAI's new partnerships follow a restructuring of its long-standing deal with Microsoft. The two renewed their agreement, keeping Azure as the main platform for OpenAI's deployments, but removed the exclusivity clause that had tied the firm to Microsoft alone. It has since added Google Cloud and expanded its pact with CoreWeave that valued at up to $6.5 billion. Together, these deals ensure OpenAI now runs across 4 major global cloud networks. On the hardware front, OpenAI is pushing deeper into chips. With AMD, it has signed a multi-year agreement covering up to 6 gigawatts of Instinct GPUs, along with warrants for up to 10% of AMD stock. AMD calls OpenAI an early design partner on its next-gen MI450 chips. At the same time, OpenAI is strengthening its ties with NVIDIA. The two have agreed on global rollout of 10 gigawatts of NVIDIA systems, backed by up to $100 billion in phased investment. The first systems go live in 2026 on NVIDIA's new Vera Rubin platform. Alongside these alliances, OpenAI is working with Broadcom to build its custom AI accelerators and networking systems that will deliver another 10 gigawatts of capacity by the end of this decade. And at the infrastructure layer, there's Project Stargate, which is taking shape. Partnering with Oracle, OpenAI is building 4.5 gigawatts of new data center capacity in the US as a part of the global expansion, worth around $300 billion over 5 years. This includes a major hub also in the UAE. For the first time, OpenAI will not just rent compute, but own the infrastructure behind its models together. These deals mark a major strategic shift because OpenAI is no longer dependent on a single provider. It is building a vertically integrated AI powerhouse that spans chips, cloud, and data centers, securing every layer of its growth. So the AI race is no longer just about smarter models. It's about who controls the compute that powers them, and OpenAI is making sure that power from silicon to server is firmly in its own hands.
All right, Rachna, many thanks for joining us. Now, Microsoft is also boosting its AI capacity. It signed a $9.7 billion deal with data center operator Iren to gain access to NVIDIA's chips. It secured export licenses to ship NVIDIA's chips to UAE. The tech giant said it is the first company under President Trump's administration to secure such licenses. In international news, Israel has released 3 Palestinian prisoners as part of the ceasefire deal. Reports suggest there has been a surge in Israeli army activity across Gaza. However, this has largely taken place beyond the yellow line in areas under Israeli control. The Turkish foreign minister said that the regional nations are still working on a United Nations mandate for an international stabilization force in Gaza. Russia said its forces carried out heavy overnight strikes on a Ukrainian military airfield, other military installations and gas infrastructure facilities that supported them. Moscow also said its troops advanced into eastern Ukrainian city that has been trying to be captured for over a year. However, Ukraine maintained that Russian troops had not made gains in the past day. Meanwhile, Ukraine's military said it hit an oil refinery and military logistical facilities in Russia. China's President Xi Jinping met Russia's Prime Minister in Beijing and called for an expansion of mutual investment. He also affirmed Beijing's commitment to advance ties despite what he called turbulent external conditions. Meanwhile, Russia said, and I quote, both countries agreed to strengthen cooperation and respond appropriately to external challenges. New Yorkers head to the polls today to pick their new mayor as a frenetic 5-month general election campaign draws to a close. The 3 candidates for the mayor toured the suburbs of the state in the final hours of campaigning, delivering closing messages after a record-setting early voting period. Most polls show the Democratic nominee Zohran Mamdani with the clear lead over former Governor Andrew Cuomo and Republican candidate Curtis Sliwa. However, Cuomo, who is running as an independent after losing in the Democratic primary, has won an endorsement from President Trump. In a social media post, Trump said voters have no choice but to vote for Cuomo. Mamdani, who has called Cuomo a puppet of President Trump, questioned the timing of the president's last-minute endorsement. Back home, campaigning for the first phase of elections for the Bihar Assembly elections ends today. A total of 121 constituencies will go to vote on the 6th of November. Prime Minister Modi interacted with women workers of the BJP-led NDA in Bihar. Home Minister Amit Shah addressed a rally in Darbhanga and promised that 3.6 crore people would receive free health cover up to 5 lakh rupees. He also added that the proposed IT park in Darbhanga will create jobs for the youth. Other NDA leaders, including BJP President JP Nadda, Transport Minister Nitin Gadkari, UP CM Adityanath and Delhi CM Rekha Gupta also held rallies across the state. India Bloc's chief ministerial candidate, RJD leader Tejasvi Yadav, also made a last-ditch effort to woo voters. He promised 30,000 rupees in financial aid for women and higher minimum support price for paddy and wheat. Meanwhile, during a rally in Kutum, Congress leader Rahul Gandhi accused the Prime Minister of distracting the youth with social media addiction. Chairman of the Hinduja Group, Gopi Chand Hinduja, has died at a hospital in London at the age of 85. Known as GP in business circles, he joined the family business in 1950 and is credited with transforming the company into a transnational conglomerate. So that is the end of an era. GP Hinduja passing away in London. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute with more.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. Did you know that the sugarcane you enjoy as a refreshing juice in summer could also be used to make biodegradable plastic? Well, each harvest of sugarcane produces large amounts of agricultural residue that often goes underutilized. But one Indian company has found a way to turn this waste into value. Sugar manufacturing company Balrampur Chini has laid the foundation earlier this year for India's first large-scale polylactic acid bioplastic plant under the brand Balrampur BioYug. This plant, slated to commence operations by 2026, will have an annual capacity of 75,000 tons. But what exactly is biolactic acid bioplastic? It is a bio-based, compostable and low-emission plastic made from renewable sources like sugarcane, commonly used in packaging and 3D printing. Joining us now on the show today is a woman spearheading this initiative. Avantika Saraugi is the fourth-generation member of the promoter family to join Balrampur Chini. She is currently an executive director at the firm. Avantika, hi. Thank you so much for joining us today. It is a difficult subject, so it would be great if you can start by explaining us on what really is the whole process overall and what really led you to this.
Hi, Manisha. Thank you so much for having me. Actually, having me and to discuss my favorite topic, which is PLA, polylactic acid. So just a couple of things, how is PLA made? PLA is made by fermenting sugar to make lactic acid, which is then purified to make lactide and then polymerized to make polylactic acid. It resembles a regular plastic completely, and it can be used to replace many of the single-use plastics because it has a much shorter carbon cycle and it is compostable. So in this first generation, we are making it out of sugar, but we will also move backwards towards the agricultural residues, as Manisha was mentioning. It's quite literally the same as would be for ethanol or anything else. Everything requires first a purer feedstock and then you can go to the dirtier ones. So yeah, that's the process. And what led me to doing it is, it'll sound childish even, but one of the mandates that was given to me when I joined the company was value addition to product and byproduct. And I was researching online to see what are the best options to do from sugarcane. And I came across this absolutely clear bottle, which looked exactly like a PET drinking water bottle. And it said, I'm made from sugarcane. And it's as simple as that in terms of how the story began.
All right, pretty interesting. Avantika, so, let's understand the numbers and the maths behind this now. When you look at bioplastics as an overall industry, what is it as a global industry? Where does India stand? And the kind of capacity and investment that you're making into this, what kind of a change and impact would it have on ground?
Okay, so the global plastic market is about 650 million tons, and bioplastics represents 1 to 2% depending on how you cut it. The Indian plastic market is also 20 million tons. That's the amount of plastic waste that's generated every year, and it grows at a staggering, 7-8% rate. And PLA, or rather bioplastics, already account for about 1% of the Indian market. So let us say that by some statistical data analysis, we've been able to figure out that today the Indian market for PLA is around 40,000 tons already. And the plant capacity which we're installing, actually we upgraded it from 75,000 to 80,000 tons, which will be our annual production. And we will start as scheduled in October 26. And in the meanwhile, we've already started seeding the market under BioYug PLA, and we've already, as we speak, there are more than 50 trials which are on for consumers and converters and compounders to start using and making products out of the same PLA that we will be making.
Avantika, what is the kind of investment that you're looking to make into this? Because as you said, you've changed the capacity, you upgraded that. Have you also upgraded the investment that you're going to be making into this?
Not since the last announcement. So it's 2,850 crores, and we are going to be on time, and we are going to be sort of commissioning in October 26. So I think product will start coming out from November itself. Now how it changes how Balrampur is that it will do two things. One is that more than 50% of our revenues will come from green sources, which is ethanol, cogeneration power, and PLA by the time PLA hits full capacity. So 27-28 balance sheet will see 50% revenue coming from green sources, from green products. And the other thing it will do is it does at this point in time, almost have the capacity to build another Balrampur within Balrampur. So we hope that everything goes well, and we are able to sort of scale up and see the growth of this venture.
Those are big numbers, Avantika. I would also want to understand on the cost efficiency of this plastic vis-a-vis the other plastic.
So, of course, that is the sort of main question I get asked. And yes, the PLA resin price, which is the granule price today, is about double of a regular plastic, give or take. And, this is also the reason why I don't think a single plant is the future for it, which is what I was alluding to before. So this is our start, but the intention is definitely to scale up. So let me give that some perspective. We've announced a capacity of 80,000 tons, but like a regular PP, PE, PET line, if you call it, is around 400 to 500,000 tons on a single facility. So if we were able to go up to that scale, our pricing would be very, very close to regular plastic, and this price point conversation would be over, and that's where I hope to go in the foreseeable future, the near future even.
So as you start to produce it, Avantika, I'm assuming you already started looking for consumers for it as well. So who are these people that you're talking to? I do understand that agriculture uses one part of it, but then packaging and bottles and so many things apart from that as well. So as you do all of these trials, 50 as you mentioned, what are the end users that you see your product going for?
So the easiest thing off the block is the SUP items which are banned. Anyhow, you cannot make them in plastic. So when we talk about cost efficiency, PLA is better at functionality and better at cost when we have to replace all those SUP items. So whether it be straws, forks, knives, plates, cups, bowls, all of those things, PLA is better in terms of cost and in terms of functionality. So there we have, one of the sort of easiest conversions. It's also fairly easy to make these products. So that's one of the major things that we are looking at. There the acceptance is very good. Secondly, we are also, as you're showing on screen, we are targeting water bottles, the small format water bottles, because they are very use and throw. They are hard to collect and recycle, even though, PET recycling is going really well in the country. The little bottles are very hard to sort of collect and recycle. So that's one of the things that we're looking at strongly. Plus, in the more touristic areas, water bottles is the most visible trash which is created in the landfills and things like that. So we would like to sort of give our attention to that. And then the third thing is flexible packaging, because in India, flexible packaging is the major sort of demand. We were hoping that would come later, but since that's one of the major trials we have going on as well, it's going well. So yeah.
Avantika, are others doing it as well? I mean, do you have competition here? Do you have a deadline to meet? Others getting into this territory too?
So, I would invite others to get into this territory. It's hard to be the only one, but so far, we are the only ones. We're the first ones who will produce a bioplastic at industrial scale in the country. And I think a lot of people might be waiting and watching. And then I'm pretty sure the moment that things hit market, things are a bit successful, we will see more people coming in. And I don't think it's competition, but I think it's a much needed and welcome change. I hope we are able to positively affect the agri-based industries. It's my dream to be able to make this into a larger thing, not just for Balrampur, but for India.
Talk to us also about the government push within this. I mean, we do understand that a lot of green energy, green push is being talked about right now. And we've seen a lot come through via budgets and cabinet meetings as well. What is it that you have at this point in time from the government in sense of perhaps subsidies, incentives, hand-holding even?
So I think that most people are aware, but I will really outline the UP bioplastic incentive policy. So the UP government has rolled out a policy for large-scale bioplastic manufacturing with an investment of over 1,000 crores. They will provide a 50% capital subsidy, reimbursable over 7 years, a 5% interest subvention, a net SGST reimbursement, amongst other smaller things like electrical duties and land the signings to be given back and things like that. So I think it's a major move. It's the first incentive policy for bioplastics in the whole country, and we're very happy to be able to participate in that. And if we talk about Government of India and if we talk about other state government pushes, so many of the state governments are banning plastic in certain items like small format bottles or other coatings for water cups and things like that. So that also helps us. And at the Indian government level, the Bio-E3 policy, which was announced by the PM in 24, and again in his Independence Day speech from Lal Killa, was spoken about to provide impetus to bio-based manufacturing. So it's actually not just about plastics, but bio-based products in which bioplastics is explicitly mentioned as one of the things to push. And we've been received very positively, whether it be from any of the government departments, be the DBT or the Department of Chemical, Petrochemical or MOEF. And, we are working on creating more awareness and more market for green products like this, which have a much lower carbon footprint.
Well, that's about bioplastics and a lot of work being done for that. And Avantika, you've explained us to that very, very nicely. And we're really hoping and looking forward to 2026 as a deadline. As you said, October is when it goes on ground and is when we would start seeing those results as well. But since we have you with us, what is also your sense on now on sugar? What we're talking about is a glut in the global markets, trading at around 15 cents and below that, below cost of production, not just for India, but Thailand and Brazil, which are the other major producing countries as well. And for the Indian markets as well, last year was 296 lakh tons. This time, the sugar production is anticipated at 343.5 lakh tons. With that much of sugar coming in and no change in MSP, ethanol diversion kind of slightly on the lower side, not such a great time, would you say?
I think definitely there are headwinds. I'm not going to sort of sugarcoat that. But we do expect it to be a good crop year. So that brings down the cost of production significantly. And I think that, the ethanol pricing is being discussed. The diversion, as you said, yes, it is lower. But if we're able to lower the cost of production and, the Indian sugar pricing is at least not affected by the global sugar pricing in that sense. So we are safe there. I think we need to wait a couple more months to see how the chips sort of fall. But I do hope for a positive, announcement from the government when it comes to ethanol pricing. There is a serious discussion going on. Let's see how it pans out.
What also is your sense when it comes to overall sugar as an industry? Because ethanol pricing, one part of it, sugar MSP is the other one. Export, because we're looking at such a strong, good sugar crop year this time around. Would you say this is one commodity that continues to be very, very cyclical in nature yet again?
So, I don't love the word cyclical, but, I think that there is an inherent sort of thing, because we are related to farmers, there is not, there can't be a very harsh lookout at the industry at the government level ever. So if we are really in a fix, we always believe that if it's a policy intervention required, the government will step up. Having said that, I think I feel a sigh of relief, at least, that we as Balrampur are in a position where we can utilize the sugar in another way, or we already have a direction because of our bioplastic plant announcement. So we don't feel as threatened as maybe the others do. But I do think that MSP will also be a topic which is being seriously addressed right now. So MSP and ethanol pricing, economics of the business is being seriously looked at by the government. And we really do hope for a positive response very soon.
Avantika, would you say that sugar as an industry moved from sugar to ethanol as a diversification? You have moved into bioplastics as a further diversification. That perhaps is the way to go?
I think that I would just put it in a completely different way. I really think that sugarcane is the new oil. as many things, whether it be chemicals, whether it be materials, whether it be fuels or anything that can be produced from fossil-based sources can all be produced from agricultural-based sources, and sugarcane being the most efficient with the lowest carbon footprint. I think it's something which is just sort of wanting to explode, and with policies like the Bio-E3, which give impetus to all kinds of biomanufacturing. And if we have one success story like ours, I think it will open the floodgates to many more biomaterials in which India is already inherently very rich. So diversification, I think, is the name of the game, and I think that in the near future we will see many such materials come up. PLA is nothing, it's the tip of the iceberg.
All right, Avantika Saraogi, so much pleasure talking to you. Thank you so much for your time today and taking us through, of course, bioplastics, sugar, ethanol, all of that story there. Appreciate your time. And with that, we'll go for a short break, but don't go anywhere because Sandeep Kohli, CEO of Indriya, will be joining us on the other side. Welcome back. You're watching Commodity Champions. India's retail sector recorded a historic surge in business during the 2025 Diwali season. Gold and silver purchases remained robust as per the Confederation of All India Traders. Indian jewelers are now participating and anticipating a strong demand during the wedding season. Joining us to discuss that is Sandeep Kohli. He is CEO Indriya, Aditya Birla Jewelry. Sandeep, hi, thank you so much for joining in. Let me begin by asking you on how the Dhanteras Diwali week was for you as a company, because most jewelers seem to be telling us that it was perhaps the best ever.
The festive season has been great. I think there is good consumer sentiment in terms of wanting to come out and buy and actually celebrate the festival and purchase and shopping being part of that. And certainly, jewelry purchase has been on an upswing.
Sandeep, the last time I spoke to you, you were still in the expanding mode. Where do you stand as of now, as of 2025? And are you meeting your targets? Are you upgrading them? And where do you see the store numbers stand right now? And what are the targets from here?
Yeah, so we're very happy to say that Indriya Aditya Birla Jewelries is now in 20 cities with 36 stores. So it's been quite a roller coaster and fast-paced journey, and very, very encouraged by the kind of response that we are getting from the consumers, both in terms of the jewelry designs that we have put out there, our store designs and service, and also very good feedback on the way we are communicating and connecting with the people and the consumers. In terms of how we are doing in terms of targets, we are ahead of our business plan, and we are encouraged, in fact, to see how we can accelerate taking the brand to more and more people.
With the gold prices being so high, up by nearly 52-53% as compared to previous year, what are the kind of trends that you are seeing in terms of people buying jewelry?
Yeah. So, Manisha, it's very interesting. I think you get the best consumer insights when the going is volatile. And I think volatile is an understatement, at least for the jewelry industry over the last 12 to 18 months. So the consumer insights that we are picking up in terms of their behavior, number one, is that jewelry is an intrinsic part of culture and occasions. So when it has to be bought, it has to be bought. When there is a wedding in the family, jewelry is a big part of that, so that has to be bought. So it is not as if it is not that the category disappears from the lives of people. So that is one. Second is that as the gold prices are rising, consumers are, of course, their wallets are not expanding at the pace at which the gold price is rising. So people are titrating their purchases in terms of either the weight that they are buying or the kind of jewelry they are buying. But what is even more important and heartening for a brand like us is that people are becoming more and more conscious of the kind of designs that they want to buy. And that accent on choosing jewelry based on designs is only going up. Yes, people are buying, of course, 22 carat jewelry. They are experimenting with lower caratage jewelry also. But predominantly, it is still 22 carat jewelry in gold. And diamond, of course, has always sold in 18 carat in terms of the gold that is there in it, and even to some extent 14 carat.
Sandeep, another trend that we usually see when the gold prices go higher is that a lot of people exchange old gold to buy new gold jewelry. What is the percentage that you're seeing this time around?
Yeah, so that's another interesting trend, Manisha, that what is happening is that people want to recycle their old gold in terms of meeting their needs. That is happening for us also. And actually, that is also happening more and more in retail players and brands where people trust more. So for us at the Aditya Birla Group, because people trust the group, we've seen a very large percentage of people coming with their old gold, willing to trust us to evaluate it well, and then refresh their old gold for newer and more contemporary designs or the designs for the occasion. That is certainly happening. We've seen an uptick of that happening throughout the last 10 to 12 months. It's not as if that has got accentuated over the last 3 months, but that's a trend that we have seen on an uptake in the last 1 year itself.
Sandeep, what is the plan with Indriya right now with the wedding season upon us? What is it that you're doing new in terms of themes, launches, designs, campaigns, marketing, etc.?
Yeah, so we are very excited about the coming wedding season, and the reason for that is firstly we are very encouraged by what has happened in the festival in terms of the people adopting our brand. We've got more than 25 to 30% new consumers who have adopted the Indriya brand during just a period of 30 days. So we are very excited about that. And there are many of our outlets which have run out of the new collection pieces that we had launched. Alka is what we had put in out as a collection pieces. They are coming out with a totally new bridal collection in gold, in polki, in colored stone, and in diamonds, which is going to hit the stores soon. And also, this collection will be regionalized to meet the needs of the brides of the communities from which they come from. Because I think when people get married, they want to adopt their culture even more. So we are not necessarily launching a national collection. We are actually launching collections for each and every community so that we can delight people in every community. We will have a brand new campaign that will also be launched very soon, and we are very, very excited about it.
All right, I am excited about that too. That really sounds quite fab. But Sandeep, the only thing that has stayed stable in sense of prices in the last 6 or 8 months has been diamond prices. We've seen what gold has done and what silver has done and what platinum has done as well. Considering the penetration levels in India for diamond, would you say there's more upside, especially for this segment?
Yeah, I certainly see this as I see it as a trend like is happening in any other beauty category where there is premiumization. Going from plain gold to, jewelry with gold and diamond in it is a form of premiumization. And that trend is there, especially since the penetration of diamonds is still very low. So I do see many people wanting better designs, and more importantly, better quality and more trustworthy quality in diamonds. And that's what we are catering to with our designs and the kind of quality controls that we have at Indriya Aditya Birla.
Sandeep, thank you so much for joining in. As you said, you've had a great Diwali and the week and a month, and wishing you a great festival season and a wedding season ahead as well. But with that, it's a wrap on this edition of Commodity Champions. Thank you for watching.
Hello and welcome to News Centre. I'm Parikshit Luthra. TVS-owned British Norton has unveiled 2 new superbikes which are a part of a slew of launches at the core of the company's resurgence strategy. The models were unveiled at the annual motorcycle show in Italy's Milan. TVS had acquired Norton in the year 2020 and is betting on the brand to bolster its global presence. 35% of the auto giant's revenues now come from outside India. TVS has committed a £200 million investment in Norton motorcycles. Founded by James Lansdowne Norton in Birmingham in 1898, Norton is among the most popular British motorcycle brands in the world. I'm now joined by Richard Arnold, Executive Director at Norton Motorcycles. Richard, thank you very much for being with us on the program. So, a big day for Norton. Could you give us a sense of your product lineup and what does this really mean in terms of reviving the brand Norton, getting those motorcycles on the streets in the UK and across the world?
Thank you for having me, and it's great to welcome you here to our launch in Milan. We launched 4 bikes today. The Manx, which is an incredible naked roadster, over 200 horsepower, but 130 newton meters of torque, really quick acceleration, incredible braking. It's the first production bike to give every rider the 1G deceleration, so it's broken the 1G barrier. The Manx R, which is a super bike, really changing how products work. And then the Atlas and Atlas R, which are adventure bikes, and that echo the on-off-road tradition of Norton. Today's really important for Norton. It's been 5 years. As you said in the introduction, TVS has been absolutely unbelievable. TVS is a real giant in the industry. It's the 3rd largest producers of motorcycles in the world, 6 million vehicles a year. And that framework means that Norton is immediately able to operate all around the world. And we're launching that today. We'll be selling it across UK, Europe, India, and America. And we're really excited to be bringing that forward. The brand has always stood for 3 things: incredible design. The bikes are like sculptures, works of art, and dynamics. They ride like nothing else. They're unbelievable. And then detail, beautiful. So.
Okay. Richard, I'd like to understand what's going to be the commercial rollout strategy. By when and within what timeline are we going to see actual sales beginning in UK, India, and other parts of the world?
So as we announced today, we're beginning the distribution of the bikes early in 2026. We're expecting to get to 20,000 units a year with the bikes that we've launched. We're not communicating timelines. We're not allowed. We're a listed company, and so forward-looking statements, I'm afraid, are off the cards.
Right. Of course. But Richard, what I'd also like to understand, that considering that this is a premium, almost luxury segment of motorcycles, how do you expect this to contribute to the overall brand story and growth story of TVS globally?
But our aim is to make the most desirable motorcycles in the world. You've seen the products today. We form part of that TVS family. We're a luxury and storied brand. We open up new distribution. We communicate with new consumers, but also we bring the very latest in the marketing technology. We've been invited to be part of Google's 1% club in terms of the top marketing brands in the world, to connect with them. And that, together with all of the TVS family, is taking TVS on a trajectory. Digital journey, the way that consumer interactions work, are all going to be next level. And we're really, really looking forward to doing that together.
You've announced a £200 million investment. Could you give us a sense of how that's going to be used, the breakup, how much of it is for expansion, sales expansion, physical showrooms all across the world, and how much of this is going into towards R&D and developing future products?
So much of the R&D has already been taken care of, and you see the bikes behind me. There's a state-of-the-art production facility in Solihull in the UK, but also in India, and we're looking around the world as we grow our global expansion. The digital journey I spoke to you about a moment ago, already set up. In terms of the distribution framework, those are already lined up with dealers. Many of them are here today. We're already at the target for the first year and into the second. In terms of the demand for the bikes, we've got a waiting list that's already stretching out into months. So we're going to grow really quickly. So it's an incredibly exciting position to be in for Norton, and we're really looking forward to taking it forward.
All right. Is it possible to share the kind of bookings that you have in the pipeline?
Yeah, as I said earlier, I'm afraid, with pricing sensitive information like that, we're not able to do it, but it's a really, really exciting place.
In terms of synergies between TVS, which is a powerhouse in terms of motorcycle and two-wheeler manufacturing in India, and a legacy brand, an iconic brand like Norton, what are the synergies that we're going to see in order to bring down costs, make sure that the best product is available at the most affordable prices? And are we going to see some amount of joint manufacturing in India and in UK as well?
I think the first thing that you see with TVS is an understanding of the two-wheel market. They're a giant. They're the third largest manufacturer in the world, 6 million vehicles. So they're marginal economics. We start the game where everyone else would like to end. So whether that's electronics, whether it's the componentry, whether that's the metalwork, everything we're able to purchase at the best marginal economics. Then we take the level of engineering excellence they have. Their factories won the Deming Award for quality, the only two-wheel manufacturer to have that. Countless JD Awards, 5 this year alone. So we start with operating excellence, tremendous quality in the product. And on top of that, we're able to bring in British design, the elegance, the story of the Norton. And all of that means that we start the game where most competitors would like to finish. We're taking that forward with next generation customer journey. And again, that leverages, India's got one of the most tremendous IT environments in the world, tremendous developers, and we've leveraged that for the IT environment that's in place. And those things add up to put us in an incredible competitive position to take on our established competitors who don't form the same core business in terms of the scale of their motorbiking ambition.
Right. In terms of physical expansion, would it be possible for you to give us a sense of how many physical showrooms would you like to have by the end of 2026, possibly?
We're not putting a date on it, but we're expecting to get to 200 retail locations throughout the world. We're already ahead of plan in terms of signing those up, and we're really looking forward to rolling that out. It's going well in India, the USA, UK, Italy, France, Germany, Spain, Portugal, Sweden. So it's really, really snowballing in terms of the momentum. We've got an incredible number of those today here to share in the celebration of the launch, and it's going really, really well.
All right. And finally, before we let you go, Richard, your thoughts on possibly electric mobility. Now, this is a big theme that every automaker is working on. For an iconic brand like Norton, how important is that a part of your strategy? Is that something you're working on very strongly for the future?
You spoke earlier on about just what TVS bring, and the best technology in the world, the best engineers in the world comes as being part of TVS Group. The capability across the group, both in terms of products in the market and the R&D we're doing for the future in terms of high-performance bikes, is state-of-the-art. We were part of a project to build an electric superbike. That's in prototype stage. Today, we're launching 4 bikes. Those are ICE, but amazing bikes. But of course, as we look to the future, EV is an important part of that. And we'll be looking at that space very closely.
All right, Richard, thank you very much for joining us.
Thank you.
Rebirth of the iconic British brand Norton, and sales begin sometime in 2026. So they've got an ambitious plan. Let's see what happens here on. We're taking a short break here on News Center, but coming up, in just 5 years since inception, the International Financial Services Centers Authority has surpassed 1,000 registrations and achieved over $100 billion in banking assets at Gift City. A special interview, an exclusive with K. Rajaraman, chairman at IFCA, when we return. Welcome back. You're watching News Center. In just 5 years since inception, the International Financial Services Center Authority has crossed major milestones. According to reports, it has surpassed 1,000 registrations, achieved over $100 billion in banking assets. At GIFT City, the financial hub has also been attracting foreign companies and is exploring direct listings on its international exchanges. Launching the foreign currency settlement system at IFSC in GIFT City earlier last month, Finance Minister Nirmala Sitharaman had said that IFSC must be made more competitive and cost-effective to attract high net worth investments to India. Joining us now to take this forward and to give us a view of the kind of role that the GIFT IFSC is likely to play in attracting foreign capital to India is K. Rajaraman, Chairman at the International Financial Services Center Authority. Mr. Rajaraman, thank you very much for being with us on the program. My first question to you, with this milestone that IFSC has achieved, what is the growth that you're expecting here on?
The IFSC story starts with the India growth story. So the premise of the International Financial Services Center is to support, aid, assist, and facilitate India's growth story. And therefore, we are very excited because the Indian economy is in a very important and a pole position. And despite the uncertainties of the global economies, the Indian economy has shown to be substantial resilience. And the growth for the current year also looks very optimistic. And going forward with the announcement of a number of national projects, we expect that the growth in the Indian economy to be very, very significant in a number of sectors, which include things like infrastructure, renewable energy, and manufacturing, and so on and so forth. So we in the IFSC would play a very important role in raising capital for this journey, I mean, be it debt or equity or other kinds of financial services or related services. The IFSCA would play a very important role in enabling foreign investors to come into India in a big way.
Right. Could you give us a sense of the next major priority area for you and the kind of reforms that would be needed for the same? The finance minister recently said that the government wants IFSC, the GIFT IFSC, to become a gateway for global capital.
So just to expand on the statement that just made, the IFSCA focus has been on how we will be able to support Indian corporate sector, SMEs, and the other kinds of businesses to access debt or equity at a very cost-efficient rate. So the short point is that the International Financial Services Centers Authority has enabled bringing the global corporate finance marketplace to the doorstep, I think. So traditionally, companies would go to foreign destinations to raise a line of credit or to issue a bond or to access some kind of a financial service, including derivatives or of all kinds. Then today, I think the entities actually come to GIFT City to access all of that. There are 35 banks here whose assets under management have crossed $100 billion. The total lending from the IFSC banks has exceeded nearly about $71 billion, and out of which about $51 billion has gone into India. The rest, $20 billion, has been lent to various countries across the world, I think foreign subsidiaries of Indian companies and so on and so forth. The bond market here is also very active. I think there is the total bonds that have been issued out of GIFT City have crossed about $65 billion, out of which about $15 billion are green, social, sustainable bonds. Similarly, if you look at the equity space, and I think the fund industry here in GIFT City is also very active. There are about more than about 190 plus fund managers who have registered about 310 alternate investment funds, which generate a lot of equity for the Indian marketplace. So as the Honorable Finance Minister observed, this journey of enabling Indian companies to raise debt or equity at the most attractive price at the doorstep has begun in a very, very big way. Now, as the Indian economy expands, we expect that the GIFT City platform to provide more and more of such capital of different types to the Indian financial and the business ecosystem. If you look at the GIFT City as a platform, it is not only inward but is also outward. I think we believe that there is a great opportunity for us to connect with the diaspora who live across the world. there are more than 15.8 million non-resident Indians and 19.3 million persons of Indian origin who are very heavily invested personally into India. So the GIFT City actually provides a very attractive platform for them to actually to maintain a lot of their investments in foreign exchange terms, either as dollars or euros or whatever. So while they remit directly money into India in the form of which gets converted to rupee, there is a significant portion of their assets which are maintained in global marketplaces in foreign exchange terms. So GIFT City now provides that opportunity now. More than about 12,000 Indians have non-resident Indians today have deposits in GIFT City extending to several billions of dollars. This is just the beginning. I mean, we have just touched the tip of the iceberg. So one of the issues that we are intent in cracking this year is to ensure a complete digital online onboarding of individuals from across the world. So starting with NRIs, last week we released a framework for onboarding through digital KYC non-resident Indians who live across the world from very key jurisdictions. So this will enable them to start deposit accounts, investment accounts with fund managers and so on and so forth, and invest sums of money which they actually deploy in global marketplaces. Similarly, I think let me also say that a number of Indians are also investing in global securities market. So instead of investing directly from India into other countries, we believe that GIFT City is a great platform where regulated fund managers and brokers would enable resident Indians to invest in the global securities market. And a number of products and services have been launched out of GIFT City and our global access program as well. So in short, I would like to say that GIFT City is now emerged as both an inward and an outward capital markets platform for investors of all kinds.
All right. I'd also like to ask you, in August 2025, we saw the first IPO at GIFT City. What is the level of interest for IPOs at IFSC, and what's the road ahead for that?
So, I mean, the Indian domestic Indian IPO market is really very, very strong, and we believe that will grow from strength to strength. So the GIFT City IPO market has been set up or created just to provide a value add or an add-on to the Indian corporate businesses. So there are a number of Indian businesses which have an outward-looking theme. Like, for instance, many of them have projects across the world. They have, or there may be companies who have a global ambition. So the GIFT City ecosystem enables such companies to raise equity in the form of foreign exchange, in the form of dollars or euros, which they can invest into global ambitions of such companies. So this is just an option. So therefore, it is not meant for every Indian company. I mean, a company which is doing a purely domestic business will have no value in this ecosystem. But if there's a company which is connected with a global ecosystem, it's like an export-led company or a company with a number of projects abroad, we see a lot of value for them to come and set up, issue an initial public offering or a follow-on offering through GIFT City. So at this point of time, we have enabled regulations for unlisted Indian companies to list themselves here, and the exchange here is actually evaluating a few applications, and we expect that the issuances to happen over the course of this year and early next year as well.
So how many applications are under process, would you say?
So at this point of time, there is one company with a couple of other companies also being evaluated by the exchange. One company is in a very advanced stage, and we expect that the other few companies also to be probably evaluated by the exchange before they are cleared.
In terms of scaling up operations at IFSC Bullion Exchange, is there any target that you've set out?
So India is a very large buyer of bullion. So our thinking has been that that an exchange-traded process of trading is actually much more efficient, transparent, and a better way to actually do a bullion business than probably OTC. Though of course both forms of trade need to coexist, but our idea is to actually support, facilitate, and encourage the exchange-based trading of bullion. So with this, we have created the International Bullion Exchange, and over the last year or so, the trading on the Indian Bullion Exchange has actually expanded significantly. And we believe that this during the current year, in which I think we expect the Bullion Exchange to play an important role in enabling import of gold under the Advanced Authorization Program as well as the business which the nominated banks do would come into GIFT City in a significant way.
Would there be any recommendation that has gone from you in terms of making it easier to invest, making it more attractive to invest, something which possibly is that we could see in the union budget or in the months to come?
So, let me say that one of the things as a regulator which we are working on is to ensure a higher ease of doing business. So, fortunately, the regulation making which started in 2020 provided us the opportunity to benchmark our regulations with the best in the world. So, from that perspective, our regulations are more aligned to what obtains in international jurisdictions like Singapore, Dubai, London, and Hong Kong, etc. But this process is a constant activity because the goalposts are also shifting with more innovations happening in the international marketplace. So we are constantly, every couple of years, reviewing our regulations and seeing how we can provide regulations which are completely aligned with the latest best practices in the rest of the world. So this is one of our biggest focus activities, that is improving the ease of doing business. So from in that, one of the important elements would be fully digital online onboarding of customers. I just mentioned that this week that we have pulled out a video KYC based assisted onboarding of NRIs. Our goal is that maybe in the next few months also to enable face authentication of non-resident Indians to onboard themselves, which will actually make the process entirely simpler and faster as well. But in the next several months, maybe the next 6 months, under the actions of the Finance Ministry and the Minister for Finance, we are also working on how to provide a digital KYC system for foreigners as well. So this would be a piece of heavy lifting because of the nature of the validation of international KYC documents. So we are working on it, and we expect that maybe by next year, we would be able to provide a system which matches the best of the processes in the rest of the world. Along with KYC, one of the other focus areas has been to make ease of payments. So we have requested all the GIFT City banks to provide high-quality user interfaces for GIFT City clients in the form of mobile apps and so on and so forth. In addition to that, we have also enabled a regulation called the Payment Services Providers Regulation. More than 6 entities have actually enrolled themselves, enabling individuals who live across the rest of the world to actually make payments effortlessly through a mobile app. So we expect that all these measures will enable the attractiveness of the GIFT City as an international financial center to scale up in the near future.
Okay, I would also like to ask you about the progress in terms of encouraging more retail payments, cross-border payments through GIFT IFSC. What's been the quantum of payments so far that has been handled?
No, so it is early days. So at this point of time, about 6 payment companies have been authorized, and only 2 of them are operational at this point of time. They are in the process of rolling out the connections with the other financial sector entities here, which include banks, funds, insurance companies, etc. So we expect that the results to actually start coming out by next year, when all these entities would be fully operational. So as I already mentioned, the journey does not stop with just the payment services companies. We also have very recently launched a foreign currency clearing and settlement system, which is being run by the Clearing Corporation of India Limited, IFSC. So this provides a high efficiency in the movement of money in the GIFT ecosystem. So now the FCCS serves the banks in GIFT City to ensure that the real-time settlements between the banks happens at speeds no more than 3 seconds. So this ensures that there's high efficiency in the financial ecosystem here. We expect that this clearing and settlement system to also start cross-border services maybe sometime next year, enabling same kind of speed of transfer of money on a real-time basis to happen by next year as well.
With that, it's a wrap on this edition of News Center. More news and updates continue right here.
Welcome to Genomics. Has the festival season, along with the GST cut, boosted India's GDP growth? We only have the auto sales numbers and a little bit of others. CNBC-TV18's proprietary data shows car sales from Navratri to Diwali grew 23%. But if you count from Ganesh Chaturthi, that is, when GST sales cuts were expected, sales were up only 11%. Likewise, two-wheeler sales from Navratri to Diwali is impressive at 22%. But again, if you count from Ganesh Chaturthi to October 31st, the sales are up only 12%. Overall, full-year sales for cars maybe 5%, and for two-wheelers maybe 8 to 9%, according to industry insiders who are extrapolating the festive, demand. GST collections in October, they are actually for sales in September. These rose by only 4.6%, while domestic GST collection was up only 2%. But of course, this may be because people, postponed their purchases until September 22nd, when the GST cuts would come into effect. All told, how are economists looking at the economy at the end of the festival season, especially on growth and hence on RBI rate action? That's the question we are asking today. And joining us are an elite panel of economists: Pranjul Bhandari, Chief India Economist at HSBC; Sakshi Gupta, Vice President and Senior Economist at HDFC Bank; and Abhishek Upadhyay, the Senior Economist from ICICI Securities PD. Ladies and Abhishek, thank you very much indeed for your time. Pranjul, you go first, since you're removed from India to some extent by a stretch of water. How does it look that has the festive season made you push up, given upside bias to your growth forecasts?
So I think the GST cuts have worked. And I think now we have enough evidence to show that firms have cut prices. We can actually see some of it in the CPI data, and we'll see more in subsequent prints. We've seen, all these auto sales numbers that you spoke about. Even if you include the August period, it still shows a double-digit growth, and I think that is meaningful. We've seen bank credit growth inch up a little bit across industry and services. Interestingly, in the PMI that came out yesterday, we've seen that the increase in domestic new orders is faster than the fall in export orders. So on net, I think we've given a positive boost to the economy. So there's a lot of data, that is showing that things have worked well. Another data print has been the stock of purchases within PMI, which shows that over October, a lot of inputs were bought by corporates, which means that they will continue to produce in November. So some of this manufacturing could continue into November and hopefully into December as well. All of this makes us believe that the September GDP growth number could be between 7.2 and 7.4%, which I think is a good number. For the full year, our forecast was anyway on the higher side. It was 7%. So we don't think we'll be making any changes to our annual growth number. We will stick to 7. Also, because in the fourth quarter, March, a lot of these things could change. My sense is we are good right now, but from the first quarter of 2026, we might start seeing a fiscal drag coming in because the government will have to cut back on its expenses if it wants to meet the fiscal deficit target. And it has said in many forums that it wants to meet the fiscal deficit target. So between the first 3 quarters and the fourth quarter of FY26, we could see growth fall. But for now, GST has met its purpose.
Okay. Well, that's a fairly comprehensive reply. And at 7%, that's clearly a very positive number. The only other person I know, I think, is Samiran Chakrabarti of Citi, who has 7 or 7.1 for the full year. The government and the RBI, of course, are sitting more at 6.8. Sakshi, can you also give a similar analysis of all the numbers that Pranjul spoke about? Tax collections are particularly disappointing, but they have been from the start of the year, whether you look at corporate tax or income tax. And GST, September at least, the collections are not looking that bright. So your assessment of growth?
Right. Good morning, Lata. I think the initial indicators that we are tracking from the festive season do indicate that there's been a jump up in activity, both in terms of the rural as well as urban demand indicators. A host of indicators that Pranjul mentioned or you mentioned do kind of signal that. My only concern at this stage is that, this was expected. It was expected that in September there'll be some amount of delay in consumption by household, and there will be some amount of pent-up effect that will play out in this festive season, right? So from the perspective of whether I'm looking at, revising up my GDP growth forecast for this year, I think it's a bit too early. I think from my perspective, I would like to see how much of this demand that we have seen during the festive season actually, kind of sustains as we move on into the months of November, December, and then Q1 of 2026. Because, before this festive season, we've been tracking urban demand indicators, and they continue to show the demand was actually not picking up at a very, very strong pace, and things were still very moderate. Secondly, I think we are still yet to see the impact of tariffs, and that's really the big uncertainty or question at this stage. As we move into, the fag end of the third quarter and going into Q4, a lot of the front loading or the festive season demand from the US is going to start fading off, right? So I think we are yet to see that headwind play out in the economy. So net, currently we are at a GDP growth forecast of 6.8%. I do see some amount of upside to this number, as I said, if demand kind of sustains beyond October, especially in the urban segment of the economy.
Okay, so it's still wait and watch, and two headwinds you point out, trade deal as well as fiscal drag, which Pranjul pointed out. Abhishek, we met after the festive seasons and tried to do an initial number crunching. You said there is an upward bias to your number, but you're not changing it. Do you think there is a further confirmation of the upward bias, or the other way around?
I think so, Lata. So clearly auto sales data is quite noisy, but the scale and the breadth of rise that we have seen there is difficult to brush away, particularly the signal to noise ratio for the entry-level car segment, where we have seen strong pickup in demand. This segment demand had been lackluster for quite some time. The signal could be higher. There could be higher signal value there. Also, other data, as we know, are still mixed. I mean, GST collections, you have indicated GST collections on domestic transactions, particularly 2% versus April-September period growth of close to 9%. Also, the import GST collections on import side has been quite strong over the last 2 months, close to 14%. Even in fact, FITD basis collections on imports has been in the same ballpark and close to double the growth that we saw in the same period last year. So it is possible that some of the stimulus that we have seen in the form of income tax cut, in the form of GST cuts, could be leaking away in terms of higher imports. So that is one reason for caution. In the other big data, I think exports for September held up quite well, despite contraction in exports to US. But what we have seen more recently, in recent weeks, is that rupee has been under quite a bit of pressure, despite strong RBI intervention, which could well be a sign that the BOP flow dynamics remain on the weaker side, and it could partly be on account of some weakening that we could be seeing now on the export side.
Yeah.
So the big elephant in the room really is whether we are able to quickly sign a favorable trade deal with US. That could be a key driver of demand as we move outside the festive season now and towards the back end of the fiscal year.
Okay, point taken. But can you all quickly give me your numbers for the second quarter, and which is due on November 29th, and for the full year? Pranjul, you stand at 7.2 for the current quarter? I mean, for the second quarter?
Yeah, 7.3, yes.
7.3 second quarter and full year 7. Sakshi, your number?
For Q2, we are at 7.1 and full year currently at 6.8.
Okay, and Abhishek?
We're tracking quite close to 7%, but some upside is there. Government spending has been on the weaker side, particularly on the revenue.
But the 7 is for the full year.
Could have been for the second quarter. For the full year, we are at 6.7% for now.
Okay. All right, fair enough. So the consensus is that the second quarter at least is going to be between 7 and 7.3, and adding the first quarter 7.8, we are practically at a 7.5 for the first half of the year, which is a fairly strong number. But Pranjul, with this kind of a number, how do you approach the December policy? Will the Reserve Bank say, which appears to be Poonam Gupta's last public address, that there is space, but will we need to do it now? That seemed to be, I'm paraphrasing it badly, but what's your sense?
Yeah, it's not going to be an easy one. I think it's going to be a close call in December. If the trade deal between US and India is not signed by then, I would say that there's a good chance that a rate cut does happen in December, simply because I think the pain of the export slowdown will be felt in the next couple of months. And this boost from GST, especially after Diwali is over, will also start coming off. So my sense is if there's no trade deal, there are strong chances that December could be a rate cut. If we have a trade deal by then I think this big growth drag, which could actually cost us about 0.7 percentage points of growth over a year, could go away. And my sense is that then, we can sort of wait and not cut and think about it later in 2026. So I think a lot depends on whether the trade deal happens or not.
Okay, we've always prided that we take our decisions on domestic matters, but in this specific case, it's going to be a bilateral issue of a trade deal that may move the RBI's hand. You agree, Sakshi?
Yeah.
Cut or no cut?
Agree. No, I mean, it's a close call, and I agree with what you're saying. I think it's a binary decision, and to borrow words from the US Fed, I mean, the December policy right now is not a foregone conclusion.
Okay.
It really depends on what happens to the trade deal. I think that if we don't get the trade deal in the next few weeks, I see a very, very high possibility of a rate cut by the RBI in the December policy, because we have to remember that, over the next, apart from the Q2 number, once we start looking at GDP numbers from Q3 onwards, the next 3 or 4 quarters is also going to have a very adverse base effect, right? So that is going to pull down your overall GDP growth numbers and the other risks that I spoke about.
Okay, fair point. Abhishek, where would you stand?
For me, Lata, the bar for rate cut in December is quite low. RBI has indicated there's space for policy action, and that in central bank speak should mean very high probability of a rate action in the December meeting. Yes, it is possible Q2 growth data surprises higher than what RBI has penciled in. Also, there could be a scenario where it could sign a trade deal with US based on the rhetoric that we've been getting from various officials in the run-up to the MPC meeting. That said, there are still, on the inflation side, as we know, we are still tracking quite a bit lower than the inflation forecast for the current quarter, which RBI has put out at 1.8%. So inflation story continues to be positive, although led by food and some one-off factors. But overall, the sense is that underlying inflation is tracking close to 4%. Some people think it is lower, but we think quite close to 4%. On that basis, and with still some uncertainty about the growth outlook, there is definite scope for one more round of rate cut before RBI considers a long pause.
Okay. So, well, the verdict seems to be a 7% plus growth for the quarter that just ended. For the full year also, we are very close to 7%. But on a rate cut, one person more finding it more likely, the other two want to hold on to see how events pan out. Ladies and Abhishek, we have to take a quick break, but I want to prod you all for whether there is a likelihood of an OMO RBI purchase anytime in the second half, as well the huge drama on the currency. Those questions after the break. Welcome back to Indianomics. We are taking a rain check on the state of the economy after the festival sales data are in. Some of it is in. I've been speaking with Pranjal Bhandari of HSBC, Sakshi Gupta of HDFC Bank, and Abhishek Upadhyay of ISEC Primary Dealer. Ladies and Abhishek, thank you very much for your patience. Before we wrap up about the economy, we have to look at the currency. Pranjal, what is the sense you're getting? The Reserve Bank is put in all its might to ensure that the dollar doesn't get more expensive than 88.80. The intervention is strong, but does it look like the rupee has some more weakness to tread?
Yeah. Look, I think a lot of the depreciation and correction on a trade-weighted basis has already happened. But right now, it's a very binary decision from here. It's all about whether a trade deal will happen or not. And on the back of that, the range can be extremely wide. My sense is that if we have a trade deal in which the tariff is cut from, say, 50% to 20%, there could be a sharp appreciation of the rupee because so much of correction has already happened. And, we could be looking at like 86.5 or something. But on the other hand, if there is no trade deal and, it's December and we're looking at January and there is no clarity, then, dollar rupee could go much higher, like much closer to 90. So at this point of time, the band is very high and it's an extremely binary decision. I would say that. On the trade deficit front, my sense is that things are looking good right now in the sense that exports have still held on. But come 2026, we could start seeing some softening of the exports because a lot of the exports are on all these exempted sectors and stocks globally are being piled up. So there might not be that much of exports demand globally for electronics and gems and jewelry and all of that next year. So my sense is that there could be pain if the trade deal has not been signed by then.
Okay. What's your current account deficit for the current year itself? Is it still under 1%?
No, it's between 1.2% of GDP.
Okay, thanks for that. Sakshi, what is your assessment of the rupee range?
Well, Lata, I have a slightly different view on the rupee. I think that whether we get a trade deal or not, my 6-month, 12-month forecast on the rupee is that rupee is going to continue to depreciate. There are a couple of reasons for this. I mean, yes, in the near term, a positive, announcement around the trade deal could lead to some rally in the rupee. But I think that this would be an opportunity for the RBI to come in and build up its, book again. They have been intervening very, very aggressively. And if you look at the size of their forward book as well, I mean, we have data, up till September, but that has gone up quite sharply. So I think this would be an opportunity, and therefore I don't see that a positive trade deal will lead to a significant, rally in the rupee, maybe a knee-jerk reaction. From a more longer-term perspective, look, I come back to, the fundamental on your, export performance and your current account deficit. Plus, you add to that the fact that there's fair bit of concern now around oil prices, right? I mean, although they continue to remain below $70 per barrel, but at the end of the day, the sanctions on Russia also means that the discount or the benefit that we were getting from buying a lot of the Russian oil also starts kind of petering off, right? And third, I think that the market has been concerned about US growth. They've been talking about US central bank cutting rates, but there's a big question mark around that as well now. So I'm not so certain.
So your range would be?
So we are looking at about 88 to 89.50 for the rupee over the next 6 months. And then I think in FY27, I do see the possibility of the rupee be between 89.90.
Okay, fair enough. I agree there are pressures, especially with the global economy, likely to slow down and beset by Chinese excess, Asian excess stocks. But Abhishek, let me move away from the rupee because I wanted to ask you if there is any scope for an OMO purchased by RBI, even if they say duck the rate cut. Does this huge intervention by the Reserve Bank mean that liquidity is dwindling and there are hopes of an OMO?
Well, that's so interestingly, despite the CRR cut tranches which have been coming into effect, what we have seen over last roughly 1 month is that core liquidity surplus, which was close to 5 lakh crores, 5 trillion, has come down to around 3.5 lakh crores. So that is the result mainly of a very strong RBI FX market intervention, which has sucked out liquidity from the banking system. Also, seasonally around the festive season, we tend to see currency leakage being on the higher side. So there has been some drag from there. The liquidity situation is still, I would say, comfortable. But if the space of FX intervention continues, if there is no trade deal, we could see liquidity surplus continue to dwindle over next few weeks. If there is no FX outflow, core liquidity surplus could end the fiscal year at around the same levels as last year. But a more likely scenario based on current basically situation is that RBI will need to step in with some liquidity injection, whether through the FX swap route or OMOs, and could be sooner rather than later if pressure on rupee continues and RBI intervenes strongly.
Okay, fair point. We don't have time for more, but that quite succinctly sums up, we thought that our twin deficits problem is behind us, but current account deficit is moving above, the 1% mark. And more importantly, the BOP deficit is pinching rather hard, plus the fiscal deficit, which performed very well, may be constrained by much lower tax inflows this year. So chances of the Reserve Bank having to help out the central government with some bond purchases and keeping yields lower is not entirely out of the realm of possibility. Thank you very much, Pranjul Bhandari, who has left us, and Sakshi and Abhishek for a comprehensive view of the economy. I think the positive takeaway is that there is an upside bias to GDP growth, and a 7% handle looks very, very likely for the quarter gone by and for the full year. We wrap up on this edition of Indianomics. Thanks for watching.
Well, State Bank of India has beat street estimates, reporting a 10% rise in profits aided by exceptional items and a 3.3% rise in net interest income. Asset quality improved, fresh slippages came down sharply, and advances growth was above the industry average. For more on the numbers, I have with me the man of the moment, Chairman of State Bank of India, Mr. C.S. Sethi. Mr. Sethi, first up, congratulations. It's been a bit of a milestone quarter business for State Bank of India, crossing 100 lakh crore rupees. How do you see growth trends shaping up for the rest of the year, and where do you expect to close the year in terms of overall business and profitability?
Thank you, Ritu. We see a robust credit demand coming back. As I mentioned, a lot of efforts being made in both in terms of fiscal side as well as regulatory side. Announcements which have been made in terms of simplifying various activities in the banking space, and the GST 2.0 and the income tax benefit which was given earlier, all are playing out now, and we have seen the sustained consumption demand coming back, and we have seen double-digit growth across the business segments, except corporate credit. And the corporate credit also we have seen a turnaround. Last quarter we had an almost negative growth rate in the corporate credit, but we have seen 7% corporate credit growth, and we expect that this corporate credit growth will be double-digit in the next 2 quarters. So I'm very, very confident that I did mention on your channel when the banking announcements were made that at least 1% additional credit growth is feasible, and I'm sticking to that.
Well, you are sticking to a higher credit growth guidance, but let's start with the asset quality. A marked improvement in this quarter. Slippages are down 40%, credit costs at 0.43%. Is this trend going to sustain, or are there any areas of concern you'd want to point out? And in terms of guidance for the full year, what will the slippages and credit costs look like?
Our credit cost guidance, below 50 basis point is something what we mentioned. Even the slippage ratio would be 0.5%. Through the cycle is what we have guided, which means that we expect the asset quality to be robust going forward also. So we have no concern in any segment. Currently, almost all the segments are displaying high credit quality, and there are no concerns in any of the segments.
Okay, Mr. Sethi, like you said, credit growth guidance now has been raised to 12 to 14%. Where are you seeing on the ground, increased credit demand? And going ahead, how much of a boost, will you expect from something like M&A financing, the easier capital market financing norms announced by RBI? How much will that add to your credit growth going ahead in future, of course?
So more than these two, what you mentioned, I think the real economy, whether it is in terms of, home loan segment, in terms of the SME, in terms of, agriculture, they're all witnessing a good growth rates. If you see in our portfolio in Q2, 14 to 17% growth rates across these segments. I think this is very important, and we have very large portfolio of these segments, which means that a double-digit growth rate here will itself contribute to 12 to 14% credit guidance what I've given. And we also have a very significant pipeline on the corporate credit side. And this pipeline, a part of which is converted into real sanctions and disbursement, is constantly getting replenished, both in terms of the discussions which we've been having with the corporates. I assume that earlier also I mentioned that the sustained consumption demand, which we are witnessing at this moment, maybe it's too early to talk about sustained consumption demand. We will wait for another couple of months. October has been a good month in terms of the credit growth across the segments. And if that sustained consumption demand is visible, the private capital expenditure in certain sectors, which we have not been seeing, either steel, cement, is likely to come back. There still will be a challenge because the large corporates have their cash balances with them, significant cash balances. They will be consuming that cash balance first. So the corporate credit essentially will come from the mid-corporate segment, may not be coming from the large corporates. And some of the central PSUs spending on the capex, for example, refineries and all, is also contributing to the corporate credit growth.
Okay, so corporate credit growth will be led by the mid-corporate segment more than the large corporates. But in terms of pipeline, what do you have for corporate credit growth? And, if you could tell us more about when you say you expect a double-digit growth in the second half of the year in corporate advances, what would that look like?
So we posted a credit growth of 7.1% in the current quarter, which eminently feasible to take to 10%. So this is what we are expecting. And in terms of pipeline, more than 7 lakh crore pipeline is available. This is a combination of working capital underutilization and term loans sanctioned but under disbursement, and term loans in the process of sanction. I think this is a good pipeline to have. The first credit demand obviously will come from the higher working capital utilization, followed by the drawals from the term loans which are already sanctioned, and of course the ones which are going to be sanctioned. So there's a good visibility. It's only a matter of how they're spaced out, which contributes to the growth rates.
Well, Mr. Sethi, your NIMs surprised the street. There was an expectation of a decline. You've shown a bit of an improvement, 2.97%. With the expected rate trajectory from RBI, can we expect you to hold on to these levels or marginally improve them from here on?
So our effort, if you have seen, the margin improvement essentially came because of better liability management on the deposit side and also on the resources side. The overall resource cost has come down, and we have also significantly stayed away from the wholesale deposits, which means that high-cost deposits are not acquired, and the retail deposits are acquired, and CASA has witnessed a good growth rate, and in fact 6 to 7% savings account balances increase on a base of 17.5 lakh crore is a remarkable one. And we are also seeing a good current account balances. So this is likely further help us in reducing the cost of resources. While the rate cut is something which we need to be looking at, because the rate cut will essentially impact the EBLR book. As I mentioned, the exit NIM will be more than 3% for March 26. We are still holding on to that guidance.
All right. Mr. Sethi, very briefly on the expected credit loss guidelines, is there a back of the envelope calculation on what the impact could look like? And will you start to make some additional provisions in the coming quarters, to meet the requirements?
One is the long, roadmap which is proposed almost 5 years now from now. Once the final guidelines are released, draft guidelines are available, we would definitely look at it. We would definitely use the roadmap. It's not that we are going to front load any of the provisions. We will. At this moment, we are thinking that the 4 to 5 year period which is given for implementation roadmap, we will definitely be using it, which means that the impact on the balance sheet will be limited.
Well, Mr. Sethi, finally, SBI has had a big role to play in Yes Bank's turnaround. The stake sale in this quarter also has boosted your profitability, but you continue to hold that balanced 10% stake in Yes Bank. Now that they have a long-term strategic investor, how long will you expect to hold on to this stake, or how quickly will you look to divest this remaining stake?
See, there's no compulsion either to exit or stay on. Obviously, that's a call which our board will take at the appropriate time. So till that time, we still have a board seat on the Yes Bank. We will help the strategic partner to settle down and ensure that the bank is on the growth path. And we are not in a hurry to exit. Neither we have any compulsion to stay back.
All right, Mr. Sethi, we'll leave it at that. Thank you so much for speaking to CNBC-TV18. Always a pleasure to have you.
Thank you.
Welcome back. You're watching Business 360. Shares of automaker M&M surged after the company's strong second quarter performance beat estimates on most parameters. Net profit rose nearly 18%, while margins stood at 14.5%, expanded more than expected. Sudarshan Kumar is here with more. Sudarshan, take us through the numbers.
It's an operationally strong set of earnings from Mahindra & Mahindra for Q2 of FY26, and the biggest positive surprise was the improvement that company has seen in the margin, and also on the market share front, it continues to gain. And in LCV, it has gained market share of almost 100 basis points. In SUVs, the gain is of almost 400 basis points, and in tractor also, it has gained almost 50 basis points. Talking about the headline numbers, profit has increased by 18%, and revenue, as per the expectations also, we were expecting an increase of in the range of 20 to 23%. Company has reported an increase of 21%. EBITDA has seen a jump of 23%, and margin surprisingly has come in above 14%. It has come at 14.5%, an expansion of 20 basis points. And we were expecting a fall and come in the range of 13.8 to 13.9%. And this was led by healthy improvement that company has seen in the tractor segment. On the volume front also, YOY tractor segment volumes were up almost 32%. Even the auto segment volumes were sharply higher YOY. Now talking segment-wise, in the auto, revenue was up 18%, EBIT has increased by 14%, and due to GST transition, there was a slight dip in the margin. It has come at 9.1% versus 9.5%. But here also positive part was that realization has improved by 4% versus expectation of a fall in the range of 1 to 2%. Talking about the tractor segment, revenue has increased by 23%, EBIT has jumped by 48%, and margin has come in sharply higher. It has come at 20% versus 16%, while realization here was down 7%. In the commentary, the focus will be what exactly company talks about FY26 outlook and the new launches, and also what's the strategy to meet CAFE 3 emission norms. But as far as the earnings are concerned, it's a very strong set by Mahindra & Mahindra for Q2 of FY26.
All right, Sudarshan, many thanks for those details. Now, in global earnings, British oil giant BP has reported a strong set of numbers in the third quarter. The company attributed progress on divestments and its cost-cutting drive as its key reasons. The company also announced a share buyback of another $750 million over the next 3 months. Saudi Aramco posted a strong performance in the third quarter as well. The world's largest oil company has been increasing production as part of oil lobby OPEC Plus's policy. This helped mitigate the impact of the lower crude prices. The production capacity growth target was also revised upwards from 60% to around 80% over 2021 production levels. Relief for Vodafone and Idea in one of its longest-running tax battles. The Supreme Court has allowed the Income Tax Department to withdraw its long-pending 8,500 crore rupee transfer pricing case against Vodafone India Services. Timsy Jaipuria has all of those details. Timsy?
Well, yes, the Income Tax Department on 3rd of November moved the Apex Court to withdraw its long-pending 8,500 crore rupees transfer pricing case against Vodafone India Services. The Commissioner of Income Tax filed the withdrawal plea before a Supreme Court bench led by Chief Justice B.R. Gavai. The court allowed the withdrawal. Formal order is expected soon, but meanwhile, just a backdrop to what was this matter. Well, the case pertains to a transfer pricing order in connection with sale of Vodafone India's Ahmedabad-based call center business to Hutchinson Wapmau Properties India as part of internal restructuring in FY8 and assignment of call options to Vodafone International Holdings BV. Income Tax Department had in April 2016 challenged the Bombay High Court's order, which was then the October 2015 judgment that favored Vodafone India Services, the Indian arm of Vodafone Group PLC, in a 8,500 crore transfer pricing tax dispute. The case remained pending since 2017 without any hearing in the Apex Court. The High Court on October 8, 2015 had overruled the order by the Income Tax Appellate Tribunal, that is IT80, issued in 2014 that the Income Tax Department has the jurisdiction in the transfer pricing tax case involving the sale of Vodafone's call center business to Hutchinson Wapmau Properties and assignment of call options to Vodafone International Holdings BV in 2007 and 2008. Vodafone India Services had challenged the jurisdiction of the tax department, had sought to add 8,500 crore rupees to its taxable income in financial year 2007-2008. In 2013, the tax department claimed a tax of 3,700 crore rupees from Vodafone India in this case. So now formally the order is expected, but yes, the court has allowed withdrawal of this application.
So relief there for Vodafone. Many thanks for those details, Timsy. Now, tech giants are racing to expand AI and data infrastructure as demand outstrips capacity. OpenAI has signed a $38 billion deal to buy cloud services from Amazon Web Services over the next 7 years. As part of the deal, OpenAI will be able to use Amazon's data centers, which are powered by NVIDIA's chips. Rachna Dhanrajani has all of those details for us. Rachna, OpenAI not reliant on Microsoft anymore.
That's right. From custom chips with AMD and Broadcom to GPU alliances with NVIDIA, cloud scaling through Amazon, Microsoft and Google, and data center expansion with Oracle, OpenAI is constructing an entire ecosystem it once relied on others for. OpenAI's new partnerships follow a restructuring of its long-standing deal with Microsoft. The two renewed their agreement, keeping Azure as the main platform for OpenAI's deployments, but removed the exclusivity clause that had tied the firm to Microsoft alone. It has since added Google Cloud and expanded its pact with CoreWeave that valued at up to $6.5 billion. Together, these deals ensure OpenAI now runs across 4 major global cloud networks. On the hardware front, OpenAI is pushing deeper into chips. With AMD, it has signed a multi-year agreement covering up to 6 gigawatts of Instinct GPUs, along with warrants for up to 10% of AMD stock. AMD calls OpenAI an early design partner on its next-gen MI450 chips. At the same time, OpenAI is strengthening its ties with NVIDIA. The two have agreed on global rollout of 10 gigawatts of NVIDIA systems, backed by up to $100 billion in phased investment. The first systems go live in 2026 on NVIDIA's new Vera Rubin platform. Alongside these alliances, OpenAI is working with Broadcom to build its custom AI accelerators and networking systems that will deliver another 10 gigawatts of capacity by the end of this decade. And at the infrastructure layer, there's Project Stargate, which is taking shape. Partnering with Oracle, OpenAI is building 4.5 gigawatts of new data center capacity in the US as a part of the global expansion, worth around $300 billion over 5 years. This includes a major hub also in the UAE. For the first time, OpenAI will not just rent, compute, but own the infrastructure behind its models together. These deals mark a major strategic shift because OpenAI is no longer dependent on a single provider. It is building a vertically integrated AI powerhouse that spans chips, cloud, and data centers, securing every layer of its growth. So the AI race is no longer just about smarter models. It's about who controls the compute that powers them, and OpenAI is making sure that power from silicon to server is firmly in its own hands.
All right, Rachna, thank you so much for those details. Now, Microsoft is also boosting its AI capacity. It has signed a $9.7 billion deal with data center operator IREN to gain access to NVIDIA chips. It has secured export licenses to ship NVIDIA chips to UAE. The tech giant said it is the first company under US President Donald Trump's administration to secure such licenses. And staying with international news, Israel has released 3 Palestinian prisoners as part of the ceasefire deal. Reports have suggested that there has been a surge in Israeli army activity across Gaza. However, this has largely taken place beyond the yellow line in areas under Israeli control. Turkish Foreign Minister has said that regional nations are still working on a United Nations mandate for an international stabilization force in Gaza. Russia said its forces had carried out heavy overnight strikes on a Ukrainian military airfield, other military installations and gas infrastructure facilities that supported them. Moscow also said that its troops advanced in an eastern Ukrainian city that it has been trying to capture for over a year. However, Ukraine maintained that Russian troops had not made gains in the past day. Meanwhile, Ukraine's military said it hit an oil refinery and military logistical facilities in Russia. China's President Xi Jinping met Russia's Prime Minister in Beijing and called for expansion of mutual investment with Russia. He also affirmed Beijing's commitment to advance ties despite what he called turbulent external conditions. Meanwhile, Russia said, and I quote, both countries agreed to strengthen cooperation and respond appropriately to external challenges. Big win for Meta in India. The National Law Company Appellate Tribunal has set aside the Competition Commission's order barring WhatsApp from sharing user data with Meta for advertising purposes. Ashmit Kumar gets us more on the significance of this order.
Well, big win coming in for WhatsApp as well as its parent company Meta. The NCLAT, the National Company Law Appellate Tribunal, granting them the relief by staying the portion of the CCI order which had gone against and which had barred WhatsApp from sharing user data with its parent company Meta or Meta subsidiaries. Now, it all goes back to the 2021 privacy policy. This privacy policy, at the time of introduction, WhatsApp had said that either you come on board with this policy or discontinue using WhatsApp as a service, as a messaging service. Now, this is what invited the attention of the competition watchdog, CCI, taking suo motu cognizance, and subsequently in November of 2024, they passed a pointed order saying that this take it or leave it approach by WhatsApp is something that is violative of the competition law. This is impermissible. This is abuse of dominant position in the market, and therefore they had gone ahead, and there were two important components to that order: a penalty of 213 crore rupees. The other was a bar on WhatsApp from sharing user data for advertisement purposes. Now, that is the part of the direction that has now been stayed by the NCLAT. The NCLAT very clearly saying that this part of the CCI order is not tenable, will not be permitted going forward, and therefore now there is no bar. WhatsApp is at liberty to share user data with its parent Meta as well as its subsidiaries for advertisement purposes. As far as the penalty is concerned, the penalty is likely to continue, 213 crore rupees due to be paid by Meta as well as by WhatsApp. What we now need to watch for is whether the competition watchdog will appeal this direction, this order by the NCLAT before the apex court.
New Yorkers head to the polls today to pick their new mayor as a frenetic 5-month general election campaign draws to a close. The three candidates for mayor toured the suburbs of the state in the final hours of campaigning, delivering closing messages after a record-setting early voting period. Most polls show the Democratic nominee Zoran Mamdani have the clear lead over former Governor Andrew Cuomo and Republican candidate Curtis Sliwa. However, Cuomo, who is running as an independent after losing in the Democratic primary, has won an endorsement from U.S. President Donald Trump. In a social media post, Trump said that the voters have no choice but to vote for Cuomo. Mamdani, who has called Cuomo a puppet of President Trump, questioned the timing of the president's last-minute endorsement. Back home, campaigning for the first phase of elections for the Bihar Assembly has ended. A total of 121 constituencies will go to vote on November 6th. Home Minister Amit Shah addressed a rally in Darbhanga and promised that 3.6 crore people would receive free health cover up to 5 lakh crore rupees. He added that the proposed IT park in Darbhanga will create jobs for the youth. Other NDA leaders, including BJP President JP Nadda, Transport Minister Nitin Gadkari, UP CM Adityanath and Delhi CM Rekha Gupta also held rallies across the state. India Bloc's chief ministerial candidate and RJD leader Tejashwi Yadav also made a last-ditch effort to voters. He promised 30,000 rupees financial aid for women and higher minimum support price for paddy and wheat. Meanwhile, during a rally in Kutumba, Congress leader Rahul Gandhi accused PM Modi of distracting the youth with social media addiction. My colleague Arunima lists out the key election issues in Bihar.
The key issues for the Bihari voters. First and foremost, it is the issue of unemployment. Both the Bharti Janata Party and the RJD-led Mahagathbandhan, both these combines have offered jobs, whereas the Nitish Kumar, Narendra Modi combine is saying they're going to give 1 crore jobs along with skill development centers and factories. On the other side, Tejashwi Yadav's Mahagathbandhan is promising government jobs. Now, there is a pull for government jobs here in Bihar, but fiscal prudence-wise, is it possible to provide a government job to each family? That's what the criticism is. The other issue is that of women empowerment. It is no surprise that the 10,000 rupees seed money that the NDA has promised is a huge hit with the women voters. Many of them perhaps would vote for Nitish Kumar like they have in the past just because he's working to empower them. But there's also concern whether there is a caste level polarization that is happening which could swing some Yadav women voters as well. That's the other concern. Caste definitely is a reality, and there is a polarization that we are seeing, especially after the killing that has happened in Mukama of Dular Chand Yadav. So the Yadav polarization countered by counter-polarization of the Bhumiyars, to which Anand Singh belongs. That's the third issue.
So that's the latest from Bihar. Meanwhile, chairman of the Hinduja Group, Gopi Chand Hinduja, has died at a hospital in London at the age of 85. Known as GP in business circles, he joined the family business in 1950 and is credited with transforming the company into a transnational conglomerate. And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18. Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup world. The retail portion of Grow's 6,600 crore rupee initial public offering has been fully subscribed on the first day itself. As of 4 p.m., total subscription stands at around 50%. Ahead of the IPO, the stockbroking firm raised nearly 3,000 crore rupees from anchor investors. It's the final day of bidding for Lenskart's 7,300 crore rupee initial public offering. As of 4 p.m., the company witnessed overall subscription was booked over 28 times. This was led by non-institutional investors, and this was followed by a retail portion. The IPO comprises a fresh issue worth 2,150 crore rupees and an offer for sale of 12.75 crore equity shares. The National Company Law Appellate Tribunal allows WhatsApp to share user data with parent Meta and its subsidiaries for advertising purposes, sets aside a Competition Commission order that had barred the flow of data, also sets aside a CCI order that held WhatsApp's 2021 privacy policy as unfair. Meta welcomed the judgment, saying personal messages remain end-to-end encrypted and that WhatsApp's business features support India's digital economy. Tech giants race to expand AI and data infrastructure as demand outstrips capacity. ChatGPT maker OpenAI signs a $38 billion cloud computing deal with Amazon Web Services, pivots away from Microsoft, which was the company's exclusive provider till earlier this year. The deal will give OpenAI access to India's graphics processing units. Amazon closes at a record high. Chip maker Nvidia hogs the spotlight as the AI race gets hotter. Microsoft signs a $9.7 billion deal with data center operator IREN to gain access to Nvidia chips. Cloud computing startup Lambda announces a multi-billion-dollar deal to build AI infrastructure powered by Nvidia chips. Those were the headlines that we're tracking for you this evening on What's Brewing. India's growing appetite for high-quality farm-fresh food is powering the next wave of innovation in the country's agri-supply chain. And Noida-based startup Fambo is leading that charge. The food solutions company, which supplies fresh and semi-processed ingredients to over 1,000 restaurants and cloud kitchens, including McDonald's, Burger King and Barbecue Nation, has raised 21.55 crore rupees in a Series A funding round led by AgriSure Fund, managed by NAB Ventures, along with EV2 Ventures. The capital will be used to drive expansion, product innovation and tech upgrades as Fambo looks to scale its farm-to-fork model nationwide. Joining us now to discuss this further is Akshay Tripathi, the co-founder and CEO of Fambo. Akshay, thank you so much for taking time out and being here with us on Startup Street. You know, you are a food solution company, right? If you could sort of take us through what you have on offer and the gap that you're trying to address.
Yeah, hi. Thank you so much. Pleasure to be here. So what do we mean by the food solutions here? We started in 2022 and we saw the gap in the agri and the food supply chain. Now the kitchen space for all the food service operators, they want kitchen space to be as minimum as possible, and they want to have the product which has to be more into the ready to eat format or ready to cook format or ready to use format. That's where the Fambo comes into the picture. We operate our micro processing center, which are the processing centers in the heart of the city, which link the network. Currently, we have a network of 5,000 farmers who grow dedicatedly for us. And then we map it. They map the production with rapid order-based management systems, having the automated process in-house, and we club the customer orders. So the customers, which are the food services like Burger King, McDonald's, California Burrito, Burger King. So what they get in place is like the quick fulfillment of their store. They maintain the optimal inventory levels at their store, thus reducing the wastage, reducing the work which goes inside the kitchen, reducing the rental cost which goes in, and of course, getting the consistent taste at each of the outlets. So that is what Fambo does, where the aggregation comes up from the farmers to the processing and to the outlets having the proper inventory at all the times.
Sure. You've raised this 21.55 crore rupees in the Series A round, right? So what does this milestone mean for the company's next phase of growth, and how do you plan to use the funds?
So actually, this fund is actually led by the AgriSure, and we are the first investment from the AgriSure, which is launched by the Honorable Agriculture Minister last year. So here, what do we plan to use this to scale up our operations in Pan India? Currently, we are operating in North India. So in North India, what do I mean? Not just in the NCR, but anywhere in the states of Delhi, Punjab, UP. Now we'll be expanding our operations to the west like the states of Maharashtra, Gujarat. Second, the tech upgradation which will come up. So we actually are using the high-tech supply chain tech here, both in the form of software and the hardware. So hardware upgradation which will come up. Second, the third and most important part is the expansion of our team itself. So the team expansion, which will further lead up the farmers' network expansion and pushing up the product lines in the form of frozen and ready to use and ready to cook items. So this will be the fund deployment here, where we'll be expanding the geography and of course the product range.
Sure. You know, you're already serving 1,000 plus restaurants, including QSR giants like McDonald's, Burger King. How do you sort of plan to scale this network across India? And what new regions are you looking to enter?
The new region what we are looking to enter is the west of India, and then subsequently to the south of India. How we are managing it is like it's completely a game of supply chain. So how efficient the supply chain can come into the picture. So majorly in Indian agri or the food domain, if you talk about, there is the lacuna in the supply chain itself. So 30% of our food produce or the agriculture produce goes into the waste. Now, Fembo uses the tech-enabled supply chain. What do I mean by this? Is our logistics is AI optimized, our cold supply chain, which ensures the minimum wastage. So this enables the food services to have the perfect product at each of the outlet. And of course, the joint logistics where we merge of the load of different customer in the optimized way, they get the cost saving. So currently we have already started to operate in the tier 2 of North India. So like if I talk about the cities of Punjab, which we completely cover, and the cities of UP, and we'll be live in the Uttarakhand as well. Same model will be replicating in the west, starting from the Mumbai region, expanding to Pune, catering to city of Gujarat and the tier 2 cities near about it. And similar models will be adopted in the south of India as well.
All right. You know, the company is also targeting an ARR of 50 crore rupees by the second quarter of FY26, right? And you also want to maintain profitability. So what's fueling this financial momentum, and where do you hope to end this year?
So if I talk about profitability, we achieved profitability in the H2 of FY25, and we want to grow profitably. That is in the vision of the company, and that is where the company is headed to. This year, by the end of this year, we want to have the realized revenue of 50 crores, not just the ARR, but the realized revenue. That is something we are targeting. But yes, profitability still remains the major driver, and we want to grow in a sustainable way where we generate the shareholder return as well. And of course, the goal and the expansion of the food solution expansion to the different customer and to different geography.
Sure. And, you know, Fambo's farm-to-fork integration and AI-powered supply chain are the key differentiators, right? So how have these innovations improved efficiency and quality for your clients?
So, and I talk about that way. So earlier in the Indian food space itself, the traditional systems were being used. If I talk about the technology such as warehouse management system, it was more designed to handle the FMCG product, which have a higher shelf life. But when you talk about the food which is coming up from the agri produce, the shelf life is of utmost importance, because shelf life is like 1 day, 2 days, 3 days. Now the infra, both in the form of hardware and the software, was not available. We designed the in-house tech here, which gives us the optimum inventory level. Second, it also gives us the correct inventory triggers, which can be maintained and which has to be maintained, which helps us to minimize the wastage here. So if I talk about our wastages, which we have is less than 2%. When we are able to get the wastage in such a low numbers, then of course the benefit is also scattered to the customer as well. So what sourcing inefficiency they were facing, that is taken care by us. Now the commitment is not just the product which will come to you, but a product service combination, that each product will come to you at the same time and each time, so that your stores won't run out of the provision. So that is the commitment, and that is what we abide to.
All right. And, you know, the funding is directly going to go into, like you pointed out, product innovation, team growth, and technological upgrades, right? So what specific areas or technologies are you prioritizing right now?
Is both in the form of hardware and the software. So we already have our software stack in-house. Now the same we'll be giving up to the vision technology, which we'll be using to increase the quality check of the production level itself. Second, the tracking of the product, which is getting produced right from the raw material level to the finished good level in the factory itself. So where the product is, the tracking inside the facility, that will be ensuring. Now that is one traceability which I'm talking about from the product movement itself. Second, the hardware automation. So actually the co-founder team comes up from the automation, the robotics background, and we would be deploying this robotics to help and make sure what we are making is super efficient and is of the topmost quality. So these are the two vision where we're using the tech. Now tech is something we are not looking forward to capitalize, rather using tech to make our business more enabled. So that is something which we are aiming at.
All right. You know, with AgriSure Fund and NAV Ventures now on board, how does this partnership sort of strengthen Fambo's long-term mission of modernizing India's food service infrastructure?
So NAV Ventures or AgriSure Fund I have talked about is already focused on the food and agri space itself. So this catapults us directly into the network which NABARD carries by its already state of working. Second, we are getting a good support already from NABARD, where they are opening up their existing schemes, which we can further extend to the farmers via us. Second, like their network is completely open to us of the existing portfolio companies, so that work has already started. So what would have taken the timing of the actual effort has significantly reduced with having NAB Ventures and the Agishore. So that has significantly changed like the speed of the work what we are doing right now.
All right, Akshay, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this journey going forward.
Thank you so much. Thank you.
Well, quick service platform Snabit, which provides on-demand home services, has raised $30 million in a Series C round, which was led by Bertelsmann India Investments with participation from existing investors. Now, the company, which launched only last year, claims that in less than 5 months, it has scaled from under 1,000 to more than 10,000 jobs a day. This is its third fundraise in 9 months, and it hopes to use the fresh capital to launch in more micro markets and disrupt other high-frequency categories. For more on this, joining me now is Ayush Agarwal, the founder and CEO of Snabit. Ayush, welcome to Startup Street. Thanks very much for your time here. 3 fundraisers in just 9 months. Where's all this capital going? And tell us about this latest $30 million raise.
Yeah, I think this is our third fundraise this year, and most of this capital is because the category is growing really fast. We're launching more micro markets, and we're seeing some exceptional traction on our platform across the 5 cities that we're live in. So we intend to use this capital to launch more micro markets, more cities, and also enter new categories such as cooks and childcare.
Well, you know, Ayush, we understand Snabit was valued at $80 million in its last round, and in just 5 months, you've raised this capital at $180 million. What has changed so dramatically, and how do you plan to deploy this money?
Yeah, so we are valued at $180 million, and I think this is urban India's last major offline habit. 60 million households spend roughly $750 a year, which makes it a $45 billion category, which is growing at a double-digit CAGR, and only 2% of this is penetrated digitally. So this is basically a $100 billion category waiting to be disrupted, which just talks about how large and massive this potential is. Just to give you some context, when we last raised capital, we were doing roughly 1,000 jobs a day with roughly 500 experts on our platform. Today, we're doing north of 10,000 jobs a day with more than 5,000 experts on our platform. So we've grown 10x in the last 5 months. And that's why I think this valuation is fair and justified. So
you've gone from under 1,000 to more than 10,000 jobs a day. What kind of orders are you clocking in daily or monthly now? And what's the average revenue per order? And how is this expected to grow, really?
So we're currently doing, as I said, we've clocked 3 lakh orders in the month of October. Each order is worth roughly at 250 rupees, like roughly $3 gross of discounts. And we expect to increase this manifold as we keep going deeper into micro markets and launching more cities. So I think in the next 6 months, we expect this to be north of 50,000 jobs a day, which means we'll be doing 1.5 million jobs in a month.
You know, how quickly are you looking to scale? Currently, Snabit, we understand, is in 40 micro markets across 5 cities. What are the new markets you're looking to expand into, both in the near and the longer term as well?
So we're currently looking at the top 10 metro cities as very, very clear areas of potential for us to launch and scale. So I think getting to 200 micro markets within the top 10 metros is clearly on the plan for the next 6 months. And I think that alone will drive the growth that we're expecting in this category.
Well, you spoke of, eyeing these on-demand home services in high-frequency categories like cooking, childcare, elderly care. How large is this market in terms of demand, and what sort of revenue boost will these additional services give to your top line?
I think these are billion-dollar categories that are completely undisrupted. Before Uber and Ola came into India, the entire mobility ecosystem was undisrupted, fragmented, and unorganized. And look at where we are today. Almost like 25% of the rides are currently digital. So I think that's the kind of disruption that we're looking at in this space as well. House help is obviously the category we started with, but there's so many high frequency categories that are currently entirely offline, and cooks is a really large one, completely offline, and we're waiting to disrupt it.
You know, Ayush, you're a young company, we understand, but just out of curiosity, in terms of profitability, where are you at and what's the roadmap to get there?
So we're obviously very early and we're launching and growing extremely fast. So we are investing in growth, which means that, we're obviously not profitable. But I think the best part is that this is a very asset-light business, no third-party logistics, no warehousing, no inventory. And we have a very clear line of profitability with our most mature micro markets turning fully profitable in the next 3 months or so.
Well, finally, over the long term, what's your plan for Snabit? Competition's also rising from new players, even established players like Urban Company and others. How are you going to defend your moat and continue to scale?
Yeah, see, look, if you look at the last 25 years in India, every 5 years, one big offline category has been disrupted. 2000 it was travel, 2005 it was e-commerce, 2010 was mobility, 15 was food delivery, and 20 was quick commerce. 2025 is that time when we'll disrupt high frequency services. This entire playbook, this entire category has been launched and built by us, and we're clear market leaders today. We wish to extend this lead because we understand this category best. We know that given how promising this category is, we will see incumbents come in and we will see a lot of competition. But I think we have the execution excellence that is required, and we have a really solid team that puts in a lot of effort every single day to make this successful. Very confident of making sure that we've continued to leading as we explore and disrupt this category.
Well, Ayush, we'll leave it at that. Thank you so much for your time here on CNBC-TV18 today.
On that note, it is time for us to head into a short break. But coming up next, digital trade finance and B2B e-commerce company bags $50 million. We decode how the firm plans to use the funds. On the other side, stay tuned.
Well, Grip Capital, a digital trade finance and B2B e-commerce company, has secured $50 million of committed credit with an additional $25 million accordion feature from TD Bank, marking its first such partnership or engagement with the bank. Now, Grip Capital has financed more than $8 billion in trade transactions for more than 11,000 companies across 100 countries since it started, and this latest facility is going to help the companies buy a finance program across North America. For more on this, joining me now is Pushkar Mukhevar, the founder and CEO of Grip Capital. Pushkar, welcome to Startup Street. Thanks for your time here, and congratulations on that $50 million, fundraise from TD Bank. Start by telling us why TD Bank and how does this partnership fit into your global expansion strategy?
For a trade finance platform like ours, lending partners or banks are really providing the raw material and onboarding these institutions. And I think as we've been sort of scaling up, onboarding large institutions has been critical to our strategy of really expanding the platform. I would say that the TD Bank partnership, I think with TD Bank, our relationship probably started about 2 years back. And of course, they've seen over the course of these years how our platform has performed, how we've been successful in not just scaling up the platform, but also delivering strong performance on the credit side, right? And I think that's the reason they've come on board. And the partnership is really focused on helping support our expansion plans in the US and then over time, of course, globally as we scale up the trade finance platform.
Well, you're using this facility to expand your biofinance program in North America, which is a market with big players already in the supply chain finance space. What will be your edge there?
Our experience in North America for the last 5 years has been that while it's a large market with a lot of players, I think there is still a very large market opportunity which still exists in the mid-market and the small business space where banks have been conservative, and that's what creates opportunities for alternate players like us to capture that market. And more specifically, I think given our specialization in cross-border trade, we see that the way we have structured our product, it really works very well for a lot of the importers based in the US. And that's where we've seen strong demand for our product.
Well, Pushkar, what will be the contribution from the market considering India is already your largest and fastest growing market at the moment?
I would say yes, India is our largest market. And besides trade finance, something which I should mention is that last year, we also launched a B2B commerce platform, again, focused on Indian small businesses, where the idea is leveraging our network of suppliers and buyers globally. We are able to connect Indian small businesses with both overseas suppliers and overseas buyers. So that's also another growing area. But I would say that India would continue to remain a key focus. And I think as the company scales, we would continue to see India continuing to be a larger part of our overall business. However, we see ample opportunities in North America.
You said WIP has financed $8 billion of trade transactions since it started. And last year alone, you did about $2 billion in disbursements. What is the target for the coming year or so in terms of disbursements for the company?
So we are targeting a growth of about 25%, at least for the next 2 to 3 years. And that's what we would look at.
Capital, of course, is raw material for you. You've raised over $500 million in debt. Is an equity raise or IPO on the horizon, or are you going to double down on strategic debt partnerships going ahead?
So we're doubling down on strategic debt partnerships. We did close an equity round last year, and we've been profitable actually since then. And really the idea is that at least for the next 2 years, just want to scale up the platform. We would potentially contemplate an IPO, but not in the near term. I think at least 3 years out.
All right, we'll leave it at that. Pushkar, thank you so much for your time here today. It was a pleasure speaking with you. Thanks very much.
At a time when India is positioning itself as a global AI powerhouse, a report by CXXO, an initiative by Kalari Capital, reveals that women make up just about 20% of India's AI workforce. On the sidelines of TiECon Delhi 2025, CNBC-TV18's Aishwarya Anand spoke exclusively with Vani Kola to understand what this means for India's AI ambitions. Take a look.
Well, AI is very new. Correct. And new and change aren't always easy to embrace, and accessibility of tools and opportunities are also very dependent on networks that enable that for you. And those are things that I think we start with a back step, right? Women start with a back step. But we have to be optimistic, which I am. AI, more than any other technology from before, has the opportunity to truly be transformative about the elusive goal of equal participation. So I think it's less about what is holding women back, more about how do we raise awareness for it and how do we encourage more to join, because knowledge and technology, core technology, is not a barrier. There are tools that allows you to truly train yourself and be representative in democratizing solutions, and you can do that without having to be a technologist or an engineer with the help of AI.
Okay, so that brings me to the next part of the question, which is when we look at the funding ecosystem, right? Women-led AI startups have received less than 10% of the total funding that was raised by AI startups since 2020. So from where you sit today as an investor, what's driving this disparity and how can the venture ecosystem course correct?
You know, I know we want everything to be neatly boxed, but life doesn't work like that. For venture ecosystem to course correct, we also need to first create aspiration for more women entrepreneurs to be leaders and for more women to be entrepreneurs, leaders and founders. And that's what today's event, conversation, the report is, to raise awareness, increase, of course, networks, and increase the community that can mentor, champion, angel fund, open those networks to them.
Correct.
Right?
You know, through the CXXO program, you have been directly supporting women founders for years now. So I want to understand that, could you just shed some light on how much capital till date have been deployed to women-led startups and what outcomes have you seen in terms of scale-ups, in terms of exits or follow-on funding rounds?
So we started putting together specific allocation of capital, and we started with $15 million only specifically for women founders, especially to give them that early seed capital, right? And I feel for every dollar we invest into enabling a woman, they will then be able to leverage that in time and raise $100, right? Almost all of the companies fortunately have received follow-on funding, and that shows that, you know, if you kind of give that initial energy and push and mentoring, lots of good things can come out of it.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
from Madhya Pradesh to IIT Bombay. That's where your love for the capital markets personally started.
I used to watch, sometimes CNBC as well. You used to host one show there.
Yes.
Yeah. So that's how, read a lot of books and got into excited about capital markets.
Take me through that period of being at Flipkart, working in the e-commerce space, and then deciding to go the capital market route.
Flipkart was converting from retail to marketplace. And I was one of the first product managers there to kind of build that. Very lucky to meet my co-founders there.
One guy who's spontaneous, another who's a thinker and a numbers person. Which bucket or which category do you find yourself in?
I'm nowhere, I think.
Nowhere?
I think my strength lies in identifying people. So I ensured that my co-founder should be smarter than me. Then two of us came. Then we thought third one should be smarter than us.
From 0 to 14 to 15 million. What would you say has been the biggest learning so far?
One of the biggest factors in startups is timing. Why now? Less than 20 million, active investors at that time.
Yeah.
Very, very
yeah.
few. So it makes sense. So mutual fund app, and they're I think some 30, 40 apps listed on the Play Store, or Signal.
Yeah. Then how do you create a moat around yourself? How are you different?
So I remember in 2002 or 3, I opened my Demat account. And the person did not even kind of entertain me. So I was in chappal, and as a student you go there and so kala come to and so on, and then after conviction, after some convincing, fill the form, 2 days, 3 days, and open my account. By the time you're gone, your interest is lost.
Yeah.
So the point was you find one problem area at a time and then kind of figure out that you have this right to win in this market.
What your data is telling you at this point in time about the investing culture?
Mutual fund used to be very low, by the way, in low single digits. And now it is at high single digits. Stocks used to be high single digit and it's slightly higher single digit.
Yeah.
Indian middle class, very large, and we are at around the 70-80 million mark.
What are the top 3 things that you will never do?
We will not do e-commerce, unregulated products. We will not do anything which is not good for the customer.
Hello and welcome to the Young Turks Reloaded podcast. I'm Shireen Bhan. My guest today has had quite an interesting journey, starting from his roots in Madhya Pradesh to IIT Bombay to his entrepreneurial start with an education startup called EduFlix. He decided to bet on India's capital markets 9 years ago along with his 3 co-founders. Let's talk to Lalit Keshre about the growth story, more importantly, where it's headed from here on. Lalit, many thanks for joining us here on the Young Turks podcast. And that's where I want to start with you. I mean, it's really been quite a journey, right? From Madhya Pradesh to IIT Bombay. That's where your love for the capital markets personally started. But it took a while for it to convert itself into a business opportunity.
No, thank you so much, first of all, Shireen. I've been following this show for many years now, and it's great to kind of be here. So I think I'm very grateful about this journey right now. So I was in a small village, my parents were in a village, and I got yeah. So and then but there were no schools there, so I studied with my Nanaji, grandparents, and Nanaji, Naniji, and I was lucky that that year itself there was an English medium school there. It just got started, and as I progressed, that school also kind of went till 12th, and then I was lucky again that I got to know about this IITs, but nobody around me knew about them. Just lucky to kind of got in IIT Bombay. I was just there day before yesterday, and of nostalgia and so on. But I think
it's not just luck that helps you get into IIT.
No, of course. There was I got access to kind of lot of stuff also. There used to be this brilliant tutorials in Chennai at that time. They used to send you books and so on. So thanks to bunch of these folks, got in there, and then as you said, that's where I came to know, like, the one advantage of Bombay is, like, at that time also there was a lot of entrepreneurial, like in 99, 2000, 2001, like everybody was starting startups, .coms and so on.
Yeah.
And at that time, somehow I came to know that, you can invest in stocks and, they are publicly listed companies. Primarily because one of my kind of wingmates got an internship in one listed company and so on, and that's how, like, got into a rabbit hole of. And then I just told you, like, I used to watch, like, sometimes CNBC as well. You used to host one show there.
Yes.
Yeah. So that's how, like, read a lot of books and got into excited about capital markets.
But at that point in time, capital markets was a passion. It was something that you were personally and individually sort of taken by, but the idea of converting that into a business opportunity didn't occur to you.
No, absolutely not. Like, no, I was doing, so in student and in IIT, I did a student startup in medtech devices. Again, I've been very selfish in, like, looking at my own problems. So I had this allergy in the campus because of some pollen. So created this device which was like allergen detector.
Okay.
And of course, when you
but isn't that the starting point of great ideas, where you actually encounter a problem yourself and then try and solve it?
Yeah, so that's my philosophy in consumer business. I think it's always better to kind of solve for you so that you have at least one customer.
Guaranteed.
Guaranteed customer, right? And the second startup was also like similar, like so I was in that small town and no coaching classes and so on. So this EduFlix was about kind of like education for all through internet, through videos and so on. And likewise grow as well.
Well, before we get to grow, in the middle you also went the e-commerce route and ended up at Flipkart.
Yes.
And which is where you met your co-founders. And then 2016, of course, began a whole new journey with Grow. But take me through that period of being at Flipkart, working in the e-commerce space, and then deciding to go the capital market route.
Sure. So Flipkart was like, so my startup didn't work out. We were not able to scale. So we shut it down. We returned money to all the investors. And then like what next? So one option was to get into some MNC, do product management job, or other was to get into startups. At that time, I don't think you had too many choices to invite entrepreneurs, right? Flipkart was the largest one at that time.
Yeah.
We got in. And was again there lucky as well. Like Flipkart was converting from retail to marketplace. And I was like one of the first product managers there to kind of build that. So got that opportunity. There kind of realized, this people ordering things from, T-shirt from Delhi taking like 5 days. We saw the NPS score across 5 days, 4 days, 3 days. Like, as the number of days reduce, your NPS goes very, very high.
Yeah.
And we thought, okay, why not 1 hour? So started this company called Flipkart Quick within Flipkart, sponsored by founders. Like they were very encouraging and so on. So idea of Flipkart Quick was like, give everything in like instant.
So you were ahead of the quick commerce curve that we're seeing today.
We were ahead, but I don't think we had so much conviction. Like I think timing was not probably the right at that time, because e-commerce itself was like, marketplace itself was kind of taking off. And I think timing was also bad, because at that time, 2015, if you remember, like the ecosystem was a bit kind of shaken because of a bunch of things. But that was like very crazy experience, and that's when like and when that didn't go through, then kind of started thinking about something else. And then was very lucky to meet my co-founders there, like and that's how we kind of got started.
But it wasn't as if you kind of met and decided that this is what you're going to do. You actually spent some time thinking this through and working with the four of you together to just ensure that you have an idea that can be executable.
Yes. So I think, so I'll tell you a story about how we kind of so Harsh, so I have 3 co-founders.
Yes.
Like and we so I ensured that my co-founder should be smarter than me. Then 2 of us came. Then we thought third one should be smarter than us, and this is what happened actually. So Harsh, so I used to work with Itium Systems right from campus. I came to Bangalore, and he moved from IT Delhi. So we know each other since 2005. And then there was so I was interviewing for some product managers, and I see him in like on Zoom call from US. And I was like, now I can't take interview because I know you so well. So, you know, then, but somehow he got through other interviews and inside. And then he joined the same team. And then when I moved to Flipkart quick, he took over what I was doing at Flipkart Marketplace and so on. And when he came, like, his idea was to stay for like 3-4 years. Like, you know, he was excited about Indian story and so on. But then I told him, I asked him, like, you know, I'm thinking about something to start and so on. And like two of us then kind of started thinking about it. This was around 2016.
Yeah.
And then we thought, you know, it's been so long that we have coded. You need like, so we the vision was to build a tech company in financial services. Now, no idea what we are going to do or what, but we thought that tech will be like basic, like, you know, the core component of it. And we need a very, very solid tech person. And Neeraj used to work with me. And I just asked him or the breakfast. And within like 5 minutes, he said, yes, I am in. Like he didn't. So he is that kind of a person. Like he's spontaneous, very, very spontaneous. Whatever he feels like, he just kind of
does it.
And right. So 3 of us then started. And then I was having lunch with Ishan. Ishan used to look at Corp Dev at Flipkart. And I asked him, you know, that I'm thinking like this and so on. What do you think? And he was like, he said that he had been thinking about this since his like college days. He is a finance guy, proper finance guy, very, very passionate about investing. He's a numbers guy among all 4 of us. And he's like, I am also kind of excited about it, but I'll have to think. So he is a thinker. He took like 2 days, checked with his wife, arranged for his personal finance and everything. And then 2 days later, he came to me and, okay, I'm in. That's how like 4 of us kind of started. We quit and then started working on it.
So one guy who's spontaneous, another who's a thinker and a numbers person. You know, which bucket or which category do you find yourself in?
So I'm nowhere, I think.
Nowhere.
I think my expertise, I feel is that my strength lies in identifying people. And like, that's like my strength. So I think the only thing that I did was like to get these folks together and the initial team and everything. And then like, you know, kind of setting up the purpose, like what we want to do and so on. But then like, everybody has like very, very crazy superpowers that kind of they come with.
Yes, well, we'll talk about those superpowers in just a second. But, you know, starting from scratch and building out, grow into what it is today. And how many active users do you have today?
So we are around 14 to 15 million customers on the platform.
Okay, so, you know, that journey from 0 to 14 to 15 million, I'm sure that there's been plenty of ups and downs along the way. There's been plenty of learnings. What would you say has been the biggest learning so far for you in the last 9 years?
The biggest learning has been that team is everything. Because in last 9 years, we have been through like so many highs and lows.
But the last few years, largely high, at least as far as the markets are concerned.
So that's what. So what you see from outside is very different from what is inside.
Yeah.
What if I told you that so in 2015, while I was at Flipkart, I was like getting term sheets from VCs, you know, just go out and start. We get out in 2016 and those, you know,
the market dries up.
Boom kind of done.
Yeah.
And there is no funder available. And, you know, and we raised some angel money from Mukesh, Ankit and so on, our Flipkart folks. But largely like till 2019, till peak 15 round, like for 3 years, which is also good, by the way. In hindsight, I think that it was very good that we kind of got a lot of time to materialize, like, you know, to figure out what we really want to build. Get very solid team bonding.
Let's also talk about the landscape that you were operating in when you decided to start in 2016. So there was already a few players in the market that had done what you were attempting to do. How much were you influenced by what was already out there?
We saw a lot of startups coming in this. And that is like a signal to me. Like, you know, when quick commerce, for example, happened, lot of companies come together at the same time. So anything, if some idea happens, then it's not just one single entrepreneur most of the time who kind of thinks about it. It's many more folks. So that was like a good indication for us.
That this was the good time to get started.
I remember when we just got out and I was thinking, okay, and we were figuring out how to start in financials. So mutual fund was some mutual fund app and they were like, I think some 30, 40 apps listed on the Play Store, or like Signal.
Yeah. No, but that's also important, because then how do you create a moat around yourself? How are you different?
So I remember in 2002 or 3, I opened my Demat account.
Huh.
And, you know, the person did not even kind of entertain me. So I went in chappal, and, you know, as a student, you go there and like, so kala, like, you know, come to, like, and so on. And then after conviction, after some convincing, filled the form, 2 days, 3 days, like, you know, and opened my account. By the time you're like gone, like, you know, your interest is like lost.
Yeah.
So account opening process, again, the structural change that happened was like, you know, Aadhaar and like, we always say, right, we are like so crazy grateful to, like, you know, all these, the timing of DPI and Aadhaar, UPI and everything. We wouldn't have been, like, Grow wouldn't have wouldn't exist if they were not there. So the point was, like, you find one problem area at a time and then kind of figure out that you have this right to win in this market.
let's talk about what's happening in the environment currently. I mean, as I said, we've had a bull run right through the COVID period, and again, it was unexpected because people actually thought that the world was going to shut down, and here you had the capital markets the world over delivering phenomenal returns, and you've now got a new class of investors who've been drawn into the stock markets given what we've seen happen in the last few years, specifically younger investors, women who are investing in the stock markets. These are all sort of new trends that we've seen in the last few years. But now, with the kind of pain that we're starting to see, and it's only the starting point of the pain that we're starting to see at this point, volumes have been impacted. How are you seeing things at this point?
So we are asked this question a lot, and I think the way we look at it is that from growth strategy perspective, we think very long term. And we believe that in long term, these trends, this very long term trends that we are seeing will continue. And namely, like India's growth may be 6%, 8%. So, but this compounding over like next 10, 20 years is going to be like crazy. I don't think any other country will grow like India for next few decades and so on, right? And then penetration will continue happening. Tech will help in more and more penetration of more and more products and so on. Wealth people will continue looking for transparency. Like Bezos, like you bet on things that are not going to change. And one is that, people will not go, okay, I'll go from transparent to opaque way, or, convenience to non-convenience and so on. Right? And so these kind of trends will continue happening. And we are kind of working on those trends, democratizing wealth in the country. I think country is going to, like, people are going to get wealthier. They will need products to kind of make it easy, make it like transparent, and so on.
What's the data telling you today on where we are as far as the addressable market is concerned, but also what the headroom for growth is likely to be?
See, today, if you look at the active investors in the market, right? Again, numbers might be here and there, but I think mutual fund would be around 50 million unique, 50, 60 million, and then stocks would be around similar number, and superset would be around 70, 80 million and so on. And participation perspective, mutual fund used to be very low, by the way, in like low single digits. And now it is at like high single digits. Ownership, I'm talking about the ownership of the stock market.
Yeah.
Stocks used to be high single digit, and it's slightly higher single digit.
Yeah.
Right? It's not like... so there's a lot of narrative, okay, retailer. But if you look at the ownership perspective, it's still like... mutual fund has seen higher growth in terms of ownership and so on, indirect ownership. And I think that is one way, like, probably will grow even faster than direct ownership. From the numbers perspective, you can think, right? So, like Indian middle class, great Indian middle class, right? It's very large, and we are at around the 70, 80 million mark. And it's anybody's guess, where can it go to percentage-wise.
So, you were talking about the fact that growth today is much beyond just equities. And that's been a sort of conscious strategy on your part to be able to address different segments of the market with different products as well. Again, what's been the learning there, and where do you believe the gaps continue to exist that you would like to plug specifically?
Yeah. No, so our biggest learning, Sheen, when we started actually, this grow in current format was not our first product. There was a pivot.
Yeah.
For first 4 years, the only product that was available was mutual funds. And we just kind of made it just so simple and so transparent. So what happened was we built a search. You search for any mutual fund. There is a product, beautiful product page. You should check out our, there's graph. There are you need to know about fund manager. You need to know about past performance, expense ratio, tax, everything. Right? What are the other funds for?
The
what
history, geography.
What is, everything.
And everything in between.
So whatever is the holding and so on. And later when you launch stocks, then holding, you can look at the stocks also.
Yeah.
Right. So that was like, and then payment, very kind of simple payment, very simple onboarding and so on. And like first month when we launched after the pivot, we thought, 100 customer ho jayenge to maza, like it will be fun. Like it will be like good feeling. And we got 600 customers. And at that time, getting customers was so tough. And we did not do any marketing. Even today, for example, in more than 70% of our customers are organic customers, all word of mouth.
two claims that literally every company makes is one, that we're a tech company, and two, that we're customer obsessed. Now, from a grow point of view, what does that mean? Simple language, from a lay